Battles over in the United States, and we'll keep an eye on UK banks after we saw the Bank of England cut its estimate of how much capital the banking sector needs for the first time in a decade. Guy.
Okay, here we go. Time for the market open this Tuesday morning. Quiet session expected, but single stock volatility could still be there. So let's talk about the indexes, and then we'll work our way through this market. The FTSE 100, in some ways more stable, maybe more looking at other aspects of what we're seeing, particularly around some of the metals trades and what we're seeing in some of the commodities markets more broadly. But a flat session, a flat opening for the FTSE 100. We'll wait and see what the CAC does today. I'm interested to see there's a dividend story which we need to fold in, but I'm interested to see what happens with the Airbus narrative this morning. As Anna says, was there an overselling situation yesterday on the back of this concern around what we're seeing with these panels? The IBEX is up by 0.3%, the big outperformer this year, maybe continuing that trend into year end. I'm not expecting the DAX or the SMI to open quickly this morning. There's a bit of news to fold into both of those trades. Bayer, maybe one of the stories we're going to watch in the German market. So I'll hand things back over to Anna for some single stocks and sectors.
Yes, let's have a look at those sectors then first off, Guy. And it seems that the energy sector is not doing too badly this morning. We have not got oil prices going higher, so that's an interesting one, but it's not up by much. Utilities actually now the best performing sector in Europe, and perhaps that tells you a fairly sleepy story about where we are in today's narrative. So we've got some of the energy producers here in Europe. I say sleepy, but energy is increasingly important in this AI world we now live in, isn't it? Autos and auto parts is the worst performing sector this morning, so that sector down around 0.4%. Actually, healthcare now the worst. You've got healthcare at the bottom, utilities at the top. So we seem to be talking a lot about defensives today. If I look at the individual names, and Guy, you were mentioning some of these just now. In fact, we were both talking about Airbus earlier on. That stock is down by just 0.2%, which, given the drop we saw at times yesterday, is probably seen as a little bit of respite. Bayer has not yet opened, so we'll get to that one when it does. And some of the banks look okay this morning. I'm looking at Lloyds Banking Group, for example, up just 0.1%. It put out a holding statement earlier saying it'll be looking at what the details of the news from the Bank of England, what that means for the business.
So what I am seeing, and I'm slightly wary of drawing this conclusion, is that UK house builders are bouncing back today, which makes me wonder whether or not, and these connections may not exist in reality. Are we looking at a situation where the UK banks' capital ratios are improving, which means they can potentially lend more into the mortgage market, which is better news for the house builders? Maybe. But you've got Taylor Wimpey up by 3%. You've got Persimmon up by 2%. So in terms of the percentage gainers, UK house builders are well represented at the top of the board this morning.
Yes, and in the Bank of England's statement earlier on, it was saying that banks should have greater certainty and confidence in using their capital resources to lend to UK households and businesses. So, you know, that's the FPC's expectation, that part of the Bank of England
lend more.
Is hoping that that's indeed what happens. Let us talk about these markets and where we are. Sharon Bell joins us, Goldman Sachs Senior European Equity Strategist. And Sharon, very nice to have you with us. Thank you for coming in. I mean, 3 minutes into a session that looks a little bit directionless this morning, so maybe we won't dwell on today too much and think about the bigger picture. How are you looking ahead to 2026 then, given what we've seen from the MAC 7 this year, what we've seen from European stocks this year?
Absolutely. I mean, the Mag 7 has generally performed well, although more mixed recently. Some doing well, some not so much. But Europe has generally done very well this year. Most of it confined to the first quarter, where you had an extremely strong rally. But generally, and particularly if you look in dollar terms across Europe, we've had indices do extremely well, especially those with a lot of exposure to banks. FTSE 100, IBEX, MIB, the FTSE MIB, the Italian index, all done very well because they're heavy in financials and they've really rallied this year.
And so banks have been an area of brightness for Europe. For reasons that we all understand, defence stocks have done okay this year as well. And is that something that we are going to be increasingly focused on? Or do you think the market is going to get more discerning, rotations within the defence sector, a focus on margins? We heard different views.
Yes, so the defence stocks rallied. I mean, they're up about 4 times since Russia invaded Ukraine. And earlier this year, certainly until the summer, they performed extremely well. But in the last few months, they have come off a bit. And I do get a lot of questions from clients about this. They look expensive, so they're just pure PE valuation ratios are very, very high. But if you adjust for the fact that they're going to grow very fast in the next few years, definitely the demand is there. Europe is quite committed to upping its defence spend as a share of GDP. We still like the medium term, but we don't deny that there could be a bit more volatility just because of the valuations.
The biggest decision it feels I've had to make this year is currencies. The S&P in euros has done 3.25%. Europe's wiped the floor with that.
Yeah.
If I got my currency call right, nothing else really seems to have mattered. Is there some truth to that? And is that a trade that's going to carry on?
Look, it's been 10, 15 years where we had the dollar appreciating very, very consistently until this year.
Yep.
So it would have been a very punchy call at the beginning of this year to say, actually, the dollar can depreciate in this environment. We think the dollar can still actually depreciate in 2026 against most countries, currencies globally. We think probably more against Asian currencies rather than against European currencies. But nonetheless...
So I can repeat the trick in Asia next year,
yeah, maybe a bit. Look, I think the dollar still looks very high in our view, still looks a little bit overvalued on a trade-weighted basis. We've got the Fed cutting rates, obviously in the upcoming meeting, but also twice more next year. We have a little bit more questioning about whether you want all this exposure to the dollar, to the big cap US stocks, so concentrated in the index and so highly valued. We just think people are diversifying portfolios, and that is a little bit of downward pressure on the dollar.
Okay, let's come to that diversification question. I'm reading so much at the moment about the idea that if you don't want to be in the Mag 7, if you don't want to have all this AI risk, there are loads and loads and loads of really cheap value stocks out there that represent maybe a place to hide. And the valuations, the case on valuations is certainly, it looks about right. The problem is, though, that it's looked right for quite a while, and I'm wondering why now is the right moment maybe to make that trade. And I'm also wondering, is this an absolute trade or a relative trade?
Yeah, it's all good questions. I think when it comes to the Mag 7, a lot of the clients that I speak to, they want to diversify because they know that these companies, they're huge, they've done extremely well already, their valuations are high, and there are risks around them. It's not that some of them will likely be the big winners, but you do not want all your eggs in that one basket, definitely. I think the pushback I get is that there aren't that many places that they can see that there is super value, largely because things like Europe have performed well this year on relatively little earnings growth. That's the other thing. We haven't really seen the earnings growth for Europe this year. Earnings revisions have generally been downwards. So the valuation for Europe has just moved up, more so in Europe this year than you have in the US. So yes, I do still think Europe is good value versus the US, and you can find value opportunities. Banks, I would argue, is still one. Maybe there are pockets of defence, etc., as we were just discussing. But I think it's that valuation gap has narrowed a little bit.
And let me ask you about quality stocks then, because, maybe value stocks have been lifted a little bit by the banking sector, but quality names in Europe then, Sharon, is that an area you focus on for next year? Or are you concerned that maybe they're too defensive, too dollar exposed?
Yes.
Dollar call is
this is a very common question we're getting at the moment, and I think it's related to a few things. Key being, at this time of year, everyone is looking at performance year to date and saying, well, which areas have lagged, who's been behind, and therefore who could potentially catch up where I might want to grab a little bit of that. Quality stocks in Europe, and actually on both sides of the Atlantic, have generally underperformed this year. And in a way, that sounds unusual, doesn't it? You normally want to have quality, don't you? And I think for 15 or 20 years, certainly since the financial crisis, quality stocks generally did extremely well. They underperformed this year in favour of value and cyclicals and things like banks. I think that an element, definitely, they've got better value now. Quality stocks were an enormous premium. That's come down a little bit. But they are dependent, I think, on two things. China doing a little bit better economically through this next year, and really these are all dollar earners. So if the dollar does continue to come down, then a lot of the quality stocks will be hit by that. So we will be more mixed on a rotation to quality.
So they're more global names. There might be a few of those businesses on the UK markets. UK stocks post-budget, then, Sharon, what's been the reading through a stock market lens? I mean, we saw some of those interest rate sensitive ones getting a bit of a boost as a result of expectations, maybe, that rates come down, but I wonder if that's something you see as long-lasting.
So I do think that there was stock market relief around the budget, more the sense that, yes, it was a budget which you saw extra spending and higher taxes, but not actually more than expected going in, which I think is key. Also, the gilt market reaction was good, and that's extremely important for equities. As you say, a lot of them are quite rate sensitive. There is a big risk premium, I think, still in UK bond markets. And just taking a little bit of that risk premium out helped UK domestic-facing companies. We see home builders do quite well today. Home builders are actually up. Well, they were when I looked yesterday. They've up even more now, 9% since the middle of November. So, and they are a super cyclical UK domestic area. So yes, I think equities took it relatively well. The other final thing to mention about UK domestic-facing companies is they are probably the value pocket that we've just been talking about. They are inexpensive. So a lot of global investors speak to me about, well, can I find value there? I think you can, but you have to be a bit careful because, of course, there are a lot of risk around the UK economy too.
What would be a realistic number for Europe to deliver next year in terms of performance? You talked about the earnings expectation. What do you think is what should I be expecting next year?
I mean, 5-6% returns in price, and then you also get for Europe 3 or 4% dividend. Remember, so that's actually not a bad total return, and that would be in euros. And we think the dollar comes down again. So if you're a dollar investor, that could easily edge into the double digits. It's not actually too bad, and most of that performance, in my view, next year will be driven by earnings. We think 5 or 6% earnings growth next year should certainly be better than the 0 we've had this year.
Great to see you.
Thank you.
Sharon, thank you very much indeed for joining us. Sharon Bell, Goldman Sachs, Senior European Equity Strategist. Core 6 looks like this. This is the picture this morning that we are watching. Defence stocks firmly in focus and are up. Nestlé rising a little bit. I saw a note somewhere talking about the fact that it might sell off part of its coffee portfolio, but I need to come back and double check that. Schneider's up a little bit. Elsewhere, it's a mixed story actually for the chips versus Schneider. So that's we often talk about those in the same breath. LVMH is ex-dividend. Novo Nordisk is down a little bit. In fact, you're seeing a little bit of turbulence, volatility within the pharma space this morning, where we are certainly seeing some volatility. Is it the pharma space? Is it the chemical? I don't know. You can't kind of narrow buyer down, but you're certainly getting some big moves, and that's where Chloe Melly is starting right now.
Yeah, good morning, Guy. Yeah, we are seeing some very impressive movements in Bayer this morning, which is up almost 15% after getting a big win in its ongoing legal battles over in the U.S. So the Trump administration has urged the U.S. Supreme Court to take up Bayer's appeal related to its Roundup litigation, Roundup being the weed killer that has been accused of causing a cancer. And so this is seen as quite a big win for Bayer, and we can see that reflected in those shares today, and we're up very impressively this morning. Moving on to UK home builders, which are also moving higher, and we have got a wall of green there this morning with Persimmon, Taylor Wimpey and British Land as well, because nationwide data has showed that UK house prices rose for the 3rd consecutive month, and so this shows that there was actually quite a lot of resilience in the housing market in the run-up to the budget, which is not necessarily what had been expected, and therefore we are seeing this positive movement here across the house building sector. Moving on to FDJ, which is down this morning after being double downgraded by JP Morgan and placed on negative catalyst watch ahead of the results. So this is a name in the gambling sector that's not as preferred as Entain and Flutter, and is unlikely to see much growth in 2026, according to the analysts, and therefore we are down about 3.5% this morning. And finally, let's end with Campari, and the April maker is up after being upgraded by Barclays to a buy rating, and we're up quite strongly this morning. We're up 3% for Campari.
Chloe, thank you. Chloe Melly with an update on those stocks on the move. Coming up, more safety fears then for Airbus. The latest on their A320 issues. That's coming up next. This is Bloomberg.
Bloomberg Business Week Daily.
We got to talk crypto.
From the magazine that helps global leaders stay ahead.
What's the conversation around your company?
Bringing you insight on the people, companies, and trends shaping today's complex economy.
Planning very big things.
A new level of premium.
Plus global business, finance, and tech news as it happens.
The floodgates of innovation are going to open up.
You can't fake passion. You either are or you aren't.
Bloomberg Business Week Daily, only on Bloomberg.
Bringing you up-to-the-minute global economic news whenever and wherever it happens. I'm Lizzie Burden in Florence, Italy, and this is Bloomberg.
Astonishing day for US technology.
It's shaping the region's technology ecosystem.
Asia's biggest tech news and innovation.
Asia is at the forefront of some of the world's biggest stories. I'm Sherrian in Tokyo.
And I'm Heidi Stroud-Watts here in Sydney, where the trading day begins. We're here in the center of all the action to get you set up with the numbers, news, and knowledge you need for the day ahead.
The demand is indeed recovering. We've been waiting for this moment.
The opportunity of a century.
Join us on Bloomberg The Asia Trade. Weekdays only on Bloomberg TV. Context changes everything.
The countdown is on. Everything you need to get the edge at the end of the market day. Get ahead of tomorrow's trading with The Close. Weekdays on Bloomberg. Context changes everything. It's the world's second largest economy with a growing influence in global affairs. Bloomberg The China Show brings you the unmatched expertise you need to keep track of breaking news, in-depth market analysis, and the most influential newsmakers in and around China.
We need to do more to engage the market more.
We're risk on. I think we caught a little sweet spot.
Massive savings right now.
It's already a different game.
Bloomberg The China Show. Weekdays around the world, right here on Bloomberg. Context changes everything.
Bringing you up-to-the-minute geoeconomic news whenever and wherever it happens. I'm Bonnie Quinn in Sao Paulo, Brazil, and this is Bloomberg.
Welcome back. You're watching the opening trade. We are 16 minutes into the session, and this is what the picture looks like. Fairly quiet when it comes to the index story, but below the surface, there is some significant movement today. Bayer is one stock that we've been watching. Today, it's Bayer. Yesterday, it was Airbus. Airbus moving massively yesterday, as you can see by this two-day chart. Big dip lower. We did kind of buy that dip a little bit coming in towards the end of the session, but there's not exactly a big bounce coming through this morning. The Playmaker revealing that inspections are needed for hundreds of its best-selling 320 family of jets over potential flaws in the aircraft body, i.e. one of the body panels towards the front of the aircraft. There was a briefing last week with customers, and the news kind of came out yesterday. Benedict Campbell, who leads our coverage of this sector, joining us now. So, Benny, let's talk about kind of how this has unfolded. There was a briefing last week. There was a document released. That has now been released, kind of come out and become clear to the world what is happening, and you get a big stock market reaction. Just kind of how significant is this as a risk kind of to the flying public, to the airlines, in relation to the big move we saw yesterday in terms of the stock price? Can you just kind of, how significant is this?
Well, I wish I could say it all sort of came out. The truth is it all trickled out over the last couple of days. Yes, there was a briefing last week, but that has not been publicly disclosed. Airbus is staying quite mum about the whole thing. So, and that might explain some of the nervousness that you see in the market, in the stock price, and generally with investors who had looked at this stock very favorably until yesterday. It was up until yesterday about more than 30% for the year. So people are nervous about this. Not just the actual issue, but also the way that the company is handling this. Not very transparent, it has to be said. And this comes off the back of the software issue that they had over the weekend. So it was a sort of a 1-2 punch here. On the actual issue, so we're talking about panels that are at the front of the fuselage of the A320 aircraft that are not sort of meeting specifications. So we're talking sort of millimeters here. This is not a great misalignment, but enough to be noticeable. So what Airbus is doing now is going through literally hundreds of aircraft, some of them already in service, some of them sort of at some stage of production, to check where things are at in terms of the panel specifications. Are they out of spec? Are they within? When might they need to be fixed, and so on? And that's sort of where we stand. A very arduous, complicated process.
Benny, we appear to have two problems, though. You've got the problem with the aircraft, and you've got the problem communicating the issues that are being dealt with here. That was a really big move yesterday. And it's the relationship between the issues surrounding the aircraft and the move in the share price that I'm wondering about. Is there just not enough information at this stage to be able to make a right and accurate assessment of the problem that Airbus faces with this? So are we compounding the initial problem with a communication problem that the market just doesn't have the answers and therefore is overreacting?
Well, there is a bit of an overreaction, partly because you know, the bad news so far had always been on Boeing, really, and Airbus had fairly sort of smooth sailing. Yes, they had issues with their engines, but this all seemed sort of manageable. Don't forget also that we are sort of in the last weeks of the year, and this is where everything has to really fall into place for Airbus if they want to meet their full year delivery target. So anything that sort of upends that and upsets that makes people additionally nervous. We don't know at this point just how disruptive this latest finding might be. Airbus says that they expect most of the panels to be within spec, so it might, a little bit like the software issue that we had over the weekend, which sort of flared up and then disappeared again very quickly. This might be similar here, but it sort of adds to a general sense of nervousness, which is, does Airbus and does the aviation industry at large have its products under control? Is there a risk that potentially they are putting speed above care? Is there a risk that as they increase the numbers of planes that they churn out, they are cutting corners, or that suppliers are cutting corners? That would sort of be the hard way of looking at it. The more charitable way, which surely Airbus would see, would be the system works. We noticed something that was wrong. We alerted the public, we alerted customers, and we are dealing with it. So sort of two schools of thought here, but either way, there is a problem, and the market is nervous about it.
Yes, and Betty, I guess it does matter, doesn't it, whether it was a quality control process that caught these things before they left the factory, or it's aircraft that are currently flying, and the sort of getting a handle on how many aircraft fall into both of those camps would seem important.
Yeah, of these aircraft that need the inspections, the vast majority are still somewhere in the production process, but about 160 of them potentially have this panel issue. Again, this is not a safety issue as such that needs immediate attention. If you compare it to the software issue, the regulator said, you need to fix this before the next flight. That's not the case here, so they can sort of inspect the planes, then realize whether there's a problem or not, and if they do find a problem, they can sort of take care of it over time. So they can then sort of talk to the customer at some point and say, bring the plane in at some point and fix it. So they didn't say this needs immediate attention. So they've won themselves a little bit of time. But again, it doesn't sort of instill confidence by the flying public in the product necessarily, even though Airbus says it's safe to fly.
Bernie, thank you very much. Bloomberg's managing editor for Space and Aviation, Benedict Camel, joining us there from Germany. Let us quickly pivot to what's going on in the UK and the banking sector and the knock-on impact that the banking sector and decisions around it is having on some of the house builders today. We see house builders are moving higher in this morning's session. Persimmon, Taylor Wimpey, for example. Is there a link with the Bank of England story? We will consider that. The BOE said all of the UK's 7 largest lenders passed its latest stress tests, which examined their resilience to an economic shock. The firms could have enough capital to continue lending through strains to the economy, according to the results. Bloomberg Global Finance reporter Laura Noonan is here with analysis. Good morning to you, Laura. We heard a lot from the Bank of England this morning across a whole load of asset classes. Your focus then has been on the capital buffers and the Bank of England cutting those capital buffers for the first time in quite a long time as the sector shows some resilience. So what's your big takeaway?
So this has been a really exciting day for those of us interested in UK financial regulation. What the Bank of England has said is that back in 2015, they said banks needed a certain level of capital across the system. That was 14%. They now believe that is 13%. That is quite a big difference. Now, we're not going to see that flow through until 2027, but it is still theoretically reducing a lot of capital back into the economy, which banks can use, they say, for lending, possibly payouts. So it is a significant day for that. And part of the reason they're doing it is, as you said, nobody failed the UK banking stress tests. Everybody's fine. Now, nobody has failed a stress test since 2016. So that in itself is not unexpected. The other thing, which is obviously happening right across the UK, is that there's a lot of pressure to support growth. There's a lot of pressure for the Bank of England to consider the competitiveness of the UK finance industry. And that is partly what is leading this review. So what they're going to do now is have a review as well and look at a few tailored areas where they might be able to make regulation better, and they'll do that early next year.
At the same time, we're lowering capital standards at the same time as flagging risks.
Yes.
So let's talk about the risks. Where do they see the risks? Because there seem to be multiple pockets of risks that they're worried about at the moment.
It is a delicate balancing act, and they do see a lot of risks. I mean, AI was called out again as an area of risk, and they are concerned about bubbles there. They're concerned about valuations. They're concerned about private markets. Later in the week, they will launch a new private market stress test. So there's a lot of risks. And I think the Bank of England is in a dangerous situation where they're trying to give the minimum amount that they can give while still being seen to give something. I think that is the game they're in. And we'll have a press conference later today where we'll be pushing them on, well, if you're lowering the neutral level of capital, is that not deregulation? Because they've been saying all along, we are not deregulating, we are simplifying, we're calling it everything but deregulation. But if you actually lower the number, because the number matters, there's been a lot of other action around, bankers' bonuses, all of that, that's fine. But what really matters is the amount of capital in the system. And that is what they have now signalled that they will lower, albeit not until 2027.
Does this not bring them into line with others, does it?
They would argue that it does. They have a new paper out today among the many, many hundreds of pages this morning, which shows that the UK, having done this, will be in line with where international neighbours are or where they are headed. That's a bit of a fine-tuning as well, because both the US and the EU, which are the relevant international neighbours, are both making changes. We don't quite know where they're headed. We suspect they're headed to a lower place. The other final thing I'd say on that is that while the current level of requirements is 14%, banks actually hold 17%. So banks never trust that they can run at the level. And it's going to be quite difficult, I think, to convince banks that they can actually take this money out. And that's part of the challenge. There's been a lot of debate around buffers and how much you need to maintain these buffers. And the idea is the Bank of England wants to give the banks confidence that if the requirement is 14 or if it's 13, you can hold something closer to that. And that's going to be a whole conversation.
What time is the press conference?
The press conference is at 10.
Excellent. We're going to be tuning in. Laura Noonan, thank you very much indeed. The Markets Today team hosting a live Q&A, 1 p.m. today on all of this. Digital subscribers, terminal clients have the exclusive opportunity to ask questions around what is happening here. Up next, we'll get back to the market story. That's next. This is Bloomberg.
key issue right now for us in the diamond space is the declared divestment of Anglo from GBS. And as you know, Anglo holds 85% stake in GBS. Botswana, the government of the Republic of Botswana holds 15. We are resolute now, and we've communicated a firm intention to increase our stake in GBS to a controlling stake. We have lined up a number of potential collaborators with us, if I may put it that way. We have targeted funders, we have parties, we have the Oman Sovereign Wealth Fund, we have others who are willing and ready.
The Middle East and Africa regions are home to some of the biggest deals and fastest growth in the world. Vibrant resources and high-yield investment opportunities abound. I'm Jumana Bersetchi. Join me on Bloomberg Horizon's Middle East and Africa for the stories, newsmakers, and insights shaping the decisions of traders across this exciting region.
You had heightened levels of volatility.
There's still room to maneuver.
We do see opportunities.
It allows you to increase significantly your net income.
Every trading day, only on Bloomberg.
Technology is embedded in every aspect of our lives.
And laying the foundation for the future.
From finance to defense, AI to entertainment.
And from the road to the stars. Bloomberg brings you the latest stories of the people and companies pushing the tech sector to new frontiers.
And the politics that shape global tech markets.
I'm Caroline Hyde in New York.
And I'm Ed Ludlow in San Francisco.
Watch Bloomberg Tech every weekday.
Only on Bloomberg Television.
From the world of politics to the world of business, Joe Matthew and Kaylee Lines deliver news, insight, and analysis live 2 times a day, every trading day. Balance of Power at 1 and 5 Eastern, only on Bloomberg.
Welcome back. This is the opening trade. 30 minutes into a session that's a little bit quieter than yesterday. Yesterday's mood was pretty risk-off. Was that driven by higher yields in bond markets, the cryptocurrency sell-off? All of that continued into the US session of yesterday, Guy. But here in Europe, then, maybe drawing a bit of a line in the sand, and European equity markets going a touch higher. Certainly that's the case over in Germany. Maybe that has too much to do with one particular stock and buyer in focus there. But the DAX is up by 0.4%. Yeah. Some ex-dividends coming through in the French market, so we're a little flatter in that one. The UK market, not in a hurry to go anywhere. But the overall picture created by these markets is one that's much more typical of maybe the quieter months of the year, and maybe we're heading into one of those.
Yeah, I think you back buyer out of the DAX, and it looks fairly flat as well. And you can see it. You look at the internals this morning. Higher, 274, lower, 307. We are fairly balanced in terms of what we're seeing. So you're not seeing a lot of volatility, a lot of cancelling out happening in terms of the volatility picture. Volume is reasonably light, as you would normally expect at this time of year. So the internals not really telling you a huge story this morning. You get into single stocks, though, life gets significantly more exciting. Buyer is the one that really stands out this morning. The commentary coming through from the Trump team, maybe pushing the US judicial system, maybe to have another look at the roundup story. Buyer reacting really positively to that. We're up by around 12%. That's giving a decent lift to the German market this morning, as is as well Siemens Energy. That is up by 2.27%. Bank of Santander is up by 1.1%. Is that a UK story? Remember, this is a big UK lender as well. Think about it as a UK bank, not just as a Spanish bank too. So that's the picture on the upside. Let's talk about the downside. There's a fair pharma sort of theme running through this. Novo's down by 1.4%. Astra's down by 0.7%. That's a big factor for the London market. LVMH is ex-dividend today, so just be aware of that. There's a whole load of French XD stocks today. A lot centered in the luxury sector, but you've got names like Thales as well, also going XD. LVMH down by 0.9%, Alan.
Let's focus in on some of the other stories that we need to keep on our radar this morning then, Guy. The Bank of England has cut its estimate of how much capital the UK's banking sector needs for the first time in a decade. The BOE also signalled a consultation that could free up extra lending and higher payouts to shareholders. Bloomberg has learned Warner Brothers has received a mostly cash offer from Netflix as it fields a second round of bids. Sources say the offers are binding, which means the board can sign off on a deal quickly if its goals are met. Warner Brothers is said to want $30 per share. The stock closed at $23.87 on Monday in New York, giving the company an equity market value of $59 billion. Bitcoin is steadying after almost $1 billion of leveraged crypto positions were liquidated during another sharp drop in prices yesterday. Traders are watching $80,000 on Bitcoin as the next key support level, with the market expecting structural headwinds to continue for the rest of this month. Guy.
Okay, let's move back to the markets and figure out what we are anticipating for next year. We're very much coming to the conclusion of this year. Ashmore Group predicts 2026 will be a year of deflationary shocks, some of that coming from AI, but actually in some ways underpinning the markets, more of a Goldilocks theme returning as well. Ashmore's research head, Gustavo Medeiros, joining us now for more on their EM and global outlook. Good morning.
Good morning, Guy.
Deflationary shocks coming next year. Is that the big theme that I'm going to be thinking about? How do I think about 2026? What's the kind of the big overarching thought that you have about it?
Yes, absolutely. It's this time of the year to take a step back to look at what kind of like can happen in the next 12 months. 2025 was the year about U.S. policy, right? We've seen tariffs coming and going. We've seen the budget that put a lot of incentives for CapEx, and the big tech companies are going to benefit significantly from that. We've also seen a very erratic policy, which now we're closing the year with a discussion about the regime change at the Fed, right? This sets the scene for 2026, which is going to be mostly about the business cycle. And we think, too, that the impact of AI on global macro is going to be very important to monitor. Against that backdrop, we have China exporting deflation for the rest of the world. And in our view, when you think about AI, if you look into the company results, if you look into kind of like, what broader companies are adopting, what they're doing, it seems to be quite deflationary before being inflationary, i.e. Layoffs on the labor market is probably going to impact the global macro picture first before we hit the boundaries in terms of energy availability, in terms of capital availability, etc. Therefore, we think that at least the first half of 2026 is one where you have more disinflationary forces, and that's very much against the consensus, Guy, where we've been talking a lot about debasement recently. And I think that the hawks and the debasement, people that are worried about debasement, too much inflation, are right over the last 5 years, but on a forward-looking basis, that can change.
The picture you're painting is one in which the Fed will be able to cut. Correct. And cut reasonably aggressively. To other central banks cut, because they've already, if you look at the ECB, for instance, already lowered rates quite significantly. Other central banks have lowered rates quite significantly as well. Basically, what I'm getting at, are we going to see a cheaper dollar next year? And is that going to be the overarching theme that drives my investment decisions going into next year? This year, it's had a really big impact in terms of portfolio performance. Is a cheaper dollar going to be the theme of next year? And how do you see it manifesting itself?
I think it's going to be part of it for sure, because if you look in G7, the central banks that have room to cut rates are the Fed and the Bank of England. Yep. And I think that if we do have an appointment of Kevin Hassett to the Fed, we know that this is going to be more progressive thinking Federal Reserve, right? They want to think on a forward-looking basis, and the market might have its questions around that. But going, again, 2025 was the first year where we've seen the dollar weakening on the back of a risk-off market, on the back of kind of like a 20% correction on the S&P. That changed dynamics. That started to change asset allocations because of the change in the correlations of these asset prices, right? And we think that going into 2026 is just going to be a continuation of this trend. I think that the really kind of like the year that marked the start of the dollar weakness was really 2025. But I think that we're going to see ongoing dollar weakness as the Fed potentially cuts policy rates more than people expect. Against this backdrop, if you think about very quickly in emerging markets, there is a number of emerging market central banks, from Brazil to South Africa to Turkey, including in the frontier space, that have been actually keeping a very hawkish stance, and real interest rates are at the highest levels in 15 to 20 years. And that is, I think, the biggest development. As these disinflationary shocks keep on getting to the global economy, these central banks will have a lot more room to ease without an impact on their currency because of the weaker dollar backdrop.
Okay, and Gustavo, it is the weakness of the dollar. You focus on global macro, but as it applies to emerging markets, don't you? And it's the weakness in the dollar and the path for the dollar that really does make a difference for those emerging markets. So you see that continuing. Is this a structural change in the dollar that emerging markets can count on in the future, or is it just cyclical?
I think it's cyclical, but the cyclical picture is a 10-year picture. The dollar peaked in nominal terms in Q4 2022 at 114.80. In real terms, it peaked just recently after Trump got elected because inflation differentials. And we've seen actually the typical peak to trough cycles in the dollar are 8 to 12 years apart. And now we have a very large amount of global investors that are over-allocated to U.S. capital markets and a U.S. administration that wants a weaker dollar. So that really rhymes with the prior two peaks that we've seen, which was 2001 and 1985, when we had in 2001, far too much over-allocation to U.S. capital markets. In 1985, the U.S. administration wanted dollar weaker. Today, we have two forces playing at the same time. So we think that we are in a cyclical dollar weakness, but is again at a long-term 10-year cycle, which should reflect asset allocations, which are not there yet. They have too little diversification so far.
And how does that rub up against the AI story? Because you mentioned that it's going to be deflationary to start with. I imagine the United States will be early adopters when it comes to the AI technology, just like they are spreading the AI technology around the world through chips and the like, and hyperscalers. So, I mean, how convinced are you that the deflationary phase, how long will it last for? Is it just a 6-month thing, or is it a few years that we are in this deflationary period before we get the inflation impact that you foresee?
That's a great question, and I think we have to be humble here. We don't know exactly. We need to monitor it on a quarter-to-quarter basis. What we know is new technologies are disinflationary, deflationary, right? This technology is quite powerful, and we can see in our day-to-day that things are changing a lot. We can see on the company's results, on the technology sector, now it's broadening out to other sectors that companies are already doing more with less, i.e. higher results with lower labor participation. And the forward-looking basis, if you look at surveys, 1 in 4 companies in the UK, if I'm not mistaken, or 1 in 5, are planning to actually have a smaller labor force today. And the risks on the inflationary side are, again, constraints. Think about energy constraints, capital constraints, ships constraints, etc. But most companies so far are actually talking about the excitement of the adoption, and that should be a disinflationary force that kicks in first in 2026 before we actually get. I personally think that if you look at the inflationary force is going to start hitting once we have a much bigger adoption of the technologies that are very data intensive. Think about self-driving cars, kind of like, loyalty to the economy, etc. That's being tested so far, but not widely adopted. Once it gets widely adopted, it may be.
So is it deflationary because of what it does to price discovery, or is it deflationary because people are put out of work?
Because people put out work, and central banks have to react to that, right? You have to think about like the 1990s, while Alan Greenspan was basically looking at a picture where growth was surprising to the upside, but inflation was not coming through, and actually you saw the labor market softening, and you have to react to the labor market.
Makes you wonder what happens in China. They've already got deflationary forces. You add this in, it could be quite a mix.
Absolutely, and we'll turn to China in just a moment. Gustavo, thank you very much. Thank you for joining us. Gustavo Medeiros, Head of Research at Ashmore Group. Let us turn to China right now, in fact. China's DeepSeek has unveiled 2 new versions of an experimental AI model, claiming the new service matches the performance of OpenAI's flagship GPT-5. DeepSeek says the new model performs well across multiple reasoning benchmarks, suggesting China's open-source systems remain competitive with Silicon Valley's frontier proprietary models. Analysis by Bloomberg suggests China's top-down AI strategy sets the country up to achieve large-scale deployment that the US will struggle to replicate. The national rollout leverages low-cost open-source models and gives China a greater chance of improving economic productivity. However, this model comes at a cost to private sector tech firms. This is the focus of this new deep dive on the Bloomberg terminal, written by our senior Bloomberg Intelligence China tech analyst, Robert Lee. Robert, so nice to have you with us. Take us to the top of this story, because I just read out a lot of conclusions from your report, and maybe you can take us to the most salient point, the key thing we need to take away here. How big what is the main conclusion then from this report?
Well, I guess the main question is who's the ultimate winner of this, and our conclusion is very clear. It's actually the Chinese economy. This ties in very much with what our colleagues in Bloomberg Economics have been saying, that through the top-down AI strategy, which is referred to as AI Plus, in which the government is trying to accelerate the proliferation of AI across every sector of the economy, across every province within the nation itself, that stands to boost economic productivity. So it's the Chinese nation, it's the economic productivity as a whole that stands to benefit from this. And I'd say arguably China is emerging really with a global lead in the real world deployment of AI. But ultimately, somebody has to be paying for this. So the second question is obviously who is? Now, to some degree, there's a high level of government subsidy, which is funding this rapid rollout. But it's the shareholders of the private sector tech platforms, the shareholders of the likes of Alibaba and Baidu that are subsidizing it effectively. So again, that has borne out on the data that these companies themselves are reporting. For example, on the AI cloud sector, Alibaba's cloud margins are high single digits. Now that compares to about 37% reported by Amazon Web Services in the US last year. So the level of profitability is significantly low. It's too low to have a transformative effect on the earnings outlook for most of these big listed tech platforms, but it's the Chinese economy and the scope for productivity savings, which will ultimately be the main beneficiary.
Can they do it without NVIDIA, I guess is the question. And can they do it without NVIDIA and still deliver the energy? Is there the energy needed to do it without NVIDIA? Just walk us through the impact that NVIDIA is having.
Okay, well, I would say I think most people agree for the time being and probably the longer term, the door is closed to NVIDIA at the moment. I know there's still a lot of political machinations. It may change from week to week, but I think, you know, that ship has sailed, the horse has bolted, whatever, you know, choose your cliche of your choice. But yeah, the evidence, as you said in your intro, speaks for itself. I mean, DeepSeek has come out with a new iteration on its model, which it is claiming is on par with the latest models from ChatGPT. If you look at third-party benchmarking services, so we often use one called LiveBench, which is actually a US-based benchmarking service, then the performance premium that OpenAI enjoys is only 10 to 11%. So China has achieved, over the Chinese models, I should say. So China's already achieving that with the export restrictions, etc. And as the supply of domestically developed AI accelerator chips from Huawei and others increases, then I still think, you know, that there is going to be a challenge over the next 12 to 18 months. But China's already managing that relatively well. And I think the direction of travel is clear. The other thing, just very briefly, come back to your point of electricity. China is one of the few large nations out there that has continuously invested in its electricity infrastructure network over the last 20 years or so. I mean, some of that is as a necessity with increasing urbanization, etc. But they have a very robust electricity network which is able to deliver and meet the demands demanded by AI. So I think, you know, I think that's another potential source of strategic advantage for the Chinese in this race. Yeah. However, America will still lead in frontier model development.
Okay, well, I was going to ask you, I mean, you've talked about large language models then and the race there between ChatGPT and DeepSeek and others, but what about the broader question about who stands the best chance of winning then the global AI race?
Okay, I mean, I'm often asked this question, and it's a very obvious one, but I think, you know, we live in a bifurcated world. China operates in its region. I mean, there are clearly a lot of countries, whether it's in Southeast Asia, Africa, Latin America, that are on friendly terms with Chinese companies and with China itself. So that will lead to export opportunities for Chinese firms to export into those regions. But clearly, the door in Western Europe and the States is closed to Chinese technology for all the obvious reasons at the moment. And then equally, America and its allies exist in a separate sphere. So I think, you know, we're in a bifurcated world.
Okay, Rob, can I just come back to that issue of if you are not the United States sphere and you're not in the Chinese sphere, which solution do you pick? Because, yeah, you're right, the Chinese have the energy, but not everybody has the energy. And it looks like the Chinese solution requires more power. So if you're a third party, which way do you go? Do you go with the US solution, which doesn't require so much power, but requires obviously NVIDIA chips, etc., or do you go with the Chinese solution, which requires more power, and you have to deal with that? What does the rest of the world do?
Yeah, you are making me think there. That is a good one. I think for a region like the Gulf, which I suppose is on many of the Gulf countries, Saudi in particular, tries to maintain good relationships with both China and America. But clearly, you know, sunlight is ample. There is scope for them to build out and enhance their solar infrastructure as a source of energy supply. But then if you look like countries like Japan, post-Fukushima, obviously the energy supply is under massive pressure. I think even today you've seen an announcement that they're going to restart some nuclear reactors. I think it's countries like Japan and maybe Korea, who sit in the middle there and do have potential, in a potential bind going forward. I don't think there's any quick and easy solution to them. But maybe the most obvious route for them to go down, again, is, as the Chinese have done, to move towards smaller, more computationally efficient models, which are going to use less power in the first place, and try to manage the situation and the constraints that way.
Rob, great stuff. Thank you very much indeed. Rob Lee joining us from Bloomberg Intelligence. Up next, we'll turn our attention back to what is happening with the geopolitical story. President Zelensky is on a visit to Europe and says the latest Ukraine peace plan is, quote, better. All the details next. This is Bloomberg.
Such an incredibly exciting moment with AI. It is really the most profound technology of our lifetimes, and I think it has the potential to help us rethink literally everything. The potential for economic impact, societal benefit is honestly boundless. When we think about the economic impact for Europe in particular, it's around a 1.2 trillion euro estimate of the productivity growth that can be unlocked. This platform shift that we are living through, I think, is going to create untold amounts of value for the world, but also for the businesses and for economies, which is why I'm incredibly optimistic in this moment for Europe, but also for the whole world.
How do you think about job losses or safety for some of the AI tools?
You know, I hear the anxiety, and I understand the anxiety about jobs. I think that we are certainly going to live through a massive transition about how people learn to work alongside these tools. I mean, the reality is I do think there'll be some number of jobs that are displaced. I think it is a smaller number maybe than some anticipate. We estimate it's around 7%. And I think what's important is that we have programs that help those 7% transition into new fields of work. I think what is more likely is that most of us are going to learn to work alongside these tools. So we estimate about 2/3 of us. If you think about the tasks you do in your daily life, when you look at every industry, there are administrative tasks that are happening everywhere, and that's what AI is most helpful in improving.
What is going to be the consequence for U.S. markets? We are basically deep in the European earnings season.
Take a look at how we're faring when it comes to Asian markets.
Bringing you up-to-the-minute geopolitical news whenever and wherever it happens. I'm Stephen Engel at Japan's Akasaka Palace in Tokyo, and this is Bloomberg.
Welcome back. This is the opening trade, 8:51 in London, and European stocks overall not moving too far. We've got a big move in buyer over in Germany, and the DAX is up basically on the back of that, so up by around 0.5% on the German market. Elsewhere, flat to positive. US futures are almost entirely flat this hour. Our focus is on many things this week, but one of them is on geopolitics and trying to resolve Russia's war in Ukraine. With that in mind, we know that Steve Witkoff, the envoy from the Trump administration, has made his way to Moscow. Moscow, and we hear from the TASS Russian news agency, the Kremlin is saying that the Putin-Witkoff meeting is set to take place in around 5 hours' time. So it's just coming up to 9 o'clock here today. So European time, that'll be sort of early to mid-morning.
Yeah.
Afternoon, sorry.
Yeah. And will allow him maybe to kind of be on maybe a more sensible body clock time from his point of view. Let's talk about what defence stocks are doing this morning. We continue to use them in some ways as a litmus test for how the market is feeling about what is happening in Ukraine. A little bit of a bid coming through this morning, nothing really significant, but we have seen some volatility in these stocks. Keep an eye as well, I would argue, in Central and European currencies, because in some ways you could see some pinging around of those if we do get a peace deal. And again, just looking for a kind of an idea, a test of how the market feels about what we are seeing when it comes to this story. Witkoff is, we think, we've now got the timing, we think, going to meet Putin a little bit later on today. He's in Moscow for talks on the latest proposals to end the invasion of Ukraine, or at least provide some sort of a way out of where we are now. Volodymyr Zelensky has said the new version of the peace plan looks better, but the Ukrainian leader is warning that territorial issues remain the most difficult to solve.
And on the topic of security guarantees, we have concrete details from the U.S., concrete details from Europe. I'd say these are the three main topics, tracks, but also triggers. We need to be very careful here. I thank our negotiation teams. The plan looks better.
Okay, let's go to Warsaw for getting an update on what's happening here. Piotr Skolomowski joins us for that. We are getting a better reaction to the peace proposals that are being put on the table at the moment, Piotr, but what we don't see is a resolution to the territorial issue. If we don't get a resolution to the territorial issue, does the rest of it really matter?
Hi, Guy. Indeed. So we heard, as you just showed, we heard from President Zelensky, who said the plan looks better. Obviously, it does look better because there's input from Ukrainians. The initial 28-point plan had no input from Ukraine. Literally, it was just written together or put together between Steve Witkoff and Kirill Dmitriev, so Russia's representative, and it caught everyone by surprise, pretty much. So, as you said, I mean, territorial issues at this point have been sort of taken out of the initial plan. And as Zelensky pointed out, these are the key issues: territories and security guarantees. Now, and here is the rub, because as a matter of fact, that's the point where both sides differ quite significantly. On the one hand, Russia, and we heard from President Putin last week, who said, well, what's the plan, or what is emerging right now is a good basis for discussions, but we're not going to give up on taking over the land that they don't really control. At the same time, Ukraine is saying this is a red line for Ukraine. They are not going to give up land in the Donetsk region, which Ukraine controls most of, but still hasn't actually taken full control of. So it's hard to imagine that there's going to be some kind of an agreement where both sides could come to the table and, without being forced to it, agree that this is where we sort of pause.
Piotr, we're going to watch these meetings very carefully. We're looking forward to your coverage. Thank you very much indeed. Piotr Skolomowski joining us on the latest as we look to the Dublin trip, we look to the Witkoff trip to maybe see some progress.
Yeah, it does look as if, and you made this point before we went to Piotr there for that update, we're seeing a little bit of movement up in defence stocks, which does suggest perhaps at the margin the market is a little bit less excited about the prospects for peace than they were yesterday, where we saw a drop in defence stocks. But the market, just like everybody else, waiting to see whether some kind of common ground what kind of common ground can be achieved.
Can emerge, and do we get, and then what happens after that? I think there's this sort of huge gap in our understanding.
How sustainable can it be?
Yeah, how sustainable is it? What happens to the European defence story? What happens to Central and Eastern Europe in terms of their currency? There's a lot will happen at that point, potentially, depending on the nature of the deal. That wraps Tuesday up for us. We will, of course, be back tomorrow. It's an interesting week. It started off very strongly today, a little bit quieter. The Pulse is up next. Francine walking you through all of the action. That's next. This is Bloomberg.
From our studios in New York and San Francisco, our expert hosts have the data and analysis from the companies you know and the startups to watch, plus the interviews you don't want to miss. Watch Caroline Hyde and Ed Ludlow on Bloomberg Technology, the only daily business show dedicated to tech, right in the middle of the trading action. Live every weekday, only on Bloomberg Television. Context changes everything. Get your fixed income fix. Watch Bloomberg Real Yield around the world right here on Bloomberg. Context changes everything. Why do the biggest names in business choose Bloomberg Television?
That's a great question.
It's a very good question.
Interesting question.
Good question.
Great question.
I so appreciate that question.
You certainly ask interesting questions.
Bloomberg Television. Top experts, great questions.
We're coming to you live from Kuala Lumpur. The whole world is here.
The APEC Leaders Summit bringing together heads of states of 21 APEC economies.
The White House is trying to use the stops to gain additional leverage.
This big deal with a number of the biggest companies in South Korea.
That's a big number.
Deals can't be done.
Trust Bloomberg for on-the-ground coverage.
Korea is not Japan.
Up-to-the-minute reporting.
In this latest salvo of this trade war.
What a visual.
And the analysis you need.
China's not going anywhere, nor are we.
Key investors, top executives, global innovators. Join me for in-depth conversations with the biggest newsmakers on the day's top stories. Insight with Haslinda Anand, only on Bloomberg.
Morning, this is Bloomberg Daybreak Europe. I'm Tom McKenzie in London. These are the stories that set your agenda.
Taking you from the U.S. market's close to the overnight session in Asia, we'll walk you through what you need to know to kickstart Europe's trading day. Live from our European headquarters, we bring you the day's top market-moving stories, unmatched expert analysis, and on-the-ground reporting from across the continent. Tune in to Daybreak Europe, only on Bloomberg Television. Context changes everything.
The crypto rout eases after Bitcoin fell more than 5% on Monday. Stocks remain on the back foot after a shaky start to the month. U.S. Special Envoy Steve Witkoff due to meet the Russian president in Moscow. The EU warns Washington not to force a deal on Ukraine. Plus, Taiwan's foreign minister tells Bloomberg he thinks that tensions between China and Japan could drag on for a year. We'll have more from our exclusive interview. Now, first thing is first, let's check on the markets. And again, there is quite a lot going on. Look, stocks in general, I guess, are tilting a little bit lower. We had a fragile trading yesterday after the sell-off in cryptocurrencies really pointed to a little bit of risk aversion. And that's kind of staying as it is. One thing we need to watch out for is Japanese 10-year yield. Now, yesterday, again, there was a wobble, actually, that has to do with a lot of Japanese assets. We saw today solid demand for that final 10-year bond auction. That's the final bond auction of the year, and that's really helped steady global markets, global debt markets after the speculation yesterday from the BOJ interest rate hike. Definitely unsettled traders, to say the least. Brent crude 62.97. The picture here in Europe is, again, one of a little bit of a mixed bag. I think people are quite cautious as we enter towards the end of the year. So let's look at the CAC 40, but also the FTSE and the FTSE maybe over in Italy if we can get that European markets map up. Look, there's cautious optimism. So stocks, you can see, are gaining between 0.1 and 0.7%. So for the conversations that matter and the insights you need, let's get started.
Newsmakers and market movers. This is The Pulse with Francine Lacqua.
Well, good morning, everyone, and welcome to The Pulse. I'm Francine Lacqua here in London. Now, Bitcoin stabilizing after tumbling around 30% since October in a pretty volatile start to the month. Let's bring in Ana Herrera, our senior editor for digital finance. Anna, thank you so much for joining us again. Yesterday, we were talking quite extensively about the sell-off, the Bitcoin sell-off, taking a little bit of a pause. What does that indicate?
It could be the beginning of another drop. We're not sure. I guess they're just
crypto seems to be following sort of macro indicators a bit more. You know, it tends to follow whether people are more risk averse or not. What investors, if they're risk off, then they tend to shy away from crypto. It's definitely not been an easy few months for retail investors, especially in crypto. For example, you know, many of them have been traditionally investing in stocks like Strategy, which is a big Bitcoin accumulator, and we've seen that stock drop dramatically. They had to say yesterday that they're going to set aside some money to pay dividends because people were worried that they'll have to start selling Bitcoin, which would add more pressure to the price.
So what happens at 80,000?
Then you don't know if it's going to keep dropping more and if we'll reach the lows. It's still not the lows of the year. We had a bigger drop in April, but it's certainly quite shocking that, you know, we've seen the Bitcoin lose all of the gains that it had accumulated during the year, which was a great year for crypto in general in terms of the conditions in general.
So, and I mean, the big question is basically, will Bitcoin be back to breaking new record highs in the short term? So this is our big questions, of course, on our MLive blog. What does seem to be, I mean, this is the usual pattern. It kind of falls quite a lot and then record high again. Does it feel different this time?
So the condition, what's different is that the condition for crypto as an industry seem optimal, right? They have the support of, you know, the United States president, and so you think that what the investors have been looking for, which is support for bigger institutional buyers, is there. But in reality, what might be shaping what's happening more is just the macro, as we've been saying before. So, for example, what happens at the Fed, you know, what's happening in Japan. So we'll have to watch and see, I guess, what happens in the market in general, perhaps to know what happens with crypto. But with crypto, you never know. They might, at the end, there might be a crypto disaster that makes the price start slipping again.
Yeah, but you're right. It does feel like the asset class has actually changed quite significantly. And thank you so much, Anna Herrera, there, Bloomberg Senior Editor for Digital Finance. Now, uncertainty in some corners of the market. My next guest says the Fed will cut in December and again the first quarter of next year. I'm delighted to be joined by Grace Peters, co-head of Global Investment Strategy at JP Morgan Private Bank. Grace, the day you start the show with Bitcoin means that there's something going on that you're trying to figure out what this, you know, whether this is a new asset class, or how do you look at crypto overall?
Yeah, so it's actually not an asset that we cover at present because of the extreme volatility, such as, you know, what we're talking about at the moment. But I'd just say that the pullback that we're seeing, I think, is indicative of people getting to the end of the year, assessing positions that broadly have done really well, and acknowledging that, you know, whilst we think there is a path to positive risk asset returns next year, there's also a lot of risks out there. And so some of those risks really coming in to affect, you know, risk sentiment across the board, and particularly assets that aren't connected to cash flows and therefore are more intangible to value.
I know, Grace, you were one of the first ones to also come out with your 2026 outlook. So that's done, but it still feels like it's really AI and the Fed that's supporting these markets.
Yes, I think so. I mean, look, what's most interesting to me when I look back for 2025 is how the composition of growth has changed. I mean, AI-driven capex has really been what's driven over 1% of US GDP, which means it's overtaken the consumer in 2025 as a driver of growth. Even when we look at within the consumer, it's bifurcated. You've got high-end consumers driving a lot of the spending, and so that bifurcation, I think, is interesting as it pertains to the risks. Because the first risk to me, really, over the next 3 months is that the economy is weaker than consensus expects. So particularly when you look at youth unemployment, there's a few red flags. And so that's one of the reasons that we think the Fed will cut in December and again in the first quarter. And that certainly is one reason to push back against a consensus view that growth is going to be strong and accelerating through the first half of the year. The AI capex piece, I think, is obviously also a key risk. You know, we're not going to stop asking the question, are we in a bubble? We're not going to find out. I mean, our view is that the next few quarters, you're still seeing extremely resilient demand. Demand still outstrips supply, but the question really is not for the next couple of quarters. It's more to 2 to 3 years down the line. What does that look like? And so our answer to that is what the market's overlooking is who are the productivity beneficiaries, not just productivity, but also then revenue growth opportunities, and that manifests in higher corporate margins. So when we talk risks...
And in what time frame?
Exactly. Well, I actually think the corporate margin story could play out sooner rather than later. Okay. I think that you could see see corporate margins continue to exceed company expectations, not just from the technology sector, but from a broader swathe of sectors who are benefiting from the spending, but also from revenue and productivity enhancement. So when we talk risks, there's downside, but also upside risks, I think, for next year.
Grace, going back to the U.S. economy, I mean, you're talking about this like K-shaped recovery with the risks, especially to, you know, unemployment for youth. But actually, how bad could it be? Because it feels like the market has completely now put to one side all the issues of tariffs and trade and even inflation picking back up.
Yes.
Could that come at the forefront?
Well, I would actually go back to the inflation argument, because I think right now, over the next 3 months, as I say, particularly in absence of data, the risk could be that the labour market is weaker than expected. Now, once we start to get into next year and, you know, a lot of the tax rebates come, the One Big Beautiful Bill beneficiaries start to flow through and should sort of really affect all consumers, but particularly perhaps that lower end cohort, then what I think you could see is a re-acceleration of growth, and with that, a re-acceleration of inflation. So you could have cyclical drivers of inflation next year, as well as more structural ones around demographics and AI spending, which means that whilst we're talking about the Fed cutting now, by the time we get to the middle of next year, I think we need to be open to the idea of, would the Fed need to raise rates through the end of 2026 or into 2027? So that's quite a complex picture to navigate. You mentioned our outlook. It's entitled Promise and Pressure. We do think the promise is going to win out. We think it'll be another good year for equities. But for many of these pressures, diversifiers, the alternative asset classes, gold, hedge funds, infrastructure, we think they're all really good components to add to the portfolio.
Grace, what do you do with the UK? So we had a big market event last week with the budget, and it seems, I mean, there were 80 measures. A lot of the market, you know, certain pockets of the market are still trying to figure out exactly what it means for them.
Yes, I mean, the UK is often an overlooked market, and I think there are pockets of value. The budget was better than feared for many. You know, many of our clients are invested in UK gilts to, you know, sort of step out of cash and secure shorter dated income. But I think within the UK stock market as well, the banks, the mining complex, I think, is interesting because I think the capital ratios are strong. The dividend return component, again, is very interesting to clients seeking income. So common overlooked. I wouldn't say it's our favourite market, but I think that there are opportunities there.
What happens in Europe? I mean, actually, there was the first, I had a couple of analysts yesterday saying that, again, the market is underestimating the fact that maybe the ECB doesn't move for quite some time, but then the next move up, end of next year, could be also interest rate hike.
It could. I mean, we're expecting the ECB to be on hold, but again, it depends on this profile of growth. And I think the consensus is that, particularly driven by the German fiscal spending, that growth in Europe starts to pick up in 2027. Right. But actually, the European consumer is not in a bad place. Actually, the accumulated wealth there actually is arguably more in Europe than in the US at the moment. And so if we see European growth come through a little bit stronger, more in 2026 rather than back-ended in 2027, I think that would be a positive catalyst for the European domestic economy. And it was interesting, I was in Asia last week seeing clients, and there's a real sense that actually some of the retailing in Asia is starting to pick up as well, which would be positive for European luxury, which is a sector that we recently upgraded, given that we do think, whilst there's structural issues undoubtedly in China, you know, some of the luxury names are bumping along the bottom.
Yeah, and that's like quite a stark reversal from a couple of months ago. I don't know whether it's pricing or is it just the China pickup?
I think it's a bit of both, but China is a huge part of the sentiment and obviously the growth driver as well when it comes to European luxury. So the notion that actually, you know, Hong Kong retail sales could be improving, that people on the ground are starting to say, look, it's not so much that there's a V-shaped recovery coming out of the economy, but, you know, people have got quite used to where they are and they know it's not going to be resolved anytime soon, but just a mild improvement from what's been a tough couple of years could be positive for sentiment, and again, in a sector that's pretty unloved at the moment.
Grace, we've certainly seen some bumps along the road for global bonds, and yesterday we had a bit of a wobble because of what we heard from the Bank of Japan. Today there was an auction, last one of the year, it was fine. How do you look at Japan?
Yeah, so Japan, we're sort of neutral rated from an equity position and similarly for the fixed income component as well. I think for the story in Japan on the equity side to do better, you need to continue to see the shareholder returns. But that's also a story in Europe, which is why we have a preference given the growth conversation that we had. And look, I still think for that scenario where growth surprises to the downside, fixed income is still going to provide support. So adding to government bonds in our mind, our duration across the book is around 6.5 years, which is longer than some of the clients that we see because we do want that inflation protection, the growth, downside growth protection, but you still need the inflation side too, which is in the old space.
There's so much political instability and geopolitics, which we cover on the show every day, but it doesn't quite translate into the markets, maybe at the margins, into a little bit of oil?
No, so it's interesting because actually when you look back over the last few decades, obviously geopolitics commands the largest share of airtime, but actually has never really had a lasting influence. I wouldn't say never, has rarely had a lasting influence on financial markets and risk assets. And the exception is really when it hits the oil price. And so really that's the transmission mechanism. But our view is that oil is, range bound to drifting lower because we still see a lot of supply coming. But that would obviously be one of the warning factors, and not just for the impact overall on bond yields, on risk sentiment, but obviously on the inflation picture as well would be a concern. So gold is our main commodity that we're constructive on.
Grace, does that feel strange? I mean, when geopolitics, because we did go into the year saying, look, a lot will change, trade is going to be really upended, watch out for tariffs. And now, are we in the clear, or could it come back with force?
I think we sort of think we are moving through the worst of the trade issues, in the clear, if to categorise it more broadly. Obviously, on a sector by sector, there could be small nuances, but I think that the market sort of got over the trade issues quite quickly. The corporates, whilst we're still seeing some follow through, some feed through next year, the corporates have dealt with it admirably. And again, I have to think that that's also linked to some of the AI productivity benefits that are coming through. And so I think for the most part, trade should be behind us. And for it to cause real concern, you'd have to see something quite major that caused, real issues in the system, more akin to what we had in the COVID pandemic, where you had proper supply disruption rather than just the fear of a couple more % on the effective tariff rate.
Grace, thank you so much for joining us. Grace Peters, they're co-head of global investment strategy at JP Morgan Private Bank. Coming up, Ukraine's president says a peace plan has been improved, but the EU has a warning for Washington. We'll have the details next, and this is Bloomberg.
up-to-the-minute news whenever and wherever it happens. I'm Haslinda Amin in Bangkok. This is Bloomberg.
Tune in to Bloomberg Business Week Daily.
We got to talk crypto.
From the magazine that helps global leaders stay ahead.
What's the conversation around your company?
Bringing you insight on the people, companies, and trends shaping today's complex economy.
Planning very big things.
A new level of premium.
Plus global business, finance, and tech news as it happens.
The floodgates of innovation are going to open up.
You can't fake passion. You either are or you aren't.
Bloomberg Business Week Daily, only on Bloomberg.
Asia is at the forefront of some of the world's biggest stories. I'm Sherrian in Tokyo.
And I'm Heidi Stroud-Watts here in Sydney, where the trading day begins. We're here in the center of all the action to get you set up with the numbers, news, and knowledge you need for the day ahead.
The demand is indeed recovering. We've been waiting for this moment.
The opportunity of a century.
Join us on Bloomberg The Asia Trade. Weekdays only on Bloomberg TV. Context changes everything.
At a time when policy in Washington is driving Wall Street, we draw a distinction between the rhetoric and the action, bringing you market-moving guests and original reporting. This is Bloomberg Surveillance.
The conversations that matter, the insights that you need. This is The Pulse, and I'm Francine Lacqua here in London. Now, U.S. envoy Steve Witkoff will meet President Vladimir Putin in Moscow in the coming hours to discuss the latest proposals to end Russia's full-scale invasion of Ukraine. Volodymyr Zelensky says the plan has been improved, but territory remains a sticking point.
And on the topic of security guarantees, we have concrete details from the U.S., concrete details from Europe. I'd say these are the three main topics, tracks, but also triggers. We need to be very careful here. I thank our negotiation teams. The plan looks better.
Let's now bring in Bloomberg's Piotr Skolimowski. Piotr, are we any closer to actually seeing a deal? What's the latest?
Hi, Francine. So indeed, as you pointed out, President Zelensky yesterday said that the new plan or the latest version of it looks much better. And it's no surprise because when we consider the fact that the initial plan, the 28-point plan, emerged a few weeks ago, it caught everyone by surprise. It then turned out it was pretty much drawn up together between Steve Witkoff, so U.S. envoy, and Kirill Dmitriev, which is a Russian envoy, with little or no input from Ukrainians and definitely no input from Europeans, who are completely caught off guard by this one. So we're seeing some improvement. We haven't seen much of the details as such, but still the sticking points remain, and the sticking points are huge in that respect. First of all, we're talking about territories where there are certain red lines that Ukraine has, which is they are happy or they're ready to kind of freeze the front line and have fighting stop where we are right now. For Russia, that's not enough, and they want to seize the land. They want to have full control of the Donbas region, which they've been trying to capture since the start of the full-scale invasion and haven't so far. So it's very difficult to imagine that both sides will come to some kind of a conclusion unless they're being pushed to it, and clearly there is a growing push from the administration of President Donald Trump to get the deal done very quickly.
Could there be a breakthrough in today's meeting between Witkoff and Putin?
Well, Witkoff, we have to remember that Witkoff, it's his sixth visit to Russia. It's his sixth visit to meet Vladimir Putin. He hasn't met Ukrainian side, and as our reporting showed, based on the transcript of his conversation with Putin's advisor Ushakov, he clearly has been talking much more with the Russian side. So Ukraine is probably looking at this meeting with certain concern, and that's sort of behind the efforts that we've seen over the last few weeks and especially the last few days. There was a meeting in Florida between Ukrainian delegation and Witkoff to try to kind of bend his ear a little bit and try to get their point of view. So I will see how much of a breakthrough is likely. Clearly, it's not Witkoff's first time there. But at the end of the day, the question is how much Ukraine is going to agree to whatever is being put on the table, and we're still far from
that. Separately, Piotr, a third oil tanker linked to Russia has been hit at sea. What more do we know about that?
Yeah, so that's a very interesting case. We had two oil tankers that were part of the shadow Russian fleet. They were hit just last week, and it was in Black Sea. And Ukraine claimed responsibility, or at least admitted that they've been behind that. As for the last one, it was off the coast of Senegal, and we don't really know who's behind that. What we have to say is that what we've seen from Ukrainian side is they've been attacking Russian refineries with their deep strikes inside the territory of Russia, which they consider. Given that how much Russia relies on oil and the revenues from oil and gas, they believe that's part of it's a fair game to basically attack whatever assets they have, and it had impact. So obviously, taking it off to shadow fleet vessels, which U.S. and Europe have been trying to clamp down on with some success, but very limited one, with sanctions, would probably amount to just another step in that effort to kind of reduce the revenues that Russia is getting from selling oil.
Piotr, thank you so much. Piotr Skolimowski there with the very latest, of course, on what's happening in Ukraine between Russia and the U.S. Now, here in the UK, the head of the Office for Budget Responsibility has quit after taking responsibility for the premature publication of the details of Rachel Reeves's budget. An inquiry described it as the worst failure in the OBR's history. Well, joining us now is Joe Mays, UK politics reporter for Bloomberg. Joe, thank you for joining us. So what's been the reaction to this and actually the findings of the OBR's internal investigation?
Well, I think part of the reaction has been that this felt like something of inevitability, given how bad this failing was and how you'd expect the most senior person in the organisation to take the fall for it. There's still some question about whether Rachel Reeves might have pressure on her still as well, given the communications in the run-up to the budget that's caused a lot of controversy here so far. I think Keir Starmer really wants to move on from this budget now, and hopefully, in his eyes, the resignation of Richard Hughes will in some way draw a line under it. Now the question is, who will be the new chair of the OBR? And it is ultimately appointed by the Chancellor and the Treasury Committee. So there has been tension between the OBR and the government over their budget analysis, their forecasts. So we're waiting to see who they pick. That's where we stand.
So the Prime Minister, Keir Starmer, has also defended Rachel Reeves after she was accused of misleading the public about the state of the UK's finances ahead of the budget. Joe, let's take a listen.
So we had on the one hand £16 billion less than we might otherwise have had. We had clear commitments that we'd made throughout the process as to what it was we were going to achieve. Therefore, against that backdrop, it was inevitable that we would always have to raise revenue. So there's no misleading there. During the overall process, the numbers improved.
So does this actually draw a line under the budget?
Well, I think the government's account still is hard to fully accept. I think that they say that they were talking about there being that £16 billion hit from the productivity downgrade, but when they were saying that, they knew at the time that the OBR's numbers were also showing that tax receipts were going to be much better than expected, offsetting that hit. And while they did face a hole in the public finances, it wasn't of the size and scale which we were being led to believe by Rachel Reeves and the government at the time. So I think this story will continue to run and run. And I think the aim for the government now is to have policy announcements, move the agenda on as best as they can. But, you're having polling now asking questions like, does the public trust Rachel Reeves? Did she lie at the budget? This is not the post-budget media narrative the government would have wanted. So now it's a case of them trying to move it on by wanting the public to focus on other things.
Joe, thanks so much. Bloomberg's Joe Mays there with the very latest on what's happening in the UK. Now, the White House has defended the Pentagon's handling of a September attack on a suspected drug-running boat off South America. It's denying a report that Defense Secretary Pete Hegseth had given an order to kill everyone on the vessel. While spokeswoman Caroline Leavitt confirmed 2 strikes on the ship, but says the order for the second attack came from a U.S. Navy admiral, not Hegseth. And a leading Iranian human rights activist and Nobel laureate has told Bloomberg that state suppression in the Islamic State is getting worse as the country faces multiple crises, including regional isolation and a deteriorating economy. Narges Mohammadi says activists, teachers, and academics are increasingly being targeted by the state, which is using the death penalty as a, quote, tool of repression.
The repression has intensified. The fact is, the executions reflect the degree of violence and cruelty the Islamic Republic has unleashed against the Iranian people. Arrests have become far more widespread and have now reached layers of society that, although always under threat, hadn't been directly targeted like this before. I see the repression now as extremely serious. The establishment's violence against its own people is a naked one. And I know people are deeply angry.
Narges Mohammadi there, who won the Nobel Peace Prize in 2023 while serving a sentence in Tehran's notorious Evin prison. She remains politically active and is a counselor for One Young World, an organization that supports young leaders. Now, the European Union plans to commit at least €3 billion over the next year to help end its dependence on Chinese raw materials. The pledge is part of a broader plan, which will also create a European critical raw material center to oversee investments and help build stockpiles. Coming up, Taiwan's foreign minister warns that the dispute between China and Japan could drag on for a year. More from our exclusive interview next, and this is Bloomberg.
We have two crises, two essential crises, and for both it's now or never: democracy and climate, and they are absolutely interlinked. And we have to solve them together. We're losing the democratic infrastructure and norms to deal with the climate, and we're losing the climate stability that is essential for a democracy. We have to solve them together. We've never faced a threat like this to our democracy at a time when it's a perfect storm, at a time when we're being told by climate scientists, some of you may be in this room, that we have to cut our emissions, fossil fuel emissions, in half in 5 years now. You know, when I started to realize what was happening, it was 12 years, and we haven't done it.
It's the world's second largest economy with a growing influence in global affairs. Bloomberg The China Show brings you the unmatched expertise you need to keep track of breaking news, in-depth market analysis, and the most influential newsmakers in and around China.
We need to do more to engage the market more. We're risk on. I think we caught a little sweet spot.
Massive savings right now.
It's already a different game.
Bloomberg The China Show. Weekdays around the world, right here on Bloomberg. Context changes everything.
Good morning. This is Bloomberg Surveillance.
Welcome back to the opening trade.
Watch
Bloomberg Tech. This is the Asia Trade.
This is Wall Street Week. Welcome to Balance of Power.
This is Bloomberg Television. U.S. jobs numbers are released. Bloomberg has the report under surveillance with crucial data and expert analysis at terminal speed. Nobody covers Jobs Day like Bloomberg.
Good morning, everyone, and welcome to The Pulse. I'm Francine Lacqua here in London, and these are your top stories. The crypto rout eases after Bitcoin fell more than 5% on Monday. Stocks remain on the back foot after a shaky start to the month. U.S. Special Envoy Steve Witkoff is due to meet the Russian president in Moscow. The EU warns Washington not to force a deal on Ukraine. Plus, Taiwan's foreign minister tells Bloomberg he thinks tensions between China and Japan could drag on for a year. So Japan's new prime minister has definitely sparked a diplomatic firestorm with China when she speculated over the potential for military action in relation to Taiwan. Our chief North Asia correspondent Stephen Engel spoke exclusively with Taiwan's foreign minister.
So we have very good communication channels with the Japanese government. So we are trying to manage the situation to avoid it's become a situation out of control. So because...
Sorry, are you saying you're downplaying it? Because
yes.
The response so far from Lai Ching-te, the president, has been fairly muted.
Yes. So we show our support through, I think, a soft approach, suggesting that our people to travel to Japan, also to eat Japanese food. So we want to help cool down the situation, because once the Chinese nationalist sentiments stimulated, it will very, to some extent, out of control. So I think for Beijing, it also not in its interest to escalate the conflicts.
What are you communicating to Tokyo? Do you want them to back down to cool tensions or stand ground?
I think it's in everyone's interest to stabilize the current situation, because once Xi Jinping mobilize its society through nationalist sentiment, it is also not in Xi's interest, because the economic downturn and also the high the rising unemployment rate, and also the trade conflict with the United States. So I think it's not in everyone's interest to have the China-Japan disputes on the issues related to Taiwan to escalate.
So by not provoking Beijing, you feel, this is the way I'm reading it, you feel that this could die down sooner?
Yes, I think so.
How long?
Because I think Japan has already shown its willingness, because it's in the parliament, it's in the QA session. So that has some backgrounds. So it's not just a different policy change from the Japanese side, but for Beijing side, maybe take maybe a year to stabilize the situation. But for saving Xi Jinping's face, he has to do something to show his domination in the disputes.
Stephen Engel, our chief North Asia correspondent, speaking to Taiwan's foreign minister in Taipei. Now, the UK Prime Minister Keir Starmer says the country will adopt a more pro-business approach to China, but will not trade its national security for greater trade ties. Starmer sought to clarify his government's approach to Beijing last night in his annual speech on foreign policy. Now, he said the UK needs a policy that recognizes China is a defining force in technology, trade, and global governance, while also posing a national security threat. And China's DeepSeek has unveiled 2 new versions of an experimental AI model and says it matches the performance of OpenAI's flagship GPT-5. DeepSeek says the new model performs well across multiple reasoning benchmarks, suggesting China's open source systems remain competitive with Silicon Valley's frontier proprietary models. Well, staying with China, my next guest has been investigating the competition between the world's 2 largest powers. Dan Wang's new book, Breakneck, argues that America is run by lawyers while China is run by engineers, with China's strategy fueling its economic ascent. Well, Dan is visiting the UK from Stanford and joins us now. Dan, first of all, congratulations on the book.
Thank you very much.
It's a nice read. It's an easy read, but with complicated and complex things that you are basically breaking down. So just the parameter of the book is America has always been ambitious.
Yes.
It does feel like China is now building the future at greater speed. What's the most common misconception we have about China today?
I think that China is much more competitive than we give it credit, that this is not some sort of only centrally planned economy in which everything happens at the diktat of Xi Jinping. I think that there are these super competitive Chinese firms out there, companies like DeepSeek, which we just talked about, companies like Xiaomi, which are fighting for their lives in a very fiercely dynamic environment.
So, I mean, do they have actually a lot more support from the government? And is that a hindrance or is that good?
It is both a hindrance and it is good. It is always a yes question when it comes to China. It is full of these contradictions. Often these industrial subsidies could give a lot of benefits to Chinese firms, especially when they're looking for new land, especially when they're looking for new financing. Often it is a big hindrance because, as we know, Beijing is really able to smack around a lot of tech founders, especially ones as big as Jack Ma.
You're one of the people that understand technology in China the most. Where are we right now? So there's these two superpowers wanting to become number one. When does it get decided? Is it winner takes all, or can they compete for 15, 20 years?
It will be competitive for a very long time. There is no race at the very end of it. There's no gold medal. There's no bronze. We don't know when someone will have won because this is a multi-dimensional race on many, many fronts, even on something like artificial intelligence. The U.S. right now has an absolute lead in the reasoning models, but as we can tell from all of these benchmarks, the Chinese are catching up in all sorts of ways. In addition, they're building out so much more power capacity in order to power all the AI. If AI is going to be all around us, it's going to be in our roads, it's going to be in my coffee, then we're going to need a lot more power. And so when the U.S. Is not building enough power as much as the Chinese, it might be really at a disadvantage here.
Dan, what you argue in the book, which is very striking, is that America is run by lawyers, China is run by engineers. Does that automatically put the U.S. at a disadvantage?
No, because the lawyers have advantages themselves. I'm coming to you from the U.S. West Coast, which is the only region of the world which has created not only one company worth over $1 trillion, this has created a half dozen companies worth over several trillions of dollars. That is absolutely an advantage. The lawyers are able to protect intellectual property. They're able to protect wealth. The rich feel comfortable with creating businesses in America. They're not necessarily so comfortable building big businesses in China.
So given all of the geopolitics and the uncertainty with fragmentation, could you see a world where actually technology, at the moment we have this idea that actually the World Wide Web is global, that everything will be global. So again, if you have a good AI model, it will be adopted globally. Could we see the reverse? Could we see two blocks with each having their own technology?
We're already seeing fragmenting. So what we're seeing is that Beijing has been uninterested in the global internet. They don't want Facebook or Twitter or any of these pesky platforms from Silicon Valley over there. The Americans are trying to de-wean themselves away from Chinese rare earth magnets. They're really trying to create their own supply chains. I think the future is going to look much more protectionist and more fragmented than the past.
I mean, it was almost like 11 months ago, right, in Davos, that the week after Davos, where people heard about DeepSeek. So
right.
If you're not in the know, no one had heard of them, and suddenly they came out of nowhere and really did incredible things.
Yes.
Are we going to hear more from them, or are there other companies like them in China?
There's many companies like them in China, and I think that what is special about the DeepSeek moment was that the prediction was what was really interesting was the reaction to DeepSeek. I think that the financial markets had not priced in the extent of Chinese competitive firms, Chinese entrepreneurial firms that are doing really well. There are many Chinese entrepreneurial firms like Xiaomi out there. Huawei is not listed, but still a very dynamic firm. There's all sorts of firms in industrial robotics and all sorts of firms where we're not hearing about. Maybe we're going to hear about a lot more of these.
Because of the tariffs and trade complexity for China, are they doubling down on actually trying to make sure that AI is theirs?
I think that they're trying to double down not just on AI, but on absolutely everything. And this is going to be the great challenge for the West, that China wants not only artificial intelligence as well as every big technology of the future, they also want electric vehicles, as well as their batteries, as well as the magnets. So they really want to dominate everything. And it becomes really critical for the US, the UK, other countries to figure out what sort of niches can these countries still really dominate in, because I think it will be bad for the world if China actually makes absolutely everything that we use and consume every day.
Because what, it displaces U.S. companies, or because there's always the foreign affairs politics going into this?
There is still a share of politics coming in, but they have the ability to displace a lot of American companies. What we're seeing is that Germany is already being pretty substantially deindustrialized by the Chinese companies, and I'm fearful that many more of these will come to the U.S. as well.
I mean, there's something that struck me, I think it was like 15 days ago, Sam Altman in an interview, and then he did walk back these comments saying, look, a lot of these AI companies are too big to fail, so they could have government support or something like that. What do you make of a comment like that? Yeah,
well, I think that it is definitely a double-edged sword to ask for government support, and I think that OpenAI should be careful for what it wishes for. If the U.S. government decides to nationalize OpenAI, that's not necessarily going to be very good for OpenAI. And so, what we're seeing is that Donald Trump has already turned Intel into a state-owned enterprise with American characteristics. I'm not sure that's going to be great for Intel over the longer term.
But I mean, we talk on this show day in, day out about valuations through your research, through your book, through your teaching at Stanford, and of course, you know what you've been understanding. Should we worry about valuation because of simply the competition from China?
I think we should worry about valuation. The very valuations of especially AI is kind of eye-watering, even before China. And as we saw with DeepSeek, China can shift valuations pretty substantially all at once. And so I think that is always something to be very concerned about, especially with AI.
Dan, thank you so much for joining us. Dan Wang, author of Breakneck, Stanford University Hoover Institution Research Fellow, and of course you're up for an award this week, so good luck.
Yes.
Now, China's top-down AI strategy sets the country up to achieve large-scale deployment that the U.S. will struggle to replicate. That's one of the findings of a new deep dive on the Bloomberg terminal written by Robert Lee from Bloomberg Intelligence, who joins us now. Robert, thank you for being here. So this is a huge topic, a big report. What are your main conclusions?
Okay, well, I guess the main question is who's going to win from this within a China context, and that has to be the economy as a whole, because as defined by the so-called AI plus governmental strategy, China's looking to proliferate and deploy AI across every sector and every region of its economy. And obviously, given the export constraints in NVIDIA chips, etc., it's doing it at a far lower cost using low-cost, computationally efficient models, using an open source approach to try and do that. So tying in with research from our colleagues in Bloomberg Economics, that stands to help boost economic productivity across the nation as a whole. But the key question is who's going to fund this, who's going to pay for it? Obviously, there is some degree of government subsidization in there, but I think a lot of the burden will be taken on by the private tech platforms, the likes of Baidu and Alibaba. So it's actually the shareholders of those companies that are effectively subsidizing this national rollout.
Robert, how has China managed to work its way around the NVIDIA export ban? Can NVIDIA actually ever gain a foothold in China?
I think that the boat has sailed, the stable doors closed, whichever cliche you like to grasp for. So it's highly unlikely, as things look at the moment, that NVIDIA will be allowed to export into China, particularly at a time when the government is doubling down on its push towards technological self-sufficiency, and at a time when the supply of domestic chips from Huawei, etc., is increasing. So yes, I think China has successfully navigated the issue so far, and with a rising supply of domestic chips, that is likely to be the direction of travel. And if you look at, for example, some third-party benchmarking services from the likes of LiveBench in the US, they show today that the performance premium for ChatGPT and OpenAI is only in the region of 10 to 11%. You know, it's not an order of magnitude higher. It's, as I said, 10 to 11%, which isn't particularly high. And also the key question for investors is, does that really justify the substantially higher levels of CapEx that US firms are investing? Based on our analysis, Chinese firms are investing somewhere around 1/10 of the CapEx. To be fair, with some government subsidy coming in there, but still they're doing it on a real budget compared to the US.
So who actually stands a better chance of winning the global AI race?
I think, as your previous guest sort of alluded to, we live in a bifurcated world, sort of taking into account the geopolitical backdrop. So there are still many countries which are on very friendly terms with China, whether they're in Southeast Asia, in Latin America, or in the Gulf. So that creates a big export market for Chinese technology going forward. And as I said, the performance stats show that whilst America maintains a technological lead and certainly is the leader in AI accelerator chips, obviously with exemplified by NVIDIA, China's actually not that far behind. China's got high-quality engineers. It has a 3-to-2 numerical advantage in the number of software developers it has. Don't forget, China's home to some of the world's biggest software companies. Again, Douyin and also Alibaba and Tencent. So it's a two-horse race, and I think within this bifurcated world, China will do well within that, within the export-friendly countries, and the US and the West will operate in a largely parallel universe. I don't think it's, again, we need to step away from this narrative of who's going to win. I think China, going again back to what your last guest said, primarily is focused on making money for this thing, which is why I think their pragmatic, low-cost strategy in trying to generate quick and easy wins within their economy makes an awful lot of sense. And I sit here in Hong Kong as someone who's neutral to all of it. I'm just looking at the facts and making logical conclusions based on what I see. So China's strategy, I think, makes a lot of sense from where we are at the moment.
Robert, thank you so much. Robert Lee there from Bloomberg Intelligence. Now, coming up, a 1-2 punch for the A320 as Airbus recalls hundreds of aircraft for fuselage inspections just days after an emergency software update for thousands of planes. Detail next, and this is Bloomberg.
Middle East and Africa regions are home to some of the biggest deals and fastest growth in the world. Vibrant resources and high-yield investment opportunities abound. I'm Jumana Versecci. Join me on Bloomberg Horizon's Middle East and Africa for the stories, newsmakers, and insights shaping the decisions of traders across this exciting region.
You had heightened levels of volatility. There's still room to maneuver. Reduce the opportunities. It allows you to increase significantly your net income.
Every trading day, only on Bloomberg.
Astonishing day for US technology.
It's shaping the region's technology ecosystem.
Asia's biggest tech news and innovation.
Technology is embedded in every aspect of our lives.
And laying the foundation for the future.
From finance to defense, AI to entertainment.
And from the road to the stars. Bloomberg brings you the latest stories of the people and companies pushing the tech sector to new frontiers.
And the politics that shape global tech markets.
I'm Caroline Hyde in New York.
And I'm Ed Ludlow in San Francisco.
Watch Bloomberg Tech every weekday.
Only on Bloomberg Television.
AirAsia, one of the biggest customers of single-aisle Airbus jets, said testing protocols for aircraft software need to be re-examined in the wake of the weekend glitch that required an urgent update. Tony Fernandez, the founder of the Southeast Asian carrier, said it was likely the software was not thoroughly tested.
Airbus were great. They gave us heads up. Kristen Scherer called me straight away. There was a little bit of confusion on the actual problem. But as soon as we got that message, our team did an incredible job, and we were able to sort out 96 aircraft in about 24 hours. So we had no operational major delays caused by this software glitch.
How about the fuselage issue? What's your own understanding?
We saw the notice. I don't think it's major. It's a few panels that they have to fix. It's on impending aircraft. Again, I don't see a major delay. We haven't been given any notification of any delays caused by it. So, you know, what appeared to be a massive crisis, I think through good communication, good crisis management, we were able to avoid a major disaster.
So just to be sure, it will not impact upcoming delays, and it's not impacting, you know, the aircraft that have been recently delivered to you?
No, no issue on the panels. In terms of the software, after getting the full information, it was mostly a software downgrade, which our team were able to do per aircraft about an hour and a half. And honestly, my team did an incredible job, and I'm sure many, many airlines did that as well. So no operational delays.
We've seen a host of issues to do with supply chains, with engines, and now issues to do with fuselage and software. Do these issues shake your confidence in Airbus in any way? How are you assessing the reliability of Airbus?
Well, look, I've been one of Airbus's first customers in Asia. We have an order book of delivered about 250 aircraft, and we have another 350 in order. We're very, very close to them. We feel that they produce excellent product. Obviously, supply chain issues have been a problem, especially engines. But I think we're over the worst of it. And I'm hoping by 2026, even in AirAsia's case, we have to bring back 230 planes. Our numbers have been crippled by the fact that we haven't had all our planes in operation, in spite of having a fantastic third quarter where we delivered 1 billion ringgit of EBITDA. I think fourth quarter, we will have all our planes back. We had our last issues with GE. And I think for most airlines, 2026 should be really the end of all these COVID issues and begin to see some stability in the supply chain as well.
As you said, you're among the biggest operators of the A320s. I mean, when it comes to the A320s, it is the most used aircraft. Help us understand, help our viewers understand, how rare are these hiccups that we're addressing right now?
I think it's the first time in my 20-odd years of AirAsia that we received a global notification such as this. I've never received a notice where all 6,000 aircraft had to be checked. So it was the first time. It is a good warning to Airbus and the supply chain operators to test things out properly. But it seemed a very odd one, that solar radiation affected the software. It's kind of bizarre for me. But, you know, I applaud Christian Scherer for calling me personally amongst many airlines. That gave us a good head start. And I think, I applaud OEMs that actually go on the front foot and work with airlines quickly. It's been one of my biggest issues during COVID that many OEMs weren't proactive enough in helping airlines during this very difficult period. But I remain very, very confident and optimistic of airline manufacturers, especially Airbus.
Tony Fernandez there, the AirAsia chief executive, speaking to Haslinda earlier about the Airbus A320 and quality issues. Now, Airbus is still in the red after falling the most since April yesterday. The plane maker says hundreds of its best-selling A320 jets need to be inspected. Benny Camel, Bloomberg's managing editor for space and aviation, joins us now. So we just spoke to Tony Fernandez. What do we know, Benny, about the latest issue?
So the latest issue has sort of been trickling out after the software issue over the weekend, and that is that we have some panel misalignments in terms of the thickness of some of the panels on the aircraft. This is something that Airbus interestingly presented to customers last week. There was a gathering on the 27th with some information provided to customers there. This is a mix of planes. Some of them are already in service and some of them are still in some state of production. So all in all, just north of 600 aircraft that will require some sort of inspection. Airbus says that the vast majority they expect to be just fine, but there might be some that will need adjustments. And then the question really is, how detailed will that be? How complicated will it be? How arduous might this process be? And then as a result, how much of a delay might it create for the normal production line of Airbus? Those are some of the questions we don't know the answers to.
So Benny, exactly what kind of impact do we know this will have on Airbus's delivery targets? I think we've lost Benny. We'll get back to Benny with a lot of questions with the Airbus, of course, on the very latest after we also spoke to Tony Fernandez. Now, the Bloomberg Markets Today team is also hosting a live Q&A today at 1 p.m. London time. Digital subscribers and terminal clients have the exclusive opportunity to ask questions on the UK. Join them to discuss how UK markets have fared this year and what could happen next. Now, talking of markets, there's stocks overall struggling for direction in this pretty fragile trading environment after a sell-off in cryptocurrencies seemed to be leading to a broader retreat of risky assets in the previous session. So what I'm looking at is a couple of things. First of all, look, if you look at Bitcoin, it did post a small gain amid a choppy session after slumping more than 5% on Monday. We did have solid demand at Japan's final 10-year bond auction of the year, and that seems to be helping steady bond markets after this heightened speculation of the Bank of Japan's interest rate hike yesterday, which definitely unsettled traders. So look, a couple of other things we're watching out for. Bayer, I think we have maybe a share price for Bayer surging as much as 14%, hitting the highest level since January 2024. This is after the U.S. Solicitor General urged the High Court to consider the German company's appeal targeting thousands of lawsuits baying its Roundup weed killer for causing cancer. So up next, we'll have plenty more, of course, from the U.S. Bloomberg Brief. That's up next, and this is Bloomberg.
The countdown is on. Everything you need to get the edge at the end of the market day. Get ahead of tomorrow's trading with The Close. Weekdays on Bloomberg. Context changes everything.
Nobu-san, would you say, when you look at your career, that the pivotal moment was actually that meeting with Robert De Niro? It took him 4 years to convince you to open a restaurant near him. You eventually did, and that started a partnership that has lasted through the decade.
You know, I met him 1988 after my first restaurant opened. He asked me to come to open the restaurant in New York. And beginning, I didn't know what he did.
You didn't know he was an actor?
No, I don't know what he doing. Because I never watched the movies, you know, I was traveling the business. But of course, after, you know, people, hey, Nobu, so you must know him. And then I understand.
How is he as a partner?
He's, for me, and a great partner. He understands to my concept. He support me 100%. But he's a very smart people. Sometimes, so strange idea, but it's good idea. So, example, Nobu Hotels, idea come from him. He said, hey, Nobu, so we have a lot of new restaurants coming in somebody's hotel. For him, doesn't make any sense. Then we start Nobu Hotel in Las Vegas 11 years ago. Now it's a big success. So next step is the residence.
From our studios in New York and San Francisco, our expert hosts have the data and analysis from the companies you know and the startups to watch, plus the interviews you don't want to miss. Watch Caroline Hyde and Ed Ludlow on Bloomberg Technology, the only daily business show dedicated to tech, right in the middle of the trading action. Live every weekday, only on Bloomberg Television. Context changes everything. From the world of politics to the world of business, Joe Matthew and Kaylee Lines deliver news, insight, and analysis live 2 times a day, every trading day. Balance of Power at 1 and 5 Eastern, only on Bloomberg.
In New York City. Good morning, I'm Bonnie Quinn with your Bloomberg Brief. Here's what you need to know. Treading water, stocks struggling for direction as markets look to new catalyst following Monday's crypto sell-off. Peace plan talks. U.S. Special Envoy Steve Witkoff heading to Moscow to meet with President Putin. And a new round of bidding for Warner Brothers Discovery, including a mostly cash offer from Netflix. So let's take a look at those markets after that crypto sell-off yesterday. Was it the start of something? Was it a catalyst, or was it just exacerbating a feeling that was already in markets? We definitely saw the S&P 500 down 0.5%. The Nasdaq 100 was down 0.4%. And futures were lower until just a few minutes ago, and now they are pointed higher. Are the markets looking towards next week's FOMC meeting, or is this just because Bitcoin has turned positive again? We'll ask our guests today, but certainly there is a fragility out there. Let's move to the bond universe because we did see some steepening yesterday. So while we saw equity sell-off, we also saw bond sell-off. We're back to 473 on the 30-year yield. The 10-year yield just now again below 410, but it was above 410 earlier, and that 2-year yield at 353. Don't forget, we don't get more real data until after that FOMC meeting. The 16th and 18th of December is when we're expecting some jobs data and some inflation data that will be maybe a little bit less stale. So all eyes towards that. We do have a few AI companies reporting as well today. All right, let's get to some individual pre-market movers now. Over to London and Chloe Melly. Chloe.
Good morning, Vonnie. Bayer over in Germany is up very impressively this morning after the Trump administration urged the U.S. Supreme Court to take up Bayer's appeal related to lawsuits against its Roundup weed killer. So this is a product that's been accused of causing cancer, and this is a latest development that means that Bayer might be able to throw out some of those Roundup cases, and therefore we're seeing the stock move almost 12% higher this morning. Moving on to Warner Brothers and Netflix, which are also on the move today after Netflix reportedly submitted a mostly cash offer for Warner Brothers. This is part of a second round of bids that also involves companies like Comcast and Paramount, and will have the outcome of this auction in the coming weeks. So something to keep an eye on. But in the meantime, we are seeing both of those moving higher today. And finally, across the software sector this morning, we are seeing some positive movement after MongoDB reported stronger than expected results and also raised its outlook. So that really is driving those shares this morning and also driving up the rest of that sector, with peers Snowflake and Datadog also moving higher today.
Certainly a nice gain there from MongoDB. Chloe, thank you so much. Chloe Melly there. And coming up this hour, we're going to speak to Katrina Dudley of Franklin Templeton on the persistent market volatility setting the tone for 2026. Well, global markets off to a shaky start then, it seems, for December after a sell-off in cryptocurrencies. Joining us now is Bloomberg's Morwenna Coniam. Well, we might change the tone today, Morwenna. Futures have turned positive, but what caused this crypto sell-off?
Well, it seems to be a combination of things, but that nervousness that we've seen coming through from the AI trade has been really being felt across like the tech sector. As well as we've seen a big sell-off in cryptocurrencies, particularly yesterday. That's seen a bit of a rebound today. It's been fluctuating a bit, and it really does seem to be that the broader equity market is very much following that. What we've seen is some of those trades where the kind of never-ending price increases in crypto have been coming off. There's been a lot of nervousness there. And there's that sort of fueled momentum, which doesn't necessarily play out once you start seeing the price of Bitcoin and other crypto assets actually dropping. The strategies that some of the funds that have built around it doesn't work anymore. So there's a nervousness there, but it's also coming through from the broader anxiety around the AI space as well.
It's a real head-scratcher when equities are taking their cue from cryptocurrencies, right? But I'm curious about bonds as well, because we did see a sell-off in the bond universe too. Was that related?
Well, I think there was concerns about interest rate cuts. We also saw that coming through, particularly from Japan yesterday, and that's eased off a bit today. So a bit more stability there. More broadly, when we're looking at the bond space, we've got big central bank decisions coming up this month. And that is what will be really driving that. We've got the FOMC. Of course, we're in the quiet period now, so we're not really hearing anything more from them until we get those that meeting in about 9 days' time. Whereas, and the Bank of England is also due to potentially cut interest rates later in the month. So there's a bit of a sort of vacuum at the moment of really tangible news. Like I said, we had that speculation coming over from Japan. But otherwise, I think that the market is drifting a bit today with the lack of tangible economic data to base any real direction on. And as we said, it's sort of becoming a bit beholden to this drift in crypto assets.
Yeah, as you said, 7 more trading days, I think, before we get that FOMC decision. That might be the next catalyst. Morwenna, thank you so much. Morwenna Coniam there. And now to a Bloomberg exclusive. Streaming industry leader Netflix offering mostly cash for Warner Brothers in an auction that could wrap up in the coming days or weeks. Joining us with the latest is Bloomberg Tech Europe anchor Tom McKenzie. So Tom, what do we know about this offer?
Yeah, so it'll be an almost all-cash offer from Netflix. There are other parties that are offering as well, making bids for Warner Brothers, of course, includes the Warner Brothers Studios, CNN, of course, on HBO. But Netflix looking to a loan to fund this. In terms of the price tag for Warner Brothers and its assets, they're looking at about $30 a share. The company is currently valued at about $60 billion US. But you also have Paramount in the mix and Comcast as well. Paramount looking at potentially liquidity from Apollo, but also maybe lending from some Middle East funds as well. And as you say, look, this could all wrap up in the next day or so, next couple of days, potentially in the next week, because these are binding offers, and therefore the board at Warner Brothers can take them pretty quickly if they land on one offer that they prefer. But Netflix coming in, Netflix not keen on CNN and the streaming parts of the business, but they do want the studios and they do want HBO.
Yeah, it was a busy Thanksgiving for bankers involved in these bids, yesterday being the deadline for the second and maybe final round. I wanted to ask you as well about Michael Burry, because we have some more news. Apparently he's shorted Tesla on the valuation and Musk's pay plan. This is according to a report from Fortune. I mean, I guess he's not the only one to be short Tesla, right? But it's a dangerous short, I guess, aren't they all?
Yeah, I mean, Tesla's stock price year to date up 6%. If you compare that to the NASDAQ 100, up 21%. So it's certainly lagging the broader tech-heavy index, of course. Michael Burry, of course, with the short-famed around 2008, 2009 in the real estate sector, of course, that obviously paid off handsomely for him. So closely watched. He has a short position that he revealed as well against NVIDIA earlier, towards the end of November, in fact. So now we have this short position that's been announced again, according to reports in Tesla, saying that it's just well and completely overvalued in terms of the stock. But also, to your point, talking about that potential $1 trillion pay package for Elon Musk, and calculating that it could lead to dilution for shareholders of around 3.6% per year. 3.6% per year. That is the Michael Burry calculation in terms of that pay package. He describes the shares currently as ridiculously overvalued.
Yeah, exactly. I wanted to ask you about this carousel of AI executives. We now have the Apple AI head, John Giannandrea, leaving, and his stint was pretty chaotic, Tom, to say the least.
Well, they missed, didn't they, in terms of their own AI models. Apple Intelligence is seen very much as being subpar compared to their competitors. The updates around Siri have been delayed, and that all coming under the leadership, of course, of Giannandrea. So now he's being sidelined. He'll officially be out from April of next year. And it's a reminder of the catch-up that Apple is playing when it comes to generative AI and integrating some of those solutions into their hardware. They're even, and we know, are in talks with Google as well about potentially using Google models. And that has led, that's part of the reason why there's been this brain drain out of Apple. A lot of their key names working on large language models and machine learning have left, a lot of them, to Meta, about half a dozen. So this is the latest change at the top of Apple. They brought in someone else. He was the vice president at Microsoft AI just for 6 months. Prior to that, he was at Google for about 16 years, Amar Subramania. So watch him in terms of what impact he'll be able to have at Apple. Again, having moved, talking about talent war carousel that you mentioned, 16 years at Google, 6 months at Microsoft, and now he's moving to Apple. Let's see if he can execute the changes that Tim Cook wants to see.
Yes, exactly. Tom, thank you so much for all that context. That is Bloomberg Tech Europe anchor Tom McKenzie. And in geopolitics, U.S. Special Envoy Steve Witkoff said to meet with Russian President Vladimir Putin today in Moscow. It's his 6th meeting to try and sell him the latest version of a Ukraine peace deal. Joining us now is Suzanne Lynch, Bloomberg's Brussels bureau chief. So will Steve Witkoff put pressure on Putin, Suzanne, or how does this work? It's the 6th meeting this year already.
Yes, this is the question. What is going to happen in this meeting between Witkoff and Vladimir Putin? Well, I can tell you that a lot of Ukrainian allies, the Europeans, are quite worried about this. They're well aware that they're not at the table. They're not part of the discussions, and neither are the Ukrainians. So they will be hoping that Witkoff and the Americans have moved substantially since the emergence of the 28-point peace plan that really set out a vision of peace very much within Russia's wish list, if you like. But there is concern about what this conversation will generate. We're expecting it to take place at some point this afternoon. But as I say, Ukraine not at the table, and neither are the Europeans on this one.
Yeah, Zelensky coming out and saying, you know, the language in the new draft of the plan looks better, but it also doesn't solve the territory problems. I want to move to a different theater because the White House now defending the Defense Secretary, Pete Hegseth, over a second strike on that alleged drug boat in the Caribbean. Obviously, it killed the 2 survivors of the first strike. And there is percolating in the atmosphere now the idea that this could be some kind of a war crime, or could be at least accused of a war crime. Suzanne, how likely is this that the White House, the US and the Defense Secretary will be accused of war crimes here?
Well, so far, Donald Trump, the US president, is sticking by his defense secretary. The White House press secretary yesterday made a robust defense of these actions, saying there had been a second strike, but was all within law, etc. I think what to watch here, though, is the views of the Republicans on Capitol Hill, members of the Senate Armed Services Committee, for example. They are asking questions now. They want to know exactly what happened. Did the Defense Secretary give these verbal orders as has been reported? And it's a bipartisan issue, as I say, Republicans as well as Democrats looking for answers. Now, the White House has said they have been in contact with these members of Congress. They have been assuring them, if you like, but I think that's where the pressure point is going to come here for Donald Trump. This story may become increasingly difficult for him.
Yeah, exactly. And it's not the first time he's been under fire. Now, when it comes to China and rare earths, it seems that US firms are now actually looking to Europe, snapping up rare earths from there because, you know, there's so many problems with getting them from China at the moment. Can you tell us any more about that, Suzanne?
Yeah, this is a great piece we have today on the terminal about how US companies are winning this global race vis-a-vis the Europeans when it comes to securing some of these rare earths and other critical materials that are so vital for everything from defense to electric vehicles, etc. It comes in a week where the European Commission is going to unveil its own plan called Resource EU about trying to step up its supplies of critical materials and diversify away from China. We were reporting that overnight, details of that plan. But our reporting is showing that US firms have got more money behind them and are moving quicker on this. And it really is a sense now, I think, that belatedly a lot of countries, US, European countries, are realizing the depth of their dependence on China. And as we have been writing, US firms showing that they are pipping their European rivals to the post, as it were, in terms of securing alternative supplies of critical raw materials.
It's a fantastic story. US firms snapping up the rare earths Europe needs to rearm. Suzanne, thank you so much. Suzanne Lynch there for us in Brussels. Now to other top stories trending on the terminal this morning. The U.S. Commerce Department has agreed to invest as much as $150 million in Xlite Inc. It's a chip technology startup tied to former Intel CEO Pat Gelsinger. The investment is part of the Trump administration efforts to bring more chip-making capabilities back to U.S. soil. Samsung has unveiled its first trifold smartphone. The Galaxy S Trifold has 2 hinges, allowing it to transform into a tablet-sized device. It's initially being rolled out in South Korea from December 12th. The price tag, almost $2,500 US. Hong Kong's leader, John Lee, pledging to launch an independent committee to review systemic causes behind the city's deadliest fire in nearly 8 decades. Authorities have now arrested 15 people on suspicion of manslaughter and corruption over the blaze, which left at least 146 people dead. Coming up, we hear from the Taiwanese Foreign Affairs Minister on the clash between China and Japan and the Trump administration's commitment to Taiwan. This is Bloomberg.
Okay, ready?
David, what initially sparked your interest in this topic of longevity?
15 years ago, I turned 60, and I began to wonder how much longer I'm likely to live and what I could do to extend my life. On longevity, I talked with the leading experts in science and medicine to educate people about how they might be able to change their conduct so that they can live a happier and healthier life. I'm David Rubenstein. Join me on a 4-part journey as I explore the great quest for longevity. Only on Bloomberg.
Astonishing day for US technology.
It's shaping the region's technology ecosystem.
Asia's biggest tech news and innovation. Bringing you up to the minute news whenever and wherever it happens. I'm Shevrian in Seoul, and this is Bloomberg.
It's the world's second largest economy with a growing influence in global affairs. Bloomberg The China Show brings you the unmatched expertise you need to keep track of breaking news, in-depth market analysis, and the most influential newsmakers in and around China.
We need to do more to engage the market more. We're risk on. I think we caught a little sweet spot.
Massive savings right now.
It's already a different game.
Bloomberg The China Show. Weekdays around the world, right here on Bloomberg. Context changes everything.
This is Bloomberg Brief. I'm Vonnie Quinn in New York. The dispute between China and Japan shows no signs of slowing, and officials warn it could drag on for a year. Bloomberg's Stephen Engel spoke with Taiwanese Foreign Minister Lin Chia-lung in Taipei in an exclusive interview.
So we have very good communication channels with the Japanese government. So we are trying to manage the situation to avoid it's become a situation out of control. So because...
Sorry, are you saying you're downplaying it? Because the response so far from Lai Ching-te, the president, has been fairly muted.
Yes. So we show our support through, I think, a soft approach, suggesting that our people to travel to Japan, also to eat Japanese food. So we want to help cool down the situation, because once the Chinese nationalist sentiments stimulated, it will very, to some extent, out of control. So I think for Beijing, it also not in its interest to escalate the conflict.
Do you believe, though, with Prime Minister Takaichi-san essentially linking Japan's security to Taiwan's security, does that indicate to you that Japan is willing to shoulder more of the security requirements, either diplomatically or militarily, in the East Asia?
Yes, indeed. I think we have to share the burdens in terms of defense capabilities, and also through diplomatic way to co-manage the situation in the Indo-Pacific. So it's I think that the situation shows that we are coordinating with the United States in defending the status quo, trying to avoid the Chinese authoritarian expansionism in this region. So in the Indo-Pacific, we don't have a collective security arrangement, such as the NATO. So we have to strengthen our bilateral cooperation, and even to bring all bilateral arrangement into a latest, strategic framework.
Right. Well, this downplaying of
the situation is in lockstep, I guess, with why Taipei was fairly pleased as well that Donald Trump or the White House did not mention Taiwan in the readout of the recent phone call between Xi Jinping and Donald Trump, where Beijing tried to make the case again for the post-World War II order, basically cedes Taiwan to the rightful leader of China, and that being, after 1949, being Beijing. Obviously, with Donald Trump not mentioning Taiwan, it takes it off the front burner, but at the same time, it does not allow Donald Trump a chance to reaffirm America's commitment to Taiwan. Do you question, under the Trump administration, their commitment to the defense and support of Taiwan?
We have no doubt on the Trump administration's commitment to the regional security in the Indo-Pacific, especially the first island chain. So I think it's a different kinds of strategic arrangement.
How is it different?
By asking the U.S. allies or to have this burden sharing in terms of defense budget, or to show our determination and resolve to defend ourselves.
Our exclusive interview there with Taiwanese Foreign Minister Lin Qiaolong. This is Bloomberg.
In case you missed it, on Bloomberg Crypto.
There's a debate going on right now in DC that I think folks need to start paying more attention to, and that is the yield. And the question really is, who is going to keep the yield? Who makes money off stablecoins? Well, right now, in the case of some of the large stablecoin issuers, there's a yield back on those deposits. So when there's a dollar, for example, deposited in a bank account, there's interest paid on that dollar. And so who's capturing that yield? And I think one of the really interesting things about the Genius Act is that it bans so-called yield-bearing stablecoins from giving that yield directly back to consumers. Now, that's not true everywhere. And I think if consumers have a choice, why would a consumer want an institution to keep that yield? Or would there be sharing of that yield? So right now, one of the debates going on is, will rewards be allowed? And I think these are really important questions.
Don't miss Bloomberg Crypto live Tuesdays.
From the world of politics to the world of business, Joe Matthew and Kaylee Lines deliver news, insight, and analysis live 2 times a day, every trading day. Balance of Power at 1 and 5 Eastern, only on Bloomberg.
Technology is embedded in every aspect of our lives.
And laying the foundation for the future.
From finance to defense, AI to entertainment.
And from the road to the stars. Bloomberg brings you the latest stories of the people and companies pushing the tech sector to new frontiers.
And the politics that shape global tech markets.
I'm Caroline Hyde in New York.
And I'm Ed Ludlow in San Francisco.
Watch Bloomberg Tech every weekday.
Only on Bloomberg Television.
This is Bloomberg Brief. I'm Vonnie Quinn in New York. Time now for your front page news. First up, the Wall Street Journal leading with the White House defending Defense Secretary Pete Hegseth over a second strike on alleged drug running boat in the Caribbean that killed 2 survivors of a first strike. The Journal says some members of Congress and legal experts are asking whether the orders may have contributed to the commission of a war crime. The White House says The head of Special Ops Command was acting legally under authority to use lethal force granted by Hexeth. Next up, the New York Times, leading with Special Envoy Steve Witkoff's visit to Moscow, saying the White House has strongly pressured Ukraine to agree to a peace plan. The Times reports Ukrainian geo-monitoring group Deep State found in November that Russian forces almost doubled the battlefield gains they made in September, highlighting increasing strain on Ukraine's military. And finally, the Financial Times reporting UK pension funds are pulling back from US stocks on fears of an AI bubble. Also concern over market concentration in a limited number of stocks. And those are your front page headlines. Coming up, we'll speak with Katrina Dudley of Franklin Templeton. This is Bloomberg.
Here is understanding. These digital assets have the ability to change the payment landscape of the world, and we need to be ready. We, the regulators, the world needs to be ready for a new wave of technology.
Stablecoins are almost entirely used in the mechanisms of trading cryptocurrencies. What we saw is the opportunity for digital assets broadly, stablecoins in particular, to be used as a medium of exchange outside of the crypto world, what is today the fiat currency world. At some point, I think these digital asset wallets will be big enough and people will be comfortable enough using them. I think we'll have a flip from conventional payment mechanisms into stablecoin-based mechanisms.
Does that mean banks such as yourselves issuing stablecoins?
We could. We are issuing Hong Kong dollar stablecoins today. We're in a sandbox for tokenized bank deposits in Hong Kong. We're effectively issuing tokens related to trade finance in Singapore. So it's all on the table, but we're always going to tie it back to what our clients want and need. Because if we don't get that one right, the rest doesn't matter.
The market capitalization of both type of instruments, crypto and digital assets, are both very low. Stablecoins today have $20 billion of flows a day. It's less than 1% of the flows of the payment system in the world. But because they have the ability to be very helpful in use cases, particularly in retail to begin with, but then potentially on the wholesale side, I think we will see a lot more of them.
Making money isn't about drowning in emotions. It's about understanding what's actually happening. Markets are the best way to glean signal from noise, and that is what we try to do every morning. This is Bloomberg Surveillance.
It's a multi-trillion-dollar industry. We'll show you what's happening in ETFs like no one else. ETF IQ, only on Bloomberg.
It's 5:30 a.m. in New York City. Good morning, I'm Bonnie Quinn with your Bloomberg Brief. Here's what you need to know. Treading water. Stocks may be turning it around, but they were definitely struggling for direction in the last couple of hours as investors assess the stakes before next week's FOMC meeting. Calm following the storm. That crypto rout seems to be abating. This after nearly $1 billion of leveraged positions were liquidated Monday. And we have Steve Witkoff traveling to Russia to meet Vladimir Putin for a 6th time this year. So let's take a look at those futures then, because we've turned higher in the last hour or so. We have been lower after a choppy session overseas. But as you can see, the S&P NASDAQ and Russell 2000 futures all pointing to gains at the open. Now, yesterday we had that massive rout in crypto, but was it a catalyst for U.S. equities to sell off, or was it just a symptom of something underneath the surface, a little fragility or a lack of direction because we don't have that many catalysts? We do have a few earnings after the bell today. We get CrowdStrike, Okta, Marvell, and so on, but really earnings season is over, and the next data doesn't come out until after the FOMC meeting next week, or the next most up-to-date data, let's put it that way. We did also see a bond sell-off, though, which was interesting, curve steepening. The 30-year yield now back up to almost 473, and that 10-year yield was above 410 earlier this morning. All right, let's get to some individual pre-market movers now, a few hours before the U.S. Open. Let's get to Chloe Melly in London. Chloe.
Good morning, Bonnie. Bayer over in Germany is up very impressively, more than 10% this morning after the U.S. administration urged the U.S. Supreme Court to take up Bayer's appeal related to lawsuits against its Roundup weed killer, which is a product that has been accused of causing cancer. This is a litigation issue that has been plaguing Bayer for years, and this development means that it might be able to throw out some of those Roundup cases, and that's seen as very positive for that stock. Moving on to Netflix and Warner Brothers that are up also this morning after Netflix reportedly submitted a mostly cash offer for Warner Brothers. This is part of a broader process that also involves other bidders like Paramount and Comcast, and we'll be getting the outcome of that auction in the coming days or weeks, and so we are going to be looking out for that, and in the meantime we are seeing those positive movements across those two companies. And finally, we've also got green across the screen for the software sector this morning after MongoDB reported better than expected results and also raised its outlook. That's really driven the stock this morning, and rising also are some of its peers like Snowflake and Datadog, so that's good news for that sector as well.
Chloe, thank you so much. That is Chloe Melly there in London. Katrina Dudley, Senior Investment Strategist at Franklin Templeton, says persistent market volatility is shaping fund flows and setting the tone for 2026. I'm pleased to say she joins us now and in studio. So, Katrina, that is the broad picture. But just want to ask you about this move in the last 24 hours, basically, in yields. So we repriced, and it looked like we were all set for the Fed. And now we've got this curve steepening. What's going on?
I think what you're seeing in the Fed is like you've got two sides of the coin, and they're debating each other, and we're seeing that debate happen in public. The odds of a Fed rate cut in the December meeting, so next week, has really increased substantially. It's now up almost at 80%. And you're looking at that rate increase, and you're comparing it to the fact that the Fed is looking at inflation data, and they're looking at unemployment. It looks like on the inflation side, people are getting pretty comfortable that inflation is under control. I'm not quite yet there in that camp, but on the employment side, we started to see some weakness. We started to see a little tick up in the employment, and people seem to believe that that narrative is going to dominate headlines, the unemployment narrative, and you layer that in with the AI concerns that people have about the job market, and particularly younger people being hired into companies.
Yeah, there are a lot of concerns out there, but just on the pricing and repricing. Yeah. Last time you were on, which is not that long ago, the market was not pricing in a December cut, and you agreed with the market then.
Yes.
Do you agree with the market now that it's almost a done deal?
No, I actually don't believe it's a done deal. I do think that the people are going to wait. I think that the data that we're looking at coming in is a little delayed because of the government shutdown, and I think they're just going to take a pause in December, and if we need to in January, where they have a little more data and they have they can set the tone for 2026. I think maybe you'll see a cut there, but I'm actually not in the camp that we'll see a cut in December.
I mean, it was fascinating how the market just turned on its head after those Williams comments. That was really the beginning of the catalyst for pricing in a cut in December, right? But as you say, if the Fed waits until January, I mean, will the market be roiled? By the way, I should mention that there were all those comments, you know, Nick Timros in the Wall Street Journal saying the ground had been laid and stuff. It wasn't just the Williams comments.
Exactly. But the fact that are we talking ourselves into forcing the Fed into that rate cut scenario? And I'm in the camp that the Fed really is independent. I think it is very data dependent. And I don't think you've had enough of a move down in the inflation numbers. So if you look at why we're concerned about inflation, you still do have the residual effects of tariffs tariffs that need to come through the data. The holiday season is going to be where you see a lot of that price action, and we're hearing it from consumers. We're hearing it. There's a little bit of sticker shock as they walk in the front door of those retailers. So I think the inflation narrative isn't quite done, and we've yet to have the deflationary impacts of, the AI and everything there, because that's the offset to what you're seeing in terms of underlying inflation that is coming from items such as, defense spending over in Europe is being higher, is not another inflationary force that we see. So we do see a lot of these pressures in the market.
What about the labour market? When you look there, do you see weakness? Or are you just only concerned about inflation?
I think we're looking at the labour market as being relatively stable. I think the unemployment numbers have slightly ticked up, but I think slightly is the word there. I think what we're getting confused with here is a lot of people are looking at their own college graduates at home and saying, hey, they haven't got a job yet, and we're in December. But I think that as we go into January, people get very comfortable that, earnings growth is there, that companies have got, a good outlook going into 2026. GDP is a strong growth driver, that they'll start hiring again. So I'm actually optimistic about, the ability of people to get jobs and keeping that unemployment number low.
So you seem to be pretty optimistic about the economy in general,
Yes.
then. Are you as optimistic that the stock market will see that reflected in whatever the Fed does?
Look, when I look at the stock market, I think the bears are telling you valuation, beware. And I think what we're saying is look at underlying earnings growth. If you look at just the third quarter, so just take that very narrow period, we actually had forecasts of 6.5% earnings growth. We came in at 15. That's a significant beat across a very broad part of the market. If I look at the market generally, breadth has been the key to all of this. It's not just a few stocks, the Magnificent Seven, that are doing the heavy lifting today. It's actually a broad brush of stocks. 2/3 of the stocks in the market are up, only 1/3 of them are down this year. So we do think that we've got breadth. And if I look at the 2-year forward stack of earnings across multiple sectors and multiple geographies, we're looking at numbers in the high teens, low 20s as driving, earnings growth. And it's earnings growth that really do drive markets higher.
You've maintained that investors have been climbing this wall of skepticism, not a wall of worry, but a wall of skepticism. Will it take some kind of a negative event to wash that out? Or what, once skepticism is in there, isn't it like, undermining the foundation of something?
If I take a look, a wall of worry to me is actually a lot more negative than the wall of skepticism. So I think the market is gradually getting, those bears are getting a little bit, their claws are coming in a little bit. They're not quite as bearish as they were, and that's why we shifted from that language of a wall of worry to a wall of skepticism. You are always going to have skeptics in the market. And, sometimes they will be right. As I mentioned just before, 2/3 of the stocks in the S&P 500 are up this year, but there's still 1/3 of those stocks that are down. So there's always going to be fodder for those skeptics. They're always going to find things to do. But as we look, I think that the setup going into 2026, you're starting to see, analysts come out with estimates. We're starting to see those forward outlook reports. And I think generally speaking, we're looking at a number of positive things driving earnings. We're looking at strong earnings growth. We're looking at inflation under control, and we're looking at that AI narrative.
So the choppiness has been due to fund flows to some extent, at least. Where are you seeing those funds flowing now? And are we still looking for a Santa Claus rally?
I don't think we want to be talking about a Santa Claus rally. I do think that we're going to see volatility going into year end, and I don't think that we want to be in a position where we feel uncomfortable that volatility is going to drive the narrative. We think that it's earnings growth driving the narrative. So if you're really leaning into volatility, you're right. You may be looking at a Santa Claus rally one day, and you may be looking at, the Grinch coming in the second day, driving that push and pull. When you have a situation where you've had Fed cut rates, on a year-out basis, you do have about a 17% return, average return on the S&P, but it does come at the cost of higher volatility. So we think that the historical playbook is actually playing out here. So yes, I don't think you're going to be looking at a significant rally into year-end, but I do think that you've got a positive momentum.
All right, but it might be a bumpy ride. Katrina, thank you so much for joining us today. That is Katrina Dudley of Franklin Templeton. Now to other top stories trending on the terminal this morning. Netflix offering mostly cash for its latest bid for Warner Brothers Discovery. Paramount, Skydance and Comcast are also bidding for all or part of the company. Sources say the offers are binding, which means the board can sign off on a deal quickly if its goals are met. Samsung has unveiled its first trifold smartphone. The Galaxy Z Trifold has 2 hinges, allowing it to transform into a tablet-sized device. It's initially being rolled out in South Korea from December 12th. The price tag, nearly $2,500 US. Buyer shares are higher after the Trump administration urged the U.S. Supreme Court to take up its appeal, targeting thousands of lawsuits blaming Bayer's Roundup weed killer for causing cancer. The Roundup issue has plagued the German conglomerate since the takeover of Monsanto back in 2018. The company has shelled out more than $10 billion in verdicts and settlements over the herbicide. And coming up, high-stakes peace talks kick off today in Moscow. We're going to get the details next. This is Bloomberg.
Know how the market day started.
Find out how it finishes.
Public markets to private markets.
From the micro to the macro.
Covering retail, entertainment, the business of sports.
The supply chains, trade policy, how it all is impacting the U.S. equity market as we drive to the closing bell at 4 p.m.
A holistic approach to covering financial markets.
If it matters to your life, we're covering it. I'm Katie Greifeld.
And I'm Romaine Bostic, and this is The Close.
Live every weekday.
Only on Bloomberg. Context changes everything.
We have 2 crises, 2 essential crises, and for both it's now or never: democracy and climate, and they are absolutely interlinked. And we have to solve them together. We're losing the democratic infrastructure and norms to deal with the climate, and we're losing the climate stability that is essential for a democracy. We have to solve them together. We've never faced a threat like this to our democracy at a time when it's a perfect storm, at a time when we're being told by climate scientists, some of you may be in this room, that we have to cut our emissions, fossil fuel emissions, in half in 5 years now. You know, when I started to realize what was happening, it was 12 years, and we haven't done it.
It's the countdown to the market open as we bring you the first trades across Europe.
We'll debate the most important stories and what will drive the big investment decisions throughout the morning. I'm Guy Johnson.
I'm Kriti Gupta.
And I'm Anna Edwards. Join us every weekday morning for the opening trade, live at 7 a.m. here in London.
Only on Bloomberg. Context changes everything.
And on the topic of security guarantees, we have concrete details from the U.S., concrete details from Europe. I'd say these are the 3 main topics: tracks, but also triggers. We need to be very careful here. I thank our negotiation teams. The plan looks better.
Ukrainian President Volodymyr Zelensky there on the latest version of a peace plan. His comments come ahead of U.S. Special Envoy Steve Witkoff's meeting with Russian President Vladimir Putin in Moscow today. Joining us now is Ben Sills, Bloomberg Managing Editor for European Politics and Economy. Ben, how does Zelensky back himself out of this corner that he seems to have been put in by the U.S. and obviously Russia, this peace plan, and the fact that the Europeans don't seem to be funding a war that Ukraine is now on the back foot on?
Yeah, it's really tricky for Zelensky, isn't it? I think that what we can see from the way he's handling it at the moment is that his strategy is to publicly go along with this US-led process, to try to look constructive, but also to hope that something happens so that this process will fall apart before he faces a real ultimatum from the White House.
Yeah, I mean, Vladimir Putin made the claim that Russia had taken a city in the east yesterday. It's hard to know what to believe, but what do we know about that and the advances that Russia is making into Ukraine?
Well, that city of Pokrovsk in eastern Ukraine has been the site of really serious street-to-street fighting for weeks now. With the Russian forces penetrating the city, the Ukrainians holding it out. The Russians probably could have claimed that they were controlling the city at any point in the last week or two. They could have waited another week. It's a very, very incremental process. But the fact that Putin has decided to publish his video this week as Witkoff is arriving just shows how aware he is that this narrative of Russian strength, Russian advances, and Russian inevitable victory on the battlefield is a big part of his plan to negotiate with the US.
All right, Ben, thank you so much for the context. That is Bloomberg's Ben Sills there. Here in the US, the White House is defending the Pentagon's handling of a September attack on an alleged drug-running boat. It's denying that Defense Secretary Pete Hegseth had given an order to kill everyone on the vessel. Joining us now is Suzanne Lynch, Bloomberg's Brussels bureau chief. Suzanne, members of Congress and some legal experts are saying that a war crime could have been committed here, or we came very close to it potentially, and the White House is saying absolutely not. Is it possible that this accusation can be levied at the White House?
Well, the White House is pushing back strongly against this kind of increasing calls for clarification on what happened in this incident in early September. The White House press secretary said that a senior U.S. Navy admiral ordered this strike. Now, Mr. Bradley is going to brief members of Congress on Thursday in closed session about this incident because, as you say there, members of Congress, both on the Democratic and the Republican side, have questions for the White House about what happened. This is taking place against a context and a background of increasing belligerence, increasing activity by the United States towards Venezuela and in this region. So I think this could potentially become politically difficult for Donald Trump, particularly if questions continue to be asked about the behavior, about the authority of the U.S. Defense Secretary, Pete Hegseth.
Yeah, and then, Suzanne, I also want to ask you about this story on the Bloomberg Today, an exclusive story about how U.S. companies are buying up rare earths, but they're rare earths that European companies aren't getting to first, and Europe needs them not just for, industrial output and so on, but actually for armament, for arming itself. Tell us a little more.
Yeah, this is a key issue and a key challenge for the Europeans as they try to ramp up defense spending. It's getting hold of those valuable rare earths and critical minerals that go into everything from electric vehicles to defense equipment. Our reporting is showing that US companies are scooping up a lot of these rare earths ahead of European countries. Of course, this is coming, across a broad realization across the world that companies, manufacturers have become overly dependent on China, which produces about 70% of the world's rare earths. So it's also coming on a week where the European Union will unveil its own strategy when it comes to critical raw materials. We're expecting that tomorrow. Bloomberg had details of that last night. And it's part of an effort by the EU to ensure that it can diversify and it can decouple, in a sense, from China as it tries to secure raw materials that are essential for its own competitiveness, industrial policy, and, of course, the defense sector.
All right, Suzanne, a highly read story at the moment. Thank you so much. That is Bloomberg's Suzanne Lynch. Now, turning back to the markets, Bitcoin stabilizing today after tumbling, well, around 30% since October. A volatile start to this month, and the 24 hours previous to today was very volatile. We had an 8% drop at one point. Bloomberg Digital Finance Senior Editor Ana Herrera joins us now. So, Ana, what was the catalyst? We know that $1 billion worth of positions were liquidated, but was that the catalyst, or was that the result of the price drop?
So that probably was a result, but it's sort of a circle with crypto, right? We know exchanges in crypto have these auto-liquidation mechanisms. So when the price drops, traders get auto-liquidated, which in turn creates more downward pressure on prices. So we've been seeing over the past month, it's not been very easy for crypto investors, both the institutional and the retail ones. And the retail ones especially, they had been investing, for example, in stocks that were sort of proxies for crypto, for Bitcoin, for example, Strategy, and the stock price for Strategy has also dropped. So all around, it's not been great for this segment.
Yeah, and some of those ETFs destroyed. I mean, there were leveraged strategy ETFs, right, that are just down, almost completely to zero. So, Ana, what happens next? We are seeing just a little bit of dip buying here, but we've seen that a few times and it hasn't prevented the slide. Is this the one? Is this the dip that does get bought?
There seems to be some resistance to buying in dips compared to previous cycles. I think there seems to be a bit more fear still that we might go down to 80,000. That would be the next level, and then where do we go from there? So there's some uncertainty. So let's see today. It's always hard with crypto to predict what's going on. It's been an extremely volatile asset class, and that really hasn't changed.
Exactly, and of course the crypto universe looking towards the FOMC for its own kind of clues as well. But what are the catalysts that do move Bitcoin generally?
I think now we're seeing, historically, people have been looking at the Federal Reserve, but now the environment has broadened up a bit, and we see influence of other, macro factors. For example, yesterday, a lot of the downward pressure came from the BOJ and what was happening. So it is tracking more other risk assets, and some of the influence is no longer just tied to crypto. Because, for example, historically, people would look at, regulatory pressures just for crypto, but now the environment is quite good. In the U.S., you have President Donald Trump, who's a big supporter, and there's been laws passed that support stablecoins. So the environment has changed for crypto, but so now investors are looking more outwards at other signals.
All right, Ana, thank you so much for explaining all that to us. That is Ana Herrera in London. Coming up, we're going to get you set up for your trading day. We have earnings to watch and lots more. This is Bloomberg.
I'm David Weston. Join me each week on Wall Street Week for stories of capitalism from business, markets, economics, tech, and climate. We go on the road for a look at what lies behind the headlines of today and what will likely be the headlines tomorrow.
We need more transparency. Oil and gas is still important.
They said every citizen should be investing in the market.
Accelerate progress in all fields of science.
Watch Wall Street Week right here on Bloomberg. More than what you need to know, it's what you need to think about.
U.S. jobs numbers are released. Bloomberg has the report under surveillance with crucial data and expert analysis at terminal speed. Nobody covers Jobs Day like Bloomberg.
Asia is at the forefront of some of the world's biggest stories.
And we're here, where the action starts in Sydney.
And in Tokyo, yet ahead as the global trading day begins.
The Asia Trade, weekdays only on Bloomberg.
Tune in to Bloomberg Business Week Daily.
We got to talk crypto.
From the magazine that helps global leaders stay ahead.
What's the conversation around your company?
Bringing you insight on the people, companies, and trends shaping today's complex economy.
Planning very big things.
A new level of premium.
Plus global business, finance, and tech news as it happens.
The floodgates of innovation are going to open up.
You can't fake passion. You either are or you aren't.
Bloomberg Business Week Daily, only on Bloomberg.
Bringing you up-to-the-minute geopolitical news whenever and wherever it happens. I'm Stephen Engel at Japan's Akasaka Palace in Tokyo, and this is Bloomberg.
This is Bloomberg Brief. I'm Bonnie Quinn in New York. Now let's have a look at what is ahead for today. So U.S. Special Envoy Steve Witkoff is meeting with President Putin in Moscow. We'll see if we get a readout from that meeting. Plus, Fed Vice Chair for Supervision Michelle Bowman testifies before the House Financial Services Committee. That testimony beginning at 10 a.m. Eastern. And then we do have a few straggler earnings. CrowdStrike, American Eagle reporting earnings after the close. Okta as well, and Marvell. Now, let's take a look at some movers before the bell. Warner Brothers Discovery, obviously with that deadline yesterday for another round of bidding, well, it's higher after Netflix reportedly offered a mostly cash bid, according to sources to Bloomberg. That's just one of the bids out there. Obviously, the other companies involved, Paramount, Skydance, and Comcast, bidding as well. MongoDB up 23% right now. Strong results and boosted its forecast after the bell yesterday. And Marvell in advanced talks to buy Celestial AI in a cash and stock deal worth multiple billions of dollars, that according to the information. Let's have a look at the macro environment now heading into today, because it's a very different picture in the early going. So we have S&P futures now just tilted slightly risk on, partially because Bitcoin is also higher. It's above 87,000. But remember, in the 24 hours in the Monday session, it was below 84,000 and above 91,000, both in the same session. Let's take a look at yields. Perhaps they're a little bit more, reasonable. That's it for Bloomberg Brief.
Such an incredibly exciting moment with AI. It is really the most profound technology of our lifetimes, and I think it has the potential to help us rethink literally everything. The potential for economic impact, societal benefit is honestly boundless. When we think about the economic impact for Europe in particular, it's around a 1.2 trillion euro estimate of the productivity growth that can be unlocked. This platform shift that we are living through, I think, is going to create untold amounts of value for the world, but also for the businesses and for economies, which is why I'm incredibly optimistic in this moment for Europe, but also for the whole world.
How do you think about job losses or safety for some of the AI tools?
I hear the anxiety, and I understand the anxiety about jobs. I think that we are certainly going to live through a massive transition about how people learn to work alongside these tools. The reality is I do think there'll be some number of jobs that are displaced. I think it is a smaller number maybe than some anticipate. We estimate it's around 7%. And I think what's important is that we have programs that help those 7% transition into new fields of work. I think what is more likely is that most of us are going to learn to work alongside these tools. So we estimate about 2/3 of us. If you think about the tasks you do in your daily life, when you look at every industry, there are administrative tasks that are happening everywhere, and that's what AI is most helpful in improving.
Middle East and Africa. Vibrant resources and high-yield investment opportunities abound. Join me on Horizons Middle East and Africa for the stories, newsmakers, and insight from this exciting region. Now weekdays, only on Bloomberg.
Join me each week on Wall Street Week for stories of capitalism from business, markets, economics, tech, and climate. More than what you need to know, it's what you need to think about.
AI is a bubble. We're starting to see that cash flow headroom coming down.
It's still going to drive markets. There is a fair amount of capital on the sidelines.
The theme is the same theme going into the internet boom. If you're not exposed, you're really going to miss out.
I still think there's a lot more buying opportunities and money to go into the equity markets. Yeah.
This is Bloomberg Surveillance with Jonathan Farrow, Lisa Abramowitz, and Anne-Marie Hordern.
Good morning. Welcome to Bloomberg Surveillance. Traders are struggling to find that Santa rally as worries remain about overvalued tech stocks and a potentially stagflationary backdrop. Bitcoin at the epicenter of froth coming out of the system, with the asset seeing a more than 25% plunge in the past 2 months. And OpenAI's Sam Altman feeling the pressure as he reportedly declares code red in his race to compete better with behemoths such as Alphabet's Gemini. Definitely front and focus as we look at the competing AI chatbots that are getting ground.
Everyone's been talking about the fact that this is an AI arms race. And now it feels like the pressure is really percolating ever more so on OpenAI and Sam Altman. How are they going to beat Google? This comes after Altman recently also told employees privately that Gemini could cause, quote, temporary economic headwinds for OpenAI, and talked about basically rough vibes right now at the company as they try to compete. Remember, there was a code red moment for Google, and now the tables have turned, and Sam Altman is dealing with his own version of that.
I love it. Last week it was bad vibes, man. This week it's code red, and a real question here as they try to justify some of the capital structure that they've really created for themselves. It kind of goes to this question of how much willingness is this market going to have to really fuel any additional taking on of debt markets. We're going to be talking about that throughout the morning, but also this question of how much froth is coming out of the system. I know we don't normally talk about Bitcoin, but the fact that you've seen a 30% plunge since recent highs in October just highlights how much you're seeing forced selling, how much you're seeing a potential retracement for some of the high flyers earlier this year.
Well, I think it's just writ large in the market, potentially maybe some risk coming out. You're asking about where's the Santa Claus rally. Well, what is the next catalyst to drive this market? We don't have jobs this week. We're basically waiting on, is the Fed going to cut? Are they going to pause next week? And then potentially there might be some relief. At the same time, the string of data we are getting isn't that great. Look at ISM yesterday, 9th consecutive month that we've seen some pressure when it comes to manufacturing in this country. And remember, this was supposed to be the year of tariffs and sticks and shovels and manufacturing coming back into the United States.
Yeah, you had, on one hand, the decline at the headline level, and then you had ISM prices that inflected upward. A bad mix, which is the reason why yesterday you saw the biggest one-day pop in 10-year yields going back almost a month. Right now, you're seeing a bit of a continuation of that same trend, albeit really tempered. Not a lot going on. If you're looking for action, today probably isn't it. You are seeing S&P futures up about 0.25%, near session highs. You are seeing yields also continuing their climb, albeit barely, 4.09% rounded up on the 10-year. Really, it is a quiet morning as we try to get a sense of what the actual data is ahead of what should be non-farm payrolls. I keep going back to this. We should be talking about payrolls this week. Instead, we're talking about what? AI? We're talking about what? Venezuela?
This is the problem. Self-inflicted wound almost by Washington, D.C., when we could have had a drumbeat on economic data. Self-inflicted wound potentially if the Fed goes on pause because they feel like they don't have all the economic uncertainty. Why didn't you just make the individuals at the Bureau of Labor Statistics essential so that we could have kept the same cadence when it comes to the economic data? That's all I'm going to say.
We're still in the anger and the rejection of not getting some of this economic data. Hopefully we'll get to acceptance and moving forward. Coming up this hour, Cameron Dawson of New Edge Wealth with risk appetite taking a breather. Geetha Raghunathan of Bloomberg Intelligence's Netflix makes another all-cash bid for Warner Brothers, and Tom Fitzgerald of TD Cowen after cutting his estimates on the major airlines. We begin this hour with stocks trying to get some sort of gain as markets look for direction heading into year-end. Cameron Dawson of New Edge Wealth writing, the market is still sending a pro-growth, pro-cyclical message. There is lots more room for investors to get more overweight this market. Cameron joins us now. Cameron, wonderful to see you. Thank you for being with us.
Thank you for having me.
So what's going on right now? Why are we seeing that Santa rally not materializing, even though this is typically the moment where people put aside their worries and buy?
Well, we are still seeing that investors are sitting on the sidelines of this market, mostly in institutional investors. And we feel like a bit of a broken record in saying that institutional investors are just neutral, which just means that there is still room for them to get dragged back in. However, the caveat is that household investors, individual investors, have been all in this market, and they have made up the majority of the trading this year. They have been the incremental buyer. So as you see volatility in things like Bitcoin and meme stocks and non-profitable stocks, that is hitting that individual investor and likely some of the source of some of this volatility. But we think because you still have institutions sitting on the sideline, it means that short and shallow dips are likely what we get simply because there is room for people to get more invested.
So let's just start with an anatomy of what's going on right now. How much more retail selling is there? How much are we seeing forced liquidations of things like Bitcoin funds or things like, potentially the more frothy segments of the AI trade?
Well, the most startling thing for us is that if you looked at FINRA margin loan growth over the last 6 months, it was growing at a 35% pace. That's faster than the pace that we had in 2020 when rates were 0%. So you clearly had this ravenous risk appetite go into markets. And so you start seeing things like Bitcoin sell off in a more meaningful way. And we look at it and say, hey, no crying on the yacht. When you play with fire, you are likely to get burned. And we've been seeing Bitcoin diverge very much from some of these meme stocks and speculative stocks really for the last 4 or 5 months. So some of this was preceded by the price action that we were seeing in Bitcoin, even as you were seeing new highs in October and September.
We started out talking about OpenAI and this code red. What kind of signal does that send for the broader market? Do you think that is a cause for concern?
Well, the biggest takeaway for us is that this is actually a competitive market. That's the takeaway, is that you have businesses that had been operating in near monopolies with huge return on invested capital, which means that they didn't have to invest a lot, but they got a lot of return for that investment. Now this is a very different world. The fact that you see this arms race at the same time as you have this leapfrog and jump of capability with Gemini versus OpenAI, it shows you that AI is highly competitive, which suggests to us that there's less pricing power and that there's less return on the investments that they're making potentially.
So at that moment, do you want to take money off the table when it comes to AI if you don't know who's going to win the race?
Well, look, we're still very much in this CapEx build-out cycle. And what we've been arguing is that the CapEx cycle is going to be very different than the application cycle. And the beneficiaries of those two things could also be very different. The challenge that we have is that if we look at this market and we look at the economy, it's all become incredibly indexed to AI, where the growth in the economy is sourced from AI and the growth in the market is. One of the most fascinating things is that if you look at the Russell 1000 Value Index, it got rebalanced earlier in this year. It added 3 Mag 7 names to it, and now the largest weight in the value index is Google. So we now own all the same things. So even as you're trying to diversify, good luck, because when you buy value, you're now getting Google.
There is this theory that if you do have the build out of AI, this will ultimately lead to a manufacturing renaissance in the United States. You're laughing with this absolute skepticism, and I think a lot of people would join you after seeing the ISM manufacturing numbers yesterday, where the headline number came in at the lowest level going back to July. You have prices paid going up. This is stagflationary. Yeah. This isn't necessarily what people want to see. Why are we not seeing the right kind of manufacturing boom that seems to be implied by the AI build-out?
And isn't it fascinating that we've now had OBBB for nearly 9 months or over 6 months, and you're not seeing that show up in any of the manufacturing data, meaning that accelerated depreciation was included in OBB. It's kicked in. This is supposed to incentivize people to invest more. It's not necessarily resulted in broader investment. Certainly it's helped the AI players who are already making these investments. Now, I think it's important to note that PMIs have not been a good leading indicator for what we're seeing in industrial and manufacturing profits. You've effectively been in a contractionary PMI for the last over 3 years, and yet you see industrial profits that remain very strong. So it's likely a reflection of the fact that watch what they do, not what they say. Sentiment surveys are much more dire about the outlook than what we're actually seeing activity.
At this point, though, don't you think that this is something that we need to pay attention to in terms of that type of dynamic, because it is a global dynamic, this idea that everyone wants to invest in manufacturing, everyone's going after the same materials, and they're in scarce supply with particular supply chains, and you have this real question of whether that kind of reaction is coming from as much Japan as it is in the United States, this idea that they're going to have to raise rates because of inflation at the same time that growth isn't really taking off, this feeling that that is going to be the backdrop kind of globally.
Yeah, and I think the takeaway is that the digital world is actually very physical, and you're starting to see the uplift in some of the industrial commodities that we should watch very closely. So as you see things like copper prices move higher and other broader industrial commodities, not just what we're seeing in things like gold and silver, that suggests a little bit of an underpinning of an inflationary dynamic, and that would be very different than this sort of deflationary dynamic that we've been in really for the last 15 years, where you haven't seen much movement out of the commodity side of things.
Cameron Dawson, you're going to be sticking with us for the entire hour. I'm so glad to say that. Cameron Dawson of New Edge Wealth. We are just getting a headline, Anne-Marie, about how U.S. envoy Steve Witkoff has arrived in Moscow. This is being reported by TASS. This real question on this ongoing quest for some sort of resolution to the Ukraine-Russia conflict.
I would say this is a really important meeting because it comes on the heels of Witkoff and Secretary of State Marco Rubio sitting down with their Ukrainian counterparts just this week in Florida, getting their input on this peace plan, and then having this discussion with Putin. Putin, though, has been very, very matter-of-fact of what he will and will not accept. Can Witkoff convince him that there is going to be need for more flexibility and obviously understanding of where you can actually get to an end goal, because the Ukrainians and the Europeans are not signing up to that original proposal.
Yeah, it feels like Marco Rubio is playing the Ukrainian side and Steve Witkoff is playing the Russia side, and we'll see where they meet in the middle. We'll talk about that coming up, as well as the potential investment implications for Europe, which is something a lot of people have been focused on. Right now, let's get you an update on stories elsewhere. Here is your Bloomberg Brief with Yahaira Anand. Yahaira.
Hi, Lisa. Nearly half of Chinese flights to Japan have been canceled for December. CCTV reporting that more than 1,900 flights were scrapped due to the dispute between the two countries. Japanese cities Sapporo and Osaka, which rely heavily on tourism, saw the biggest cut. Meanwhile, the White House has defended the Pentagon's handling of a September attack on a suspected drug-running boat off South America. It's denying a report that Defense Secretary Pete Hegseth had given an order to kill everyone on the vessel. Spokeswoman Caroline Leavitt confirmed 2 strikes on the ship, but says the order for the second attack came from a U.S. Navy admiral, not Hegseth. And Samsung unveiled its first trifold smartphone, which can unfold into a larger tablet-sized device. The company plans to sell the phone in the U.S. as well as China, Taiwan, Singapore, and the United Arab Emirates. The announcement comes several months ahead of when Apple is expected to announce its first folding iPhone. That's your Bloomberg Brief, Lisa.
Thank you so much, Yahaira. I never understood why a folding phone would be a game changer, but maybe I will be proven otherwise. I don't know. Have you tried it?
I haven't tried it, but maybe because the phones are becoming now bigger than your pockets, bigger than your purses, so maybe you can have the actual tablet size you want, but make it easier, more accessible to carry around with you. That's my thinking.
Yeah, maybe you can just chip it into your brain and everything will be just fine.
Elon Musk is actually working on that.
I think that that's coming up next. That's the next iteration. Up next is Not That, Pushing for Peace.
Special Envoy Witkoff and Secretary Rubio and the Vice President and the President himself, Secretary Hegseth as well, have been working so hard on this effort. They had very good talks with the Ukrainians in Florida, and now, of course, Special Envoy Witkoff is on his way to Russia.
Bloomberg's Mika Solner and Peter Smolensky are both joining us next. This is Bloomberg Surveillance.
investors, top executives, global innovators. Join me for in-depth conversations with the biggest newsmakers on the day's top stories. Insight with Haslinda Amin, only on Bloomberg.
Morning, this is Bloomberg Daybreak Europe. I'm Tom McKenzie in London. These are the stories that set your agenda.
Taking you from the U.S. market's close to the overnight session in Asia, we'll walk you through what you need to know to kickstart Europe's trading day. Live from our European headquarters, we bring you the day's top market-moving stories, unmatched expert analysis, and on-the-ground reporting from across the continent. Tune in to Daybreak Europe, only on Bloomberg Television. Context changes everything.
At a time when policy in Washington is driving Wall Street, we draw a distinction between the rhetoric and the action, bringing you market-moving guests and original reporting. This is Bloomberg Surveillance.
Maybe there actually will be a melt up into year end. Right now, what we're seeing in futures is that melt up with futures near session highs led by the NASDAQ. So a real possible reprieve for some of the more sensitive stocks to the AI story, up 0.4% on the NASDAQ. S&P futures up almost 0.3%. You can see the Russell 2000 outperforming here, up 0.6% after really getting hammered yesterday. You're seeing a reprieve in the bond space as well. Yesterday, you did see a pretty significant sell-off, at least at the longer end of the yield curve, in response to what we were seeing possibly from Japan. I'm not sure. Also, potentially the ISM. Today, you're seeing a bit more quiet at the 2-year 3.53, 10-year 4.09%, just slightly higher in terms of yields. 30-year yields, though, lower, and definitely giving some sense that maybe we have reached a calm and maybe a yield curve flattening, at least coming from Japan. Under surveillance this morning, pushing for peace.
The administration feels very optimistic. Obviously, the president's entire team, including Special Envoy Witkoff and Secretary Rubio and the Vice President and the President himself, Secretary Hegseth as well, have been working so hard on this effort. They had very good talks with the Ukrainians in Florida, and now, of course, Special Envoy Witkoff is on his way to Russia. We do feel quite good, and we're hopeful that this war can finally come to an end.
Here's the latest. U.S. Special Envoy Steve Witkoff is set to meet with Russian President Vladimir Putin with a renewed push to end the war in Ukraine. Russian state media reporting the talks will take place this afternoon, with headlines crossing that Steve Witkoff has arrived in Russia. Our team coverage starts right now with Bloomberg's Mika Solner in Washington and Piotr Skolomowski in Warsaw. Mika, I want to start with you. What is the ultimate goal here? Do we have a sense of what was resolved in those Mar-a-Lago discussions with the Ukrainian president?
Yeah, I mean, as we just heard Caroline say, the White House is feeling very optimistic in where they are right now in terms of this push for peace. They are trying to meet an aggressive deadline. They're trying to move as fast as possible, but I think they feel like they're in a good place. They put a lot of pressure on Ukraine to accept the deal. There's been a lot of back and forth, but they've also made it clear that they're going to continue working equally with both sides, Ukraine and Russia, when it comes to trying to figure out a plan that's going to end this 4-year-long war.
Piotr, what's the feeling over in Warsaw, in Europe, at a time when they really haven't been included in the conversations? A real sort of existential fear of what could happen if Ukraine is forced to give over more of its land that possibly hasn't even yet been occupied?
Yeah, the simplest way to put it is basically Europe has been horrified by, first of all, seeing the 28-point plan that was revealed, and it had no input from Ukrainians, it had no input from Europeans. And since then, Europeans were trying to kind of influence the talks in some way. And they probably managed to get some inputs themselves by trying to influence talks and trying to steer the document closer to what is now known as 19-point plan, which also Zelensky yesterday said it looks better than what was initially presented. But still, Europe is very much concerned. That's what we heard from Europe's top diplomat yesterday, Kaja Kallas, who pretty much said, we are really concerned that Ukraine will be presented with sort of a lopsided plan where the weaker side, which is Ukraine, is going to kind of bear the brunt of most of the concessions, and that's the biggest concern from the European side, because obviously it's not only geopolitical situation and the risks that there are for Europe from that war, but also the fact that Europe bears the most expenses when it comes to financing the war going forward. So they are really worried that they'll be left to handle this war going forward, to pay for it, but also be in a much worse position.
Mika, I'm just curious how much it actually is true that it seems like Steve Witkoff is playing the Russian side and Marco Rubio is playing the Ukrainian side, and President Trump hasn't yet fully made up his mind which one to lean into.
Well, the administration has received a lot of criticism in how they have gone about this, as well as, there's a lot of hopeful members as well on Capitol Hill and beyond who are hoping that Trump can actually bring an end to the war. But there are a lot of people, Trump allies, even Republicans on Capitol Hill, top Republicans, who have said that the president is leaning too hard into appeasing Russia and that there are major concerns about Ukraine's future when it comes to the proposed plan at hand.
Bloomberg's Mika Solner in Washington and Piotr Skolomowski in Warsaw. To both of you, thank you so much. Cameron Dawson of New Edge Wealth, we are lucky to still have in the studio. And I'm wondering, Cameron, how much you could take a look at what's going on and say this will actually potentially either revive faith in some sort of European recovery or potentially, in a pessimistic scenario, do the opposite.
Yeah, we're watching really closely the stock price of Rheinmetall as a way to kind of gauge all of this and fears about European defense and how much they'll have to do themselves. Of course, what you saw at the beginning of this year is a massive rally in European defense stocks because of this fear that the U.S. wouldn't be there and that they'd have to pay for it themselves. But what that resulted in is a stock like Rheinmetall going from 20 times earnings to 55 times earnings at its peak. And guess what? The earnings estimates actually didn't change at all because there wasn't any near-term benefit to the overall earnings because of this dynamic. So that has now come off the boil. You have a stock like Rheinmetall trading below its 200-day moving average. It looks a little bit toppy. So it's not necessarily showing that kind of fear yet back in the prices of the stock.
What about oil, though? Isn't that one of the major ways to trade this? Because there considerations from this administration, they always dangle with the carrot and stick approach that there will be, but maybe secondary sanctions on individuals or countries that purchase Russian crude.
Yeah, anytime that we're looking at geopolitical events, we always ask the question, will it affect earnings? If the answer is no, it's something that should be faded because it likely is just a near-term hit to sentiment. If the answer is yes, it's likely because of oil prices. And so as we look at the dynamics around oil prices, you're sitting with a daily average gasoline price right now sub $3. And you've been in an environment where the last 3 years you've had consistent year-over-year decline in oil prices. For the U.S. consumer, that's effectively a tax cut. So if you were in a scenario, whether something happens with Russia or within Venezuela, that you see gasoline prices and oil prices change direction, that could be a very interesting wrench for the U.S. consumer as well as for the Fed.
And not only that, but also companies, as it's a main input product.
Yeah, most definitely. And you think about something like Venezuela, where they produce heavy sour crude, which is used in diesel. A lot of talk about diesel markets are already very tight. So if you think of the industrial implications, if you were to have a conflict like that, you could see diesel prices move higher. But again, you're not in an environment where oil markets are especially tight. You have the Strategic Petroleum Reserve that's still well down from its 2021 peak, but has been building. So in theory, there would be room to absorb a little bit of a cushion if you saw oil prices inch up.
So what I'm hearing from you is that although these talks might be important, the market is just going to shrug them off.
Yeah, that is typically the case with any geopolitical event. It really comes down to this notion of, yes, it might be scary, yes, it might be bad for certain populations, but if it doesn't impact U.S. corporate earnings, it's something that should be faded.
At the same time, I mean, if you just take a step back, this year was all supposed to be about the real physical world, and we've seen the revenge of the physical world since the pandemic, and that after the conflict was over, and hopefully that will be soon, there would be a rebuild effort in Ukraine. There would be infrastructure that would have to come in addition to the build-out of infrastructure for AI in Europe. I just wonder how people are understanding the pricing of that story, given the fact that that has been known, but there was reports today that Europe is struggling to get some of the natural resources that they're looking for because of the stiff competition from places like the United States.
Yeah, maybe there is some of this perkiness that we're seeing in those industrial metals starting to show up as some of this rebuild. And I think at the end of the day, there's still questions about how much Germany would be willing to do as far as expanding its fiscal deficit and really holding to that black zero of balanced budget. So So, I think that hope springs eternal that you're going to see this big, huge infrastructure build out. It always seems like we're perpetually next week is infrastructure week, and that just simply hasn't materialized.
Which is the reason why I think a lot of people are trying to understand just how different this administration is with respect to a more transactional approach to international policy, how much you follow that versus just simply go with the sort of mainstay of ignore geopolitics unless it affects the price of oil.
Yeah, and certainly there's been so much more focus on internal things within the U.S. and receding from some of these geopolitics to focus on things like bringing manufacturing back to the U.S. and being able to make sure that you have access to key inputs like rare earth materials. And we are starting to see some some progress in the ability to build out that kind of infrastructure, but it certainly takes time.
Yeah, well, this is definitely what everyone keeps talking about, which is essentially this is a very long-dated issue. Cameron Dawson's going to be sticking with us, but to me, this is sort of the key question. If this really is the revenge of the physical world, is there a mismatch in the disinflation that AI will create with the inflation potentially of the real world materials that are needed to really make this happen?
Well, you might get the inflation first, and the disinflation comes later. Talking about the physical world, though, David Sachs in the last 48 hours was tweeting about this Wall Street Journal article about how actually the cost of construction workers, plumbers, welders have all gone up. But this is sector-specific and region-specific based on whether or not Microsoft is investing billions of dollars to build an AI plant in your district.
That was a great story, by the way, about the arms race to hire people who are able to construct some of the data centers and the ability to make $200,000, $250,000 a year. But you're right. This is something very sector-specific, focused on those data centers.
Absolutely. And it's going to take, you don't build a data center overnight. This is going to take years and years of a build-out across the United States.
Coming up, we're going to be talking about inflation of a different type, the bill that you pay for your cable network. Bloomberg's Geetha Raghunathan as media giants race to acquire Warner Brothers Discovery. Plus, Danny Berger with your morning movers, MongoDB soaring on an earnings beat. Otherwise, pretty quiet right now, although you are seeing a rally build steam led by, guess what, big tech. This is Bloomberg Surveillance.
The key issue right now for us in the diamond space is the declared divestment of Anglo from GBS. And as you know, Anglo holds 85% stake in GBS. Botswana, the government of the Republic of Botswana holds 15. We are resolute now, and we've communicated a firm intention to increase our stake in DBS to a controlling stake. We have lined up a number of potential collaborators with us, if I may put it that way. We have targeted funders, we have parties, we have the Oman Sovereign Wealth Fund, we have others who are willing and ready.
All right, okay, ready?
David, what initially sparked your interest in this topic of longevity?
15 years ago, I turned 60, and I began to wonder how much longer I'm likely to live and what I could do to extend my life. On longevity, I talked with the leading experts in science and medicine to educate people about how they might be able to change their conduct so that they can live a happier and healthier life. I'm David Rubenstein. Join me on a 4-part journey as I explore the great quest for longevity, only on Bloomberg.
Building on a rally, trying to melt up into year-end, tech stocks, which have been beaten up and underperforming in a significant way, outperforming this morning. What you do see is those gains continuing to build up 0.3% on the S&P. NASDAQ futures up 0.4%. The Russell 2000 up 0.6%. A real question about what's going on in the bond space. Yesterday, we started off with a little bit of a sell-off, even with the Bank of Japan indicating they probably were going to hike rates later this month. And then as the session grew older, those yields continued to climb, building on that increase this morning. 2 years up just slightly, but 3.53%. Yesterday, it was led by the long end. We really saw that 10-year yields continuing to inflect higher, almost at 4.10. Cameron, what did you make of what we saw yesterday? Was it that people were waking up to the idea of the Bank of Japan, or was this something else?
I think that it was partially Bank of Japan, that if they were going to be more hawkish incrementally at the margin, you have less treasury demand. But I do think a lot of it was the Costco story. It was the idea that potentially that if tariffs are ruled illegal, that they'd have to give the money back, and that Costco suing to try to get the money back would suggest that you would have a bigger hole in the budget, meaning that all of those billions of dollars raised by tariffs would now have to be funded by treasury issuance. And given the fact that you have things like the reverse repo market being much smaller, that balance could push issuance on the long end of the curve, thus higher yields in the 10-year.
We're going to get into that story in just a minute. Great tease. Right now, you are seeing Bitcoin not necessarily seeing the plunge that it saw yesterday, where it was plunging almost 9% at one point. The most is going back to March. Today, just a little bit of a breather. We're not going to be covering Bitcoin in mass, but it really is a tell of just what the risk sentiment is and what kind of pain is out there in the retail space. 3 hours away from the cash open. Here are your morning movers. It's Danny Berger. Danny.
Hey, Lisa, feel for the bankers who over the Thanksgiving weekend had to do work on this. Warner Brothers Discovery fielding second rounds of offers for it. That includes an all-cash, reportedly mostly cash bid from Netflix. So those shares are moving higher by 1.76%. Reportedly, Warner Brothers Discovery is aiming for $30 a share for the bid price. The chair emeritus at the company believes that they will be able to do so. A little bit of earnings to get through. MongoDB, this is the cloud software company, a raise to their outlook, a new CEO at the helm, saying that it is their AI powering of different applications that really helped their results, be it from startups, more established companies. Those shares up 24, just under 24%. Finally, a little bit of deal news. Marvel Technologies are going to have their earnings after the bell, but the information reporting that they will be buying a company called Celestial AI. This is an AI company that basically powers the applications through light, through photons versus electronics. Apparently, that makes things more seamless. Multiple millions is the price tag that the information reported. It is an unprofitable company. Nonetheless, a lot of AI, M&A happening just in general. So those shares moving higher, Lisa.
Thank you so much, Danny. On our radar this morning, a real focus in Washington, D.C. President Donald Trump set to host a cabinet meeting later today. Top officials will likely continue outlining next steps amid mounting tensions with Venezuela. The real question may be, how much is this really going to continue to swirl over the head of Pete Hegseth, the head of the Department of War? How much is that in sort of the ether in Washington, D.C.?
Absolutely, because you're seeing bipartisanship across Congress when it comes to individuals that serve on, say, the Armed Services Committee that want answers to what actually went down when it comes to the strike on that boat when there was 2 survivors. There was a Washington Post report that Pete Hegseth, the defense secretary, had this call to say, everyone, there should be no survivors, everyone should be killed. And then a second strike was ordered by this admiral. And it seems to be a distinction without a difference. If it comes from the top, doesn't that come from Pete Hegseth? So that's kind of been the back and forth. But the White House Caroline Leavitt has come out and really defended what the Defense Department did, but potentially this can have repercussions in Congress.
Which is the reason why people are watching this cabinet meeting very closely. Elsewhere, this is something that Cameron was talking about, and we'll dig into now a little bit more. Costco suing the Trump administration, the retail giant joining dozens of companies seeking to guarantee tariff refunds if the Supreme Court rules the president's global duties unlawful. Cameron, you were saying that you think this is part of the bond market sell-off yesterday because it really plays into the fiscal story. Does this increase the potential deficit of the United States should there be repercussions from the Supreme Court ruling?
Yeah, part of the reason why we think that the bond market has been so calm over the course of the last 6 months or so is because you have had this tariff revenue that has allowed them to not have to issue as many treasuries. So if that gets called into question and you have the potential that some of the money would have to be given back if some of these lawsuits are successful, then it would suggest that you have more treasury issuance and thus upward pressure on curbs.
Costco is basically filing the suit saying that IEEPA is unlawful because they feel like even if the Supreme Court comes down and says that they are unlawful, they will not be for sure green-lighted to get those refunds back. So they are getting all their ducks in the row, preparing potentially for the Supreme Court to come down on them. They have collected $2 billion at minimum already this year. They say they could potentially bring in trillions, at least the tariff policy, over the next decades. If this does not stand up, this is going to complicate the Trump administration ahead of the midterm elections because they're going to have to basically redo the entire trade policy using many other legal authorities, but just take a lot more time.
I wonder also with a big player like Costco doing this, whether it greenlights it for other companies as well, to say it is okay for you to get on board and line up to get all of your ducks in a row, to your point,
They're going to have to file a suit then and say it's unlawful. So that's going to put them at crosshairs with the administration.
Well, this is exactly the point. Meanwhile, another sharp drop in the crypto market leading to the liquidation of almost $1 billion in leveraged trading bets. Bitcoin sliding as much as 8% yesterday, bringing its decline since early October to almost 30%. Cameron, do you watch Bitcoin every day?
Well, it's important as a gauge for liquidity as well as risk appetite. And the fact that Bitcoin wasn't making new highs as other parts of the market were was making us uncomfortable over the course of the last couple of months. Because if liquidity is tightening, if risk appetite is waning, it means that that low quality speculative leadership that has really dragged this market higher since the April lows should be in question.
Which is the reason why we're following it this morning. If you're wondering whether we've turned into a Bitcoin channel, it is not that, but it is a really important kind of view on liquidity. Let's turn to media. Warner Brothers Discovery fielding offers for media giants as sources say the auction could wrap up in the coming days. Netflix making a mostly cash offer as Paramount and Comcast do still remain in the mix. Geetha Ranganathan of Bloomberg Intelligence joins us now. Geetha, Netflix, almost all cash, and yet there still are other players in the mix. How close are we to some sort of conclusion to this ongoing melodrama?
Yeah, thanks, Lisa. So this was the second round. It's not necessarily the final round of bids just yet, but the offers are binding. So if the board decides that, they do see an offer that they like, this might very well be, we might be very well close to a conclusion of this ongoing M&A saga for Warner Brothers Discovery.
Geetha, any sense on where they are leaning right now?
So what was really interesting about the Netflix offer, first of all, I don't think anybody on the street really initially thought that Netflix was making a very serious offer here or that they were seriously interested in Warner Brothers Discovery. Warner Brothers Discovery has been seen more as kind of an existential asset purchase for both Paramount and Comcast, not necessarily for Netflix. So first of all, the fact that they've come so far, they're in the second round. And the fact that they're making an all-cash offer, I mean, you have Netflix stock is extremely valuable when compared to either Comcast or Paramount Skydance. So I think, we're seeing a little bit of, I think, a change here in sentiment. I mean, we would have expected more news maybe from Comcast, a sweetened offer. There have been some reports, but I think Netflix is really serious. So I think that's a little bit of a change that I don't think many people had seen coming.
Besides the cash offer, and besides basically the financial offer, is there anything that Netflix is offering that makes this more attractive than the others?
So I think with Netflix, there have been some reporting suggesting that the regulatory aspect is going to be a little bit of a concern. You do have Netflix, which has close to maybe about 325 million streamers. You have HBO Max, which has about 130 million. You put those two together, you obviously have a streaming service, with a huge moat with over 450 million streamers. So that's obviously going to be a little bit of a concern from a regulatory standpoint. Now, Netflix themselves have, the big question for Netflix has obviously been, they've always been against releasing movies in theaters. So the fact that they're buying Warner's studio assets, which is obviously one of the biggest studios in Hollywood, the big question has been, will they, pull all those movies? Will they continue to release those movies? And of course, Ted Sarandos, who's the CEO, has kind of assuaged theater owners and the Hollywood moguls that they will continue to release those theaters. So they're doing everything that they can, I think, from a regulatory front, just to kind of appease and assuage the regulators, but still it's kind of a wait and watch here.
Bloomberg's Geetha Raghunathan, thank you so much for that. Cameron, are you actually investing in any of this stuff? Are you like betting on the consolidation of the media space?
Well, I think it's actually interesting how this will all be funded, because it's looking like it would be a $60 billion deal. And if you look at the amount of cash that Netflix has on its balance sheet, it's about $9 billion. So they're going to have to raise debt. They don't have a lot of debt in their balance sheet. They have 0.6 net debt to EBITDA. So there's room for them to do that. But if they go through this deal and it is a cash deal, they will be going to the debt markets.
A very smart take, and very much increasingly the take when it comes to a lot of the dominant corporate stories, certainly in the tech space with OpenAI and all of its debt issue. And speaking of that, OpenAI CEO Sam Altman declaring code red. According to a memo seen by multiple outlets, Altman sent a company-wide message stressing the need to improve ChatGPT as Google gains ground. Bloomberg's Tom McKenzie joins us now. Tom, we've seen a slew of memos reported on from Sam Altman talking about increasing concern about the competition from Google in particular. How much are they taking this seriously? How much are they innovating in a way where they could keep an edge versus some of their better funded peers?
And it does, Lisa, speak to that funding story that you just touched on there, the need to have those deals, the need to raise capital, have that liquidity, and raise debt as well for OpenAI, which does not have the balance sheet, of course, of the likes of Alphabet, and needs that liquidity and that funding to spend not just on the infrastructure, but to ensure that there is adoption of their products, and particularly GPT. So yes, they are taking this very seriously. To your point, there was a memo put out on Monday, according to the information, on this red alert that Sam Altman is now issuing across the company, because Gemini is now so good. Gemini 3.0, it's been incredibly well received within the developer community, within the AI ecosystem, and the uptake is there. Google is also able to embed its own models into its products, get it into the hands of users very quickly, and it's proving effective. And they are seeing the user growth, just as the user growth, it seems, for OpenAI is starting to slow. So that race between, if you have 4 or 5 horses that are out front, then, of course, Sam Altman, OpenAI, was straight out of the gates, November 2022. Gemini was on the back foot. Google was on the back foot. They had their own red alert. Now they are very rapidly catching up. And that is where the emphasis is now. That is where the concern is. So it seems like Sam Altman is telling the business, telling OpenAI and the team to focus front and center on their GPT models. And they say there's going to be an update potentially next week to rival Gemini 3.0, and to walk back maybe from some of their adverts, their efforts around advertising, maybe for some of their agentic push as well, because they need to get the primary product right, and they need to make sure they're not losing that customer, the growth that they've seen, that they think could lead to revenues of $10 billion this year, possibly $20 billion next year, and possibly $30 billion the next year on 2027. That's all dependent on the continuing growth and uptick amongst individuals and corporate consumers as well.
Bloomberg's Tom McKenzie, thank you so much for that sort of expected growth in revenues, part of the issue. I mean, Cameron, that is part of the problem, given how much their debt pile has surged, and the leverage tied to it, not just from them, but also data center providers, has grown to something like $100 billion.
Yeah, and this blank check that you've had investors be willing to write to companies in order to be in this arms race, now it seems to be that there's much more of a question of what will the return be. And we still come back to the fact that AI is just so much more competitive than their legacy businesses, which were near monopolies.
Yesterday, also, we heard about OpenAI taking an ownership stake in Thrive Holdings, which basically is Thrive Capital, which originally invested in OpenAI. Yeah. Once again, another episode of circular financing. At some point, does that really start to freak people out?
Yes, and what we find is that circular financing is really good on the way up. It actually adds to the capability of growth because you're having this kind of circular self-reinforcing kind of dynamic. The problem is that once something turns, once the catalyst happens that causes it to turn, it magnifies things on the way down. It's Andrew Lowe's adaptive market hypothesis in full force.
Yeah, and this really goes to also NVIDIA with Synopsys yesterday, this idea of vendor financing, all making people a little bit nervous. It also suggests they just have so much cash, they don't know what to do with it. So I guess that's the better outlook, at least on the story. Right now, let's get you an update on stories elsewhere. Here's your Bloomberg Brief with Yahaira Anand. Yahaira.
Hi, Lisa. White House Special Envoy Steve Witkoff is in Moscow today. He's meeting with Russian President Vladimir Putin to discuss the latest proposal to end the war with Ukraine. Ahead of the meeting, Putin said Russian troops took over the city of Pokrovsk in Ukraine's eastern Donetsk region, but Ukraine's military spokesman denied the claim. Meanwhile, Starbucks has agreed to pay $38.9 million in a settlement with the city of New York. The coffee chain was accused more than 500,000 times over a 3-year period of violating a local law requiring fast food businesses to give workers predictable and stable schedules. Starbucks has to pay $35.5 million to more than 15,000 workers. And Amazon is testing a new ultra-fast delivery service. The online retailer is aiming to deliver groceries and other daily essentials in 30 minutes or less to customers in major U.S. cities. The company is seeking approvals to build or renovate small delivery hubs in cities, including Seattle, Philadelphia, and Fort Worth, Texas. That's your Bloomberg Brief. Lisa?
Thank you so much, Yahaira. Up next, airlines taking a hit. Do you think there's going to be any permanent hit to the fourth quarter earnings because of the shutdown?
You can't make up a 1 week of Delta. We had a little over 2,000 cancellations. You can't make that up within the quarter.
Tom Fitzgerald of TD Cowen joining next. This is Bloomberg Surveillance.
Rodriguez. And I'm Jason Kelly. And we're back with another season of The Deal. With athletes and entrepreneurs who are changing the game on and off the field. Jerry Jones.
Some good-looking trophies. 1 and 1 is 3 in sports, not 2. And it's because that 3 is imagination. That 3 is putting yourself in a way, having yourself hit the home run.
Erica Ayers-Badon.
I'm a high-energy board member. I'm very passionate. I have a lot of opinions.
Robin Arzón.
I want to light fires in people's lives, and that is still one of my core mandates for all of my businesses.
Justin Tuck.
I tell all of my friends that play in leagues now, make these relationships now while you're hot. Don't wait till you're like your 12th year in and you're just hanging on.
Stay tuned. You won't want to miss it.
It's It's the world's second largest economy with a growing influence in global affairs. Bloomberg The China Show brings you the unmatched expertise you need to keep track of breaking news, in-depth market analysis, and the most influential newsmakers in and around China.
We need to do more to engage the market more. We're risk on. I think we caught a little sweet spot.
Massive savings right now.
It's already a different game.
Bloomberg The China Show. Weekdays around the world, right here on Bloomberg. Context changes everything. Why do the biggest names in business choose Bloomberg Television?
That's a great question.
It's a very good question.
Interesting question. Good question.
Great question.
I so appreciate that question. You certainly ask interesting questions.
Bloomberg Television. Top experts, great questions. Get your fixed income fix. Watch Bloomberg Real Yield around the world right here on Bloomberg. Context changes everything.
Building on a bit of a rally, at least a reprieve from yesterday's losses. You're seeing across the board up about 0.3% on the S&P futures. You are seeing yields inflect a little bit higher, building on some of the losses from yesterday. 10-year yields 4.09%, and a little bit of just stagnation everywhere else. Not a very active day. 116 on the euro-dollar cross. Under surveillance this morning, airlines taking a hit.
Do you think there's going to be any permanent hit to the fourth quarter earnings because of the shutdown?
You can't make up a 1 week of Delta. We had a little over 2,000 cancellations. You can't make that up within the quarter. So yes, there was an impact like there's going to be in all the airlines. It's transitory.
Here's the latest. Major airlines under pressure heading into year-end, facing a range of issues from the fallout of the government shutdown to problems with Airbus aircraft. Tom Fitzgerald of TD Cowen lowering his estimates on the big six U.S. airlines for the fourth quarter, but still seeing positivity ahead, saying as long as the broader macroeconomy can continue to grow in 2026, the sector should see a better year. Tom joins us now for more. Tom, can you just talk about what went into your downgrade for the overall estimates of the airlines and whether you think that it could really set them back in a more protracted way?
Thanks so much. It was predominantly driven by the government shutdown. We saw a pretty steep impact on the first half of November, especially for corporate traffic, which was very hot in October. And Thanksgiving data looked a little bit softer than we were expecting. So it was most of our estimate revisions were due to that, and then we took it down a little bit further out of caution ahead of the December holiday period. But overall, we think this is an event the market will look through. We think most investors are expecting guidance cuts this week and next week, and we think it should be a clearing event for the group.
Could any of the airlines make up for what happened with the shutdown?
I don't think so. I think there's like a certain element of demand that just got destroyed. It's possible some bookings were pushed off, but I think there's a lot of trips that just didn't happen, and it's unfortunate.
So what are you looking at for 2026 when it comes to the airlines? Who do you think is going to lead the pack, who's making the right decisions now, who maybe made the right decisions when it comes to cost savings during the government shutdown?
United's our best idea for 2026, and we think they've been making the right decisions for close to a decade now. You go back to the pandemic when they decided not to retire their wide-body fleets. They kept their pilots in place so they were able to rebound faster than people. Their fleet renewal plan drives a really attractive flywheel where they take in larger aircraft than the planes they're replacing, so they don't spill as much revenue. They have more premium seating and more basic economy seating, so that's a bit of a category killer. And because the planes are larger than the ones they're replacing, there's a really nice non-fuel cost tailwind as well. So we think they're probably the highest quality growth story among the U.S. airlines as we go into next year.
Tom, how much are the airlines the perfect synopsis of the K-shaped economy, and how the airlines like United and Delta will continue to get business and continue to expand their lead over the other airlines as better heeled customers are able to shell out a bit more?
I think you've said it well, and I think it really ties into how important revenue diversification is and how much more resilient the earnings of those two companies are versus the broader peer group. If you look at how estimate revisions for full year 2025 EPS have trended over the course of the last year, all the airlines saw their numbers cut just given the events of this year. But Delta and United, it was, estimates came down about 16-20% versus the other airlines. It was more in the, 30 to 60% range. So I think these two are in a league of their own.
Tom Fitzgerald of TD Cowen, thank you so much. Still with us is Cameron Dawson of New Edge Wealth, and I am curious what you're looking at to try to get a gauge of the consumer. We were talking about airlines. We do get some vehicle sales today. We're going to be getting ISM services come tomorrow. We're going to be getting ADP data. We're not getting non-farm payrolls. We're trying not to pout about that, but I'm just wondering what your compass is as you gauge whether people will keep spending.
We think the most important compass is the equity market itself. We've been looking at the ratio of equal weight discretionary versus staples and arguing that as long as that ratio remains in an uptrend, this is an equity market that says that the aggregate consumer deserves the benefit of the doubt. But as we know, as you mentioned, the K-shaped economy, that the aggregate consumer does not reflect the average consumer, meaning that the largest consumers are the strongest, so they're making the overall data look better. However, these smaller consumers, which are weak, is what's really being reflected in things like sentiment data, which is why you can see something like University of Michigan Conference Board data looks so weak because every vote counts the same. But when it comes to spending, it's market weighted.
We haven't even mentioned the Fed this hour. You know, you're welcome. But I am wondering how much it would really change the dynamic if you did get Fed rate cuts later this month, next week, as well as several next year.
So this is where I think there could be a big plot twist, which is that the high-income consumer actually loves higher rates. They have termed out mortgages, they have big cash balances. And if you go back to the last few years, what you actually saw was interest income growing rather rapidly, up to a peak of 20% back in 2023 because the Fed was raising rates. So we actually think that rate cuts hurt the high-income consumer more than they help the high-income consumer because they don't have nearly as much reliance on floating rate debt.
Which is going to be something that the administration will try to deal with, I'm sure, if they get what they want. Cameron Dawson of New Edge Wealth, thank you so much for being with us for this entire hour. Wonderful to get your thoughts, as always. I mean, it's clear this is what's partly on the minds of people in Washington, D.C., especially as there's another meeting today with potential redress of some of the cost of living issues.
Absolutely. Affordability has been top of concerns for Americans. It continues to show up in polls. The president continues to remind Americans that gas prices are lower, but other items are higher: coffee, bananas, avocados, which is why you saw the administration make a U-turn when it comes to some imported agricultural goods and food products, because they are trying to address the affordability concerns, because it continues to show up in polls. But also, Cameron is talking about how maybe the high-end consumer actually wants higher interest rates. The low-end consumer does not want that. And this administration has been constantly talking about delivering for Main Street. Well, for them, that means, in their view, the Federal Reserve needs to continue cutting interest rates.
I wonder if anyone's done a study about how much lower prices of bananas would really help the price of inflation, because bananas are not the most expensive fruit. It really is blackberries. I'm just saying, if they want to really reduce CPI, we're not going to get into that. Coming up next, we have a wonderful guest. Apollo Global Management President Jim Zelter will be joining us. Wei Li of BlackRock with a new outlook, and Noor Christiani of JP Morgan Private Bank with a huge focus on Latin America, with Venezuela very much in the forefront. Right now, you are seeing maybe some sort of reprieve in terms of risk appetite, with stocks rising ahead of the open. This is Bloomberg Surveillance.
Technology is embedded in every aspect of our lives.
And laying the foundation for the future.
From finance to defense, AI to entertainment.
And from the road to the stars. Bloomberg brings you the latest stories of the people and companies pushing the tech sector to new frontiers.
And the politics that shape global tech markets.
I'm Caroline Hyde in New York.
And I'm Ed Ludlow in San Francisco.
Watch Bloomberg Tech every weekday.
Only on Bloomberg Television.
When I visited Fernandez at IMAX's headquarters outside Toronto, we went to the facility where IMAX designs and maintains its cameras. The latest next-gen equipment was out with directors on filmed for IMAX sets, but there was still plenty of cool gear on view.
As the head of the finance department, do you look at all the things in this room and think, this costs that amount of money, this costs that amount of money?
Thankfully, no, I don't. When I think about cameras in general and what we, when we first, I'll give you a really prime example, the film cameras. When you thought about it, okay, are we building 2? Are we building 4? Are you building 8, right? And that's where I start to think about, well, what makes the most sense from a return perspective? Because yes, Nolan wants the cameras, but how many other filmmakers out there use the film cameras. The lens that I look at it through is essentially how many do we build and in what way? Because the one thing is we are going to invest to build it right and to build it for longevity. But do you need 10 of them? No. Building 4, that was the right number. And do we potentially want to build a couple more? Maybe a couple more, but I don't think we need 10 because they won't always be in use all the time.
I imagine that at different points you need to tell people no. What's that process like for you?
Oh yeah, it's a key role in the CFO position. It is a word that most people are used to, and yet they still think you're not going to say it.
Know how the market day started.
Find out how it finishes.
Public markets to private markets.
From the micro to the macro.
Covering retail, entertainment, the business of sports.
The supply chains, trade policy, how it all is impacting the U.S. equity market as we drive to the closing bell at 4 p.m.
A holistic approach to covering financial markets.
If it matters to your life, we're covering it. I'm Katie Greifeld.
And I'm Romaine Bostic, and this is The Close.
Live every weekday.
Only on Bloomberg. Context changes everything.
Astonishing day for US technology.
It's shaping the region's technology ecosystem.
Asia's biggest tech news and innovation.
It's the countdown to the market open as we bring you the first trades across Europe.
We'll debate the most important stories and what will drive the big investment decisions throughout the morning. I'm Guy Johnson.
I'm Kriti Gupta.
And I'm Anna Edwards. Join us every weekday morning for the opening trade, live at 7 a.m. here in London.
Only on Bloomberg. Context changes everything.
The underlying question is what the market expect the Fed to do versus what the Fed should do.
They're back in the game with more rate cuts.
This should be a mixed decision right now, and they might err on the side of cutting.
We think they will cut at the meeting next week, and our sense is that they could cut again in January.
This cut is going to happen. I think the data will prove them wrong as we head into 2026.
This is Bloomberg Surveillance with Jonathan Farrow, Lisa Abramowitz, and Anne-Marie Hordern.
Good morning. Welcome back to Bloomberg Surveillance. Looking for the Santa rally after a rough start to December, with traders building on earlier optimism, at least this session, although fading just a touch. Look, we're trying to make something with this after yesterday was a significant sell-off. But right now, at least, for the time being, and not necessarily focusing on stagflationary headwinds or overvalued AI companies, still questions are lingering about the AI race's leadership, with OpenAI's Sam Altman calling for a code red in the race to chatbot supremacy, with Alphabet's Gemini seeming to gain some ground.
So Google had their own code red moment because of what ChatGPT was doing in OpenAI, and now OpenAI is looking at, oh my God, Gemini has taken off. It's a resurgence. We need to double down and work on our product. And it comes at a time when they have committed hundreds to billions of dollars when it comes to the infrastructure and data centers, which is why there is cause for concern. But it was always going to be this way. Cameron Dawson is talking about that. And she actually likes what she's seeing in the space because it shows that it is competitive and it actually is an AI race. The problem is, who is going to win when you have billions of dollars being committed? And as we talked about the last hour, a lot of these deals are very circular in nature. So if someone goes bust, potentially a lot of companies will be going bust.
We have a lot of time to focus on this because we're not focusing on non-farm payrolls, which we are not getting on Friday, and we're not getting JOLTS data, and we're not going to be getting a whole host of other potential data points. What we are getting this week is ISM services, which is going to be really important coming up tomorrow, given what we saw with the sort of stagflationary tilt under ISM manufacturing and then ADP jobs and jobless claims. Coming up this hour, let's get right to it, because to me, this really is the conversation of the day. Apollo President Jim Zelter, with investors remaining skittish to start the month, still looking ahead to a brighter 2026. Waitlist, of BlackRock with AI transforming global markets, and Noor Christiani of JP Morgan Private Bank. As the U.S. increases pressure on Venezuela, we begin this hour with investors trying to claw their way out of recent worries about overvalued tech companies, stagflation. Apollo Global Management President Jim Zelter joins us now. Jim, wonderful to see you. Thank you so much for being here.
Always nice to be here, Lisa.
So let's start with the look ahead for next year, which is everything is awesome. And what we're hearing from every single person who comes on the show is that next year is going to be double-digit gains in the S&P 500 at the same time that you continue to grind out better returns from the debt space. Is there a contradiction here?
Well, I would just say that the confidence sitting here in December about next year that anybody puts forth has to be taken with a little bit of skepticism because of the year we've just had. If you were here on this journey this year, obviously it's been a tremendous amount of volatility, and we've ended up in a place that many probably wouldn't have predicted. But as we sit here right now thinking about the year ahead, you're going to end this year with an extremely strong M&A calendar and M&A backlog in terms of what's actually been executed this year, but also in the pipeline of new deals. The expectations on the Bloomberg economics page is a 30% chance of a recession next year, a little bit higher inflation, a little bit lower growth. And as we talked about a moment ago, one of the markets has to be wrong. In this intersection right now where many are saying we need to lower rates because of an economic slowdown, and the other side saying earnings upside because of accelerating earnings from the Mag 7 and the 493, those both can't be correct, or it's very, very unlikely that they'll both be correct. We're in the camp at Apollo, as Torsten's been up here and many others, that between the K-shaped economy and other demographic issues, we're going to probably see a deceleration of lower rates and a stronger economy in terms of M&A, CapEx cycle, positive regulatory backdrop, and things of that nature.
So if bonds and stocks can't both be right, and they seem to be in conflict right now, are you saying that stocks have it right and bonds have it wrong?
I'm saying what's been surprising to all of it, if we take a big step back the last 4 or 5 years, the idea that the Fed would raise rates so much that they did starting in 22, we all predicted massive slowdown in the U.S. economy, tightening financial conditions, and we were all wrong. This U.S. economy has been amazingly resilient. Now, it's been resilient for organic reasons as well as a lot of fiscal spending, obviously now the CapEx cycle, but the U.S. economy has been the most resilient for a variety of reasons, and our suspicion is that that will tend to continue in the year ahead. So I think if you look at the gap in the last month or so of the Mag 7 earnings growth and the 493, a year ago it was like 30-35%. The growth rates of the Mag 7 and the 493 in the last quarter was 11%, 22 versus 11, I believe. So the rest of the U.S. economy is doing somewhat better in light of the breadth of the AI cycle.
But how much is this really all predicated on the ongoing funding of the AI cycle? I mean, this is sort of the fear that you're seeing baked into markets right now, is that there's a lot of debt coming into the space, and everything is leveraged to AI being the solution to absolutely every problem that we have.
Well, I think you need to separate that a little bit. On the equity side of the AI activity, and Anne-Marie mentioned it at the start, certainly you've got the incumbents that have amazing business models, whether that's Alphabet, Meta, and the other Microsoft and Amazon. And then you've got the upstart, OpenAI. They're all coming from a different situation. The 4 or 5 have incredibly strong balance sheets and incredibly strong CapEx and free cash flow, which they're going to allocate to the AI equity story, because for them it's an existential issue. So for that's the equity side of the equation. What you're really touching on is this question of the 5 to 7 trillion that's expected to be needed to fund the data center and infrastructure CapEx of the next 5 to 7 years. That's been the zip code of the numbers being bandied around. And today, if you look at that number in aggregate and take a step back again as the industry, of that 5 trillion, about $1.5 trillion will get funded from free cash flow of the hyperscalers. The next $1.5 trillion will get funded between project finance, private capital, and a variety of other debt markets. about $1 trillion and $1.25 trillion will get done by the high-grade investment grade market. So it leaves about $1 trillion, $1.5 trillion. Where is that going to get financed? That's a question mark. What's the clearing price of that paper? And so, you know, we spend a lot of time thinking about that. Those are the big picture moves that will really have an impact on pricing of the IG market, pricing of the high yield market, pricing of investment grade private credit. That's the big question that we're all grappling with if you're in these markets today.
Last time you were on, you talked about how financing these data centers is fundamentally different than in the past financing other technology projects. Why? Why are they so different?
Well, the last 30 years in the U.S. high yield and leveraged finance market, for the most part, you've been financing companies that were disruptors, but they were not investment grade disruptors. Think of the cable companies, think of healthcare companies, think of gaming, even companies like MCI and the regional airlines. This time, with the hyperscalers, again, if you look at the balance sheets of Microsoft and Google and Amazon, these are some of the greatest companies we've ever seen. $300–400 billion in revenues, $150 billion a year per company in free cash flow. So there is a counterparty to those businesses. You're willing to take on much longer duration risk if they are the tenant counterparty than you might have been at an upstart MCI or an upstart airline. It's just a very different economic equation. It's great investment grade risk. It's challenging non-investment grade risk. Now, the impact of that, if you look at the investment grade market today, which is about $11 trillion, it's up from about $3 trillion 10 years ago. That's really dominated by the financial services companies. The biggest issuers are JP Morgan, B of A, Wells, Morgan Stanley. The top 7 are all banks. If the predictions about the AI data center boom are correct, and the capital needs of the $5 trillion that I just mentioned will come through, you're going to look at the IG marketplace in the next 5 years. The top 10 will be very different. It will have Meta, it will have Amazon, it will have Microsoft. If they do pursue that path of funding, which is it's one of the largest, deepest markets, $11 trillion, they're going to have to access that. So when we step back and think about the next 3 to 5 years, we think about how the investment grade public market is going to change in context and risk. It's one thing financing some of the great financial services and banks in the world. Post-GFC, our banks and our financial services companies are the strongest, healthiest in the world. You don't mind being a debt lender to those. These other companies are taking business models that have been amazing business models, that have been asset-light business models, that have generated tremendous amounts of cash flow, and they're just changing the risk of being a lender to those companies. It's not bad risk, it's just different risk.
It sounds like this year was the year of credit. We were talking about how the 2025 banner year was credit. It sounds like next year isn't going to be. It sounds like next year the investment is in something that is more revenue stream based, that is maybe more equity driven, that isn't as leveraged to the story that you're talking about, which is an increasing glut of issuance, potential sticky inflation, and a Fed that's not that accommodative.
I actually take the other side of that. I think it's actually a tremendous time to be in credit.
There we go.
I think this is all about dispersion. It's picking the right names from the wrong names. It's about, like, people in credit are focused on credit, whether it's IG, public, high yield, private, and it's the dispersion that we've been waiting. If you're a 40-year veteran of this business and have built a massive credit platform, we like dispersion. We like being in the middle of trying to pick the winners and losers, because at the end of the day, that's just good credit picking. And I do think you're getting rewarded with base rates between 3% and 4%, and the clearing price for a lot of this CapEx for these data centers going to be more challenging. That's when you can actually earn your keep by being a smart investor.
Do you think we're heading into a distress cycle?
I don't see it. Listen, we are one of the largest historical players in the distressed arena. If you look at the numbers in the last 12 months in the loan market and the high yield market, they've actually come down in terms of the default rates. They were a little bit north of 3–4%. They've actually declined. So on a $3 trillion plus high yield and loan market, defaults of 2.5%, 3%, that's 60 to 90 billion. I don't see an overwhelming amount. Now, what I do see is I think you're going to get more secular distressed than cyclical distressed. And that's very important. When we think about secular distressed, I think that the development of AI will change broad business models. If we've talked a lot about healthcare technology, we've talked a lot about, the outsourcing businesses, we've talked about software, enterprise software. The AI impact can have dramatic impact on those business models. And typically, when you go back in the underwriting memo and you think about your base case and your downside being down 5, 10, 15%, when you have secular dislocation, you've missed the downside by multiples. And that's what you're probably going to have. But again, I think it's a great question, because I think a lot of the topics that are being discussed right now about the role of banks in private credit or the transparency of private credit, they're legitimate questions, but the bigger questions are, it's been a long time since we've had a credit cycle. We're gonna have a credit cycle. That's normal, it's natural, it's a cleansing process of capitalism. And again, I think that when you have a business like we've been in, where you have many companies that are more upstarts, we've been doing this, I've been doing it for 40 years, we've been doing it at Apollo for 35 years. I feel comfortable about our ability, but you've got some tourists in this space, no doubt about it.
Tourists, we'll get into who those tourists might be. He's not going to say. But we'll Jim Zelter of Apollo will be sticking with us, and we'll be continuing this conversation. Right now, let's get you an update on stories elsewhere this morning. Here's your Bloomberg Brief with Yahira Anand.
Hi, Lisa. Airbus is inspecting hundreds of its A320 jets for potential quality flaws in the plane's body. According to materials from a presentation seen by Bloomberg, a total of 628 jets contain panels that may be either too thick or too thin due to a manufacturing issue with the supplier. Of these, 168 planes are already in service with carriers, and the rest are at various stages of production. Meanwhile, Big Short investor Michael Burry is betting against Tesla. Fortune reporting that Burry, best known for betting against the housing market during the 2008 financial crisis, says Tesla is ridiculously overvalued. He is also warning that founder Elon Musk's proposed $1 trillion pay package would worsen shareholder dilution. And the Northeast is preparing for its first major snowstorm of the season. Some parts of northern New England could see as much as 10 inches of snow. The storm could also drop up to 4 inches of snow in Chicago, where a record 8.4 inches fell at O'Hare International Airport on Saturday. That's Bloomberg Brief, Lisa.
Thank you so much, Yahira. I think that we're just going to get rain here in New York City. Is that right?
That's what I've heard.
Okay.
Except upstate New York has already, like Saratoga, Albany, they've already gotten some snow.
Yeah, I know. Make reservations.
Yeah, upstate is Rochester, New York. That's
come on.
That's upstate New York. Albany's not upstate.
Come on. It is kind of upstate.
Anything north of Westchester is upstate.
We'll be discussing, not that. Up next, President Trump's tariff agenda.
Our view is that if the Supreme Court does strike down the IEEPA tariffs, that the administration has been pretty clear that they have other tools in their toolkit.
We'll continue the conversation with Apollo President Jim Zelter coming up next. This is Bloomberg Surveillance.
world of politics to the world of business. Joe Matthew and Kaylee Lines deliver news, insight, and analysis live 2 times a day, every trading day. Balance of Power at 1 and 5 Eastern, only on Bloomberg.
I'm David Weston. Join me each week on Wall Street Week for stories of capitalism from business, markets, economics, tech, and climate. We go on the road for a look at what lies behind the headlines of today and what will likely be the headlines tomorrow.
We need more transparency.
Oil and gas is still important.
They said every citizen should be investing in the market.
Accelerate progress in all fields of science.
Watch Wall Street Week right here on Bloomberg. More than what you need to know, it's what you need to think about.
Making money isn't about drowning in emotions. It's about understanding what's actually happening. Markets are the best way to glean signal from noise, and that is what we try to do every morning. This is Bloomberg Surveillance. Seeing a bit of a reprieve from yesterday's risk-off feel, but just fading as the morning goes on. Not exactly a massive rebound from yesterday's declines, up 0.2% for S&P futures. Meanwhile, it is a quiet morning out there, not seeing a lot of action on the currency space. Yields, though, creeping higher on the long end. Keep watching this space based on what we saw from the Bank of Japan yesterday, leading into 10-year yields rising by 7 basis points today, building on that higher by 2 basis points to 410. Under surveillance this morning, President Trump's tariff agenda.
Our view is that if the Supreme Court does strike down the IEEPA tariffs, that the administration has been pretty clear that they have other tools in their toolkit, such as sector-specific tariffs. So our view is basically that tariffs in this regime are likely to remain in place in some form.
Here's the latest. Costco joining dozens of companies suing the Trump administration to ensure eligibility for refunds if the Supreme Court strikes down the president's sweeping global tariffs. Joining us now is Bloomberg's Mika Solner in Washington. Mika, welcome back. I am wondering how much this is laying the groundwork on Costco's part to get refunds from the federal government, and whether this is building on what we're seeing from other federal, from other corporate leaders around the United States.
Yeah, well, this is another issue that the White House is going to have to deal with, and it does increase pressure on them when it comes to Trump's posturing on tariffs, which has caused a headache for major retailers like Costco, which has taken steps to increase its domestic production and retailers and create more grounds that way and trying to skirt those tariffs. But I also think that it puts pressure on the White House when it comes to the issue of increased costs for consumers, as affordability and cost of living continues to be an issue for everyday Americans as well.
Mika Solner, thank you so much for that. Apollo Global Management President Jim Zelter still with us. And Jim, that question of affordability very much in the focus point, not just for the Federal Reserve, but also for the federal government. From the Fed's perspective, how much is it seeming like the logical step to cut rates in response to affordability concerns at the lower end of the consumer base?
You know, I know you've had Torsten on recently to talk about this. I do think the K-shape economy and the demographics of that, it's really having an impact on the transmission mechanism of Fed policy. I do think the last 3 to 5 years you've seen, whether it was this emergence of the K-shape economy and our demographic shift of income and wealth, along with the evolution of our banking system, the evolution of dispersion, securitization, private capital, I think that's blunted the impact on monetary policy. And so, while I understand the impact of the view that rates are a bit higher than the nominal rate right now, or the neutral rate, excuse me, I just don't see a huge, other than confidence in the equity market, I don't see a reason to cut rates dramatically. But I do think there's no doubt this affordability issue, we saw it in New York, we saw it in the national, we saw it in the various elections around the country, Virginia and other places. It's going to be a topic for this administration to deal with.
Absolutely. And we've seen them actually backtrack on some issues because of it. Torsten Flock actually published this morning talking about significant fiscal boost coming in 2026 when it comes to the One Big Beautiful Bill. 2025, it was a lot of uncertainty. At least that's how people were viewing Washington. What do you view Washington for 2026? What's most important for you?
Well, I think that certainly it would be interesting to see what happens with the Supreme Court and the tariffs. I still think there's a lot of domestic initiatives in terms of large industrial capex. But from our perspective, this administration, when you look back at it, you really have 9 to 12 months to really get most of your activity done, and then the activity will be on the midterms next year. So I think that their ability to move in large swath domestic activities is going to be much more limited than it was this year.
So it's more of a wait and see how
I think
economy digests it.
Yeah.
Do you think they'll take more equity stakes?
I don't have a view on that in particular. They've had a handful. Certainly, they need to deal with some of the domestic issues with regard to chip manufacturing in the U.S. A lot of the activities that were approved in the CHIPS Act with the prior administration have not been put to work. So that's an ongoing need for national security and other reasons for them to deal with. So that would be on the agenda in terms of manufacturing, but I'm not sure I see a lot of equity stakes as part of the plan.
I know you can't comment on potential live deals. There is this Paramount offer for Warner Brothers. It would be financed by Apollo, according to reporting. Do you see this environment, the regulatory environment, ripe for deals in a lot of these spaces?
I think there's a reason why the M&A market will have a near record performance this year in terms of volume north of $5 trillion. Certainly you have an administration that's much more comfortable with large industrial mergers, and certainly those larger transactions are able to garner very large financing packages. People want to invest in high quality companies. And certainly, whether it's industrial consolidation or media consolidation, those types of activities garner a lot of attention and confidence.
Is there a lot going to get done between now and the end of the year, or is everyone pretty much packing it up, putting their crystal balls on and saying, look, we're going to the beach?
No, I think these are very robust markets. There's a lot of activity going on right now. The market will probably shut down in 2.5 weeks or so for a little bit of a global respite, and the predictions and the crystal balls will come out. But there's still a fair amount of activity going on, and I think the pipelines are fairly well built into the first quarter, so I would suspect a busy first quarter as well.
The crystal balls already are out, Jim. Come on, they already come out because people are looking for something to talk about. 2026 is already done and dusted. People are talking about 2027 at this point. Can you imagine?
We have to have people watch TV and sell newspapers, so it's important to all of us.
Well, thank you. It's like the big box retailers that continuously every year push Christmas up earlier. I'm seeing Christmas decorations. I saw them after Halloween. It's now like the crystal balls that Wall Street is now pushing up even earlier and earlier.
Yeah, watch the Easter Bunny start coming out. Jim Zelter, thank you so much for being with us today. Wonderful, wonderful to have you here. Really an interesting discussion as we head into next year about who's getting it wrong. I keep going back to that. That's a real interesting point that Jim made about the bond market and the stock market. Both of them can't be right. That you're going to have a Fed cutting rates, and you're going to have potentially a real rate decline at the same time of reacceleration of corporate profits.
Reacceleration of corporate profit. Torsten Slok just talking about the fiscal impulse that we're going to get for 2026. And I think Jim was right. This year was all about the policy uncertainty in Washington, and 2026 is all going to be about the economy absorbing the decisions the Trump administration took, because really the markets were driven so much by Congress and by the White House, less so by the Fed.
Yeah, and also by AI. And coming up, we're going to be speaking with Waitlist of BlackRock on the unprecedented speed and scale of the AI build-out, what that means for investing looking ahead. Plus, Yahira Anand with your Morning Movers. Credo Technology shares soaring following an earnings beat for the second quarter. Some of these tech companies are coming out of the woodwork. I'm realizing I'm going to have to research what that company actually does. From New York City, this is Bloomberg Surveillance.
Bloomberg Business Week Daily.
We got to talk crypto.
From the magazine that helps global leaders stay ahead.
What's the conversation around your company?
Bringing you insight on the people, companies, and trends shaping today's complex economy.
Planning very big things.
A new level of premium.
Plus global business, finance, and tech news as it happens.
The floodgates of innovation are going to open up.
You can't fake passion. You either are or you aren't.
Bloomberg Business Week Daily, only on Bloomberg.
Asia is at the forefront of some of the world's biggest stories.
And we're here, where the action starts in Sydney.
And in Tokyo, get ahead as the global trading day begins.
The Asia Trade, weekdays only on Bloomberg.
Bringing you up-to-the-minute geopolitical news whenever and wherever it happens. I'm Lizzie Burden outside Windsor Castle, England, and this is Bloomberg.
Morning, this is Bloomberg Daybreak Europe. I'm Tom McKenzie in London. These are the stories that set your agenda.
Taking you from the U.S. market's close to the overnight session in Asia, we'll walk you through what you need to know to kickstart Europe's trading day. Live from our European headquarters, we bring you the day's top market-moving stories, unmatched expert analysis, and on-the-ground reporting from across the continent. Tune in to Daybreak Europe, only on Bloomberg Television. Context changes everything.
Seeing a little bit of calm after yesterday's sell-off, seeing in the equity futures just a little bit of a positive lilt. You are seeing a rebound, particularly when it comes to big tech, up about 0.25% for S&P futures. You aren't seeing much else, let's just be honest. 10-year yields are continuing to grind higher. This, to me, is actually probably the space to watch, given that we saw this kind of 2 basis point increase earlier yesterday around this time. And as the session grew older, you saw that sell-off continue to mount with a 7 basis point increase in yields priced down today 410 on that 10-year Treasury yield. 2 hours away from the cash open, here are your morning movers with Yahaira Anand. Yahaira.
Hi, Lisa. We start with Credo Technology. That stock is absolutely soaring, up nearly 18% in the pre-market on what the CEO is calling its best quarter ever. That's because revenue jumped more than 270% year on year. And analysts say that was thanks to strong demand from Microsoft, Meta, and Amazon. And you ask what the company does. Well, it's a key part of the data center ecosystem, providing the technology that connects servers. Meanwhile, Instacart not having the same luck. Shares are down nearly 3% in the pre-market on worries that Amazon's new ultra-fast delivery service could cut into market share. The e-commerce giant is already hiring drivers and opening new hubs as it prepares to launch a grocery service that can deliver your groceries in 30 minutes or less, which is the same proposition that Instacart gives its customers. And we end on Bayer. Those shares over in Germany surging more than 12% in the pre-market after the Trump administration stepped in with the Solicitor General urging the Supreme Court to take up its appeal in thousands of Roundup cancer lawsuits. Analysts say that any ruling could be a win for Bayer, potentially shutting down future Roundup lawsuits and potentially lowering the costs of ongoing settlements. Lisa?
Thank you so much, Yahaira. And Jim Zelter was right. I said that I didn't know what Credo was. And he said, you probably look at it and it's probably a $30 billion market cap. And guess what? It's a $30 billion market cap company that we've never heard of, which is, I guess, the story for this year.
Right, exactly. All these companies, it also feels like they're coming out of nowhere. But actually, maybe if you know, you know.
And obviously, I don't. On our radar this morning, U.S. Special Envoy Steve Witkoff meeting with Russian leader Vladimir Putin in Moscow today in an effort to end the war in Ukraine. U.S. and Ukrainian negotiators holding productive discussions on a peace deal, but with no final breakthrough. Meanwhile, the U.S. Commerce Department agreeing to invest as much as $150 million in Xlight, a chip technology startup. It's a part of an effort to create more domestic chip-making capabilities and help Xlight construct a laser prototype, and builds on this idea, Anne-Marie, that there is this sort of equity infusion coming from the U.S. government in a key number of potential companies.
Yeah, state capitalism in a way when it comes to what they view as national security concerns. They think that potentially this startup has the capability in the future to rival the likes of ASML. And what's interesting is the former Intel CEO, and Intel, of course, is another company that this administration took an equity stake of, Pat Gelsinger. Well, he is part of this. He is part of the chair of this company. So it has to do all with this chip space. And I think it just foreshadows more deals like this are to come. They are going to find more of these companies to get involved in.
Have we actually seen the outlines of what this sovereign wealth fund is that essentially is taking place in real time?
No, because they say that's not what this is about. But It sort of is what this is about.
You just wonder, how does it sort of have an accounting balance sheet? How do we see what it is? Do we have an understanding? Anyway, OpenAI CEO Sam Altman reportedly declaring a code red effort to improve the quality of ChatGPT. Multiple outlets reporting Altman wants to improve the chatbot's personalization features, speed, and reliability. The code red effort will delay other products. We want to stick on tech for a minute because investors are focusing on the global market transformation with the extraordinary speed and scale of the AI expansion continuing. BlackRock remaining pro-risk in its 2026 global outlook, noting capital spending ambitions tied to the AI build-out are so large that micro is macro. I love that. Wei Li of BlackRock joins us now for more. Micro is macro because the AI story is the macro story that we're talking about. And Credo, which I had never heard of until this morning, is actually centered to a lot of the data center connectivity. So how are you seeing the transformation of this AI story in 2026 and how to play it amid a really competitive landscape?
It is very complex. So our outlook is titled Pushing Limits, and it is about making sense of large numbers. What do you need to believe to justify the spending of this amount of dollars going into AI build-out, and also how to think about investing when transformations of these scales are happening around us, and there is no such a thing as neutral stance anymore. So if we look at the large numbers of CapEx forecast, credible forecast takes us to $8 trillion by the end of this decade. The current forecast for big tech companies in terms of incremental revenue do not justify this amount of spending yet. But the potential of AI goes beyond existing business lines. So we're talking about AI application in non-tech sectors. So there is a path for us to get to a place where this spend can be justified. You gotta believe that we can break out of the historical growth trend of close to 2%. It has never happened before, but it is now possible. But also, we need to believe that tech companies get to keep and potentially increase their revenue share, which is possible too, given compute centrality. So we're talking about unprecedented spend at this moment. We gotta believe in unprecedented things happening to justify, but it is possible to see that happening because of the accelerating pace of innovation that AI brings, but which is why we stay risk on heading into next year. But signposting is very, very important.
Well, I just think about risk on meaning one thing in 2025 and possibly meaning something else in 2026. Does it mean staying with the winners so far, or does it mean betting on the possible growth in other areas with a sort of broadening out in the ecosystem, the adopters, not just the generators of some of this new technology?
I think concentration first, diffusion later. We're still in the build-out phase of AI. If you look at the latest round of kind of tech correction and broader market nervousness, by the way, I'm very happy to be releasing the outlook today instead of yesterday. But there is already greater differentiation among kind of the tech performances. You have companies like Alphabet that are actually holding up well because of the TPU talk, because of the model. You have companies like Oracle coming under a bit more pressure because of negative free cash flow as well as greater indebtedness. So greater differentiation is likely here to stay, and we do believe concentration as we figure out how the revenue generated in the future are going to be split is important.
How do you identify new winners when it comes to AI?
That's a great question. So as I think about signposting for navigating the AI trade, we have to look at the financing gap of companies. We have to look at free cash flow and revenue of companies to understand if these big tech companies are still believing in each other and spending in each other. I'm talking about circular spending in terms of chips and data centers. But also we need to understand if there is, because at the end of the day, it comes down to external demand. Is this spending generating external demand? Are consumers buying and paying for AI services? Are new companies also paying for tokens? So we need to see all of this happening to kind of see the momentum going. And then the last thing I would say in terms of identifying new winners of AI is to look at the profile of revenue, because existing business lines may not justify this huge amount of spending anymore. We want to see new revenue streams being created. So we're talking about the intersection, the coming together with tech, of tech and other sectors, for example, pharmaceuticals. And then we have to understand when new revenues are being created, who the winners are going to be, because right now it's still highly uncertain. Is it going to be the provider of compute and models, or is it going to be the provider of IP and data? And I think that is still kind of out.
In your research, you also talk about the next phase being about energy and solving for bottlenecks. Is that a 2026 story, or is that actually more 2027, 2028?
I think it is a present story, and it is a present story that goes into the future. So we actually frame the constraints facing AI build-out along the dimension of energy and physical, and financing constraint and political constraint. So the energy constraint is already happening now, and ultimately the assessment of these constraints together with the profitability of what is spent is going to determine if these companies are going to stick to their commitment, or if they may want to dial back a little bit.
Jim Zelter was on earlier this morning, and he was talking about how going forward, there seems to be a disagreement between the bond and stock market, where people in the stock market are expecting an acceleration in corporate profits, they're expecting a reacceleration in the global economy, and the bond market is looking for Fed rate cuts and just this sort of disinflationary environment. Do you see one as being right and one as being wrong in the idea of either a reacceleration with inflation or potentially a less robust backdrop with that disinflationary backdrop that people have been looking for?
I think it has been a while that stock market and bond markets may not be telling the same story, so the disconnect between the two is not highly unusual. I would also say that as we think about next year, we do like equities. We do like U.S. equities in particular. We think earnings would continue to carry equity momentum forward, and we also are bringing down our conviction to long-duration treasuries to now underweight, because we do think that even though the macro environment may support the Fed to keep cutting, considerations for fiscal trajectory will ultimately come to bind over the horizon of 12 months, which is why we expect term premium to push higher, and we are underweight long-duration treasuries. We prefer to click the income and coupon on the front end and the belly of the curve, and for the same reason we have been underweight JGB, Japanese government bonds, and we go even more underweight because of the fiscal dynamics.
And what we saw over the past couple of trading sessions, I'm just wondering whether you're underweight U.S. assets as well, whether you see the U.S. still being the bastion of growth, particularly when it comes to this AI trade, or if you see it migrating elsewhere, especially as more focus turns to places like China.
Well, we have the overweight in U.S. equities, and we certainly expect, because of the key theme of micro becoming macro, actually AI capex spend supporting U.S. growth. It's already kind of, its contribution to U.S. growth is at 3 times the historical level, so it's tracking this year already at elevated levels. We expect that to continue even if labor market cools down. So micro supporting macro is something that we expect to happen and continue for next year. But there is room to broaden out, and here I'm specifically talking about kind of even markets like Europe that doesn't have as much concentration in technology as the US, but if you look at financial as a sector, they are actually ripe for disruption from greater integration of AI, and our investors are quite excited about that opportunities as well. We've been overweight European financials, and we stay overweight European financials.
Wei-Li, wonderful to see you. Thank you so much for being with us as you put out the outlook on today, not yesterday. Wei-Li of BlackRock with us. Right now, let's get you an update on stories elsewhere this morning. Here's your Bloomberg Brief with Yahaira Anand. Yahaira.
Hi, Lisa. White House Special Envoy Steve Witkoff is in Moscow today. He's meeting with Russian President Vladimir Putin to discuss the latest proposal to end the war with Ukraine. Ahead of the meeting, Putin said Russian troops took over the city of Pokrovsk in Ukraine's eastern Donetsk region, but Ukraine's military spokesman denied the claim. Meanwhile, shares of Warner Brothers Discovery are rising in the pre-market, up about 1% after Netflix made a mostly cash offer for the company in a new round of bids. Sources telling us here at Bloomberg the offers are binding, which means the board can sign off on a deal quickly if its goals are met. Warner Brothers put itself up for sale back in October after receiving multiple unsolicited offers for all or part of the company. And week 13 of the NFL season wrapped up with the New England Patriots taking down the New York Giants 33-15, securing their 10th straight win and becoming the first team to reach 11 victories this season. Meanwhile, the struggling Giants are now on a 7-game losing streak, officially falling behind the Jets in the standings, who secured their 3rd win of the year this past week. That's your Bloomberg Brief, Lisa.
Thank you so much, Yahaira. Up next, defending the Department of War.
President Trump and Secretary Hegseth have made it clear that presidentially designated narco-terrorist groups are subject to lethal targeting in accordance with the laws of war.
Noor Christiani of JP Morgan Private Bank joining us next for the implications for the Latin American region. This is Bloomberg Surveillance.
In case you missed it, on Bloomberg Crypto.
There's a debate going on right now in D.C. that I think folks need to start paying more attention to, and that is the yield. And the question really is, who is going to keep the yield? Who makes money off stablecoins? Well, right now, in the case of some of the large stablecoin issuers, there's a yield that on those deposits. So when there's a dollar, for example, deposited in a bank account, there's interest paid on that dollar. And so who's capturing that yield? And I think one of the really interesting things about the Genius Act is that it bans so-called yield-bearing stablecoins from giving that yield directly back to consumers. Now, that's not true everywhere. And I think if consumers have a choice, why would a consumer want an institution to keep that yield? Or would there be sharing of that yield? So right now, one of the debates going on is, will rewards be allowed? And I think these are really important questions.
Don't miss Bloomberg Crypto live Tuesdays.
All right, okay, ready?
David, what initially sparked your interest in this topic of longevity?
15 years ago, I turned 60, and I began to wonder how much longer I'm likely to live and what I could do to extend my life. On longevity, I talked with the leading experts in science and medicine to educate people about how they might be able to change their conduct so that they can live a happier and healthier life. I'm David Rubenstein. Join me on a 4-part journey as I explore the great quest for longevity. Only on Bloomberg.
Middle East and Africa. Vibrant resources and high-yield investment opportunities abound. Join me on Horizons Middle East and Africa for the stories, newsmakers, and insight from this exciting region. Now weekdays, only on Bloomberg.
Bringing you up-to-the-minute geoeconomic news whenever and wherever it happens. I'm Bonnie Quinn in Sao Paulo, Brazil, and this is Bloomberg.
A lift to markets ahead of the open after a pretty rocky start yesterday is what we saw in futures are lifting pretty much across the board, although backing away from some of the earlier highs, up now just 0.2% on the S&P, up 0.3 on the NASDAQ. You are seeing yields continue to inflect higher. Watch this space. Up 3 basis points now, 4.11 on the 10-year yields. Wei Li of BlackRock on just moments ago saying that they are now underweight the long-term Treasury because of concerns around the fiscal backdrop. Under surveillance this morning defending the Department of War.
President Trump and Secretary Hegseth have made it clear that presidentially designated narco-terrorist groups are subject to lethal targeting in accordance with the laws of war. If narco-terrorists, again, are trafficking illegal drugs towards the United States, he has the authority to kill them.
Here's the latest. The White House defending the Pentagon's handling of a September attack on an alleged drug-running boat amid escalating tensions between the U.S. and Venezuela. Emery, I'm trying to understand the importance of the cabinet meeting that we have later today, given some of the concerns that are swirling around this particular episode.
Well, buckle up, and if you're a reporter, wear comfortable shoes, because I was in the last one. It was more than 3 hours long, longest cabinet meeting, I think, ever in history. But clearly the president is going to get asked questions about this. Defense Secretary Pete Hegseth should be there and give a report, and he might likely be asked questions about this. The issue comes down to, and I think it's a distinction without a cause, they're trying to say, well, this was in the rights of the Navy admiral. But the issue comes down to, at the end of the day, did Pete Hegseth order this, basically saying everyone should be killed, according to the Washington Post? The White House is denying that. But you have Republicans and Democrats on Capitol Hill that want an investigation into this, and they're going to be looking into this, which is why it's making it incredibly complicated right now for the White House as they continue to back the defense secretary.
Well, this is exactly the point, the splintering in the Republican Party. How much is there some sort of consensus, or is this really highlighting some of the gaps that are growing within the Republican caucus?
Well, I think at the end of the day, a lot of senators feel like they have a duty also as well to their committees, and they want to potentially get to the bottom of it. You have some of them saying they're also going to be looking into the Navy admiral to understand from his point of view what the directive was and why he ordered that second strike. Potentially, because you have these individuals wanting to have this investigation, it will fracture relationships with the Oval Office.
This also highlights how much the U.S. is placing a greater import on Latin America. And really the question is, why now, and how well are they doing in terms of trying to increase influence after years of China really increasing their presence? Nor Christiani of J.P. Morgan Private Bank writing, in a time of increasing global fragmentation, South America is well positioned to benefit from the evolving landscape of international economic alliances. Nora joins us now. Nora, thank you so much for being here. Wonderful to see you again. I want to start with that question. Why and why now is the U.S. going so aggressively into Latin America? Why is this such an important region?
I think that from the very beginning of the new administration, of the current administration in the U.S., we have seen a strategic prioritization of the relationship with Latin America. But a bit of a twist from the traditional Monroe Doctrine, America for the Americans. It's more about the transactional nature of the economic benefits that the U.S. can reap out of the relationship that it establishes or exists with countries in Latin America. Particularly, I think of importance is the issue of South America. It's common perception that the U.S. tends to be the biggest trade partner or the most important economic partner for the region, whereas in recent years, and you pointed it out really nicely, China has taken a much larger role, especially for South America. In fact, I would venture even in saying that the majority, if not all of the countries in South America, their largest trading and economic partner is China. And a clear example of that is the recent investments that we saw on Peru, for example, the port of Chancay, $3.5 billion, fully funded by the Chinese investors. So the presence of China in Latin America, particularly in South America, in a juncture in which we're seeing that the world, and especially the U.S., wants what Latin America has to offer: natural resources, benign demographics, geographical proximity. All of that places Latin America in a really good spot at the moment from a bargaining position.
Are Latin American investors happy about the U.S. trying to take a bigger role potentially in the region?
The way that I would spin that question is that local investors or the business community in Latin America is very much looking forward to a regime change, to regime changes, I would say, across the region. And that when you said at the beginning, why now? It's not just the why, right? I think the why is very well known, the abundance of natural resources. And we've talked about that at length. It's the why now, the key question that we need to be asking ourselves. And the reason why we are so positive in Latin America, and particularly South America, which we highlight in our outlook for 2026, is precisely due to two reasons. One is the possibility of the political pendulum swinging from years of left-leaning administrations that were very focused on social spending, sacrificing fiscal deficits, in their own benefit towards possibly a more center-right regimes that instead of prioritizing spending, they start prioritizing investments, right? So that's number one. And number two is the AI revolution and the setup that we have globally make what Latin America has to offer even more valuable. So I think that when you ask me the question, are business people happy about the incursions that we're seeing or the participation, the actions that the U.S. is undertaking for all of Latin America or throughout Latin America, I would say that it's more likely that they are more constructive on the possibility that now the regions are going to be finally able to monetize the competitive advantages that the region has boasted for so long.
But do they need to choose between Washington and Beijing?
Not necessarily. And I think a clear example of that was what happened with Brazil when the administration back Liberation Day, you must remember very well, came out with tariffs, and then a few months later, 50% tariffs on all Brazilian goods. The administration in Brazil turned around and said, well, in reality, our biggest trading partner is China, so there's a little bit more bargaining there between the two. So I think that there is a point in which Latin American governments and countries' economies in general, they don't necessarily have to choose. They can interact with both, and leaning in on their own best benefit rather than just yielding everything to a single partner.
Not to get into politics, but to circle back to what we started when it comes to Venezuela, I think of Chevron being like the only U.S. company left there. Could you see a world in which it could be a place to invest again?
Latin America?
Venezuela.
There's all the benefits that we discussed for Latin America in general are also present in Venezuela. Venezuela, for example, is the country with the largest oil reserves in the world. It's one of the largest oil producing countries in the world. So there's definitely opportunities there that can be garnered once there's greater appetite and a greater perception of higher IRRs for projects developed in the region, for sure. Not just Venezuela, the entire region could benefit from the same environment.
Noor Christiani, thank you so much for taking the time today. Always wonderful to speak with you. Noor Christiani of JP Morgan Private Bank. This really is a key question, right? Which is, in other words, how do investors follow some of these geopolitical crosswinds? And frankly, a clear effort on the part of Washington, D.C. to put a more significant stamp on Latin America at a time where there are a lot of asterisks around exactly doing that.
And when you look at Latin America, what the administration is trying to do is so many pillars at one time. They want to go after what they would call narco-terrorists in some of these countries when it comes to drug inflow into the United States. They want to push China out, and they want to go after the natural resources because they need them if they want to diversify against the rare earths and the raw materials that come out of China.
Everything, everywhere, all at once. Isn't that the strategy? Is that what you were talking about, which we've seen throughout the morning? Coming up in the next hour, Katie Kaminsky of Alpha Simplex Group, National Retail Federation President Matt Shea. Cyber Monday was yesterday. We'll get a read on exactly what happened there. Lindsay Piegza of Stifel and Tom Narayan of RBC, as we do get some auto sales reports coming out throughout the morning. From New York, this is Bloomberg Surveillance. Good morning.
Our North Star is do the work. Keep your head down and do the work. There's always going to be speculation in our business. We're in a massive time of disruption, and everyone's going to constantly be saying, what's going to happen next? Who's going to be there? You can't focus on that. You have to focus on the work. And I think what's so exciting about Warner Brothers right now, even though it's an over 100-year-old company, we all approach it with like startup energy. So it's actually a really great time to be making movies.
Our teams are used to it because it's
this company's been bought and sold.
Right. Yeah. Some of the inherited Warner people, understand this feeling. But when we started to work for David, one of his edicts to us is, challenge all assumptions. The business has to transform. It has to adapt to the moment we're in. And we talked about Moneyball a lot, because Billy Beane in that movie and in the book was all about adapt or die. The company right now has been battle tested and it has been challenging assumptions for 2 years. As far as the day-to-day, we're heading for that split. That's the course that David has charted. And people trust David because this whole slate strategy, this whole diversified slate, the label strategy, getting DC up on its feet, getting New Line pumping, getting animation, which comes online for us next year, pumping, we still think it's the winning strategy.
It's the world's second largest economy with a growing influence in global affairs. Bloomberg The China Show brings you the unmatched expertise you need to keep track of breaking news, in-depth market analysis, and the most influential newsmakers in and around China.
We need to do more to engage the market more. We're risk on. I think we caught a little sweet spot.
Massive savings right now.
It's already a different game.
Bloomberg The China Show. Weekdays around the world, right here on Bloomberg. Context changes everything.
We have two crises, two essential crises, and for both it's now or never, democracy and climate, and they are absolutely interlinked. And we have to solve them together. We're losing the democratic infrastructure and norms to deal with the climate, and we're losing the climate stability that is essential for a democracy. We have to solve them together. We've never faced a threat like this to our democracy at a time when it's a perfect storm, at a time when we're being told by climate scientists, some of you may be in this room, that we have to cut our emissions, fossil fuel emissions, in half in 5 years now. You know, when I started to realize what was happening, it was 12 years, and we haven't done it.
Technology is embedded in every aspect of our lives.
And laying the foundation for the future.
From finance to defense, AI to entertainment.
And from the road to the stars. Bloomberg brings you the latest stories of the people and companies pushing the tech sector to new frontiers.
And the politics that shape global tech markets.
I'm Caroline Hyde in New York.
And I'm Ed Ludlow in San Francisco.
Watch Bloomberg Tech every weekday.
Only on Bloomberg Television.
Bringing you up to the minute news whenever and wherever it happens. I'm Chevrian in Seoul, and this is Bloomberg.
AI is a bubble. We're starting to see that cash flow headroom coming down.
It's still going to drive markets. There is a fair amount of capital on the sidelines.
The theme is the same theme going into the internet boom. If you're not exposed, you're really going to miss out.
I still think there's a lot more buying opportunities and money to go into the equity markets, yeah.
This is Bloomberg Surveillance with Jonathan Farrow, Lisa Abramowitz, and Anne-Marie Hordern.
Good morning. Welcome back to Bloomberg Surveillance. As we do see a bit of a reprieve from yesterday's risk-off feel, seeing that lift across the board in benchmark futures, seeing about a 0.2% gain for the S&P 500. Meanwhile, in the bond space, this really is catching a lot of our attention. The 10-year yields are continuing to climb after yesterday seeing the biggest one-day pop going back about a month now, firmly over that 410 mark, almost 411. A real question as we head into year-end about just how much the AI story is transforming with ChatGPT founder Sam Altman in his OpenAI talking about Code Red heading forward based on increasing competition, Anne-Marie, from Gemini.
Exactly, and they're at the moment they're committed to hundreds of billions of dollars when it comes to the build out. So this is potentially could be viewed as a cause for concern. The market seems to be shrugging it off today. They're not really focused on this specifically, but when you have this idea of you're concerned about an AI bubble, now you are seeing a serious arms race and concerned when it comes to OpenAI. It's no longer the vibes are not right, we need to work harder, a memo we saw recently. This memo is Code Red, stop everything. We're not going to focus on all this other stuff potentially with building out when it comes to advertisement. We need to focus on the product at hand. And this is exactly what Google went through. But to Cameron Dawson's point, maybe the market likes seeing this. They want to see that competition and that fight within these companies.
Well, Wei Li was talking about remaining nimble in the new AI dominance that we see in 2026. And this does seem to be what a lot of people are talking about, remaining nimble when it comes to policies that have highlighted, that have been so profoundly different than what people expected. And I think about, for example, earlier this year, just switching topics to the fiscal backdrop, how much people are talking about tariffs as being a headwind potentially to growth. Now there is a question about how much the potential removal of tariffs could be a headwind to the fiscal backdrop for the United States and part of the catalyst to the sell-off that we saw in Treasuries yesterday, as Cameron Dawson of New Edge was saying earlier this morning.
Well, potentially, and the idea that Costco's lining up to make sure they have their suit on file to say that they do think that IEEPA is unlawful, so that potentially they can make sure they get their reimbursements if it happens, shows signs of companies are starting to really pay attention to this. The bottom line, though, how I always viewed IEEPA is it's basically mute. If IEEPA gets struck down, it'll take a lot longer, but there are a number of legal avenues the administration has at their disposal to enact tariffs. It's just going to take a lot longer.
Well, this is the reason why people are watching what happens at the Supreme Court case. In the meantime, we're not talking about non-farm payrolls because we're not getting non-farm payrolls on Friday. What we are getting is ISM services coming out tomorrow after we get some CoreWeave earnings later today and an announcement from President Trump, as there is this real focus on affordability. We also get ADP data tomorrow, jobless claims Thursday, and then we get core PCE on Friday. Yay, data. Of course, it is September, so it is dated data, and it really does go to the last clean read, as Andrew Hollenhorst over at Citigroup was saying, on inflation. Coming up this hour, Katie Kaminsky of Alpha Simplex Group with stocks trying to find their footing after a rocky start to the month. Matt Shea of National Retail Federation breaking down Cyber Monday sales, and Lindsay Piegza of Stifel warning that further Fed policy easing could fuel pricing pressures. We begin this hour with stocks edging higher following a weak start to the trading month. Katie Kaminsky of Alpha Simplex Group writing, rate cut optimism has boosted small cap and mid cap stocks more than AI and big tech. Overall investor sentiment has stabilized, but fears still remain for overvaluation. Katie joins us now. Katie, I wanted to start with your understanding of what actually has been happening in markets over the past couple of trading sessions. It seems like there is an increasing breakdown in risk led by Bitcoin, maybe a bit of stabilization. But from a technical standpoint, what do you see?
This is a good point, because what we have seen, you've definitely seen a breakdown in some of the recent trends. There has been a shift in sentiment overall, and you're starting to see some deterioration in some of the key themes. Of course, gold being something that has been selling off today. And it is also surprising that you're also seeing yields higher when rate cut optimism should be a positive for them. So I think that just highlights the amount of uncertainty and the potential for risk-off sentiment when people are concerned about high valuations.
One thing that really, I was looking forward to speaking with you, Katie, because when you're following trends, sometimes you can find the pivot points and understand there is something different here. We're not going to see maybe the melt-up rally that we typically do in December heading into year-end. Are you sensing that there is some sort of pivot going on under the hood in markets?
Well, this is a very good point, because technically December is generally one of the better months for equity markets. There tends to be a lot of positive sentiment. But I think in the backdrop of some tepid economic information, some weaker labor data, people are getting a little more nervous. So there is some indication, at least with some of the price reversals that we've seen. I think some of these other asset classes like Bitcoin, even now gold selling off some, suggest that there is chance for some deterioration in equity markets.
Katie, is it Japan, ISM, the waiting on IEEPA, or is the market just basically looking for an excuse to hold pat at the moment, especially when there's a number of questions still going into year end, most notably the Fed next week?
This is a good point, because there's not a lot of data to hang on to. There's definitely mixed data. And I think with concerns of overvaluation and just how exposed many investors are to these themes, there is some clear uncertainty there. But what's interesting to me is you see like small cap has been doing a lot better, for example, than big tech. And that's just a little bit of a reversal from what we've seen typically this year. So you're just seeing a little bit of pivoting, a little bit of changing direction, which suggests that we might be in for a change in trend moves at some point.
Lisa pointed out that the PCE data we're going to get on Friday is very stale. This is from September. So when you look at the data coming out, what do you want to hang your hat on?
That's a good question. I mean, obviously, we'll start to get more data next week. I'd say that there's not a lot for investors to hang on to at this point. And it really is sort of the end of the year, which tends to be a very positive environment. So I think they're focused much more on sort of following the narrative for rate cuts for next week. That seems to be the only major thing to follow and see what's going on. But you're correct. There's not a lot of very pivotal data that's going to help us figure out what's really going on.
Well, this goes back to something you were saying earlier. If you're following rate cuts, why are yields rising?
Exactly. I mean, I would guess that that's probably a reaction to what is going on in Japan. Clearly, we saw the potential for hikes there causing treasury yields to move upwards. Besides that, I mean, it is slightly counterintuitive for yields to be rising going into a potential for rate cut. But this just may have to do with some of the uncertainty. I know that there's been a lot of discussion about disagreement within the Fed, so that may be causing a little bit of jitters in the bond markets.
Yesterday, we did see 10-year and 2-year Japanese bond yields reach the highest levels that we've seen going back to 2008. The expectation was that you were going to see a rate hike at the next Bank of Japan meeting. That said, earlier in the morning, it wasn't when we saw the yields creep higher. It was after the ISM manufacturing data. And then, as Cameron Dawson was pointing out, it was after the story about Costco potentially laying the groundwork to reclaim some of the revenue, some of the tariffs that they paid over the course of this year in the case of a Supreme Court ruling. Which of these narratives makes the most sense to you, or do you think that there's something else entirely?
Well, this is, I mean, really, it's very tricky, right? Because you have market moves that seem counterintuitive to general macroeconomic themes, such as the Fed rate cuts. Then you have, Japan, which is moving in a different direction. And as you just pointed out, you're also seeing some weakness in labor data and manufacturing, which paints a more concerning picture about the general U.S. economy. And especially if you're thinking about long-term bonds, there may be some questions of whether or not rates can stay low for long if we sort of don't know what's going on next. So you're right. It's very tricky right now.
When you start thinking about the Fed meeting next week, the market is baking in this idea of another interest rate cut, but you're talking about maybe some disagreement at the Federal Reserve. Do you think there's a potential that they stay pat and on pause?
Right now, the market is not thinking that, but given the level of disagreement, the level of uncertainty, and the wide range of potential outcomes, I think we haven't had this level of disagreement in the Fed for almost 13 years or longer. So just given that sort of range of outcomes, there's always a probability you're going to have more disagreement or more disappointment than if you have a lot of consensus on the Fed.
If the Fed does pause and does not cut interest rates, will there be a Santa rally as Lisa started the program off this morning?
Oh, that's a good question. I mean, that could definitely put a pause on a Santa rally because you look at how small cap U.S. stocks have really reacted. There's clearly that would be a headwind for many equity investors. And I do think that could be a potential negative for equity markets should they not deliver as people expect.
Katie Kaminsky of Alpha Simplex, thank you so much for being with us this morning. Katie, there talking about the Santa rally. You mentioned this heading into year end. And look, the Fed's going to cut rates. That's the 95% chance, at least baked into Fed funds futures. If it is a hawkish cut, I know that we're going to be getting into this. What does that signal to markets at a time when that really is maybe the only thing that people could hang their hat on based on the dearth of other economic data points to really go on?
And then how awkward will it be for the Fed depending on what they do and what the jobs number comes out with the week after. This is why, for some people, it is just still unbelievable that they just didn't move the Fed meeting until after they got the data.
Some people being Anne-Marie Hardern, who is lobbying hard to get it to be moved the day after we get that data. Keep trying. I think a lot of people would agree with you.
It just makes sense.
It does make sense, but they're not going to do it. Right now, let's get you an update on stories also this morning. Here's your Bloomberg Brief with Yahira Anand. Yahira.
Hi, Lisa. Dell founder and CEO Michael Dell and his wife Susan are donating over $6 billion to the Invest America initiative, also known as Trump Accounts. The unprecedented gift will give 25 million American children aged 10 and under $250 each to start an investment account. Dell saying the goal is to build hope and opportunity for the next generation. Meanwhile, shares of Warner Bros. Discovery are rising 1.3% in the pre-market after Netflix made a mostly cash offer for the company in a new round of bids. Sources telling us here at Bloomberg the offers are binding, which means the board can sign off on a deal quickly if the goals are met. Warner Bros. Put itself up for sale back in October after receiving multiple unsolicited offers for all or part of the company. And big short investor Michael Burry is betting against Tesla. Fortune reporting that Burry, best known for betting against the housing market during the 2008 financial crisis, says Tesla is ridiculously overvalued. He is also warning that founder Elon Musk's proposed $1 trillion pay package would worsen shareholder dilution. That's Bloomberg Brief. Lisa.
Thank you so much, Yahira. I thought it was amazing. He actually calculated the dilution, saying it was 3.6% of dilution in the shares. It does seem like people are kind of betting against the wind, though, and they're trying to short some of these big tech names.
Oh, absolutely. I mean, in Tesla, what? Shares have gained more than 6% this year, even though they've had a tremendous amount of hurdles come down when it comes to a number of issues facing that company, especially when it comes to EVs, deliveries, what's going on in Washington, D.C., change of policy. They're still on a tear.
Yeah, we're going to get into the auto story later this hour. Up next, the morning calls, plus Matt Shea of National Retail Federation breaking down Cyber Monday sales following Black Friday sales. What's next? Happy Tuesday sales. This is Bloomberg Surveillance.
Investors, top executives, global innovators. Join me for in-depth conversations with the biggest newsmakers on the day's top stories. Insight with Haslinda Amin, only on Bloomberg.
Know how the market day started.
Find out how it finishes.
Public markets to private markets.
From the micro to the macro.
Covering retail, entertainment, the business of sports.
The supply chains, trade policy, how it all is impacting the U.S. equity market as we drive to the closing bell at 4 p.m.
A holistic approach to covering financial markets.
If it matters to your life, we're covering it. I'm Katie Greifeld.
And I'm Romaine Bostic, and this is The Close.
Live every weekday.
Only on Bloomberg. Context changes everything.
At a time when policy in Washington is driving Wall Street, we draw a distinction between the rhetoric and the action, bringing you market-moving guests and original reporting. This is Bloomberg Surveillance.
We are still seeing that investors are sitting on the sidelines of this market, mostly in institutional investors. And we feel like a bit of a broken record in saying that institutional investors are just neutral. Because you still have institutions sitting on the sideline, it means that short and shallow dips are likely what we get.
That was Cameron Dawson of New Edge Wealth earlier this morning as she was looking ahead to the potential for people to step in and buy. They are stepping in and buying right now. You are seeing a bit of a lift across the board, a reprieve from yesterday. Russell 2000 actually continuing to gain up 0.6% in our early trading, leading the pack, even though what you see in the bond space is an ongoing lift in longer-term yields. This coming despite expectations for a Fed rate cut next week. We do see almost 4.11 on the 10-year yield. Time now for the morning calls. First up, Wells Fargo raising its price target on Casey's General Stores to $625, saying the company looks, quote, poised for a Q2 beat and raise those shares lower by about 0.25%. Next up, Truist upgrading Six Flags to buy from hold, but cutting its price target to $23 from $27, citing a new CEO and greater sense of urgency. Six Flags up 4.2% in pre-trading activity. And finally, Guggenheim Securities raising its target on Five Below to $185, maintaining a buy rating, citing meaningful intermediate-term upside potential for people who want to buy gummies. 1.9% decline on those shares. Doesn't that seem like what a Five Below is? It's for kids who are in, junior high school buying gummy candy.
I'm not sure. I don't think I've actually been inside of one, so I'm gonna have to do some market research.
Evidently,
I'll come back to you.
Someone's got to give you some deals to potentially get in the door. Sticking with retail, the National Retail Federation forecasting 2025 holiday sales to exceed $1 trillion for the first time. Joining us now, I'm so pleased to say, is Matt Shea, CEO and President of the National Retail Federation. Matt, thank you so much for being with us. First, I just want to get a sense of how much that $1 trillion figure and how much some of the increases that we've seen in sales during this holiday shopping season have really stemmed from just higher prices, not necessarily a greater degree of volume.
Well, good morning. Happy to be with you today to talk about the big holiday weekend on Cyber Tuesday now, but we had a great weekend. We had tens of millions of Americans out shopping. We're going to be releasing the results of the weekend on our holiday call at 11 o'clock this morning, 11 Eastern. So I think what we saw was retailers delivering real value to consumers. And while there have been some price increases throughout the system, through this whole year, retailers have worked very, very hard to keep delivering value for customers and to avoid passing on any price increases. So we're looking at maybe 1% price increases on food. And really, for the last couple of years, we've been seeing on the good side flat to down on inflation. So there's real growth there with a 4% forecast. Our forecast, 3.7 to 4.2%. We'll see real growth this year, and I think you saw some great deals over the weekend and saw some retailers that were really winning with customers.
So let's talk about this period of discounting. It was Black Friday, then it was Cyber Monday, where actually there are potentially steeper discounts, averaging 31% compared with 28% on Black Friday. Now we're on to, let's go teetotaling Tuesday or something. I mean, it seems like it's continuing in terms of the sales and the promotions. Does that indicate that retailers are looking to clear their shelves? So does that indicate that there just is a need to generate eyeballs, or is it just that they feel like they want to give a sense of value to their customers?
Well, I think there are a couple of things happening here. First of all, I think we begin with inventory levels. And inventory levels are in a very good place on a historic basis. So we're about 1.13, which means we've got a little more than a month's supply for a month's worth of sales. So they're not holding too much inventory. They've got the right inventory in place. I think it's a very competitive retail environment. Consumers are under some pressure at the lower end, but they're still out there spending. And we're on track to have a very good year overall, probably in the 4% range for the year. And what we're seeing is consumers are being very deliberate, very thoughtful, very purposeful. They've got lots of information at their fingertips. They're really looking for the best deals they can find, the best value based on the things they need and want. So I think what we see is a competitive landscape, inventory levels in a good place. Margins are holding up very well for retailers across the board. And the promotions we've seen have been planned promotions. So there's this is all part of a planned rollout for the holiday season. And I think thus far it's going really well. We're off to a great start for the 5-day holiday weekend here for Thanksgiving.
Matt, to Lisa's point, though, maybe we call it Tardy Transaction Tuesday. I am getting nonstop emails this morning about how Cyber Monday has been, quote, extended. And to be honest, I actually took advantage of them very early this morning, something I forgot I wanted to purchase. Are you saying that is all planned and this basically just becomes a discount week? Or does it actually show that these retailers are really desperate to try to get eyeballs and individuals back on their sites?
Well, I think, Anne-Marie, I think one thing we've seen is the holiday season has been extended over the last several years. And certainly since the pandemic, we've seen consumers beginning their shopping much, much earlier than was traditionally the case. And we see retailers delivering those deals all the way back into the summer and throughout the fall. So what we're seeing now, I think, is a continuation of that. They're going to continue to be day by day, week by week, different kinds of promotions, different kinds of rollouts that are going to be designed to attract consumer engagement throughout the holiday season. And I think that this has all been this is a thoughtful series of deliberate sort of promotions that are out there. They're planned. They're responding to what consumers are looking for. And I think back to the competitive landscape that we're operating in, we're not in the period where every retailer is a winner and every business is going to win the way we saw in 21, 22, 23 even. This is an environment in which it's much more competitive, and so retailers are trying to distinguish themselves in the marketplace, deliver that real value. And value is, I think, more complicated. It's not just price. For some consumers, value is price, but it can be quality, it can be selection, it can be convenience when it comes to fulfillment and delivery. So when consumers say they're looking for value, they're looking for something that makes them feel they got what they paid for. And that might be a great quality item. That might be an item that gets delivered more quickly than they could get it from another competitor. So I think there's a whole series of things that we use. When we say value, we're talking about a series of different kinds of experiences based on the consumer. And again, we'll talk more about this at 11 this morning, but we saw retailers really delivering value through this weekend. The numbers were good. Traffic was good online, in store. So I think we're off to a very healthy holiday season.
Stepping away from the holiday season for a moment, can you give us a sense of how retailers are dealing with tariffs and this potential of IEEPA being struck down? Are they talking about potentially benefiting for the reimbursements that might be needed to be paid back to them if the Supreme Court deems that IEEPA was illegal?
Well, I think what we've seen this year, and again, going back to the pandemic, we've seen for the last 5 years, this great period of disruption, this period of uncertainty, unpredictability, even volatility across the market, things that are outside the control of a retail business or any business for that matter. And so I think as we look forward, retailers, again, are focused on the things they can control, and what they can control, the relationship with their partners, their suppliers. They can be creative and thoughtful about the way they're handling their sourcing, their inventory, their importing, the way they're communicating with customers. Those are all things they can control. What the court does or doesn't do when it finally issues a decision on the tariffs, I think that's something that we can't control, our members can't control, and we'll handle that when we get to it. So I don't think anyone's counting on a result one way or the other. It's what we're looking for is certainty, predictability, something that'll smooth out the relationships in the supply chain. And the court will make a decision, and we'll certainly go from there based on what the court decides.
Matt Shea of the National Retail Federation, thank you so much for being with us. And I have to say, Anne-Marie, you get a gold medal. Tardy transaction Tuesday, that's absolutely brilliant.
It feels like it's for that person that maybe did want to buy something and then was just like, I'll wait.
Yeah, and then they say to you, we see it in the cart. You maybe want to do this a little bit longer.
I'll be fair, they got me on Tuesday.
Yeah, well, I will say that the gummy selection, definitely on fire over at Five Below. Thanksgiving transition Tuesday, Tinsel Tuesday, Tipsy Tuesday. I mean, we really could go further on this. I really think you have something here.
It's becoming an entire week. But to Matt's point, he says that this is all deliberate. So they understand that consumers maybe are, actually, maybe for fickle, maybe they're going to see how much they decided to spend for the holiday season on Friday and throughout the weekend on Monday. So then they still continue those offers throughout the week. But the fact that I think they're still trying to find those eyeballs and get you back to their website says that things are not as rosy, potentially, as they seem, and they have to really fight for consumer attention.
Well, we'll carry that conversation forward. Just how clean of a read can we get on the consumer from some of these retail earnings, and frankly, from the other peripheral data that we are getting. Coming up, Lindsay Pieggs of Stifel warning that further Fed policy easing could fuel pricing pressures. Plus, Danny Berger with your morning movers. Warner Brothers Discovery rising after Netflix offers cash.
countdown to the market open as we bring you the first trades across Europe.
We'll debate the most important stories and what will drive the big investment decisions throughout the morning. I'm Guy Johnson.
I'm Kriti Gupta.
And I'm Anna Edwards. Join us every weekday morning for the opening trade, live at 7 a.m. here in London.
Only on Bloomberg. Context changes everything.
Why do the biggest names in business choose Bloomberg Television?
That's a great question.
It's a very good question.
Interesting question. Good question.
Great question.
I so appreciate that question. You certainly ask interesting questions.
Bloomberg Television. Top experts, great questions. It's a multi-trillion-dollar industry. We'll show you what's happening in ETFs like no one else. ETF IQ, only on Bloomberg.
I'm David Weston. Join me each week on Wall Street Week for stories of capitalism from business, markets, economics, tech, and climate. We go on the road for a look at what lies behind the headlines of today and what will likely be the headlines tomorrow.
We need more transparency. Oil and gas is still important.
They said every citizen should be investing in the market.
Accelerate progress in all fields of science.
Watch Wall Street Week right here on Bloomberg.
More than what you need to know, it's what you need to think about.
Did not mean to sell Anne-Marie on Five Below, but here she is lost in an absolute, well, I mean, if you have kids, then that's typically what happens. I'm not selling them. I'm just saying that this is sort of a good rainy day activity. Right now, we're looking at other rainy day activities because it is a rainy day here in New York City for the Northeasterner. Up 0.3%, not necessarily so dire or dismal in the futures space. Higher across the board, led by actually the Russell 2000. Futures up 0.6%, NASDAQ up 0.4%. In the bond space, curious to see that there is not the participation in the rally. Yields up across the board. 10-year yields 4.11 after yesterday climbing 7 basis points at the long end. 30-year yields up just 2 basis points. A bigger move in the belly there, and a real question about what is driving it. Is it a question of potentially tariffs? Is it a question of the Bank of Japan? And in the currency space, pretty much quiet across the board. A little bit of maybe euro strength, but really flat. 1 hour away from the cash open. Your morning movers here with Danny Berger. Danny.
Hey, Lisa, one of the stocks we're going to keep talking about this morning is Warner Brothers Discovery. Shares are up 1.5%. Reporting suggests that we're looking at second round bids for the company. All the players that were there are still participating in it. All eyes on Netflix with offering a mostly cash bid. We also are expecting something of a $30 bid. At least that's what Warner Brothers Discovery wants to see. Reportedly, shares currently at $24.22. Elsewhere, Boeing seems to be perking up this morning. Some headlines coming out of the UBS Industrial Conference where their CFO was speaking, saying that Boeing's recovery is in full mode. He did cite some weaker sales, or at least a little bit of a lightness when it comes to November, but looking ahead to 2026, shares up 3.5%. Finally, ending things with a little bit of sell-side action. That is on Six Flags. Truist upgrading the stock from a hold to a buy. It's been a struggle for Six Flags. They have activist investors swirling around. They put in a new CEO, and according to Truist, that is the key for them. They say that there's a new sense of urgency to get rid of the parks that are underperforming, focus on the core. So again, those shares up more than 4% this morning, Lisa.
Thank you so much, Danny. Meanwhile, Amazon's AWS reInvent is 2025 is underway in Las Vegas this week, with the tech giant unveiling product news and announcements. Bloomberg's Ed Ludlow joins us now. And Ed, it is really interesting to be tracking this event at a time where there's so many questions around what the new innovation is going to be for artificial intelligence, who the leaders are going to be. What's your sense of what some of these announcements could look like?
Yeah, there's pressure on Amazon because AWS is the #1 in cloud, right, in terms of scale, hosting, infrastructure. But is it the #1 in AI? That's all that anyone really cares about. And that's multifaceted. Is it #1 in terms of the models that it offers? Is it #1 in terms of the performance of its own chip? And so far, the announcements that they have made, which are few and far between, have focused on the model that they've had out for a year, which is their own. It's called Nova. It's a foundation model. And the agentic AI that's built on top of it. You know, Amazon Web Services is a place where there are loads of different tools, and the complaint from industry has been, no matter how price competitive it is, it's quite confusing to use. And if you look at what's coming from OpenAI, Google in the form of Gemini, they're just one-stop kind of shops. And so, you know, when we get the keynote later this morning, 11 a.m. Eastern, you expect some fighting talk for Amazon to say, actually, we've got our act together. This is what you can do if you want to build with AI on our cloud.
Ed, just a quick note here on OpenAI and this question of competition, because they also feel like they are somewhat, not behind, but facing increased competition from Alphabet's Gemini. How much are you feeling like this is a healthy phenomenon from the industry, and how much do you feel like this is cannibalization, where the strongest hands are going to win?
Yeah, it's certainly timely. You know, the reports that Sam Altman's called Code Red and basically wants OpenAI to focus just on ChatGPT, highly relevant to what's happening here, right? AWS has a $38 billion deal with OpenAI, but that's for NVIDIA chips. That brings into question if OpenAI has overextended itself on its capital commitments for capacity. Amazon has historically been a place where they host other people's models, but they want to sell their own. OpenAI wants a foothold on the enterprise, so it's looking to Amazon. And in the background, you have Google and Google's TPU, the performance of its own A6 chip. Amazon very likely to talk about their own in-house silicon, but they don't really have anyone to use it beyond Anthropic, one single anchor investment. You use the word cannibalization. You know, the question is still not necessarily on bubble, but overextended. And are these model labs good for the money that they've committed to the hyperscalers who themselves want to be leaders in the field of foundation models and building cool software on top of it? All fair questions to ask throughout the course of the day.
And I'm sure that you'll be asking them. Ed Ludlow there, he is going to be speaking with the CEO of AWS later today, I believe at 3:10 p.m. Eastern time. AI dominant in the U.S. economy, Wei Li of BlackRock, talking about how the micro is turning into macro.
There is no such a thing as neutral stance anymore. So if we look at the large numbers of CapEx forecast, credible forecast takes us to $8 trillion by the end of this decade. The current forecast for big tech companies in terms of incremental revenue do not justify this amount of spending yet.
Increasingly, the AI story is becoming the economic story. Bloomberg's Enda Curran joins us now. Yesterday, we saw a stagflationary ISM manufacturing report, which kind of flies in the face of this huge outgrowth of investment that so many people are expecting from artificial intelligence. At what point are you able to track, or are we sort of at the behest of the AI developments, especially at a time when we don't have other economic data?
Well, we know that AI is certainly accounting for the bulk of GDP growth this year, Lisa. It's certainly driving activity, as you point out, in the broader manufacturing sector remaining in the doldrums. That ISM indicator yesterday showing 9 months of contraction because of the uncertainty over trade policy, because of weak demand. So you look around, where is the activity coming from? And it is that AI build-out, it is the investment, it is the data center story. But in terms of how sustainable that will be for the economy, what legacy of employment that will leave once the construction phase is over, and of course, what impact the AI boom is having on productivity, all of that is very uncertain right now. It's very hard to measure. It is boosting headline aggregate data, we know that, but we also hear a lot of stories, just like a previous guest making the point about the retail story. Sounds like it's booming, but of course, plenty of economists say that's concentrated in terms of upper income households. So yes, we're getting a good gloss on the economy from the AI story, but there's a lot of uncertainty in terms of what's happening in the other pockets of the economy.
And what's your compass right now, given the fact that we don't get non-farm payrolls, we don't get JOLTS, we don't get a whole host of other key indicators this week?
Well, it's hard to have a compass, Lisa. I mean, we have ADP coming up tomorrow. Consensus there maybe plus 5,000. That's fairly tepid in itself. If that was to be a negative number, it would just back up the idea that the labour market is weakening. If that's all the official sector has to go on at the moment, and Wall Street analysts have to go on, because we don't have that flow of the BLS jobs data or the CPI data. That said, though, it does feel like we're at a point where the Fed officials have probably made up their mind. You're either more worried about inflation, and that's where your focus is right now. You've decided that the labour market is what it is, or you're more concerned about the job story. And by all accounts, the hints that we had heading into the blackout week at the end of last week was, it sounded like some of those more prominent Fed officials were more worried about jobs, and that's why the markets, of course, are now pricing for that Fed rate cut next week. But without the data, it's going to be a very hard Fed meeting to call.
And Curran, thank you so much for being with us, as always. Sticking with the Fed ahead of next week's meeting, Lindsay Piegza of Stifel, clearly in the inflation camp of worries, writing, while inflation held steady in September, the lack of downward improvement from a still elevated level raises concerns that any further policy easing could risk an acceleration of price pressures. Lindsay joins us now. Lindsay, thank you so much for being with us. I want to start there. Why are you still concerned about inflation worries being the preeminent concern at a time when it seems like the Fed has moved more to the employment side of the equation?
Well, it does seem at least some Fed officials have shifted their focus away from price stability to full employment. But there are still a number of Fed officials that have come out to highlight the need to remain focused on reinstating price stability after years of allowing price pressures to remain above that 2% target. Now, we have made considerable progress in terms of reining in that growth in the aftermath of the pandemic, but we've never been able to get back to that point of price stability. And now, with this lack of downward momentum, it does suggest that the Fed might have reached a neutral position in policy, appropriate now to take a position, a sidelined position, without further rate cuts, without further risk of inciting inflation. Particularly now, there are a number of upside risks as we look out to the end of the year and turn the calendar page into 2026. So now is not the time to entirely divert focus away from achieving price stability.
Lindsay, do you think that the Fed has enough information and data, given what happened with the government shutdown, to make a decision next week?
I think the Fed has a good read on what's happening in terms of the underlying momentum in terms of cost pressures. Again, we haven't seen necessarily all of the data move to the upside, but we haven't seen any indications of a material downward momentum in inflation. And as such, I do think, coupled with the fact the consumer still remains on far from robust but solid footing, the economy is on track for a plus 3% growth pace, and we continue to see, again, not robust, but positive, solid job creation. I think the Fed should err on the side of caution, moving to the sideline, allowing for a further understanding of the evolution of both the price and the labor data before making any additional policy adjustments.
Lisa brought this up earlier, if potentially it's a hawkish cut, but what you're describing is maybe we have a dovish pause next week. Is that correct?
Not necessarily a dovish pause. I think we're looking for more of a neutral pause. I think the Fed at this point is pretty well divided between those that have that lingering fear of price pressures and those that are facing this emerging concern of weakness on the labor market front. So I do think the Fed could very clearly articulate a neutral pause, push policy to the sideline, say we're not going to make any unnecessary movements until we have a better read on prices and the labor market, given there are risks to both sides of the Fed's dual mandate.
Lindsay, when you say inflation pressures are still in the system, there is a real question of what those inflation pressures look like. 3%, a lot of people say we can handle. 4%, not so much. How much are you seeing an actual unmooring of inflation expectations in a way that feels unsustainable and unduly punitive rather than 2.5%? Say, or 2.8%?
Well, I think at the current read, right around 2.5-ish%, I think the Fed would be willing to tolerate that longer term. But my concern is these upside pressures that are still coming down the pipeline. Should we see a stronger than expected growth profile at year end, or a stronger, more spendy consumer as we now enter this key holiday shopping season, or turning the corner into 2026, should businesses now begin to pass through more of those cost increases to the end consumer that were previously absorbed into the bottom line? Now that inventories have been drawn down significantly, any one or a combination of those factors could add significant upward pressure to inflation going forward. So it's not necessarily where we sit right now, but the risk to prices, price pressures, as we look out to the remaining months, the remaining weeks, of the year and into 2026.
Lindsay, just real quick here, going forward, I'm curious how effective you think monetary policy really is in tackling some of the issues that are preeminent, particularly when it comes to the K-shaped economy and questions around just how much wages are not keeping pace at the lower end.
Well, wages still are relatively positive. We see about this 4%-ish, but you're right, a lot of that growth has been isolated to the upper end of the income spectrum, fueling a lot of the activity on the retail side in the upper echelon. And so we don't see necessarily this broad-based expenditure. When we talk about the consumer being solid, we do have to be somewhat careful painting with a broad brush because a lot of that momentum has come from this underlying increase in asset valuations, fueling trillions, tens of trillions of dollars in wealth. But again, that's very much isolated to the middle or the upper end of the income spectrum as we're talking about property ownership, participation in the equity market, which those at the lower end, statistically speaking, are less likely to own property or have a stake in the equity market. So we do see, again, not necessarily the Fed's ability to completely ameliorate this K-shaped recovery, but there is a role of monetary policy, but a delicate one. We have to make sure that we're attentive to both that labor market and the price data components of that recovery.
Lindsay Biegza of Stifel, thank you so much for being with us this morning. Right now, let's get you an update on the stories elsewhere this morning. Here is your Bloomberg Brief with Yahaira Anand. Yahaira.
Hi, Lisa. Cloud computing provider Vultr is making a major bet on affordable AI infrastructure. The AMD-backed company announcing plans to spend more than $1 billion building a massive chip cluster in Springfield, Ohio. The facility will use AMD's advanced AI processors to offer computing power at significantly lower rates than major tech giants. Meanwhile, the U.S. Commerce Department agreeing to invest as much as $150 million in Xlight, a chip technology startup. It's part of an effort to create more domestic chip-making capabilities and help Xlight construct a laser prototype. Xlight's executive chairman, Pat Gelsinger, yes, formerly Intel CEO, saying it is a, quote, once-in-a-generation opportunity. And the Northeast is preparing for its first major snowstorm of the season. Some parts of northern New England could see as much as 10 inches of snow. The storm could also drop up to 4 inches of snow in Chicago, where a record 8.4 inches fell at O'Hare International Airport on Saturday. That's Bloomberg Brief. Lisa.
Thank you so much, Yahaira. And I feel for any travelers who are sitting in limbo as a result of those snowstorms. Up next, setting you up for the day ahead. Plus, Tom Narayan of RBC Capital Markets as Michael Burry is betting against Elon Musk and Tesla. And as we do get some auto numbers throughout the day today, this is Bloomberg Surveillance.
The key issue right now for us in the diamond space is the declared divestment of Anglo from GBS. And as you know, Anglo holds 85% stake in GBS. Botswana, the government of the Republic of Botswana holds 15. We are resolute now, and we've communicated a firm intention to increase our stake in GBS to a controlling stake. We have lined up a number of potential collaborators with us, if I may put it that way. We have targeted funders, we have parties, we have the Oman Sovereign Wealth Fund, we have others who are willing and ready.
Bloomberg Business Week Daily.
We got to talk crypto.
From the magazine that helps global leaders stay ahead.
What's the conversation around your company?
Bringing you insight on the people, companies, and trends shaping today's complex economy.
Planning very big things.
A new level of premium.
Plus global business, finance, and tech news as it happens.
The floodgates of innovation are going to open up.
You can't fake passion. You either are or you aren't.
Bloomberg Business Week Daily, only on Bloomberg.
Astonishing day for US technology.
Shaping the region's technology ecosystem.
Asia's biggest tech news and innovation.
U.S. jobs numbers are released. Bloomberg has the report under surveillance with crucial data and expert analysis at terminal speed. Nobody covers Jobs Day like Bloomberg.
Coming into the second day of December with a little bit better tone than we saw yesterday. Certainly a lift at the S&P, up about 0.3% now. Interesting to see the yield climb on the 10-year. This is very much a focus, especially after the Bank of Japan decision or likely decision to hike rates, as we heard the signal yesterday. A real question of the carryover with 411 almost on the 10-year in the United States, counting down to the opening bell. Here's a trading diary for the week ahead this morning. U.S. envoy Steve Witkoff meeting with Russian President Vladimir Putin in Moscow. At 11:30 a.m. Eastern, President Trump hosting a cabinet meeting, 2 p.m. Eastern. The president set to make an announcement, and after the closing bell, we do get earnings from CrowdStrike. On Wednesday, tomorrow, we get ISM services. On Friday, we get core PCE data. Sounds exciting. It's from September. Don't get too excited. Counting down to the opening bell. Investor Michael Burry making another big call against the market. The big short investor calling Tesla shares ridiculously overvalued. Tom Narayan covers Tesla and other automakers for RBC and joins us now. Tom, great to see you. Thank you for being with us. We can start with Tesla, but I would love to talk about how representative it is of the larger auto space and how difficult it is to get a handle on exactly the supply-demand dynamics at a time of post-pandemic transition and post-tariff realization.
Yeah, and I think what you're noticing more and more is the strength underlying the U.S. economy, especially at the top end and maybe at the middle, is manifesting itself with auto sales, which have actually been stronger than what a lot of people expected. We did our own work to actually show that there's about a 6 to 7 million vehicle deficit of cars that were never purchased because of the pandemic. And, you know, in the U.S., in a lot of states, you have to have a car. It's as simple as that. How do you get to work? And if you can afford the car, you will buy it. And so, you know, at the beginning of the year, I think folks were looking at something like a 15 million vehicle SAAR for 2025. It's looking like it's probably going to be a 16.2, 16.3 million number. So, yes, sure, things are slowing down a little bit. There's been some pricing to offset some tariffs lately with some OEMs. But if you take a step back, there is some real strength of the economy. Unemployment is very low. We'll probably have another rate cut, right, later this year, probably more next year. And then tariff resolution in 2026, especially with the USMCA. So given that backdrop, we're actually pretty constructive on U.S. autos.
So this goes to who's going to win, right? Is it the U.S. auto manufacturers? Is it the electric vehicle manufacturers? Or is it, as we have seen of late, a real shift back to hybrid and, frankly, trucks and away from the Elon Musk's Teslas of the world?
Yeah, I mean, let's just look at cars specifically or autos specifically. I would agree with that. It's ICE cars in the U.S., definitely. Perhaps there's some room for EREV or hybrid. Certainly EVs is not the place to be right now in the U.S. I do think there's room for that maybe later in the decade, but right now the strength is at the heart of the U.S. auto industry, pickups, large SUVs, ICEs, think GM most notably, maybe Ford as well, some Stellantis. So we think that's really where you'll see most of the benefit near term, not as much with the EV space in the U.S.
EV space has certainly been under pressure. At the same time, though, Tom, you have an outperform on Tesla. Why do you continue to like this company?
Yeah, it's certainly not really because of autos. It has more to do with the AI features, right? So robotaxi, you guys well know my thoughts on robotaxi, and then now the humanoid market. I look at Tesla the same way on humanoids as I do on robotaxi, which is I look at the top down. I think it's a huge market opportunity, both humanoids and robotaxi, and I'm assuming actually very small penetration levels for Tesla on humanoids, only 5% of that market. It's a big opportunity, this humanoid market. I don't think the investor base has caught up with reality. Certainly folks like me are new to the game. When you talk to the experts in robotics, as we have recently, you realize why there's such a big market opportunity. And, you know, that tends to move this stock, right? It's a narrative stock. As long as we don't have negative data points, and this is like a 10, 15-year horizon, what is the negative catalyst here to kind of put some shade on the stock? So right now we're looking at that perspective, and we like the stock.
So what do you make of Michael Burry's call then, when he says Tesla is ridiculously overvalued? Would you just tell him that you're looking at the future and what's going on with not just robotaxi, but potentially what happens with humanoids?
Yeah, I mean, like, we don't know is the answer, right? I mean, we don't know who's going to win. What do we know about humanoids? We know there's going to be a lot of them. We know that's probably going to be decades from now. We know the form factor will probably be humanoid, and we know Tesla is one of the leaders. So, you know, from that basis, I do think there's enough inertia that should support the stock. Maybe in 10 years or 5 years, we look back and maybe I was wrong, you know. But I just think it's too early to tell, right? I mean, I think the data that Michael Burry had during the housing crisis was real data, right? I don't think we have actual real-life data to show that humanoids won't happen or Tesla won't be a big piece of that, or in the robotaxi side either, right? So I'm following what the data that we have presenting before us today is, and I like the odds that Tesla has to capture it, but ultimately, none of us really know the answer.
I'm just ChatGPTing or Geminiing how long it's going to take for humanoid robots to do our chores, and they say 5 to 15 years. So it seems like, unfortunately, we'll have to fold our laundry for quite a while. Tom Narayan, thank you so much for taking the time of RBC. It does seem like that is the next step, and it raises this issue of a lot of the manufacturing side of things. That is going to be the source of jobs on the heels of AI for a long time. Or maybe 5 years before maybe there's some other alternatives out there.
But he gives this point that a lot of individuals who are very bullish on Tesla give. It's not about EV. Sure, that's how he made the name and got into the industry, but it's about the future of what Elon Musk views the world is going to be. And humanoids are becoming a lot more popular, at least in the rhetoric, when people want to talk about. And to be honest, 5, 10 years is not that far. That's near term, I think, if you look into the future. It's not 20, 30, 50 years.
Do you think that it's subliminal signaling that we're talking about humanoids on Jobs Week when we're not getting non-farm reports? So there you go. Maybe this is some
BLS needs humanoids.
Message, evidently. Coming up tomorrow, we're going to be talking less about that, more about what's going on right now as people head into 2026. Lori Heidel of State Street, former Kansas City Fed President Thomas Honig, Matt Stuckey of Northwestern Mutual, and Nancy Lazar of Piper Sandler. This was Bloomberg Surveillance. Good morning.
Good morning. This is Bloomberg Daybreak Europe. I'm Tom McKenzie in London. These are the stories that set your agenda.
Taking you from the U.S. market's close to the overnight session in Asia, we'll walk you through what you need to know to kickstart Europe's trading day. Live from our European headquarters, we bring you the day's top market-moving stories, unmatched expert analysis, and on-the-ground reporting from across the continent. Tune in to Daybreak Europe, only on Bloomberg Television. Context changes everything.
The game here is understanding. These digital assets have the ability to change the payment landscape of the world, and we need to be ready. We, the regulators, the world needs to be ready for a new wave of technology.
Stablecoins are almost entirely used in the mechanisms of trading cryptocurrencies. What we saw is the opportunity for digital assets broadly, stablecoins in particular, to be used as a medium of exchange outside of the crypto world, what is today the fiat currency world. At some point, I think these digital asset wallets will be big enough and people will be comfortable enough using them. I think we'll have a flip from conventional payment mechanisms into stablecoin-based mechanisms.
Does that mean banks such as yourselves issuing stablecoins?
We could. We are issuing Hong Kong dollar stablecoins today. We're in a sandbox for tokenized bank deposits in Hong Kong. We're effectively issuing tokens related to trade finance in Singapore. So it's all on the table, but we're always going to tie it back to what our clients want and need. Because if we don't get that one right, the rest doesn't matter.
The market capitalization of both type of instruments, crypto and digital assets, are both very low. Stablecoins today have $20 billion of flows a day. It's less than 1% of the flows of the payment system in the world. But because they have the ability to be very helpful in use cases, particularly in retail to begin with, but then potentially on the wholesale side, I think we will see a lot more of them.
I'm Alex Rodriguez.
And I'm Jason Kelly. And we're back with another season of The Deal, with athletes and entrepreneurs who are changing the game on and off the field. Jerry Jones. Some good-looking trophies.
1 and 1 is 3 in sports, not 2. And it's because that 3 is imagination. That 3 is putting yourself in a way, having yourself hit the home run.
Erica Ayers-Badon.
I'm a high-energy board member. I'm very passionate. I have a lot of opinions.
Robin Arzone.
I want to light fires in people's lives, and that is still one of my core mandates for all of my businesses.
Justin Tuck.
I tell all of my friends that play in leagues now, make these relationships now while you're hot. Don't wait till you're your 12th year in and you're just hanging on.
Stay tuned. You won't want to miss it.
Bringing you up-to-the-minute geopolitical news whenever and wherever it happens. I'm Stephen Engel at Japan's Akasaka Palace in Tokyo, and this is Bloomberg.
Danny's back. 30 minutes until the start of the cash trade. I'm Matt Miller.
That's why stocks are up, obviously. I'm Danny Berger. Bloomberg Open Interest starts right now.
Coming up, Apple hits reset on AI as the company ousts its machine learning chief.
And Michael Dell's deep pockets, the tech mogul contributes over $6 billion to President Trump's account for newborns as the president calls on corporate America to follow his lead.
And risk appetite is back. Morgan Stanley's Mike Wilson has a bold new bull call. He joins us this hour.
Really excited for that conversation. But first, Matt, some of the things that we're looking at this morning. One of the movers is Warner Brothers Discovery. It's up 2.8% in the pre-market. So the second round of bids are coming in, still the same names, Paramount, Netflix, but it should be worth noted that it's mostly cash offering from Netflix, and the auction could wrap up in the coming days or weeks. The offers, they are binding, which means the board is in a position to sign off on a deal quickly if its goals are met. The reporting suggests that they want something like $30 a share for this deal.
All right, very cool stuff. But even cooler, Michael and Susan Dell just dropped a record-shattering $6.25 billion to give to 25 million children. That's $250 for each child to kickstart their investment futures. The gift expands the new federal Trump accounts, which seed $1,000 for babies born starting this year, 2025 to 2028. That's for newborns only, but this is for any kid under 10, and I think they're going to start out with a certain number of zip codes. And I believe it may be the largest single philanthropic gift of all time to a foundation that's not, your own or your kid's foundation. So giving money actually away. And as a result, it's interesting. I looked at Dell shares when this story broke. They were doing a whole lot of nothing. Now they're up 2.7% in the pre-market. So it's actually moving the shares.
Such an interesting story. We're going to talk more about it and how one would classify themselves as a new board, maybe to get access to that money. Also, we're keeping an eye on Apple. Its AI head is stepping down from the role and will leave the company entirely in the spring. They've struggled to keep up with competitors in AI, including Google, which is posing a risk to OpenAI, with reports that Sam Altman told employees it is code red for ChatGPT to make improvements in its products. For more on Apple and OpenAI, we're joined by Bloomberg Tech co-host Caroline Hyde. Caroline, it was a story earlier this year, like every day, this AI person from Apple is being hired by Meta, by someone else Who's left?
Yeah, well, not John Gianandrea, who is the lead and perhaps one of the most unsurprising exits that we've had. He came 7 years ago from Alphabet, from Google, and he was really leading the AI charge that then was a total damp squib. Not only did they basically pick up the generative AI mantle 2 years after ChatGPT had exploded onto the situation with Apple Intelligence, then Apple Intelligence wasn't very impressive. Then they had to delay the Siri rollout. Siri's got to get an awful lot better. And then, of course, there's a dialogue that they're not going to be building their own large language models internally. They're going to be looking to other models. Maybe Google's going to be the provider. There was talk of OpenAI, of Anthropic being assessed. That really hit morale. And more broadly, we're seeing, therefore, John Gianandrea take an exit. He's going to stay till the spring, but he's moving on. But meanwhile, he's lost an awful lot of his team, and his team is getting redispersed. It's going to be put under the COO, under the software head, Craig Federighi. We're going to see also the services chief, Eddie Q, get a little piece of the pie, and they have hired new talent. We have seen Amar Subramania come over, AI researcher, was at Microsoft, was at Alphabet. He's had 16 years under his belt at Alphabet, for example, so there's new blood, but boy, do they need to change the narrative. And in many ways, people have been choked off by Apple's own discipline on privacy. Now, because they're so important about edge computing and AI within the actual phone, that means you can't run at the bandwidth, at the parameters that you're seeing rivals do it. So their own LLM foundational models are going to be subpar on that particular case.
Caroline, we've been following, and you and Ed on your program have been following Michael Burry's move,
Yes.
the famed Big Short investor who is short or buying puts on NVIDIA as well as Palantir. But he didn't short Tesla. This is a story this morning, and I thought, wow, that guy has cojones to short Tesla, right? So many people have been run over in that trade. He does say it's ridiculously overvalued.
I mean, he's also pivoted his entire company. He's shut down Scion Asset Management. His now business model seems to be Substack. And I have to say, if you look at the amount of people that are subscribers and they're paying the full $300 a year to the guy, he's making tens of millions of dollars. But he is putting out there that, surprise, surprise, a company that trades at more than 200 times future earnings is overvalued. Who knew that maybe Tesla was deemed to be trading not always on its fundamentals? But his issue is, again, one that's flagged by a lot of institutional investors when we just had the paycheck go Elon Musk's way, that pay package of $1 trillion. Dilution. He's fed up with dilution. He was issues with that with NVIDIA, with the way that you get stock compensation. He's got issues with the money that's going to Elon Musk. He says it's going to be diluting you to about 3% every single year, dear shareholder. And then he's also got issue with the fundamentals. So a lot, he's broadsiding with his pen and with his written word now, rather than perhaps his money.
Yeah, he's not the first investor, of course, to say. I remember Corey Johnson on this network used to rail against Tesla every time they would come out with earnings and say, I can't believe this stock, this company is worth, hundreds of millions of dollars or multiple billions of dollars. And now, obviously it's $1 trillion company. Carolyn Hyde, looking forward to your program at 11 a.m. Bloomberg Tech with Ed Ludlow. Let's turn to the top media story of the day now. Warner Brothers Discovery fielding a second round of binding bids as the auction is heating up. Reports say Netflix has pitched not all cash, mostly cash offer, while Paramount's offer includes debt financing from Apollo Global Management. For the latest on this competition, we welcome Bloomberg Intelligence media analyst Geetha Ranganathan. So Geetha, what do we know about the bids out there and who's most likely to take the prize?
Yeah, that's really the big question, Matt. So obviously all second round bids in. We don't know any dollar value just yet. What we do know from the first round was that Paramount had offered, they'd made 3 offers. The last one was at about $24 a share for the entire company, which was rejected. We know David Zaslav is looking for something close to $30 a share. Majority of that value, Matt, is going to be with the studio and streaming unit, which is the unit that both Comcast and Netflix are chasing. But just the fact that Netflix came out with a majority cash bid, I think just tells us how serious they are, because all along I think there were a little bit of, there was a little bit of hesitation, reluctance about whether Netflix was really going to go seriously after Warner Brothers Discovery. I think just the fact that they come out with this, majority cash offer shows us that they're a very serious bidder and that this process is really, really heating up.
What does that deal actually look like? If it's a company that, at least as of Monday close, has a valuation of something that's like $60 billion, I mean, Netflix probably will have to seriously tap the debt markets to get a deal like that done, won't they, Geetha?
Oh, absolutely. If, we're looking at a value of about $28 per share just for the studio and streaming part of the business, Danny. So you're looking at, anywhere like about 65 to, $70 billion, majority of which will have to be, obviously is in cash. So they will have to tap the debt markets. There's no doubt about that. They have about $9 billion of cash on their balance sheet. Obviously a very, very well-capitalized company throwing out, tens of billions of dollars in EBITDA, so they should have absolutely no problem accessing the debt markets. But you're right in the sense that initially, just with the amount of incremental debt that they would have to take up, maybe upwards of about $50 to $55 billion, there will be some amount of free cash flow dilution just because we're looking at almost about $3 billion of incremental interest expense.
Hey, Geetha, thank you so much for covering this for us. That's Geetha Raghunathan of Bloomberg Intelligence. And I'm pleased to say that now joining us is Morgan Stanley CIO and Chief U.S. Equity Strategist, Mike Wilson, who will be sticking with us for a lot of this hour. Mike, wonderful to see you. Thanks for joining us. Just picking up on what we were talking about with Geetha, this idea that you have Netflix making a cash bid and it's going to have to seriously tap the debt markets. It's a trend that's been going on for some time this year, not just Netflix, but the other tech giants. At what point does this dilution of free cash flow play back into equities? Again, not just with AI, but with a company like Netflix. How much are you paying attention to that?
Well, it's something we haven't seen, right? So, I mean, this is the next stage of the cycle, which is we start to see, more aggressive behavior with the balance sheet. So, it will ultimately, there'll be credit issues, but that's not today. I mean, this whole process is just kind of starting, which is why the AI spending can't be over yet if they just raise the money, okay? And now M&A. So M&A is something I've been a little skeptical about until this year. We're starting to finally see M&A pick up. Some of the biotech space, maybe some of the media area. We're going to see more of that, I think, probably in the banking sector. We need to see some consolidation there. But so in other words, it's kind of just getting going. So like we just started the game. So how could it be over so quickly?
More M&A, more IPOs. Do you think we're going to get more animal spirits picking up into 2026? And by the way, I don't want to bury the lead on your call, right? Yeah. What's the new bull call?
Yeah. Well, so first of all, on the M&A and capital markets activity, that's starting to pick up. I'm not that excited or optimistic there's going to be a ton of IPOs. This is not going to be like 2021 in my view. I don't think we're going to see a flood of that, but we're going to see more strategic activity, raising capital to invest, right? This is the changing dynamic of the economy now. We haven't really seen any real investment dollars outside of AI, and the Big Beautiful Bill is really the catalyst for that, right? Companies now are going to raise capital and invest it in the real economy, okay? So to me, that's a much bigger story than just capital markets activity where people are refinancing their balance sheet or, doing a transaction to get out of an old investment. This is more about investing in the future, and that's a real driver for productivity and real GDP, which is part of our story for next year.
What is your call for next year?
Yeah. So our story for next year is a continuation of what this year has been, essentially, which is that we essentially got a kitchen sink in the first quarter. We made a significant, bear market low in April. That was the end of an economic cycle. I believe that there's now a rolling recovery. Okay, all the policy changes that we've seen really affect a much stronger 2026 from an economic standpoint. And a lot of it has to do around this investment cycle. So our target's 7,800. That's the base case for 2026. We've written about this as well. I think the very near term, we still have to get over this big hurdle, how the Fed is going to transition to being more dovish. Does that require weaker labor data, or does that require maybe more financial kind of stress in the funding markets? We'll see, what the catalyst is there. That could create some near-term opportunities, but we're a buyer of that dip if we get it.
All right, Mike, you're going to stick with us. As we said, our guest co-hosts really for the hour. Let's get a check on what's going on in futures this morning. We are headed, I guess, closer to that 7,800 target. We closed at 6,800 and change yesterday, so that's 1,000 points away. Right now, futures are indicating another 0.3% gain today on the NASDAQ, another 0.5%.
It's 1,000 points between friends. All right, look at some of the other movers on our radar this morning. Matt's favorite company, database software firm MongoDB, surging after raising its full-year forecast on the improved growth in the U.S. and EMEA under its new CEO. All of its peers, so Snowflake, Datadog, all of those are moving higher on those earnings.
To be fair, I don't have a problem with the company itself. It's just the name MongoDB. It's like calling your company Total BS.
It is not the same.
It's very similar, right? Okay, Strategy is bouncing back alongside Bitcoin after concerns around the stock's premium to the OG cryptocurrency, and of course, a lot of what Fong Li's comments said on a podcast Friday that they may sell Bitcoin hasn't helped that currency. or asset. By the way, we're going to hear from Fong Li himself, CEO of Strategy, coming up at noon.
Yes, you will, as Bitcoin is up 2% this morning. Meanwhile, Boeing shares, those are climbing. The CFO speaking at a UBS conference saying that they see low single-digit positive free cash flow in 2026 and that the turnaround is underway, Matt.
Coming up, research firm 22V says now is not the time to be shorting U.S. stocks. It could be dangerous. We'll take a look behind their call next. This is Open Interest.
The Middle East and Africa regions are home to some of the biggest deals and fastest growth in the world. Vibrant resources and high-yield investment opportunities abound. I'm Jumana Versace. Join me on Bloomberg Horizon's Middle East and Africa for the stories, newsmakers, and insights shaping the decisions of traders across this exciting region.
You had heightened levels of volatility.
There's still room to maneuver.
We do see opportunities. It allows you to increase significantly your net income.
Every trading day, only on Bloomberg.
The belief for climate change is going down right now. It's going down. And we've tried everything to shame people and blame people and put them in their place and tell them that they're doing things wrong and that they're killing everybody. But if we keep telling them that, then we are going to kill everybody. So we got to figure this out. And we're not going to do it by blaming people who are just trying to wake up and make ends meet every day, especially when a lot of those people have the same connection to nature and the environment that we all share here. I hike and I ski and I love the environment just as much as anybody else, but so does somebody who works in an oil field. The Cabela's shopper and the REI shopper want the same things. They want clean air and they want clean water and they want to be able to recreate outdoors. So until we figure out how to get on the same page, we will continue to lose. We cannot afford to lose anymore. We need to build a winning coalition of people across the political spectrum, or we will never create the solutions that we need.
It's a multi-trillion-dollar industry. We'll show you what's happening in ETFs like no one else. ETF IQ, only on Bloomberg. Why do the biggest names in business choose Bloomberg Television?
That's a great question.
It's a very good question.
Interesting question. Good question.
Great question.
I so appreciate that question.
You certainly ask interesting questions.
Bloomberg Television. Top experts, great questions.
Now to high interest. Look what's making headlines around the world. U.S. envoy Steve Witkoff is in Moscow today to present the latest U.S.-Ukraine peace proposals to Vladimir Putin. The meeting comes as Putin claims Russian forces have captured a key Ukrainian city, a claim that Kiev actually denies. The talks follow European concerns. The plan could reward Russian aggression, though President Zelensky says the newest version of the plan, quote, looks better. Companies are literally paying workers to use AI. Firms like Sanofi and IBM are handing out cash as well as points and merchandise to push hesitant employees towards tools like Microsoft Copilot. Some bonuses run into the thousands of dollars, and one CEO is even considering equity rewards for staff who automate themselves out of a job. Research firm 22V says now is not the time to be shorting U.S. stocks. The company says an increase in consumer spending and AI investments will support productivity and deliver profits.
Matt, let's get to the woman behind that story. Joining us now is Bloomberg U.S. stocks reporter Alex Semenova. Again, the lead on that story. Alex, thank you so much for joining us.
Thank you for having me.
Feel bad for the Michael Burrys of the world, perhaps, at least for now. Just how painful has it been to try to short this market?
Yeah, so there's some data from S3 Partners. Basically, 3 weeks into November, shorts were up $95 billion in mark-to-market profits, and they wiped out $80 billion of that haul in the last week of trading in November. It was just the ultimate testament of how difficult it is to bet against this market. We were down as much as 5% from all-time highs back in late October, ultimately to reverse and end November higher. So really, T2V is saying that now is not the time to be betting against stocks. Simply, the economy is just too strong.
It's interesting, you know, my buddy Bob Sloan from S3 Partners, he says people hedging these stocks don't necessarily hate the companies, but it's the only way to hedge this market. I wonder what 22V would say. I mean, do you have to be long?
It's not necessarily that you have to be long. It's just that betting against the strength of equities has not fared well for anyone who is doing that. Marko Kolanovic on Twitter posted something really interesting. He said that now feels like a market where bears aren't excited about selling and bulls aren't excited about buying, especially given the lack of kind of catalyst that we've had with no economic data. We're awaiting the Fed meeting. So there needs to be something to make people excited to go in one direction or the other right now.
All right, Alex, thanks so much for joining us. Alexandra Samanova wrote that story on the Bloomberg side. Let's bring in back Morgan Stanley CIO and Chief U.S. Equity Strategist Mike Wilson. And, you know, when she mentioned Marco, I thought of you. I used to think of the two of you together, right? You were the two biggest bears on Wall Street. Go back to, you know, the inflection point. What changed your view? Because now you're one of the biggest bulls on Wall Street.
Well, it's just flexibility. I mean, it's funny how you get a reputation. You know, you go from biggest bull to biggest bear, and we've had that over the last 10 years, quite frankly. So it's not new for us. I mean, we're happy to go either way, depending on what our work shows. Most recently, in the last year, what's really changed for us is the earnings revisions, okay? So like this year, it looks much different. The earnings revision breadth is tremendous. I mean, that's the story, and I think that's the story that most people are still missing. And everybody's focused on valuation. It's like, look, valuations are okay if earnings are going to beat on the upside. And that's our call for 2026, is that we're seeing a broadening out in the earnings story, and we should see a broadening out in the equity story as a result of that. So we're very disciplined around our work. I mean, whether it's sentiment or positioning or, you know, valuation or earnings revisions, I mean, we look at everything, Matt, and I think it's just, you know, at this point in time, it looks pretty supported from a policy standpoint, from an earnings revision standpoint, and in valuation, you grow into it.
I think, though, this gets back to what you were talking about before the break of why we would get Fed cuts, what the catalyst would be, because I think a lot of people struggle with this idea that the economy is in a place that it has to have cuts, and at the same time, corporate America is doing really well. Is there not tension in that?
Well, there is, but here's the story. So most of corporate America is not doing well, okay? Just like most Americans have been suffering for the last 3 or 4 years for one important reason. Rates are too high for the average economic participant. This is why the market has been narrow. This is why we have the K economy. Okay, so I think the Fed understands that in order to kind of get the real economy moving again, get high velocity transactions moving in the real economy, rates need to be lower. Now, they need to be a little bit careful with that because it could create a bubbly type situation for stocks. But I mean, what we don't want to do is we don't want to see the government or policy crowd out a recovery that is very nascent for many parts of the economy right now.
Where is the market most wrong, or where would you have your highest concerns in terms of what happens next year? I mean, is that running it too hot your biggest worry, inflation?
Yeah, so on the positive side, I think people are too bearish on the consumer. I hear it all the time, the consumer, you know, they're in real trouble. Some consumers are in real trouble, which is why they need relief with rates, okay? And there's going to be relief on fiscal next year on taxes, about $150 billion of benefit from the big, beautiful bill for that sort of middle income consumer. So I think people are too bearish on the consumer. I think that's where we're going to be surprised, particularly in the first half of next year. On the other side, I would say, yeah, inflation. I think the strategy of running it hot will come back to bite us probably sooner than people think. So if people buy into our call that a new economic cycle began in April, most people would say, well, that should last 4, 5, 6 years. I don't think so.
Well, just to that point, quickly, Mike, before we head to the break, I mean, 2026 is going to be a midterm year. We've already seen this administration pivot to focus on affordability. What sort of risk does that inject into this?
It's a big risk for later next year. I don't think that's a risk in the first half of next year. So once again, we're going to stay flexible, and we may be here a year from now, you may be saying, why are you so bearish? I don't know. I mean, like, my point is, this is a time not to get married to anything for more than, I would say, 6-month view. So 6-month view is kind of the sweet spot right now.
And that in itself is telling. Mike, staying with us, that is Mike Wilson of Morgan Stanley. Coming up also in the next hour, Meredith Whitney is going to join us to also talk about the consumer, what she says are warning signs that are hiding in plain sight. This is Bloomberg Open Interest.
world's second largest economy with a growing influence in global affairs. Bloomberg The China Show brings you the unmatched expertise you need to keep track of breaking news, in-depth market analysis, and the most influential newsmakers in and around China.
We need to do more to engage the market more. We're risk on. I think we caught a little sweet spot.
Massive savings right now.
It's already a different game.
Bloomberg The China Show. Weekdays around the world, right here on Bloomberg. Context changes everything.
Bringing you up-to-the-minute economic news whenever and wherever it happens. I'm Francine Aqua in Sintra, Portugal, and this is Bloomberg.
Astonishing day for U.S. technology.
Shaping the region's technology ecosystem.
Asia's biggest tech news and innovation.
Know how the market day started.
Find out how it finishes.
Public markets to private markets.
From the micro to the macro.
Covering retail, entertainment, the business of sports.
The supply chains, trade policy, how it all is impacting the U.S. equity market as we drive to the closing bell at 4 p.m.
A holistic approach to covering financial markets.
If it matters to your life, we're covering it. I'm Katie Greifeld.
And I'm Romaine Bostic, and this is The Close.
Live every weekday.
Only on Bloomberg. Context changes everything.
What is going to be the consequence for U.S. markets?
We are basically deep in the European earnings season. Take a look at how we're faring when it comes to Asian markets.
Despite seeing record after record from U.S. stocks and gold, the U.S. is lagging the rest of the world in 2025. Bloomberg Intelligence Analysis found that among the 14 largest markets, the U.S. currently ranks 5th from last in local currency terms, 4th from last in dollar terms this year. Still with us is Morgan Stanley CIO, Chief U.S. Equity Strategist, Mike Wilson. Mike, so 7,800 is the call for U.S. stocks for next year. How much of that, though, is U.S. beating out the world versus the rest of the world doing even better?
Yeah, well, I think it's both. I mean, the rest of the world can do better. I mean, we've had this call for 3 years. We've been in this sort of rolling recession, non-participatory kind of recovery, and that's the same story for the rest of the world, right? The rest of the world hasn't really been recovering since COVID either. So we're seeing, the Chinese market's doing much better. India had a tough year this year relative. It's fine. I think that's a market that can come back. And then Latin America, as we kind of coordinate maybe this Western Hemisphere connection, Latin America looks quite a bit better. So I think foreign stocks will have a better year. It doesn't mean they beat the U.S., but it can keep up. The real story for next year, though, I want to make this clear. It's not about the S&P target, okay? It's more about this broadening out. And that broadening out is contingent, though, on the Fed cutting more significantly and or providing more liquidity to both financial markets and the real economy needs as there's more capital spending. So there is this hurdle to get over, okay? But to me, that's the fat pitch. It's not just S&P, it's not just the AI trade, it's all these areas that have lagged.
Right, which is, I mean, when I look at the outperformance of the rest of the world, the strange thing is they don't have the AI play that we have, right? They don't have the Mag 7, and they continue to do better. We'll talk more about this. We got to go to a break right now. Mike Wilson is going to stay with us, though. Right now we're looking at futures rising into the cash trade, the opening bell on the other side of this break.
North Star is do the work. Keep your head down and do the work. There's always going to be speculation in our business. We're in a massive time of disruption, and everyone's going to constantly be saying, what's going to happen next? Who's going to be there? You can't focus on that. You have to focus on the work. And I think what's so exciting about Warner Brothers right now, even though it's an over 100-year-old company, we all approach it with like startup energy. So it's actually a really great time to be making movies.
Our teams are used to it because it's
this company's been bought and sold.
Right.
Yeah.
Some of the inherited Warner people, understand this feeling. But when we started to work for David, one of his edicts to us is, challenge all assumptions. The business has to transform. It has to adapt to the moment we're in. And we talked about Moneyball a lot, because Billy Beane in that movie and in the book was all about adapt or die. The company right now has been battle tested and it has been challenging assumptions for 2 years. As far as the day-to-day, we're heading for that split. That's the course that David has charted. And people trust David because this whole slate strategy, this whole diversified slate, the label strategy, getting DC up on its feet, getting New Line pumping, getting animation, which comes online for us next year, pumping. We still think it's the winning strategy.
Good morning. This is Bloomberg Surveillance.
Welcome back to the opening trade. Watch Bloomberg Tech. This is the Asia Trade.
This is Wall Street Week. Welcome to Balance of Power.
This is Bloomberg Television.
Bringing you up-to-the-minute global economic news whenever and wherever it happens. I'm Lizzie Vernon in Florence, Italy, and this is Bloomberg.
We are moments away from the start of trading on this, what is apparently Giving Tuesday. I tell you that because you're going to see some charities ringing bells. Right now, S&P futures are up about 0.25%, so clawing back some of what we lost yesterday. NASDAQ futures gaining about 0.4%. December didn't start out so well, but maybe the second day will be better. You do see the U.S. SEC head Paul Atkins ringing the bell at the New York Stock Exchange. So that's not necessarily a charity. Hopefully, if you're very nice to them and this administration, you can get some give outs. But the pledge 1% is what I was referring to down at the NASDAQ. It is Giving Tuesday, apparently, after Cyber Monday. And this is, help me out, Mark Andreessen. Did Mark Andreessen started this or Scott Farquhar? Sorry, Benioff.
Exactly.
I'm mixing up my marks.
All good. By the way, probably worth noting at the SEC, those hats they're wearing are not MAGA hats. They're Make IPOs Great Again. They've taken them off, and now they're looking at their own logo. I'm not actually sure.
That's an interesting. What are they doing? Is this like an alien takeover? No. Okay.
But yeah, worth noting that's their hat. They want IPOs to be great again. IPOs are back. We're just trying to, Mike Wilson, that IPOs are back, but nothing like 2021. Dell Technologies, actually surprisingly not moving at the moment. Pre-market, the stock was up a significant amount. There is a new record, or at least near a new record, if not the record, for gifts given to not one's own philanthropy. Michael and Susan Dell giving 25 million American children $250 each to jumpstart investment accounts for their future. The total of that gift, $6.25 billion, builds on the Invest American initiative, better known as Trump Accounts. It was created earlier this year as part of President Trump's One Big Beautiful
Bill
Act.
By the way, I see that stock up 2.5%.
Okay, so something's weird with this.
Something's wrong with our board.
Okay, so these shares should be up to, okay, there you go. Weird, it heard you. Shares up just about 2%, Matt.
All right, Boeing expects to generate cash on an annual basis in 2026, marking a significant turnaround from the $2 billion cash burn this year. The plane maker expects positive free cash flow to reach a low single digits level next year. And on that news, the shares pop more than 5%. Let's bring back Morgan Stanley CIO and Chief U.S. Equity Strategist Mike Wilson, who has a 7,800 target for the S&P next year, but you say that's not the real story. It's really the broadening out. And we had seen the equal-weighted S&P rallying 5 days in a row. Do you see that broadening out, bringing earnings to double-digit gains next year? Or, I mean, if you take out the Mag 7, does it look like that?
Yeah, the way it works is, the way I think that we'll get that performance is the relative spread between sort of and it's really the Nifty 50. It's not just the Mag 7. There's like the high-quality, large-cap companies have been growing quite fast, and the smaller businesses have not been growing at all. That spread is going to narrow, and when that rate of change spread narrows, you'll get relative outperformance of those laggard groups. So once again, those areas would be like consumer goods or transportation stocks, some of the housing related areas, some of the regional banks perhaps, which will benefit from a steeper curve, materials, energy, all these areas that really have not performed for the last several years.
By the way, we took this chart yesterday from John Authors, and it was interesting because, well, yesterday was the 3-year anniversary of ChatGPT, but that's when you started to see the valuations really start to split apart. And you can see valuations for the cap-weighted S&P in blue just taken off, and the equal-weighted just hovering around 20.
That's exactly right, but that makes sense. I mean, because the earnings growth in that blue line was incredible, and so the market's not dumb. The market knows this stuff and it figures it out, and I think the market's not going to be dumb about next year. Now, we could be wrong about our call. Okay, so if we're wrong that earnings growth doesn't recover in these other areas, well, then our call is going to be wrong. But if we're right about our earnings analysis, then that spread should narrow, and that's really the story for 2026.
One of the sectors, though, that we're just talking in the break that you're less enthused about, or maybe even outright bearish, is consumer services.
Yeah.
Why does that get left behind?
So the consumer services has been the winner in the last 3 years. As people stopped spending money on goods from the pull forward during the COVID lockdown, they spent money on experiences and restaurants and travel and everything else. So that's going to come down a bit. The other big variable is immigration. Okay, so that hurts on 2 levels, right? Labor costs will go up for a lot of these service businesses. Okay, and then secondarily, we think real wage increases may improve now at the lower middle income as there's less labor competition because of the restrictions on immigration. Those folks tend to spend more on goods than experiences. So we think that's an interesting trade for 2026.
That's precisely what the Trump administration wants, obviously, and that they tout this sort of comeback in working class wages. The Big Beautiful Bill legislation also should add, we hear from so many guests, a certain amount of stimulus for these corporations into 2026. Do you think that's a big part of it?
Absolutely. I mean, as far as GDP goes, it's probably close to 1% in terms of stimulus, direct stimulus from the Big Beautiful Bill. But if you think about the incentives now to do CapEx, one of the reasons why we're seeing the hyperscalers raise a bunch of capital now, all of a sudden, is because they got to spend the money the next 2 years to get the benefit. I mean, once again, the incentives are, it's like, the Charlie Munger line of, show me the incentives and I'll show you the outcomes. Well, they're getting the outcomes that they want. We want reduced consumption. We want to reduce consumption through tariffs and also maybe some inflation. And we also want to increase investment. So that rebalancing of the economy is very, very important. And there'll be new winners and probably new laggards as a result.
But is there not some phenomenon of crowding out? Because so much of this investment is happening around AI. Crowding out, be it in manufacturing, in energy consumption. In terms of the narrative of broadening out, does that not hamper it a little bit when so much of this economy's resources are being put towards that?
That's true, but remember, think about this. We've had the government doing a lot of the investment for the last 10 years, and private enterprise has not been. So we're trying to reverse that. We're trying to basically use company balance sheets now to invest in the economy. And I think we can all agree we'd rather have companies investing that capital than the government. Nothing against the government, but companies are, they have to get a return on capital. The government doesn't. So I think that's the right strategy. I don't know if it's going to work, okay, but I like that plan a lot better than what we've been doing.
What's the one trade you would put on, for an investor with new cash? Because we always talk to people who say, I love NVIDIA, right? But they already own NVIDIA. What do you put the incremental dollar towards?
Yeah, I think it's the S&P 493, or the equal-weighted S&P looking out 6 months. I think it's areas like consumer goods. I think it's areas like the material space that have a lot of benefit from a lot of this capital spending that's going to be happening. So once again, looking for the areas that have lagged, there are plenty of them. And to your chart earlier, the multiples are cheaper, okay, and the growth is accelerating. So that's a pretty good combination.
In a world, though, where equities continue to hit new highs and participation gets bigger, every now and then you see correlations pop up that maybe you haven't fully paid attention to. I think in the last couple of days, Bitcoin has felt like one of those that has led, or if not leading, has accelerated the sell-off. How much are you now paying attention to the crypto markets to get sort of a gauge of where equities go?
Well, I pay attention to everything, Danny, because you don't want to get caught by surprise. But look, the market has been correcting for 2 months, right? We wrote a note, 2-3 months ago talking about a 10 to 15% correction. People are like, oh, but it's been happening. Okay, we haven't seen 10 to 15% in the S&P, but we've seen that more than that in many of these high momentum areas of the market. And I would say Bitcoin is emblematic of the reasoning for why things have corrected. It's liquidity. Liquidity has become tighter. Okay, the Fed is aware of that. That's why they ended QT. Okay, so that liquidity drain or the lack of abundant liquidity is causing a correction. And I think Bitcoin is a key thing to watch for that measure. In other words, if Bitcoin starts to rally again, that's probably a good sign that liquidity is actually improving again, and then we can get the next leg of our rally.
By the way, we were talking this morning in our editorial meeting about Costco joining a lawsuit against the Trump administration to try and get refunds from the tariffs it's had to pay if the Supreme Court overturns that. Is there anything, you know, in the Supreme Court realm or in the legal realm that you think could trip up this administration in achieving its goals, and therefore also your investment case?
Well, I mean, clearly there's always things that could trip us up that we're not expecting. I'm not expecting the refunds to be sent out, but I'm also not a lawyer, and I'm not close to the situation as probably others are. What I will tell you is, though, this administration is pretty tenacious, and they're not afraid to go back to the appeals court. So I think even if these tariffs get overturned by the Supreme Court, it's probably going to be years before any refund checks go out. It'll be stuck in the courts, okay? And the damage, you know, at this point, the market's already moved past tariffs.
But will it move past it, Mike, if the story turns into a narrative that's bond markets get hurt from that because deficits can't get eaten into and therefore equities don't do as well?
Well, we'll see. We'll see how the bond market reacts. If the bond market doesn't react to that, then that's the bond market saying what I just said, which is there'll never be any refunds. We'll move forward. It'll be tied up in the courts. And that's probably the most likely outcome in my view.
Mike, we're going to leave it there. Thank you for being so generous with your time this morning. That is Mike Wilson of Morgan Stanley. A quick check on the stock market this morning. We've been looking at, again, Bitcoin. That's doing better. This equity market is doing better after ending 5 consecutive days of gains. We are up 0.4%. How's the breath looking? Not great. 300 stocks are down. Just under 200 are up. NVIDIA leads us higher, up 15 points. That's how much is adding to the S&P 500 with some of those other big names like Broadcom and Alphabet. To the downside, P&G having a bad day, one of those consumer staples. A lot of consumer companies not doing well. Visa, Home Depot, Exxon, Chevron, so some oil companies also there in the top losers. A quick check on some of the sectors this morning, too. Energy, I'm guessing, is going to be one of the down ones, and consumer staples. I was just showing you some of the individual names. Tech, though, having a much better day. That is up by 1.3% as NVIDIA outperforms this morning, Matt.
All right, Danny. Coming up, we head to Las Vegas for Amazon's flagship annual Cloud Conference. This is Open Interest.
This is a 15, 16 grams tuna. Then sushi rice is still a little bit warm. So take one, like a very, don't make it too tight. So from now, and very light, like a ball. Put wasabi in the middle. Then my process 1 to 6. 1, this is putting the between the rice air. Then make the 4 fingers curl, make sushi shape, then touch this. 2, then turn. Now that these 2 fingers, top to the bottom, make the sushi shape more beautiful. 3, then, you know, I mean, looks like pushing, not pushing. 3, 4, turn, same way, 5, and 6. So this is 1 to 6.
Tune in to Bloomberg Business Week Daily.
We got to talk crypto.
From the magazine that helps global leaders stay ahead.
What's the conversation around your company?
Bringing you insight on the people, companies, and trends shaping today's complex economy.
Planning very big things.
A new level of premium.
Plus global business, finance, and tech news as it happens.
The floodgates of innovation are going to open up.
You can't fake passion. You either are or you aren't.
Bloomberg Business Week Daily, only on Bloomberg.
Join me each week on Wall Street Week for stories of capitalism from business, markets, economics, tech, and climate. More than what you need to know, it's what you need to think about.
We're at the epicenter of a global realignment on a scale not seen for decades. At the intersection between markets, economics, and geopolitics, a forum for sophisticated conversation. This is Bloomberg Surveillance.
Morning, this is Bloomberg Daybreak Europe. I'm Tom McKenzie in London. These are the stories that set your agenda.
Taking you from the U.S. market's close to the overnight session in Asia, we'll walk you through what you need to know to kickstart Europe's trading day. Live from our European headquarters, we bring you the day's top market-moving stories, unmatched expert analysis, and on-the-ground reporting from across the continent. Tune in to Daybreak Europe, only on Bloomberg Television. Context changes everything.
Let's get you some top calls this morning, the analyst action that we are focusing on. First up, Truist Securities saying Six Flags is showing a real sign of a turnaround. They point to the new CEO, a willingness to close underperforming parks, and a more urgent approach to fix long-standing operational problems. The analysts there note that bankruptcy risk appears to be off the table, at least for the foreseeable future. Those shares up just over 5.5%. Next up, KeyBank Capital Markets, they upgrade T-Mobile. They say that risk-reward looks balanced even as structural and competitive challenges persist. The firm also arguing that sentiment is overly negative and worries about Verizon's comeback are overstated. Shares little change this morning. Finally, Barclays starting coverage of Cloudflare with a buy rating. They say that the company's strong position in cloud, cybersecurity, AI, all of that should keep driving steady market share gains. They also say that Cloudflare's higher valuation makes sense because its roughly 30% growth rate is increasingly rare. Shares up 3%. Matt?
All right, sticking with tech, Amazon's flagship annual cloud conference is underway in Las Vegas. The firm is showing off its all-in-one suite of AI products. Let's head to Sin City, where Bloomberg Tech co-host Ed Ludlow is staying away from the slot machines. Ed, I guess this is what you have to say, right? Do they really have a full suite of AI products that everyone can take advantage of to their benefit?
Yeah, truth is we don't know, right? The accepted status quo is that AWS is the #1 in cloud computing. But the very real question that the street has is AWS the #1 in AI, right? They have very many tools where they say, oh, we have the greatest scale, the best infrastructure. They can leverage NVIDIA GPUs. They have their own in-house silicon, all the things that we'll want to hear about. But it's very sort of piecemeal. When Amazon posted 20.2% growth for AWS in the quarter just gone, the first time they've topped 20% growth on the cloud unit since 2022, they showed tangible evidence that there was demand, real demand, for their own specific AI products. And so that's what everyone's trying to track. Most of the news has not come out here yet, but it's whether we can see evidence that Amazon goes from a cloud provider that hosts other people's foundation models that are genuinely useful in things like agentic AI to showing that it has its own competencies in those fields while warding off silicon threats from Google and its TPU, and also trying to juggle the investments it's made in Anthropic, the partnership it now has with OpenAI, which again is around NVIDIA GPUs, so it's complicated.
It's complicated, Ed, and I just think about the story not too long ago from the Bloomberg News team about just the huge amount of facilities and data centers that Amazon has, some 900 facilities in more than 50 countries. How much of this is a story of also just powering those with AWS and other parts of growth like data centers for the company?
Yeah, I think from a credit perspective, it's very interesting because Amazon is flush with cash. And so one way to look at it is that Amazon's made this pledge to double its capacity by the end of 2027 to almost 8 gigawatts and most of it's AI-specific capacity, right? But at this point, particularly after tapping the debt markets, they have more than $100 billion. And most of the street would look at that and say, we're actually pretty sanguine about the idea Amazon will just outspend everyone to achieve that scale. Again, it comes back to Matt's original question is, do they have anything useful to show for it? They can build and build and build, but again, the story over the past year has been AWS is a place that hosts other people's models. They released their own foundation models a year ago, and the expectation is today, beyond telling us what they're doing with their custom chips and their custom server designs, what about those custom models? Have software companies, all of these great enterprises that rely on AWS, actually been able to do anything useful with that? And are they deriving any real AWS revenue from it?
I got to ask your take on the Apple story. They now have lost like all of their AI employees as OpenAI declares code red. What do you think about the AI space? What are we hear about it on your program today?
Yeah, I mean, like on the Apple side, you know, significant story, but the writing was on the wall, right? John Giandrea is going to step down, actually technically retire, and he'll be in place through the spring in this kind of transition period. John Giandrea led the AI effort at Apple at a time where they've kind of fallen behind, right? We've talked endlessly about how Siri is not the product that Apple wanted it to be, and they're actually going to change the leadership structure. So instead of having one AI chief, basically all of the talent leads in that division will report to 3 different members of the C-suite that go to Tim Cook. Apple, I guess trying to tie the 2 stories together, there were reports that Sam Altman told OpenAI employees in the last 24 hours, it is code red. Everyone needs to focus on ChatGPT, not advertising or the other projects that OpenAI was eyeing. And it probably speaks to this idea, you need one core useful platform. Again, that's highly relevant to AWS here in Vegas because they don't have that. They don't have the consumer-facing tool, nor do they have their own version of an enterprise tool a la ChatGPT. They have Anthropic. They also have a relationship with OpenAI. So, you know, those are all fair questions to ask AWS executives today. Like, they must recognize what's happening in the field.
Hey, Ed, just elsewhere, it's probably worth mentioning, because this story is very highly read this morning, this question of Michael Burry and Tesla. He put on X about 10 minutes ago that he wasn't short Tesla, but still has a narrative that it is too highly valued. One, I think we're going to have to get used to this because now Michael Burry has a Substack. But what is kind of the concern, especially as Tesla continually works through this huge pay package for Elon Musk?
He said on X he does not have a short position in Tesla, right? And there had been lots of speculation on X that he had. You know, the thing about the compensation package for Elon as it relates to the company's valuation is that those goals set for him over 12 tranches in a 10-year period are mandatory. You know, he has to achieve them in order to unlock voting power. And the argument for those that voted, the few that voted against the compensation package, was that it was dilutory for shareholders and that they wouldn't get a return. But at the end of the day, he's got to take the market cap from whatever it is right now, 1 trillion to 8.5 trillion, and sell quite a lot of software. And that, I suppose, will impact the multiple in the long run. But yeah, we haven't had anything official filing-wise from Burry, right? I think he kind of lives in the ether right now.
That is for sure. Ed, thank you so much. Looking forward to your coverage of the AWS conference there. That's Bloomberg Tech co-host Ed Ludlow. And this afternoon, he's going to be joined by the AWS CEO, Matt Garman, first on Bloomberg. Coming up, Bitcoin halts its slide. Global stocks bounce back. But traders are betting on Michael Saylor's strategy or getting burned. That's coming up next. This is Bloomberg Open Interest.
up-to-the-minute news whenever and wherever it happens. I'm Haslinda Amin in Bangkok. This is Bloomberg.
From the world of politics to the world of business. Joe Matthew and Kaylee Lines deliver news, insight, and analysis live 2 times a day, every trading day. Balance of Power at 1 and 5 Eastern, only on Bloomberg.
Used to be, one would say, what's that got to do with the price of tea in China, when they wanted to poke holes in the relevance of something. Now, though, if you're in tune with how events around the world affect each other, it becomes clear that the current going rate of tea in China has a lot to do with a lot of things, not just tea things either, but tariffs, franchises, and IPOs. How much?
Bringing you up-to-the-minute geopolitical news whenever and wherever it happens. I'm Stephen Engel at Japan's Akasaka Palace in Tokyo, and this is Bloomberg.
This is Bloomberg Open Interest. I'm Matt Miller. Quick check of what's going on with stocks. We have the S&P 500 gaining 1/3%. The NASDAQ up 0.75%. The small caps gaining as well as the VIX comes down to a 16 handle. Take a look at what's going on in terms of these stocks. NVIDIA right now up 2.5%, and that trade powering, obviously, the indexes. Tesla, which Michael Berry is not short, down 0.5%, a little bit less than that. Boeing, which says it's going to be cash flow positive this year, getting a 7.5% boost from that announcement. And then Dell Technologies up 3.25% after Michael and Susan Dell are pledging to give more than $6 billion to help fund children's investment accounts, these Trump accounts. Although in this case, you can be up to 10 years old to get hold of that money. It's not clear why Dell shares are moving. Just maybe investors feel like being charitable as well because it's Giving Tuesday. They want to help bid up the stock for the sake of the Dells after giving such a gift. Or maybe they think there's going to be some kind of PIK here. Bitcoin right now up about 2.9%. So Bitcoin gaining after the drops we've seen over the last couple of days. And as a result, you also see Strategy. Used to be called MicroStrategy, but to confuse us even more, they just named it Strategy. Pretty soon it'll just be called S, right? Bitcoin, by the way, holding steady after this week's long slide. Investors in Michael Saylor's S are getting burned with leveraged ETFs tracking Strategy down as much as 80%. Bloomberg's Anna Herrera joins us now out of London. So Anna, tell us the story really from the beginning, from the podcast, let's say on Friday, of what's been happening with Strategy and why it's done so poorly.
You know, Strategy for a long time has just been a reflection of Bitcoin in a way. It's been a way for retail investors to invest in Bitcoin without investing in Bitcoin because Strategy just accumulates and hoards Bitcoin. And that does quite well for the company when the price of Bitcoin goes up. But when we see huge slides, like over the past month or so and a half, Bitcoin has dropped more than 30%. That gets reflected in the Strategy share price. And so there's been a concern that at this point, Strategy finds itself in a position where it might be selling, so have to sell some of the Bitcoin. They've tried to assuage concerns by saying that actually, no, they're setting aside some money, but still people aren't super convinced. Today, you know, the market is steadying a bit, and but there's still some signs that people are concerned and investors are still very cautious.
Hey, Anna, just quickly here, less than a minute, but for this overall Bitcoin market, the volatility that we're seeing, how much of it is behind some of these digital asset treasury companies versus just general risk off?
It seems it's more general risk off as of now. When you speak to investors, they mainly point to sort of the general macro things that you would look at in other asset classes like equities. People are saying, you know, we're waiting and seeing what the Fed decides next week. Yesterday, the price of Bitcoin went down largely possibly off of what happened with the Bank of Japan. So it's less tied to crypto as an industry, which is what was happening in previous cycles, and more what's happening in general.
All right, Anna, thanks so much for joining us. Anna Herrera covering crypto for us out of London. Tune into Bloomberg Crypto at noon today, by the way, because the CEO of Strategy, Phong Le, will join Katie Greifeld. This is Bloomberg.
such an incredibly exciting moment with AI. It is really the most profound technology of our lifetimes, and I think it has the potential to help us rethink literally everything. The potential for economic impact, societal benefit is honestly boundless. When we think about the economic impact for Europe in particular, it's around a 1.2 trillion euro estimate of the productivity growth that can be unlocked. This platform shift that we are living through, I think, is going to create untold amounts of value for the world, but also for businesses and for economies, which is why I'm incredibly optimistic in this moment for Europe, but also for the whole world.
How do you think about job losses or safety for some of the AI tools?
You know, I hear the anxiety, and I understand the anxiety about jobs. I think that we are certainly going to live through a massive transition about how people learn to work alongside these tools. I mean, the reality is I do think there'll be some number of jobs that are displaced. I think it is a smaller number maybe than some anticipate. We estimate it's around 7%. And I think what's important is that we have programs that help those 7% transition into new fields of work. I think what is more likely is that most of us are going to learn to work alongside these tools. So we estimate about 2/3 of us. If you think about the tasks you do in your daily life, when you look at every industry, there are administrative tasks that are happening everywhere, and that's what AI is most helpful in improving.
Key investors, top executives, global innovators. Join me for in-depth conversations with the biggest newsmakers on the day's top stories. Insight with Haslinda Anim, only on Bloomberg.
U.S. jobs numbers are released. Bloomberg has the report under surveillance with crucial data and expert analysis at terminal speed. Nobody covers Jobs Day like Bloomberg.
News on the Hour, sponsored by Progressive Insurance.
I'm Vicki Barker. U.S. Envoy Steve Witkoff is handing the revised U.S. peace plan for Ukraine over to Russian President Putin this hour, but there's skepticism in Ukraine. Here's the BBC's James Waterhouse.
President Zelensky says he is taking these U.S.-led diplomatic efforts absolutely seriously, but has also accused Moscow of talking up its battlefield progress after Russia's defense ministry reported the captures of Vovchansk in Ukraine's Kharkiv region and Pokrovsk in the east. The Kremlin has once again said it is open to talks, but doubled down on wanting to achieve its military aims. Vladimir Putin seemingly still believes he's winning this war, as he shows little sign of compromise.
Ukrainian President Zelensky and many European leaders fear the final plan will reward Russia for invading Ukraine, which they fear could set a dangerous precedent for the entire region. Will we ever get to the bottom of that second U.S. strike on a suspected Venezuelan drug smuggling ship? The Washington Post reports it was a mop-up operation, illegally finishing off wounded survivors of the first strike. The commander involved is briefing lawmakers behind closed doors later this week, but former Attorney General Alberto Gonzales tells CBS Mornings he has doubts.
We have to remember that the President of the United States controls the Department of Justice. So whether or not there would be any kind of investigation or a thorough investigation based on past experience, people have questions based on past experience. People have questions about that.
Gonzales served under President George W. Bush. On this Giving Tuesday, tech billionaires Michael and Susan Dell say they'll deposit $250 into individual investment accounts for 25 million American children. That's a total of $6.25 billion pledged for the program created as part of President Trump's tax and spending legislation. As the Dells put it,
we've seen what happens when a child gets even a small financial head start. Their world expands.
The real power of these accounts is that anyone can contribute. Parents, relatives, friends.
Now, it was supposed to be a slam dunk in redder than red Tennessee, but today's vote in Tennessee's 7th congressional district has turned into a cliffhanger. CBS News correspondent Nicole Valdez spoke with the Democratic candidate, State Representative Afton Bain.
Why do you think that you have a shot at winning in a district where President Trump won by 22 points?
The voters are tired.
They're tired. I have routinely said throughout the campaign, I don't care who you voted for. I don't care what political party you belong to. If you are upset with the cost of living and the chaos of Washington, then I am your candidate.
Polls put the race at too close to call. This is CBS News. If humans ever make it to Mars, how will they build their stations there? Reporter Brad Gibson on one theory.
Take Martian dirt, add bacteria from Earth, and maybe you can make concrete-like blocks instead of sending materials to the red planet. Shiva Hashtanat is a materials engineer at Polytech University in Milan, Italy.
We do not need any kind of additional material. Before the astronauts really go to Mars, the rovers can do the construction part.
Can you make concrete in gravity? Scientists aren't sure, but it's a clever approach.
The challenges is always there. You just have to put yourself into it, no matter what.
Brad Gibson for CBS News.
Meanwhile, back here on Earth, Britain's King Charles has formally stripped his disgraced younger brother Andrew of his last remaining royal titles. Andrew Mountbatten Windsor has been ejected from the Order of the Garter and is no longer a Knight Grand Cross of the Victorian Order. I'm Vicki Barker, CBS News.
This is Bloomberg Intelligence with Scarlett Fu and Paul Sweeney.
How do you think the Fed is looking at tariffs, the uncertainty of tariffs?
Let's take a look at the sectors and how they performed.
A lot of investors getting whipsawed every day by news events.
Breaking market headlines and corporate news from across the globe.
Could we see a market disruption, a market event?
Are people just too exuberant out there?
You see some so-called low-quality stocks driving this short-term rally.
Bloomberg Intelligence with Scarlett Fu and Paul Sweeney on Bloomberg Radio, YouTube, and Bloomberg Originals.
Good Tuesday morning from the Bloomberg Interactive Broker Studio in New York City to our worldwide audience. We are streaming live on YouTube as well, so check us out there. This is the Bloomberg Intelligence Radio program. We have Alex Semenova sitting in for Scarlett Fu today. Scarlett's out on assignment. I believe she'll be back on Friday if her out is up to date. Coming up, we're going to check in with Eric Balchunas, senior ETF analyst for Bloomberg Intelligence, to get us his thoughts on what's happening in the ETF space and the crypto side as well. Of course, that's all contingent upon the Acela train being on time from Philadelphia. Poonam Goyal, senior U.S. e-commerce and retail analyst, is going to give us thoughts on a little roundup here of the Black Friday, the Cyber Monday, the Giving Tuesday. I'm not sure what we're doing here, but retail sales, how are they kicking off this holiday season here? Nancy Tengler, CEO and CIO of Laffer Tengler Investments, get her market outlook. Then Geetha Ranganathan, here's the question. She's the media analyst at Bloomberg Intelligence. I'm like, Geetha, you got to get this Warner Brothers Discovery deal done here. I mean, somebody's got to step up the plate here. The Paramount, the Comcast, I'm not sure who's still in it. Netflix is said to still be in it here. Second round bids were due yesterday, so we'll get the latest there. So we got a lot coming up in the next 2 hours. Let's kick it off with Lisa Mateo and a Bloomberg Business Flash.
You got it. And we have stocks advancing. This is after that sell-off in cryptocurrencies and Monday trading. Let's take a look at Bitcoin right now. It's up, look at that, more than 4% at just above 89,000. We go to NASDAQ futures up nearly 1%, 221 points. S&P 500 up 0.4%, 30 points. And the Dow up 0.3%, 148 points. We have the 2-year yield 3.52%. That's down 1 basis point. The yield on the 10-year 4.11%, and that's up 2 basis points. The Bloomberg Dollar Spot Index is little changed. Over to company news. Boeing will generate cash on an annual basis in 2026. That's according to its CFO, who said it expects positive free cash flow to reach the low single digits next year. Its shares are up more than 7%. Warner Brothers Discovery fielding a second round of bids from Netflix, Paramount, Skydance, and Comcast, and that includes a mostly cash offer from Netflix. Paramount's offer reportedly includes debt financing from Apollo. Sources are saying, though, the auction could wrap up in the coming days or weeks. We have Warner Brothers Discovery shares up about 1%. And the Trump administration taking an equity stake in a chip startup with ties to Intel's former CEO, Pat Gelsinger. It'll inject up to $150 million into X-Lite to bring more chip-making capabilities back to the U.S. Now, in return, the government would get an equity stake that would likely make it X-Lite's largest shareholder. For on-demand news 24 hours a day, subscribe to Bloomberg News Now, wherever you get your podcasts. I'm Lisa Mateo. That is your Bloomberg Business Flash. Alex and Paul.
All right, Lisa Mateo, thank you so much. We appreciate that. Alex Semenova sitting in for Scarlett Fu. I'm Paul Sweeney. We're live here in our Bloomberg Interactive Broker studio, streaming live on YouTube as well. Market Drivers today is brought to you by IBKR. Financial advisors switch to Interactive Brokers for lowest cost global trading and turnkey custody solutions. No ticket charges and no conflicts of your interest. Learn more at ibkr.com/RIA. Let's take a look at some of the stocks on the move today. I'm Paul Sweeney alongside Alex Semenova, and we're joined by Bloomberg's Bailey Lipschultz. Bailey, what are you looking at?
Yeah, I want to start with MongoDB. I can't tell if it's my favorite name or my least favorite name. It kind of weirds me out. Ticker MDB right now up 25%. Nice. Guys, this is a $33 billion company. This isn't a kind of small niche player. They operate in the infrastructure software space, so trading at the highest level since March 2024, so some size and scope there. This comes after the company beat expectations, raised its full-year forecast. A number of analysts kind of pounding the table and raising their price targets, saying they're significantly outperforming expectations. Another quarter delivered to the upside. This is a company that when you look at how it's traded historically after earnings, pretty volatile. So right now up about 25%. Quarter before jumped 38%. Quarter before that 13%. So some wild swings again for a company in that infrastructure software, automating or helping work as an open source database for automating, monitoring, and deploying backups.
Bailey, another company that is seeing a pretty big swing here. I see up 20%. Credo Technology. What's going on over there?
Yeah, stocks, ticker CRDO. This comes after, as analysts point out, another blowout quarter. So good earnings for some of these companies. So they're in the communications equipment space. So they make wires and chips. Another company that maybe people had never heard of before today. But the stock trading at an all-time high right now. Again, up more than 20%. Ticker CRDO. This is a company that, again, raised its outlook, beat earnings on the top and bottom line, really showing that they're continuing to ramp up customer demands. Barclays calling out that their new product solutions are layering on to growth in 2027 and beyond. So Wall Street certainly likes companies that are delivering. And guys, another company that's larger than $30 billion, so not picking small potatoes.
And Bloomberg Intelligence has research coverage of this. Jake Silverman in New York is our tech analyst covering this stock. If you want to read the research on Credo, BIGO is the ticker to get you to Bloomberg Intelligence. One more,
Boeing. Up right now, almost 8%. Ticker BA, trading at the highest level since November, but biggest intraday gain since April. This comes after the company talked up the expectations for generating cash again in 2026. Again, it's been a rough go for Boeing over the last few years.
I think they're out of the. I'm gonna say in the last 9 months they're out of the doghouse.
Out of the doghouse.
Paul is a Boeing fan here.
I am a Boeing fan. But
House of Mouse. You don't fly though.
I don't unless I get paid. I'm not flying anymore unless people pay me to fly. So some good news there.
Yeah, positive news again. Talking up expectations for positive free cash flow, low single digits next year, according to the CFO in a presentation at an investor conference. Again, company that is trying to right the ship, if you will, seeing steady demand improving for their 737 MAX, 787 Dreamliner jet, kind of trying to again get ready to deliver on free cash flow. Analysts expecting Boeing to generate $2.46 billion in free cash flow next year. So that would be an uptick from the first cash outflow 9 months earlier this year.
That was a long, multi-year slog for Boeing to kind of right the ship after those crashes and whatnot.
I mean, it's been one of those names that when you talk to investors, it's like, if you're going to invest in plane-making companies, America's not going to outsource that.
No, exactly. So, all right, very good. Bailey Lipshaw's covering all the equities for Bloomberg News. For more conversations like this, subscribe to our Stock Movers reports. Listen 4 or 5 minute audio reports on the biggest winners and losers in the stock market. Subscribe to Stock Movers on Apple Podcasts, Spotify, or anywhere you listen. Mailing it in today, phoning it in today, Eric Balchunas.
The one and only.
I mean, usually we get him in studio, folks. I mean, we pay for him to get the big executive car on the Acela train up from Philadelphia. We cater to his every need to get him here in studio, but he is mailing it in today from Philadelphia. But that's okay, because we love just chatting with Eric Balchunas here. Eric, what are your ETF Bitcoin folks telling you these days with a 30% decline in Bitcoin these days?
Yeah, so, this sell-off, I think, was a bit of a shocker, because a lot of the ETF issuers I talked to were like, man, everything was going so well, the performance was good, all the catalysts were good, the Fed's about to probably cut a lot next year. There was really nothing wrong. It reminds me of that, the only thing to fear is fear itself. And it seems to me that a couple things happened. One, there was some issue with the market maker. I can't prove it, but there was, I think, a little bit of a market maker maybe caught with too much leverage. That caused a little. And then a lot of these OGs who have been in Bitcoin since like 10 years ago, and now they're older, they probably want to do adult things like buy a house or something. And I think a lot of them saw the 110,000 to 120,000 start to be a range, and it wasn't going to go any higher. So I think there was what we call the silent IPO. A lot of them are like, okay, I'm going to cash out. And that sort of, I think, put a ceiling on the price. The ETF investors have held up their end of the bargain, though. I mean, there was a $3 billion of outflows in the past month, but that's after a 35% decline. And that's only 3% of assets. So they're holding up, all told, $22 billion into the Bitcoin ETFs this year, which is a lot of money. So a lot of this sell-off is, as I tell the crypto natives, the call is coming from inside the house. They try to put it on the ETF sometimes, but this is not the boomers. This is them. And I think, Bitcoin does this. It has these steep sell-offs. So we'll see where it goes from here, but it's certainly not the year a lot of people expected.
Eric, we're really seeing the perils of retail investors having access to these highly risky products play out. Do you think that the industry has gone too far by offering them to mom and pop investors?
So I don't think so. I think Bitcoin has paid its dues. The one thing about Bitcoin I think you have to respect, and I did before I really learned more about it, I always respected its ability to come back from near-death experiences. Because if you look at tulips or beanie babies, which it gets compared to, they were one and done. They had one big rise, and then they crashed, and that was it. People moved on. Bitcoin's had 4 or 5 of these where it's come back and hit all-time highs. You know what else has done that? Amazon, Apple, Berkshire, Florida real estate. Only things that are really worth a lot have come back from getting punched in the face like that. So by the time the ETFs came out, it had gone through 4 or 5 of those. And I think that's where it earned the right to be in the ETFs, in my opinion. And I think when you think about the usage of Bitcoin in particular, it is a scarce asset that is used as a store of value like digital gold. So I do think, BlackRock and others saw the same value. Now, you get to these other coins, they start to resemble little tiny tech stocks from the 90s. We don't know what's going to happen, Solana, Ether. Then down the line, they're launching a Chainlink ETF today. The further you get away from Bitcoin, the less people will care. But I'm with you. The ETF industry puts a lot out there. It is kind of like a big tent, and there are risky products. So we would caution everybody just to make sure you know what you're buying. But to me, Bitcoin, spot Bitcoin is, I wouldn't call it highly risky, but we would we dub it hot sauce.
Yep.
Anything that has this kind of volatility, just treat it like hot sauce. Don't allocate your whole portfolio to it. Just dabble in it a little bit, at least at first.
30 seconds left. Eric, what's the theme you guys are thinking about for 2026 in the ETF space?
I'm working on my outlook now, and I'm going to unveil the title for you, which is that ETFs live in the dream, but reality checks await.
Okay.
I think there'll be a few bumps in the road next year. This year was almost perfect. Record flows, record launches, record volume. Next year, you could see a couple leverage ETFs blow up, could see the market shakier. Could see some issues with the mutual fund share class having some tax contagion. We go over those in the note. But all told, ETFs are really hitting their prime. I don't see anything stopping that. But there'll be a couple issues next year, we think.
All right, Eric, thanks so much for joining us. Always appreciate getting some time from you. Eric Balchunas, Senior ETF Analyst at Bloomberg Intelligence. And folks, this is a brand new asset class for us on Global Wall Street over the last, I don't know, 6, 7, 8 years. It seems to have just exploded onto Global Wall Street. And I can say, without a doubt, Eric Balchunas and his team provide some of the best investment research as it relates to ETFs anywhere. He's been doing it since the inception of ETFs here, more than kind of a decade ago at Bloomberg, and now he's bringing his research to Bloomberg Intelligence. So it's a good stuff. BI Go, type in, and then you type in or BI space ETF, and that's where you'll get all the good stuff there. S&P up 32 points. That's a 0.5%. We're making some gains there. The NASDAQ doing a little bit better here, up about 220 points. That's 0.9%. So pretty solid move across the board. And the VIX down. We're now at 16.5. This is Bloomberg.
Markets, headlines, and breaking news 24 hours a day at Bloomberg.com, Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
this Bloomberg Business Flash brought to you by Oracle. Attention growing businesses. Oracle offering to cut your current cloud bill in half if you move to Oracle Cloud Infrastructure. For new U.S. customers with minimum financial commitment, see if your company qualifies at oracle.com/Bloomberg. Well, you've got Bitcoin posting some gains. It's up about 4.5%, just above 90,000. That's after slumping as much as 8% yesterday. It's fallen almost 30% since hitting a record in early October. Lower Bitcoin prices, though, taking its toll on American Bitcoin. The Bitcoin miner, which counts Eric Trump as co-founder and chief strategy officer, its shares are falling about 43%. Another stock on the move, it's Genix Therapeutics. It's sinking about 48%. That's after an early-stage clinical trial data for a prostate cancer treatment disappointed. And meanwhile, Novo Nordisk planning a large study of its next-generation obesity shot in children. It's a sign that the company's moving forward despite disappointing results in other trials. Let's go to NASDAQ futures, up 0.8%, 199 points. The Dow up 0.4%, same for the S&P 500. The two-year yield, 3.52%. That's down 1 basis point. The yield on the 10-year, 4.10%, and that's up 1 basis point. Where the Bloomberg Dollar Spot Index is little changed. For on-demand news 24 hours a day, subscribe to Bloomberg News Now. Wherever you get your podcasts, I'm Lisa Mateo. That is a Bloomberg Business Flash. Alex and Paul.
All right, Lisa Mateo, thank you so much. We appreciate that. Alex Semenova sitting in for Scarlett Fu. I'm Paul Sweeney. We are here on the Bloomberg Interactive Broker Studio in New York City. We're streaming live on YouTube as well. Check us out there. Cyber Monday, it's a thing. A lot of people spending a lot of money at the click of a button. Let's get some of the data here. Poonam Goyal, Senior U.S. E-commerce and Retail Analyst for Bloomberg Intelligence, joins us here. Hey, Poonam, talk to us about Cyber Monday. What were some of the trends you guys saw there as more and more people continue to shop online?
Yes, so people definitely came online to shop. The results came out this morning. According to Adobe, sales were $14.25 billion. That's just slightly ahead of the $14.2 billion estimated, so a 7.1% gain. So I'd say, overall, things were largely, to me, as expected, maybe slightly better. We saw deals over Cyber Monday, which drew customers. But in all honesty, Paul, we looked at 81 brands online yesterday. And what we found was that the majority of them, the deals were in line to last year. So we did see retailers pull back on discounting because there's just more costs that are built into this year from tariffs.
Consumers buying, what were they buying up Cyber Monday, and what is that telling you about the health of the consumer? Was it big ticket items? Were they trading down to private labels?
Yeah, but we saw electronics still being very powerful this holiday season. The Apple AirPods were cited to be among one of the top sellers. We also saw the PlayStation in high demand. People were shopping for fashion apparel. They were buying for the home. Across the news that we read and what we've seen, sneakers, athletic wear was probably a little lower than expected. But once again, that's not really an item that you often put under the tree as much as you buy for yourself. So we think that could pick up.
Talk to us about I'm thinking about some of the folks that really do a good job online. Walmart, Target, how are those guys? How are they performing?
Yeah, so Walmart and Target, we think both actually had a good holiday season, but in terms of promotional activity, we think they were largely in line with last year. That said, we were in the stores on Black Friday. We monitored their deals online over the weekend and to yesterday. And we think their deals were good, but they weren't aggressive, or more aggressive, I should say, than last year, which is in a way a good thing because it'll help their margins, right? We think margins this holiday quarter won't suffer because retailers had to discount more aggressively than they did last year.
How are you thinking about the retail sector going into next year? Do you expect that the strength will continue?
I think it'll be tough. We've seen shoppers come out to shop for event-driven buying, whether that's back to school or holiday or birthdays or events. They're coming out and they're spending. But once we exit holiday, there is really no catalyst in January to shop. So we do think that you will kind of see the normal lull that you see after the holidays also creep into 2026. But next year, it's really going to be more about what happens with pricing. We've seen retailers be able to hold prices steady or raise them just slightly into the back half from tariffs. But next year, will they have to implement bigger price increases because all the inventory will likely be impacted by some sort of tariff into next year?
that's kind of where I want to go, Poonam, just lastly here. I mean, I don't know how to think about the tariff impact, because it seems like we haven't really seen it too much at the consumer level. And maybe that means that, you know, the retailers, the distributors, that they've kind of taken it in their margin. And the tariff is what it is. That doesn't look like there's going to be a second round of tariffs next year. So the tariffs are what they are in the economy. But you're saying that maybe there still could be some impact next year?
Well, if you think about when the tariffs were implemented, it really affected the back half of this year, right? So when you go into the first half of next year, you're up against comparisons where there really wasn't a tariff impact. So that's one thing that you have to deal with. The second thing is that prices are going up. I'm not, you know, we did see select price increases. In fact, you know, Nike came out and said that they're directly raising prices, but on select goods. And I think that's the approach that most retailers have been taking is we'll raise prices where we can, and where we know we can't, we'll absorb it, or we'll offset it otherwise through efficiencies and supplier kickbacks. So that's what we'll continue to see happen next year. But there is still some pressure. Now we'll see what happens next week, right, where the court ruling could be that the tariffs are just unwarranted and are unlawful. And if that happens, then I think we have some positive surprises in for us next year.
And then somebody's got to pay back somebody at some point for those tariffs. I don't know how that's going to play out, but that's next week. We'll worry about that next week. Poonam Goyal, thank you so much. We appreciate that. Poonam Goyal, she covers all the retail stuff for Bloomberg Intelligence. She was one of, I'm going to say, the first analyst we hired.
Wow.
16 years ago at Bloomberg Intelligence when we were starting the research business. I mean, I think she was the first person I hired, so that was pretty cool. Still there, doing a great job. We appreciate checking in with Poonam. She actually Friday walking all the stores, checking out the deals, see what people are buying. That's what retail analysts do.
On the ground reporting.
Yep. So so we had Dana Telsley. She was in here Friday at surveillance, but then she was heading out to the Paramus Mall, or Garden State Mall in Paramus, to do her thing. That's what the retail analysts do.
Yeah, seeing the crowds, actually getting a sense of
Yep, feet on the ground here. S&P 500 year-to-date up 15, 16%. The NASDAQ up 20, 21%. Bonds giving you high single-digit returns in 20, 25 years. I mean, it's a good year, folks. Bumpy year, but a good year. Let's see what we do going forward. Nancy Tengler joins us here. She is the CEO and Chief Investment Officer for Laffer Tengler Investment. She joins us here in our Bloomberg Interactive Brokerage Studio, which is saying something because she is in Scottsdale, Arizona, one of my favorite places in the world. And this time of year, it doesn't get any better than Scottsdale, Arizona. So you're coming to wet, rainy New York. We appreciate it. Nancy, what do you do for 2026 as an encore for what was really for investors a very good, yet a bumpy, yet very good year, 2025?
I think you shift a little bit, but I think you stay long the AI and the derivative trade for AI. And that's what we've done. We've positioned our portfolios for that. We were buying last week. It's always hard when the market's unpredictable and uncooperative, but we did. And that's what we were doing in March and April. So we'll continue to do that as we get the opportunity with corrections, because we think this is a secular bull market.
Nancy, we've been seeing the first batch of Wall Street outlooks hitting our desks, and it seems like people are ever optimistic going into 2026. Are there any risks that you're thinking about that people are probably overlooking?
I'm not sure I'm that clever, Alex, but there are risks. I mean, I am concerned about the center of the AI activity, which is OpenAI. I'm worried that there might be overextension there, but Satya Nadella, CEO of Microsoft, said, you know, data centers are fungible. I don't know that it's quite that simple, but I do think that's part of the analysis that has to be considered. It will be something exogenous that none of us are thinking about, or some policy misstep like we had earlier this year with the tariff launch.
We had, third quarter earnings were very good.
Very good.
Second quarter were good. I mean, is the earnings environment out there, the earnings projections out there, are they good enough to support this market, do you think?
I do. Okay. I do, Paul. I mean, I was managing money in the 90s. I just wrote a piece, hat tip to Ed Yardeni, the bubble, you know, the bubble in Bubble Talk. This is not that, at least not yet. We think back in the 90s, the companies that were driving the valuation moves up were companies with contracting earnings. The companies that are driving it today do not have contracting earnings. They're growing at about 18 to 20%. And I think that continues for some period of time because they're much different companies. They're not one-dimensional. They're multi-dimensional with strong balance sheets. Yes, now you're starting to see some utilized debt, but in the 90s, the CapEx surge was all decade, and we're just now getting started. So I think there's room And I think this is a much more transformative set of technologies, not just AI, but robotics and space and nuclear and quantum. So those are areas that we're focused on. We just launched a thematic portfolio. That shows you how optimistic we are about the technology.
How dependent is your constructive outlook for next year on Fed policy and what officials do next week and going forward? Do you think they need to keep easing for us to see equities go higher?
So Paul probably knows. I've been pretty critical of the Fed. I think they've been wrong at every turning point, Alex. And I think we will get a cut, and I do think that Fed will become more dovish. I don't know that we need it. In the 90s, we had a Fed funds rate of 5%. 10-year was at 7 to 8, I think. So I'm not concerned about that. I think it hopefully will eventually help housing, but I think this administration has to think about some way to provide regulatory relief to the builders and to the buyers of housing, because interest rates have simply not come down as the Fed has cut rates. At least the 10-year has not. So it's not an important input for us. We look at it and we consider it. It matters much more to our bond team, of course. Yeah.
You published your 6 stock picks for 26, 6 for 26. Walmart is one of them.
Yeah.
That's a little bit, usually we talk technology with you a lot. Talk to us about Walmart. And it's moving its listing to the NASDAQ, so I guess it wants to get a little bit more of a techie feel to it. How do you think about Walmart?
Paul. I mean, that isn't the sole reason.
Yep.
It's been the poster child for our investing theme of old economy companies that have pivoted to the technologies, and they've pivoted to all of them. So if you think about order fulfillment, 30% of orders get delivered in 3 hours. 50% of fulfillment is automated, and so they've been a big utilizer of technology in every aspect of their business, improving margins, same-store comps, and they've attracted a higher income buyer. So we think, we've owned it for a long time, probably should have been in the portfolio last year, but it is in this year, and we're looking forward to seeing what the new team, the new CEO, as well as McMillan's oversight will provide for investors.
Is there one single indicator that you're watching right now going into 2026 that is driving your optimism? Is it earnings? Is it productivity? What are you looking at?
It is productivity, Alex. I mean, we've been talking about for over 4 years because that's what drove the 90s economy, even with higher interest rates and higher inflation. And I was there. And so you see it, you feel it. Productivity is improving. And if you think about how overstated the jobs numbers were, it was like to the tune of 1.7 million over 2 years. That means the productivity numbers were even better. And we're seeing it at company level. It's not just cost cutting. It's improved product development, customer experience. We're seeing it in pharmaceuticals and in financials, fraud detection. So AI and ancillary technologies, cloud computing, are really helping companies become doing more with less, and that's productivity.
Nancy, thank you so much for joining us. We appreciate you coming in the studio. Nancy Tengler, she's the CIO and Chief Investment Officer, Laffer Tengler Investments, joining us live here in our Bloomberg Interactive Broker Studio. Kind of holding on to the gains here, barely. S&P up 13 points, the Dow up 55 points, and the NASDAQ leading the way up 140 points. That's 0.6%. That 10-year Treasury, let's call it 4.1%.
markets, headlines, and breaking news 24 hours a day at Bloomberg.com, Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
From the Bloomberg Interactive Broker Studio, I'm Lisa Mateo. Stocks, well, rebounding. That's after a shaky start to December. NASDAQ up 0.6%, 160 points. The Dow rising 0.2%. Same for the S&P 500. Let's go to the yield space. The 2-year, 3.51%. That's down 1 basis point. The yield on the 10-year, 4.09%. That's up 1 basis point. We have COMEX gold down more than 1% at $4,222 an ounce. Brent crude falling about 0.2%, $63 a barrel. We have WTI crude about $59 a barrel. The Bloomberg Dollar Spot Index is little change. The Japanese yen weakening by about 0.3% at 155.95 against the dollar. Bitcoin rebounding up more than 4.5% at just above 90,000. Over to company news. We have shares of Bayer hit the highest level since January 2024. Its shares are now up about 13% in Germany. After President Trump's administration, they urged the Supreme Court to take up the company's appeal in thousands of Roundup weed killer cancer lawsuits. And Michael and Susan Dell will give 25 million American children $250 each to jumpstart an investment account for their futures. The $6.25 billion gift will build on the Invest America initiative. Let's head to earnings and go to shares of Signet Jewelers. That's a power of retailers like Kay, Zales, Jared. Their shares falling more than 3%. The company did beat quarterly earnings expectations, but projected a difficult holiday season. After the close, some action from American Eagle Outfitters, CrowdStrike, Marvell Technology, and GitLab. For on-demand news 24 hours a day, subscribe to Bloomberg News Now, wherever you get your podcasts. I'm Lisa Mateo. That is a Bloomberg Business Flash. Alex and Paul.
All right, Lisa Mateo, thank you so much. We appreciate that. Alex Semenova sitting in for Scarlet Food today. I'm Paul Sweeney. We're live here in our Bloomberg Interactive Broker Studio, streaming live on YouTube. We are waiting for a huge M&A trade to be announced. Warner Brothers Discovery with an enterprise value of about $90 billion. It's up for sale. Second round bids for the company were due yesterday. We understand that it's Netflix, it's Comcast, and of course it's Paramount, Skydance, and all that kind of stuff there. So Geetha Ranganathan, she is the senior media analyst for Bloomberg Intelligence. Geetha, what's the latest there on Warner Brothers Discovery? Because it seems like this is a company that wants to be sold and be sold quickly.
Yeah, absolutely, Paul. I mean, things seem to be definitely intensifying. So the second round bids were due yesterday. The reporting so far seems to suggest that Netflix has mostly a cash bid. That's a little bit of a surprise, given that, you know, when you compare Netflix with both Comcast and Paramount Skydance, obviously that stock has the most value. They're trading at almost 30 times forward EBITDA compared to a Comcast, which trades at about 5 times. So obviously, I mean, it just goes to show that Netflix is very, very interested. There was obviously some, speculation earlier whether they were a serious bidder or not. I think this kind of puts that to rest. The offers this time are binding, means if the board likes something that it sees, they can absolutely go ahead and bring this whole process to a conclusion pretty quickly. So right now, just waiting to hear on the actual numbers. We haven't heard any reporting on the actual bid numbers themselves. Warner Brothers, of course, looking for $30 a share.
Geetha, Bank of America has a note that calls the bidding war for Warner Brothers, quote, industry realignment. Is that a fair characterization? And how do you see this bidding war transforming the industry?
Absolutely agree with that. I mean, you have Warner Brothers, which is one of the most iconic studios in Hollywood. You have a great streaming service in HBO Max. You just look at the Warner studio this week this year at the box office. They've had an absolutely phenomenal run. So they're leading with about a 28 to almost 30% share of domestic box office. So this is a huge studio that could obviously, or a huge company even, that could, completely reshape the media landscape. And it is transformative in many, many ways. So if you think about, Paramount Skydance's streaming assets right now with Paramount Plus, they have about 70 million subscribers. You add HBO Max, you get over 200 million. Same is true for Comcast. This is kind of an existential deal, I would say, for both those companies. And absolutely transformative. So, you take Warner Brothers and Paramount Skydance, for instance, if those two companies combine, that basically then becomes the second largest media company after Disney. So again, huge, huge things at stake here for all of these three bidders.
How about valuation here? The company has said in the past that they would like $30 a share. The stock is trading at just north of $24 a share. John Malone, the company's chair emeritus, and of course, one of the biggest deal makers in media and telecom over the last 50 years, he says that number is, quote, possible. How do you think valuations can shake here? What's the price that's going to clear, do you think?
I think it's definitely going to be above $28, Paul. So we know that, you know, when all of this had started, Warner Brothers was trading at about $12 a share. We're already up to $24. We know that in the last bidding round, Paramount Skydance offered close to about $24, which was rejected. Now, if you just think about the two parts of the business for Warner Brothers Discovery, you have the TV networks business, again, throwing out a lot of cash, but not necessarily big in terms of valuation. I mean, this is a melting ice cube. You know, the multiple that you would slap on this part of the business would be maximum about a 4 or 5x. But then you think about the streaming and the studio assets. Now, that is where you have your scarcity asset. You have a lot of the IP sitting there. You have a streaming business that is turned profitable, that could become extremely profitable over the next few years. And so that's where most of the valuation is going to be. And, you know, we ran some numbers. We think that just the streaming and the studio portion of the business alone could be worth about $28. So when you think about that $30 per share that, you know, John Malone says is possible, we absolutely think yes.
Geetha, can you please talk to us a little bit about what some of the long-term strategic advantages will be for Warner Brothers when this deal closes, whoever the final winner is?
I think for the final winner, of the Warner Brothers asset, one thing is it obviously completely transforms the business in terms of, increasing revenue, increasing scale, increasing EBITDA. But I think the big thing that everybody is looking for really is the synergy number. And if you think about, Paramount Skydance, which is really looking to acquire all of Warner Brothers, so not just the studio and streaming, but also the linear networks, the synergies are going to be sizable. We think it could be anything upwards of $5 to $6 billion. And that's really where, a lot of this is going to kind of flow down to the bottom line. Of course, there's always this question about how much of synergies can be extracted. But actually, Warner Brothers Discovery themselves have kind of provided us with an excellent template. They've done a fantastic job when it comes to extracting synergies, both with the Scripps transaction as well as with the most recent Warner Brothers and Discovery merger. So we think if they lay out a good plan, it can definitely be done. And so synergies really is the name of the game here, apart from, of course, monetizing all of the IP, because they do have some of the best brands in the business.
Comcast, how credible are they? I mean, we know the Roberts family, Brian Roberts, loves to do deals, rarely goes more than 5 or 6 years without doing a big deal here. How do you handicap them here?
Paul, so industry sources seem to suggest that Warner Brothers Discovery actually wants Comcast to be the winner. And I think a lot of this has to do with the fact that, David Zaslav obviously has this history with NBC. He used to work there. He obviously knows Brian Roberts extremely well. But I think David Zaslav also kind of sees this as a path for him to ultimately run NBC. He doesn't necessarily want to exit Hollywood just yet, which is what would happen if he sold to either Paramount Skydance or to Netflix. So I think in many ways he does want to kind of sell to Comcast. Again, it's going to come down to whether Comcast can put up the money, because they are right now in a very, very tricky, precarious situation. Their cable business is struggling. The stock is trading at historical lows, 5 times EBITDA. Wow. So really, really in a tough spot. And they have to come up with a majority cash bid. So we're looking at something like about $60 billion. This has to be debt financed. And so you kind of think about all of that incremental interest expense for them, Paul. I mean, this is going to be dilutive to free cash flow, and I don't think investors are going to like it.
Yeah, it's a tough spot given where they are right now, but the assets surely would make sense with a lot of people, including Comcast. Geetha, thanks so much. Appreciate getting your stuff. Folks, Geetha's and her team have got I think some of the best research analysis of this deal, potential deals, potential scenarios out there for all the players. Go to BIGO on the Bloomberg terminal and you can get access to her investment research. Geetha Ranganathan, U.S. media analyst for Bloomberg Intelligence, joining us in Princeton. And again, the debt side is a big issue for Comcast and some of these players. Stephen Flynn, who covers the credit side of the TMT space, he's got some great research on what it would mean for Comcast and some of these others from a credit perspective, levering up to buy Warner Brothers Discovery. Again, an enterprise value of Warner Brothers Discovery today around $90 billion with a B. This is Bloomberg.
Numbers.
is Bloomberg Intelligence with Scarlett Fu and Paul Sweeney on Bloomberg Radio.
All right, Alex Semenova sitting in for Scarlett Fu. I'm Paul Sweeney, live here in our Bloomberg Interactive Broker Studio, streaming live on YouTube as well. We had some news this week. Big news for New York City, getting 3 casino licenses for the city. 1 in the Bronx, 2 in Queens. This is to build like real casinos, not just the, some of the gaming stuff. This is real-time stuff, and it's big. For the greater New York City metro area here. So we want to break it down with Brian Egger, Senior Gaming and Lodging Analyst for Bloomberg Intelligence. So let's step back, Brian. Talk to us about kind of what the licenses represent and kind of where do we go from here?
Sure. So this is a fairly protracted process involving ultimately the selection of 3 recipients. By the way, the only 3 left in the running after a few others were eliminated and dropped out. And really, it authorized resort casinos for the downstate New York area, mostly New York City. And as it turns out, as you mentioned, the 3 qualified casino applicants, if you will, really are in New York City, but outside the borough of Manhattan itself.
Brian, just looking at your note on these license approvals, you write that they face a narrow path to decent returns on investment. Can you please talk to us a little bit more about that idea?
Sure. So what we assume for these resorts is they will get what I would call a gaming revenue premium and room rate premium of 10, 20% to other kind of high-end urban area resorts, such as the Borgata in Atlantic City, Wynn's Encore in Boston. However, our concern in terms of the return prospects are that development costs are quite high and perhaps some of the targeted non-gaming contribution elements might be a bit ambitious. So for that reason, when we worked the numbers, we came up with something like a 10% return on investment, which is certainly a bit less than most operators would expect to attain in these regional markets.
So I'm thinking here, I mean, again, I'm just thinking about Steve Cohen's, I was looking at his plans yesterday in conjunction with his Citi Field. He owns the Mets. Yes. Citi Field is out there. The National Tennis Center's out there. The World... we had the World's Fair situation, so there's a ton of opportunity out there. It seems like these are going to be more retail, hotel than casino. How do you think the mix of revenue is going to be there?
So there certainly is. I think when we work the numbers, we assume that with respect to either food and beverage or retail entertainment revenue, those will be fairly sizable chunks of the overall revenue pie, probably cumulatively close to half, which is true of many kind of gaming resorts in attractive environments where you get a lot of non-gaming revenue. I think the same will be true here. The question is, will it be enough, and will the margins, which we peg to be about 30%, be sufficient to get a good return? But certainly, the logic of having it next to Citi Field makes a lot of sense. The other locations, Bally's at a golf course in the Bronx, the Resorts World in Queens, pretty much expanding an existing facility, all have their merit. The question is, will it be enough to get a decent return? But certainly, some of these locations have rational prospects.
What does this victory for these 3 companies mean for their competitors like Sands, MGM, Wynn? Where do they go from here?
So to be clear, Sands exited this process back in April. Wynn exited in May. It's Hudson Yards project because of community opposition, and MGM in October because of the license terms. But bear in mind that they do have other prospects. Wynn is developing a UAE resort of its own. MGM is building in Osaka, Japan. They all can buy back their own stock. So I think they're weighing this particular opportunity relative to other development prospects.
All right, so we're going to get the licenses by year end. What's the timetable? Have any of these 3 license winners laid out a timetable for getting a shovel in the ground and maybe even opening the doors?
So I think it'll vary by operator, but the expectation is that these resorts will generally open by 2030 or so. It'll take a few years to develop. There's always the possibility of construction challenges, but that's the target. And of course, our related concern, since you mentioned MGM, was MGM, Bally's, Caesars all operate casinos in Atlantic City. And, the proximity to Atlantic City of resorts with casino elements of this caliber certainly presents a potential competitive challenge to Atlantic City itself.
AC, that's tough. That is tough because I always see, on the Parkway, Brian, I know you see it too. We have for years, for 20, 30 years, we've seen the limousines from New York City going down the Parkway to AC. That's going to get impacted, isn't it?
It will. I think some operators, Borgata, for example, Hard Rock may hold up better than others, but there's always a challenge when you've got this much additional gaming capacity with resort elements opening up in relative close proximity to a key Atlantic City feeder market.
Yep. All right. We'll see how it plays out. It should be fun. So we got 2 in Queens, 1 in the Bronx. Go figure. Brian Egger, senior gaming and lodging analyst for Bloomberg Intelligence, joining us via Zoom. I'm a Vegas guy. I only throw the dice in Vegas. I've
only been one time.
Yeah, I don't know. I go to Bellage, I find my table, and I sit myself down for the night with my little limit bets there.
Good way to do it.
Exactly. All right, for our listeners in the U.S., a reminder, you can listen to us via satellite radio on Sirius XM Channel 121. Access the world's only global audio business network, coast to coast, 24 hours a day. Bloomberg Radio on Sirius XM Channel 121 is presented by Golden Crest Metals. Stay tuned for the latest market news and industry research. The next hour of Bloomberg Intelligence begins in just a moment with the markets holding on to their gains. The S&P's up 35 points. That's a 0.5%. The NASDAQ is up 225 points, 23,500. Nice round number there, up about 1% on the NASDAQ. 10-year Treasury yields pretty steady right here at right around 4.1% right here. And Bitcoin up 5%, 91,000, just under 91,000 per token. This is Bloomberg. Good morning.
This is Bloomberg Intelligence with Scarlett Fu and Paul Sweeney.
How do you think the Fed is looking at tariffs, the uncertainty of tariffs?
Let's take a look at the sectors and how they performed.
A lot of investors getting whipsawed every day by news events.
Breaking market headlines and corporate news from across the globe.
Could we see a market disruption, a market event?
Are people just too exuberant out there?
You see some so-called low-quality stocks driving this short-term rally.
Bloomberg Intelligence with Scarlett Fu and Paul Sweeney on Bloomberg Radio, YouTube, and Bloomberg Originals.
All right, we have Alex Semenova sitting in for Scarlett Fu here. I'm Paul Sweeney. We're live on our Bloomberg Interactive Broker Studio, streaming live on YouTube as well. Coming up, we're going to check in with Ira Jersey. He's the chief U.S. interest rate strategist at Bloomberg Intelligence. What are we going to get from our Fed next week when they meet? Mary Ross Gilbert, Bloomberg Intelligence senior equity analyst covering the retail space. We'll get her thoughts on retail sales here in these early days of the holiday shopping season. Phil Blancato, he's the chief market strategist at Osaic, to discuss his outlook for the markets. And around the bottom of the hour, President Trump is hosting a cabinet meeting in the cabinet room. We will dip into that when that begins, but you just never know with timing, so we'll just play that by ear. But that could be in this hour as well. So right now, let's kick things off with Charlie Pelton and Bloomberg Business Flash.
Hey, thank you very much, Paul Sweeney. Here's what's going on. We've got the Dow, the S&P, NASDAQ, all advancing very close to session highs, right to the numbers here, with the S&P 500 index up 36, up 0.5%. This Bloomberg Business Flash is brought to you by Oracle. Attention, growing businesses. Oracle's offering to cut your current cloud bill in half if you move to Oracle Cloud Infrastructure for new U.S. customers with minimum financial commitments. See if your company qualifies at oracle.com/Bloomberg. Wall Street resuming its advance after a brief pause. Equities seeing gains with the S&P, as I mentioned, up 0.5%, up for the 6th time in 7 trading days. The Dow up 280 right now. That is a gain of 0.6%. NASDAQ Composite Index up 1%. NASDAQ 100 Index up 1.1%. The Russell 2000 Index up by 0.4%. And the Mag 7 Index, the Bloomberg Mag 7 Index, up now by 1%. 10-year 4.10%, with the 2-year currently yielding 3.51%. Gold now down 1.4% at $4,171. West Texas Intermediate crude down 0.1%, 59.27 a barrel. And Bitcoin rebounding from yesterday's decline. Bitcoin now up 5.5%, back above 91,240 right now on Bitcoin. So the bigger question about the market, valuations. Nancy Tengler is Chief Investment Officer at Laffert Tengler Investments. And right here on Bloomberg Intelligence last hour, she told us she is not seeing comparisons to the 90s, at least in terms of valuations.
This is not that, at least not yet. We think back in the 90s, the companies that were driving the valuation moves up were companies with contracting earnings. The companies that are driving it today do not have contracting earnings. They're growing at about 18 to 20%. And I think that continues for some period of time because they're much different companies. They're not one-dimensional. They're multi-dimensional with strong balance sheets.
Nancy Tengler of Laffer Tengler, interviewed right here on Bloomberg Intelligence. After earnings, database software company MongoDB surging now by 24.8%. MDB on the ticker symbol. It also raised its full-year forecast. And Six Flags Entertainment rallying after Truist Securities upgraded the theme park operator's stock to buy from hold. Ticker FUN. Right now we're looking at Six Flags up by just about 2.5%. Recapping, S&P up 0.5%, Bitcoin up 5.3%. For on-demand news 24 hours a day, subscribe to Bloomberg News Now wherever you get your podcasts. I'm Charlie Pelleton. That is a Bloomberg Business Flash.
All right, Charlie Pelleton, thank you so much. We appreciate it. Six Flags, owner of Six Flags Great Adventure in Jackson, New Jersey. Haven't been there since high school, but they pack them in every day in the summer. There you go. All right, Charlie Pelleton, thank you so much. We appreciate that. Alex Semenova is sitting in for Scarlett Fu. I'm Paul Sweeney, live here in our Bloomberg Interactive Broker Studio, streaming live on YouTube as well. Let's take a look at some of the stocks on the move today. We're joined by Bloomberg's Christina Kino. Christina, what are you looking at?
Let's take a look at Boeing, shall we? So Boeing, ticker BA, those shares are doing really well today, up 8.5%. And that is because we heard from CFO Jay Malave saying that the company expects to generate cash on an annual basis in 2026. This is major because they have not had positive free cash flow on an annual basis since 2023, right? And we have seen analysts saying that they now see Boeing generating $2.46 billion in free cash flow next year. Now, the slightly negative news is that those same analysts have been paring their cash flow expectations by more than half since mid-July because, you know, Boeing is not in the clear, right? We know that it still has issues. It's facing further delays on its 777X plane, now more than 7 years behind schedule to 2027. That's the current projection for those plane production for them to hit the market. And then, of course, they're going to be taking, or they took a $4.9 billion accounting charge in October. They're expected to pay the Justice Department a large sum next year to resolve a case from the resolution of two fatal crashes of its 737 MAX. So a lot of issues still for Boeing, but that is a silver lining, positive free cash flow for 2026.
And Christine, another company that everyone is watching today is Warner Brothers. What can you tell us about this bidding war that they're at the center of?
Yeah, absolutely, Alex. Well, the bidding war, at least for today, is positive for shares. So we are seeing those gains there, ticker WBD. Those shares are up nearly 1%. And as you mentioned, the latest developments, right? Warner Brothers asked the bidders to come up with better offers, and they have delivered so far. Netflix apparently it has a mostly cash offer, according to people familiar with the discussions. Meanwhile, Paramount is backed, of course, by Oracle co-founder Larry Ellison. That also includes some debt financing from Apollo and some contributions from Middle East funds. Now, apparently the offers are binding. So as soon as they satisfy whatever the goals of the board are, then they can be quickly approved. So that is the good news for shareholders. It's just that they still have yet to make a final decision. Now, apparently this deal has ruined Thanksgiving for bankers because they work through Thanksgiving.
I've done that many times. Stocks 24 and change here. The company has said in the past they'd like 30. That's a pretty big bid-ask spread to see if they can tighten that up here between now and when they get the final bids in. One more, what do you got?
Let's take a look at Dell. So ticker DELL.
That's a cool story.
Yeah, those shares are skyrocketing now. I mean, earlier today, it was modest gains, but now up 3.5%. And that is simply because of President Donald Trump, primarily. So, okay, the story is that Michael and Susan Dell apparently saying that they're going to be giving $6.25 billion to the Invest America Initiative. This is better known as the Trump accounts, right, for kids that are born between 2025 and 2028, and the Trump administration aiming to seed those accounts with $1,000 each. So the Dell's gift will go to the Treasury Department that will fund accounts for an additional 25 million children who are age 10 and under who are not already eligible for government money. And now, of course, the shares are merely rising because the move drew praise from President Donald Trump saying on Truth Social, he says, quote, "Two great people, I love Dell." And that was enough to...
That's all you need.
That's all you need.
Yeah, a little pat on the back. Very good. All right, Christina Aquino, thanks so much. We appreciate that. For more conversations like this, subscribe to our Stock Movers Reports. Listen for 5-minute audio reports on the biggest winners and losers in the stock market. Subscribe to Stock Movers on Apple Podcasts, Spotify, or anywhere you listen. WIRP Go, the world interest rate probability, shows a 98.3% chance of a rate cut on December 10th, next week, a week from tomorrow. Ira Jersey, Chief U.S. Interest Rate Strategist, Bloomberg Intelligence. All right, Ira, your job's kind of been done for you. The market's telling us what's happening here. What will you be looking for next week when we hear from Fed Chairman Jay Powell and maybe from some of these other folks on the FOMC?
Yeah, I think that's right, Paul. You know, the Fed doesn't disappoint when you have this level of certainty priced by the market. The one thing to look out for is that, you know, there could be a leak. We have seen leaks in the past where, you know, someone in the media will be told something by the chair that, hey, maybe the market's not quite priced properly, but I doubt it for this month. The summary of economic projections is going to be what gets all the attention, especially now that we're priced at the moment for only one cut in the first 3 meetings next year if the Fed cuts this month. I don't think that actually stays, and that the dots will show that the Fed is going to be cutting at least a couple of times next year. I think the market will take that more as, okay, once in the first quarter, once in the second quarter kind of thing, and then done. But of course, we have this overhang of the potential appointment of Kevin Hassett as the next Fed chair, kind of hanging in the balance. So I think that the market is maybe a little bit underpricing the risk of a few more cuts in the first half of next year than is currently being priced.
Ira, as you and Paul mentioned, traders are pricing pretty much all but certainty for a cut next week. But if you look back about a week ago, those expectations fell down to about a 40% chance. Is this kind of volatility and expectations typical, and could it be the norm from here?
It sometimes is typical, right? It's basically typical at the top and bottom, right? When there's less certainty about the path and the of monetary policy, you do get these wide swings. And you know, the fact is that we haven't had a regular string of data either to kind of inform the market and give the market the you know, the tools that it typically has in order to be able to price what the future path of monetary policy might be. So I think that the move has been, you know, rather, I don't want to say that it's been crazy, right? But it has been more volatile for this particular meeting than it has been for the last few. But you go back to the beginning of the cutting cycle, like a year and a half ago, and you did have similar moves. Like at one point, we were priced for certainty of a cut for August of 2024, right? And we you know, they didn't ultimately cut, so we did have a lot of volatility around that one. You know, and then of course you got the supersized one in September, and that one was a little bit you know, also a surprise, right? Because the market thought that they were only going to go 25 and they went 50. So I think that there is going to be more volatility around the path until we get some kind of certainty from the Fed. And you know, read the minutes. The minutes were really interesting because the minutes of the last meeting basically showed an almost equal divide of people who were hawkish and wanted to stay firm and not cut at all. So I think that's also helping drive this volatility, because it's like 1 or 2 votes on the Fed wind up mattering quite a lot.
All right, 30 seconds left. If Mr. Hassett is named chair, what can he realistically do? Remind us how this whole thing works.
Yeah, so the chair basically has a bully pulpit and basically has to convince the other members of the FOMC to vote with them. So, you know, it's kind of the first among equals. So you're not going to see a sea change like, you know, President Trump saying, oh, you know, Powell's wrong, Powell's wrong, Powell's wrong. It's not Powell that's really wrong. It's the committee that's wrong in Trump's eyes, right? So it's you know, the chair does have, though, a certain platform in order to get you know, a certain view across, and you know, can usually sway a couple of members of the Fed toward their view, and maybe, you know, at the moment that could wind up switching things to be incrementally more dovish. Again, maybe a couple more cuts. I don't think it means we go to 2%, but could we go to 2.5% on the Fed funds rate? I think we might.
Okay. All right. Very good. Ira Jersey, we appreciate that. Ira Jersey does all the interest rate stuff there. He's our strategist for Bloomberg Intelligence. Appreciate getting his thoughts here. Again, the Fed meets next Tuesday and Wednesday. We'll get we'll get the note at 2 p.m., the statement, and then we'll get the press conference at 2:30. And Bloomberg Surveillance will have full coverage of it beginning 1:30 next Wednesday, December 10th. So that's all happening. Let's get back to retail. It's that time of year, kids. We had the Black Friday. We had the Cyber Monday, showing some decent growth, I think. I don't know. Mary Ross Gilbert, she's the pro. She does this stuff for a living. She's a senior equity analyst covering the retail space. She's out there in our L.A. office of Bloomberg Intelligence. Mary, what's some of the early feedback you're hearing from some of the retail companies you follow?
Yeah, so Paul, what we're hearing really is we're seeing resilient consumer spending, and just looking at the pulse over the weekend, and we were out on Black Friday and then just sort of tracking the trends Saturday, Sunday, and then of course with Cyber Monday, and now we have Giving Tuesday. And we're seeing, the one thing that we really noted on Black Friday is we saw a lot more bags this year, and we felt that the malls were more crowded this year than in years past. So we see a lot of exuberance, and we think the value brands are the ones where we're seeing the strength. So for example, a lot of Old Navy bags, Hollister bags, American Eagle bags, so and Victoria's Secret. And there were some giveaways too. For example, you got a free tote if you spent like $100 or more at Victoria's Secret and Pink. And then also Gap had the same promotion for their namesake brand. And then American Eagle, you also got a tote with any purchase. Plus, if you spent over $135, then you also got a free blanket. So, but the other thing that's really exciting consumers, it's really great fashion merchandising and the campaigns. So with American Eagle, we had the wonderful Sydney Sweeney campaign that started with Sydney Sweeney has great jeans, but now it's give great jeans. And of course, the latest campaign that's debuting is with Martha Stewart. And so what they're trying to do is really attract an older consumer, because American Eagle resonates really well with Gen Z, but Gen Z also loves Martha Stewart too.
Something incredible, Mary, has been that when you look at retailer performance, when you look at consumer data, there are no signs of any kind of tariff stress. Did you see any tariff concerns at all from retail performance on Black Friday and Cyber Monday?
Yeah, not really. Well, we did observe, though, some of the promotions. You know, I think there was a sweater promotion with one of the retailers where last year it was like $12.99 and this year was $19.99. So what I'm seeing is there might be some higher higher price points, but then the promotions are relatively similar to last year. There might be some where it's a little bit more and some where it's even a little bit less. So it kind of varies by retailer. But what we are seeing is strong demand for apparel and good spending. And so not really seeing the stress from the consumer side with the tariffs, but rather on the margins side. But we think part of it is temporary because there are selective price increases, and they're also looking for ways to offset a good portion of those tariffs. And we think in 2026, we'll be cycling past that, and I think we'll start to see margins move higher.
Mary, about 30 seconds left. Is that omni-channel experience, which I learned about from you and Poonam, years ago when we started thinking about this in the pandemic, is that still a thing where we combine e-commerce plus actually going to the store and all that?
Absolutely, Paul. That's not going away. And when you actually think about Gen Z, which we were just talking about, so if you look at, for example, Abercrombie, their Hollister brands, 70% of Hollister sales are generated in store. So while that young consumer likes to start shopping online, they much prefer making purchases in store. Now you get to the millennials, and then it's going to change, and 60% will shop and buy online, with the Abercrombie brand, and that's the millennials. So, but they do like to come to the store to return, make exchanges, or see what else is there in the store. So omni-channel is absolutely critical. A lot of buy online, pick up in store. Old Navy, I saw when I was in that store, there was a salesperson there packing all these bags. And I said, well, what are those for? And those were pick up in store.
Nice. There you go. Mary Ross Gilbert, thank you so much. We appreciate it. Always senior echo analyst covering the retail for Bloomberg Intelligence based out there in LA. Are you Gen Z, what are you?
I'm a millennial.
You're a millennial. Okay, I don't even know what's what anymore. I actually am a boomer by like 12 months. I was the last December 63. That's kind of like the cutoff. So I'm kind of in like no man's land. But anyway, my parents were the greatest generation. So that, who knows? This is Bloomberg.
Markets, headlines, and breaking news 24 hours a day at Bloomberg.com, Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
Yeah, it's 11:21 on Wall Street. We do check markets all day long here at Bloomberg. I'm Charlie Pellet. Equities little changed, and this Bloomberg Business Flash is brought to you by Oracle. Attention growing businesses. Oracle's offering to cut your current cloud bill in half if you move to Oracle Cloud Infrastructure for new U.S. customers with minimum financial commitment. See if your company qualifies at oracle.com/Bloomberg. Right now, the S&P 500 index up just under 0.2%, higher by 10, bouncing back a little bit from yesterday at 68.24. We do have the Dow up 0.3%, up 155 points now. NASDAQ up 89, gain there of 0.4%. Riskier corners of the market, which bore the brunt of the selling yesterday, from small caps to the most shorted companies. An unprofitable tech bounced back. The 10 10-year. Right now, 4.10% with the 2-year, 3.51%. Gold is down 1.3%. Spot gold now at $41.76 the ounce. West Texas Intermediate crude 59 even a barrel, down 0.5%. And Bitcoin, which had been down as much as 8% yesterday, now back above 90,000, 90,400 on Bitcoin. It is up right now by 4.6%. Michael Burry is calling Tesla shares, quote, ridiculously overvalued, and says shareholder dilution is set to continue after the proposed $1 trillion pay package for co-founder Elon Musk. This according to a Substack post. Tesla shares right now down 1.3%. Burry is perhaps best known for correctly betting against the U.S. housing market during the 2008 financial crisis. He did not respond to a Bloomberg News request for comment. Again, Tesla shares trading lower. Tesla right now down by 1.4%. Again, recapping here, Bitcoin up 4.5%. S&P little changed, up just under 0.1%. For on-demand news 24 hours a day, subscribe to Bloomberg News now wherever you get your podcasts. I'm Charlie Pellet. That is a Bloomberg Business Flash.
Charlie Pellet, thank you so much. We appreciate that as always. Alex Semenova sitting in for Scarlet Food today. I'm Paul Sweeney, live here in our Bloomberg Interactive Broker Studio, streaming live on YouTube as well. The AI trade, we know it well. It's been really propelling this market for the last several years. But I would say in the last few months, there's been a little bit of concerns in there about the total dollars being spent, maybe about the returns that investors can expect on that investment, maybe some of the circular investment deals we've seen among some of the participants, but still we have the market moving higher again today, led by technology. Phil Blancato, Chief Market Strategist, joins us from Mosaic. Phil, how do you kind of think about that AI narrative in the marketplace? How much of a driver is it for you and your call in the markets?
Well, on one hand, it's been incredible the last really 10 years, but then when you think what the markets have done, but really the last couple of years when we watched NVIDIA and so on. But it gets to a point where it's really hard to make a $5 trillion company a $10 trillion company. What I do like recently is this broadening out globally, where even Europe now, whether it's Germany's defense spending or the idea that we're seeing this liftoff in folks who have investments in the United States spending some of that money, consumer spending around the globe, especially in the United States, hanging in there. But I'm concerned. I'm concerned about where valuations are. Yesterday's a prime example of it. The hint of the Fed maybe not cutting based on comments of the Fed chair. I think we're part of it. And you have this scenario where we end up in a never-ending cycle of really expensive stocks, maybe a bit less expensive than they were, but at a time where if we don't continue to get solid, spectacular earnings growth, it's problematic for the market. And it has me very, very concerned.
Phil, we're in a choppy market right now. As you mentioned, valuations have been a concern. And as you think about your portfolio going into 2026, what are you overweight? What are you underweight? What kind of decisions are you making around your portfolio?
It's a great question. We have taken quite a bit of profits from our growth-oriented sector of the portfolio. Why? First of all, finance 101. When you have these stocks that are up incredible returns, you take your profits there. We have pivoted to interest-sensitive securities. We now have a larger allocation in small-cap securities and a pretty hefty allocation in value, which is contrary to where we've been for a long time now. Going one further, we're starting to increase our international allocation, specifically Europe, defense value-oriented companies. We think that spending that's going to happen in Europe will actually have some impact. But really what I'm trying to do is diversify away from large growth. Not leave it, but take profits and pivot. And that's very new for us after so many years of earning a lot of money there.
Sectors that screen well for you or factors that might screen well for you as you look for a little diversification there, Phil?
Healthcare and energy. I think those are two areas that are undeniable long-term plays. I think we've forgotten about the aging demographics of the globe, but the impact of AI in healthcare, I think, is still an unknown. I really like the valuations there. And then energy. Energy is in this, and I'll take energy and almost pivot to commodities. I think the commodity super cycle idea is real. When you think about AI spending around the globe, $400 billion by the big mega companies, and what that's going to mean for the broadening out of the AI trade, but more importantly, the power that's needed, and then the commodities needed for the power. And I think this is an evolving trend where Europe went real green and now has to come back a bit to try and make up for the data center demand they're going to have. We know the United States story of 10 to 12% of the American electrical grid in the next 4 to 5 years, just AI-powered demand. I think is a real energy story developing. But critically, you don't want to be just in oil. You want to be in everything else, I think, but oil.
Phil, we've seen incredible gains this year at the index level. You mentioned you're shifting away from some of those large cap growth names. Is it fair to say that now is the time to be a stock picker?
for sure. I think what we got to be very careful of, fine, we'll look at NVIDIA or Microsoft or Google. We can pick the lot, and they all have incredible profit and earnings. But what we saw is the liftoff in areas that were mid and small related to the AR trade, especially who's going to make the chips, who's going to ship the chips, who's going to put the software on the chip, where we're going to get power in certain companies. I think you got to be very selective of what was caught up in AI euphoria and what's actually generating real revenue. And it's a critical point right now. I think active management in 2026 is the story we're about to tell. I think 2026 is actually going to be a bit better than expected. The big, beautiful bill and the idea of, more importantly, the depreciation opportunity that the bill presented, I think we'll pick winners and losers. A great story about AstraZeneca launching a gigantic plant down in Maryland, employing thousands of people with a $50 billion investment. Not recommending the stock here. I'm just suggesting that's exemplary of where we're going. So I think this is opportunity to pick winners based on how they're taking advantage of the tax bill and are they profitable from what AI has done for their business.
Phil, what's the fixed income call here? I mean, some really solid high single-digit returns in fixed income this year.
You know, that's the other thing I didn't mention. I should have. In our asset allocation, we've increased our fixed income allocation. Oh, and by the way, we're up almost 8% on bonds. I think we've forgotten that the narrative is every time the Fed has cut rates historically, the bond market's quite strong for up to 5 years after. Part of the reason we're moving back to interest rate sensitive securities, not just stocks, but bonds. I like the belly of the curve plus a year or two. I think you can get a little price appreciation. To me, the 10 years settles in at about 375, maybe 350 by this time next year. And the reason being, I think AI will bring some deflation into the economy. I think we're going to see some greater productivity demands, but not to mention post the tariff announcements, post the kind of the realignment around tariffs, I think we'll get to a settling down of where those costs are absorbed. So we have a bit of a slower, modest grind down to probably PCE somewhere around 2.4, 2.3 by this time next year, with the 10-year ending up at 350. If that happens, then you get a really solid return with a yield of, you know, quote 3.5% to 4%, but price appreciation as well.
Phil, thanks so much for joining us. We really appreciate getting a few minutes of your time. Phil Blancato, Chief Market Strategist at OSEC, giving us thoughts on the markets. Again, a little bit of green on the screen here. The S&P is pretty much flat right now, giving us some of its gains here. A lot of news in the tech space. I guess it's just every day we have a lot of news in the tech space. One that jumped out at me is Amazon rushes out latest AI chip to take on NVIDIA and Google. Well, that gets my attention. Let me check in with somebody who might know a thing or two about this stuff. Mandeep Singh, Senior Tech Industry Analyst, Bloomberg Intelligence. He's out there in San Diego. I don't know what's going on in San Diego. I didn't get the invite, but Mandeep's out there doing the Zoom thing. Mandeep, Amazon chips, where do they stack up relative to, say, an NVIDIA or a Google?
I mean, look, Amazon, we know, is the largest cloud provider with almost 50% share. And when it comes to the GPUs, everyone so far, except for Google, has relied on NVIDIA, you know, for training. And what Amazon is doing is really copying that Google playbook where they want to use their own chips. It's just that they haven't had that kind of success that Google has had with TPUs, and they're trying to speed things up because in the end, all these hyperscalers don't want to spend, you know, 20 to 25% of their CapEx on procuring NVIDIA's chips. And that is what the end game is. I think Google so far is ahead in that, but clearly Amazon is trying to catch up when it comes to their own chips efforts.
Mandeep, it feels like Amazon, Google are becoming more formidable competitors to NVIDIA in this space, NVIDIA, the AI darling. When you think about 2026, who are some of the winners in this AI arms race?
I mean, look, when you're running a cloud business, you know, you're trying to optimize things across the stack. And that's where, you know, a Meta is very different from a Google or an Amazon, which have a big public cloud business. I think what you're going to see is focus more on CapEx efficiency. If Google can deliver, you know, a lot more with their $90 billion in CapEx in terms of training, inferencing, and having a cloud business, everyone will be measured the same way, whether it's Amazon or Meta. And that's where CapEx efficiency will be a much bigger focus in 2026 than it was in the past 2 years where, you know, there was a gold rush going on in terms of getting these GPUs, making sure you have chips for training your models. I think we are moving into a phase where CapEx efficiency will be front and center going forward.
Mandeep, I see a Bloomberg News story. Apple AI head to leave. This doesn't feel right to me. What's going on with Apple and AI? And am I reading too much into this? It seems like there's a lot of turnover there.
I mean, look, for a good reason, because Apple, when you think about the Mag 7 players, has trailed in terms of having an AI strategy, making those investments. And right now we are seeing even, just yesterday, DeepSeek released their latest model. ByteDance is talking about a model that can be run on your operating system. So there is so much going on at the hardware and at the operating system layer that you feel like Apple is missing out. One, because they don't have any AI models of their own. And also in terms of their partnerships, they haven't been that upfront about, whether it's OpenAI or Google in terms of making changes to their operating system. So even though the hardware sales haven't really suffered because of that, I mean, when you look 2 years out, if Apple doesn't have a good AI strategy, a good model that works natively on the operating system, I think you will start to see an impact on the hardware sales.
All right, Alex, I tracked down where Mandeep is. He's in San Diego. Why? There's some tech conference out there. I don't know. But he always goes to conferences in San Diego or Vegas or Miami or Barcelona. Never Sheboygan. It's very strange. Never Poughkeepsie. I just don't get it. He always goes to the good spots there. Mandeep Singh.
The weather there.
I know. He knows what he's doing. This isn't his first rodeo. Mandeep Singh, he's our senior tech analyst. He kind of runs all the tech research for Bloomberg Intelligence. We appreciate getting a few minutes of his time there. Lots going on in the technology space. The money continues to be spent. There are questions, certainly, about getting returns on some of that investment. I think the investors are asking probably more difficult, more pointed questions about some of the spending here, as opposed to blindly saying, where's the money going? Because that's where we're going to go. So we'll see how that plays out going forward. The S&P 500 is now unchanged, giving up some of its gains here. The Dow's up 100 points, 0.2%. The NASDAQ also giving up some gains, up 30 points. That's 0.1%. Had been up about 1% earlier today, so giving back some of those gains. 10-year Treasury yields, looking at the 10-year, 4.08%. This is Bloomberg. Good morning.
markets, headlines, and breaking news 24 hours a day at Bloomberg.com, Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
It's 11:40 on Wall Street. We do check markets all day long here at Bloomberg. After a brief dip into the red, we do have the S&P 500 index higher right now. This Bloomberg Business Flash is brought to you by Commonwealth, supporting more than 2,000 independent financial advisors with a 2-to-1 advisor-to-staff ratio. Small firm attentiveness, big advisor impact. Go to Commonwealth.com to learn about their consultative support and technology. Mild gains right now for the S&P 500 index, up for the 6th time in 7 trading days. The S&P 500 index higher by 11 right now, up under 0.2%. The Dow up 0.3%. NASDAQ up 100. For the NASDAQ Composite Index, that is a gain of 0.4%. The Russell 2000 Index of small cap shares up 0.2%. And the Mag 7 Index, the Bloomberg Mag 7 Index, up by 0.2%. 10-year 4.09% with a 2-year 3.51%. Gold down 1.1%. 41.87 the ounce. West Texas Intermediate crude 58.96 a barrel, down 0.6%. And a rebound for Bitcoin, making up some of yesterday's decline. Bitcoin right now up 5%, 90,815 on Bitcoin. As for the overall market backdrop, Cameron Dawson is Chief Investment Strategist at New Edge Wealth, and she was interviewed this morning on Bloomberg Surveillance.
We would categorize this as a very healthy digestion simply because we saw such a powerful rally, mostly in September and October in some of the most speculative portions of the market. So to see some rationality come back in, we would see it as a good thing.
Cam Dawson of New Edge Wealth interviewed this morning on Surveillance. So again, recapping, stocks higher, S&P right now up by 0.1%, and Bitcoin up 5%, 90,744 on Bitcoin. For on-demand news 24 hours a day, subscribe to Bloomberg News Now, wherever you get your podcast. I'm Charlie Pellet. That is a Bloomberg Business Flash.
All right, Charlie Pellet, thank you so much. We appreciate that. Alex Semenova sitting in for Scarlett Fu. I'm Paul Sweeney live here in our Bloomberg Interactive Broker Studio, streaming live on YouTube as well. I think as we learn more and more about AI, one of the things we're learning is that, boy, this stuff's going to require a lot of power, a lot of electricity. Think about all these data centers that are being built out, and they've got to figure out a way to power these things. And that is the subject of our next discussion here. Helen Koh joins us, head of U.S. Power Markets Research at Bloomberg BNEF, joining us from San Francisco via Zoom here. Helen, again, I think as we learn more about AI, we learn about data centers, and we learn about the need to power these data centers. Do we have the grid? Do we have the power to power all these data centers that we keep hearing about?
Yeah, well, thank you so much for having me. To answer your question, what we're seeing is quite an unprecedented acceleration of data center demand, driven largely by AI. And at BNEF, what we see and expect is that data center power demand is going to reach roughly 106 gigawatts by 2035.
Where are we today, just for example?
Today, we are definitely a lot lower in capacity, so roughly half of that right now. What we also know is that 106 gigawatts by 2035, that's 36% higher than our outlook just 6 months ago. So we've increased that forecast quite a lot. Since these last 6 months, what we've seen is a flood of early stage projects getting announced, which results in a much larger pipeline, and therefore our forecast has also increased quite a bit. To power these data centers, what we know is that there's a lot of new builds of power supply coming online to try to reach this overall power demand.
Helen, we're obviously in the early innings of this build out of data centers. What signs are you seeing already of any kind of strains on resources, on electricity?
Yeah, that's a really good question. So what we know is there are certain regions that are hitting a tipping point in terms of actually being able to power this overall supply. What we know is that Northern Virginia is still the largest kind of market for data center demand based on our forecast. And we are seeing a lot of growing concern in that PJM region. What we project in PJM is that data center capacity is going to hit roughly 31 gigawatts by 2030. And what we do is when we adjust that overall kind of like what power demand looks like in PJM relative to supply, what we expect is there might be a 9.5 gigawatt shortfall of overall power supply by the end of the decade if we assume that all of this data center demand is going to come online.
If all this data center demand comes online, obviously the need for electricity is just, or power is just extraordinary. I'm a big fan of nuclear. A small mobile reactor, modular reactor here, those SMR type things. Talk to us about that. Is that a viable technology solution at some point?
That's a really good question. So we know that there's been a lot of company announcements around small modular nuclear, as well as just nuclear in general. And there has been several different new power purchase agreements around nuclear by major hyperscale companies as well. What we see within BNEF is that in the near term, what is likely going to power data center demand is actually going to be gas, and nuclear is a much more longer kind of like long-term play in terms of how you power data center demand. But what we expect is that the major ramp up in overall demand is coming over these next 3 years, and gas is likely what's going to meet that overall demand.
What kind of measures are being taken to limit any kind of potential power outages from this build out?
Yeah, that's a good question. Well, we do see that there's been a lot of different regulations that are evolving real time around data center demand. What we know is that Georgia adopted new rules pushing grid connection costs onto large users like industrial users. Ohio now requires data centers to pay for at least 85% of the energy they request each month, even if it is underutilized. And so policies are kind of being put in place to kind of navigate rising and growing demand.
Are we building these data centers too quickly? Is there a risk for an overbuild? It just feels like it's too much too fast, but all the projections say we're going to need all that compute.
Yeah, it's a really great question and something as an analyst I think about quite a bit. At BNEF, what we've done is we've benchmarked our data center forecast relative to a whole bunch of other third-party forecasts out there. And what we see is that our forecast is relatively conservative compared to other third parties because our data center forecasts does include and analyze some of the additional power constraints as well as like project development timelines of data center development. And what we found is that it roughly takes 7 years to develop a data center. And even with that, we're seeing quite a bit of new capacity come online. That is a result of just fundamentals around AI demand, whether that is company announcements of data centers, as well as just like the underlying growth and trend around AI.
I can't help but wonder, how are data centers addressing sustainability? Are they using clean energy? What measures are they taking?
Good question. A lot of these hyperscalers that are building out data centers do have sustainability goals and clean energy commitments. However, like within this data centers outlook, what we mostly focused on is just what is the additional capacity and activity around data center demand within the United States. And we also did a small analysis on specific markets that are likely going to have constraints in the market around power supply. And within ERCOT and PJM, which is our two largest power market region that expects high data center demand growth, what we're seeing is that the likelihood of what's going to meet that supply is going to be gas. And so we don't specifically look at sustainability commitments, but what we know is that a lot of what's supplying data centers will be gas in the near term.
Yep. All right, Helen, thanks so much for joining us. Helen Koh, head of U.S. Power Markets Research, Bloomberg NEF, getting the latest there. President Trump is in Washington, D.C., and he's holding his cabinet meeting in the cabinet room. Let's go to the president right now.
Not me. Oh, I say too, actually. A lot of people are saying it. And a lot of that is thanks to the men and women in the cabinet. the new and improved cabinet room, I might add. We took pictures down from the vaults. We have vaults downstairs with lots of pictures that haven't been exposed to the world for, in many cases, over 100 years. We brought them up, and we're using them as they should be used. But the cabinet room looks beautiful, like it should now. The Oval Office looks beautiful, like it should. It was not. It was like the rest of the country. It was in disrepair. 1 year ago, our country was dead, and said to me by many leaders, we had a dead country. Now we have the hottest country anywhere in the world. It's true. The hottest country anywhere in the world. Think of that. In 4 long years of the Biden administration, there were just $1 trillion of new investments in the United States in 10 months. We've secured commitments of over $18 trillion. So they had, in 1 year, less than $1 trillion. That's in a period of 4 years. Think of it, 4 years they had less than $1 trillion. In 10 months, we have more than 18 trillion. Is that right, Scott? It's even going to be higher than that.
It'll be higher by
and going up. And we're waiting for the Supreme Court case, and it's so important and so vital for this country because we're not only respected again, we're putting out wars by our trade policies, and we're taking in hundreds of billions of dollars, and our country is wealthy again and secure again, and it's part of national security, and I hope that goes well. I think it's very important, but think of the number. We're going to be over $18 trillion in 10 months, and which is a record times probably 8 or 10 times, I think more than that, for any country. There's never been a country that's had that kind of an investment ever in history. And there's never been a country that's had half of that. It's a tremendous thing that's taking place. We have companies moving in from all over the world, from Mexico, from Canada, from Europe, from China, from Japan a lot. We just had Toyota is going to spend $10 billion, they just announced, on building new plants in this country. Our workers, they're going to be our workers, but they're spending a tremendous amount. So the stock market has set 46 all-time highs, and this last Friday, which is called Black Friday, was the biggest ever online sales that there's ever been by a lot. More Americans are working today than at any time in the history of our country. I mean, these are the facts we have to get out. And, you know, there's this fake narrative that the Democrats talk about, affordability. They just say the word. It doesn't mean anything to anybody. You just say it. Affordability. I inherited the worst inflation in history. There was no affordability. Nobody could afford anything. The prices were massively high. Do you remember when we took over eggs? You did a great job on that, Madam Secretary. Agriculture, Brooke. Eggs were 4 or 5 times higher than they had ever been. They said, don't order eggs for Easter at the White House. And we ended up doing it, and we got the egg prices way down, lower than what they were before. But the word affordability is a con job by the Democrats. They say affordable. I watched the other day where some very low IQ congresswoman talked about affordability. She had no idea. Their prices were much higher. As an example, energy, gasoline, we're now at about $2.50 a gallon. We're going to be, I think, at $2 a gallon. We could even crack that at some point. I'd love to do it. And we could do it more easily if we weren't building up the strategic national reserves, which Biden emptied out before the election so that he could try and get elected, meaning he started it, then he got thrown out of the race. Then she took over and she kept it going, and they emptied out these strategic national reserves, which are really meant for something else. They're not meant to keep people happy with their gasoline price. They're meant for war. They're meant for problems, big problems. He emptied it out, and then she continued it during the process of trying to get elected. Didn't work out too well for him. And they virtually brought it down to the lowest level, I believe, in history. And it didn't have much of an impact because the prices were very high. But our prices now for energy, but for gasoline, are really low. Electricity's coming down. And when that comes down, everything comes down. But the word affordability is a Democrat scam. They say it, and then they go on to the next subject. And everyone thinks, oh, they had lower prices. No, they had the worst inflation in the history of our country. Now, some people will correct me, because they always love to correct me, even though I'm right about everything. But some people like to correct me, and they say 48 years. I say it's not 48 years, it's much more. But they say it's the worst inflation that we've had in 48 years. I say ever. But whether it's 48 years or ever, it's pretty bad. We had the worst inflation that we've ever had. Since last January, we've stopped inflation in its tracks. And there is still more to do. There's always more to do, but we have it down to a very good level. It's going to go down a little bit further. You want to have a little tiny bit of inflation, otherwise that's not good either. Then you have a thing called deflation, and deflation can be worse than inflation. But we have it almost, we'll soon be at a perfect level, but we inherited the worst inflation. But we have 20 states that are now selling gasoline at less than the $2.75, think of that, $2.75, and it was at $5 under Sleepy Joe. Grocery prices are down with the cost of Thanksgiving turkey this year down 33%. It was lower than 33% lower than under the Biden administration. Egg prices are way down 86%, thank you. And mortgage rates, despite the fact that we have an incompetent chairman of the Fed, a real dope, who should reduce rates. I saw even Jamie Dimon said he should be reducing rates. I never saw Jamie Dimon say that. I wonder why he said that. But he really said it because he's right. But we have a guy that's just a stubborn ox who probably doesn't like your president, your favorite president. But they're going to be coming down. We'll be announcing somebody probably early next year for the new chairman of the Fed. I talked to Scott about taking the job, but he doesn't want it. You got the greatest job here.
Yes, sir.
Right? He said, no, I want to stay chairman. I want to stay right where we are, Treasury. And I think we're doing really great, aren't we? Yeah?
We're doing great, sir. It's a great team to be part of.
Yeah, no, it's amazing. Under my executive order to lower prescription drug prices, which I think is the single biggest thing we've ever done that nobody writes about because you're fake news. I've made unprecedented deals along with Bobby and Oz and all of the people that work on it. A lot of people that you wouldn't even think work on it, but they do, to slash drug prices by 200%, 300%, 400%, 500%, 600%, 700%, 800%. Nobody's ever heard of it before. Because I instituted favored nations, and no nation agreed to do it. And then I said to the nations, if you're not going to do it, I'm going to charge you 100% tariff, which is more money than we're talking about. And they said, sir, we'd love to do it. Please, we would be honored to do it. And they agreed that they would go along with the whole thing. Nobody thought you could do it because they felt, number one, you couldn't get the drug companies to do it. So we're paying, as an example, for the, let's call it the fat drug, F-A-T, for fat people. Anybody use it at the table? Don't ask. But the fat drug was $135. Think of that. For certain people, $1,300 for certain countries, $1,300 in New York. So in New York, it was $1,300. And in London, it was $135. And a friend of mine called me, he said, what is this? Why is it? He got used to paying $1,300. Well, now what we have it down to is, Bobby, what's the number? Like 150 or something? We have it down to a low number, don't we?
Yeah, it's around 100, 125, 150.
Think of that. So we got it down from $1,300 to $125 to $140, depending on various countries. In other words, we're paying the lowest price, tied for the lowest price in the world. It's, people said you could never do that because you couldn't get the countries to agree to it. I did. Every country agreed to it because I said, if you're not going to agree to it, that's okay. I'm going to charge you tariffs. And as soon as I said that, they said, we agree. And then we had to be a little tough with the drug companies, but they came along. The bigger problem was the countries. The countries just wouldn't go along with it, but they did. Every country. So we have reduced drug prices by 500, 600, 700, 800, 900%, depending on the drug, depending on the company, depending on all of the different factors involved. Nobody's ever even thought of drug reductions like that, price reductions. And I told you the story that in my first term, I was so proud of myself because I reduced drugs. It was the first time in 28 years that drug prices were reduced. It was 1/4 of 1%, 1/4 of 1%. And I was so proud of myself. I said, it's the first time in 28 years that drug prices went down over the course of a year, over the course of a presidency. 1 year. 1/4 of 1%. I had a news conference. I was so proud. Now I got them down, not 1/4 of 1%. I got them down 400, 500, 600% and more. And the fake news won't write about it. And it's going to have a huge impact on healthcare because a big part of it's buying drugs, buying prescription drugs. It's going to have a huge positive impact because Obamacare is a disaster. I said it years ago, and I say it now, and the money should be paid, taken away from the insurance company. Obamacare was made to make the insurance companies rich. Their stocks have gone up 1,000% in a short period of time because the money goes to the insurance company. I want the money to go to the people. Let all the money go to the people, and let the people go out and buy their own health care. And I see on television, people are advertising now, we will help you buy health care. We will go out and help you buy. That's becoming like an industry because of what I said. So something's going to happen. It's probably not going to be easy because the Democrats, frankly, they don't want to make a good deal for the people. They just want to make a bad deal for the country. They want to make a bad deal for the Republican Party. But the Republican Party is united, and I will say that what I would like to do is the money doesn't go, trillions of dollars get paid to drug companies. And you still have lousy health care. Obamacare's horrible health care. We want it to go to the people and then let the people go out and buy their own health care, and they'll do great. They'll do great. So we're negotiating that now with the Democrats. Well, congressional Democrats want the largest tax hike in history. I proudly signed the largest tax cuts in American history with the Great Big Beautiful Bill. The Great Big Beautiful Bill, the biggest piece of legislation ever signed, and that includes the extension of the original Trump tax cuts, but it's the biggest tax cut ever signed, and it includes no tax on tips, no tax on overtime, and no tax on Social Security. Nobody's ever seen anything like it, so think of that. And in addition, you get, if you buy a car, this is great for our car industry because we have a lot of car plants. We're bringing back the automobile business. 60% of it was stolen because we had incompetent presidents or incompetent trade people. But 60% of it was stolen over the years, and now I think we're bringing it all back. I think we'll be bigger than we've ever been in the auto business. That's not even to mention AI, where we're leading China. You know, we're leading China by a lot. They're not going to catch us. We have to be smart, but if we're smart, they're not going to be able to catch us. They know that. They told me that. Next year is projected to be the largest tax refund season ever, and we're going to be giving back refunds out of the tariffs because we've taken in literally trillions of dollars, and we're going to be giving a nice dividend to the people, in addition to reducing debt. We, as you know, I inherited a lot of debt, but it's peanuts compared to the kind of numbers we're talking about. So we're going to be making a dividend to the people, and additionally, we're going to be able to reduce debt. And as time goes by over the next 2, 3, 4 years, those numbers are going to go up. And I believe that at some point in the not too distant future, you won't even have income tax to pay because the money we're taking in is so great, it's so enormous, that you're not going to have income tax to pay. Whether you get rid of it or just keep it around for fun or have it really low, much lower than it is now, but you won't be paying income tax. We've slashed $1 trillion in costly job-killing regulations, saving Americans an estimated $2,100 for a family of 4. The Biden administration was the exact opposite, but times 4. They went up $6,000. We went down $2,100. Think of that. To bring down energy, electricity, and utility prices, I ended the Green New Scam. They call it the Green New Scam, one of the greatest scams in the history of our country. They talked about global warming and all that crap, and what they've done to this country. What they've done by allowing 25 million people into our country, many of whom are criminals, many of whom 11,888 are murderers, and we have to get them out, and we're doing it. We're doing it. I think what the job that our law enforcement groups are doing, Christy, you and Tom and everybody, amazing. What you're doing is amazing. I terminated the insane electric vehicle mandate, and look, some people that make electric cars weren't happy with that. But we have to do that because you have to have a choice, whether it's a gasoline-powered car, and we have so much gasoline. You know, China doesn't have gasoline. We do. And whether it's a hybrid, which really are working really well, the combination of electric and gasoline-driven. But we, everybody was supposed to, by 2030, everybody had to own an electric car under the Biden stupidity. And not everybody wants to do that. I like electric cars. I like all cars. They're all good. They all have reasons. But you want to be able to go and buy what you want. I oppose historic tariffs that are now bringing in so much money that nobody's ever seen anything like it. And countries that were ripping us off, including allies, but they were ripping us off for years. I won't use the names. I won't mention Japan. I refuse to mention South Korea. I will not mention names. But they were ripping us off like nobody's ever been ripped off before, and taking horrible advantage of your country. But now we're making a lot of money. We're making a lot of money because of the tariffs that are pouring in. And it's really national security. Among everything else, it's national security. We've also rapidly turned the worst border crisis in world history. I believe we had the worst border ever in history. I don't care if you had a fourth world country. You know, we allow third world country in. We would allow fourth world war countries in also. It doesn't matter. There was never a border that was as bad as our border. We allowed anybody in with no checks, no vetting. So we've rapidly turned the worst border crisis in world history into the strongest border in the history of our country, and probably one of the strongest borders in the history of the world, because we have nobody coming through. And I want to thank our people. The Border Patrol is so amazing, ICE, and I want to thank the military for the backup, because they're standing right behind them, and that was really nasty for a period of months, and now it's no longer nasty. Now they don't even come up. Nobody comes up. It's an easy job. Made your job a lot easier because they know they're not going to get through. And we take people in, but they have to come in legally. For 6 months in a row, 0 illegal aliens have been admitted into the United States. You believe that? 0. We had millions of people coming in a year, millions. Now we have 0 for 6 months, and these are given by radical left people that do the numbers. I mean, they're not doing me any favor. They're being on. We don't have our net numbers are unbelievable. But we had 0 people in the last 6 months. Illegal border crossings along the U.S.-Mexico border have plummeted to the lowest level ever recorded. And nobody talks about that anymore. You know, it's crazy. They don't talk about it. You think they'd say, well, Trump's done a great job at the border. This country is being destroyed by the border. But you always find something new, like, is he in good health? Biden was great, but is Trump in good health? I sit here, I do 4 news conferences a day. I ask questions from very intelligent lunatics, you people. I give the right answers. There's never a scandal. There's never a problem. I give you answers that solve your little problems. You go back and you can't find anything, but you do stories about Biden was in wonderful health. The guy didn't do a news conference for 8 months. If I go one day, I had one day where I didn't do a news conference, there's something wrong with the president. You people are crazy. I'll let you know when there's something wrong. There will be someday. That's going to happen to all of us. But right now, I think I'm sharper than I was 25 years ago. But who the hell knows? By the way, I took my physical. I got all A's, everything. But they said to me, would you like to take a cognitive test? I said, is it hard? They said, yes. I said, well, I'm a very smart person. Who was the last president to take one? No president has ever agreed to take one. Because when you get into the mid-questions, meaning, 10, question number 10, 11, 12, 28, 30, they get harder and harder. And they said, would you like to do it? I said, well, no reason to do it. Nobody's ever done it. I'll do it maybe, but there's really no reason. They said, sir, the problem is this is Walter Reed Hospital. And that's a military hospital. And that means that things are, sort of open. It's not like private where you have, if you do poorly, we'll have to, probably you'll find out. I said, I won't do poorly. I'm a smart person, not a stupid person. And as the doctor will tell you, I aced it, right, Susie? I aced. I got every question right. And these are tough questions. These are questions that I would say 99% of the people that I'm talking to right now, meaning the people from the fake news, would not do well in those exams. But I'm the only one that took it. I got every single question right. And then I read in the New York Times, is Trump sharp? Trump is sharp. But they're not sharp. That's why they're going out of business, the New York Times. I hear that they're losing so much money, it's ridiculous. They're a bunch of fakers. But we have, we can never let another thing happen like what happened to us with a fake election, with a rigged election, where a guy like Joe Biden assumes the presidency. Because the man was grossly incompetent. And he was incompetent 30 years ago. But he was really incompetent for those last few years. And our country was put at great danger because of it. So for 6 months in a row, we had 0 people. Illegal border crossings along the U.S.-Mexico border have plummeted to the lowest level ever, ever, ever. Think of that. And the net benefit to our country is enormous, incalculable. America is strong and respected again. On the world stage, we're really respected. In fact, I went to a NATO and they were calling me the president of Europe. We're doing very well. We have a lot of respect. As you know, we have a problem with a war that our people are trying to settle now with Russia and Ukraine. We are not involved in the war monetarily anymore. Biden gave away $350 billion like it was candy. That's a massive amount of money. And much of it in cash, a lot of it in equipment. I don't give away anything. We sell the equipment to NATO. The European nations pay us for the equipment, 100% price. And then they bring it to Ukraine or whatever they do with it. But we're trying to get that settled. I've settled 8 wars. This would be the 9th. And our people are over in Russia right now to see if we can get it settled. Not an easy situation. Let me tell you what a mess. It's a war that never would have happened if I were president. Not even a chance. And it didn't happen for 4 years. We've renamed the Department of Defense the Department of War, and I thought that would be controversial. And frankly, I tell you what, I haven't met one person, there's not one person I've met that doesn't like it. You know, think of it. We won World War I, World War II, everything in between, everything before it. And then we said, let's change the name. So we changed it back to what it was, Department of War, and Pete's doing a great job. We ended 8 wars, think of that. 8 wars, but we're going to do 1 more, I think. I hope. I hope. Every time I end a war, they say, if President Trump ends that war, he's going to get the Nobel Prize. If I end that war. Well, he won't get it for that war, but if he ever gets it for the next war, now they're saying, if he ever ends the war with Russia and Ukraine, he's going to get the Nobel Prize. What about the other 8 wars? India, Pakistan. Think of all the wars I ended. I should get the Nobel Prize for every war, but I don't want to be greedy. Actually, the woman who got the Nobel Prize said, "You've got to be kidding. Trump deserves the Nobel Prize." So that was very nice of her. I appreciate it, which is true, actually. But I don't care about that. You know what I care about? I care about death. I care about all the people that are dying. And last month, 27,000 young people died, mostly young people, mostly soldiers, despite some missiles being shot into Kiev and other places. But think of it, mostly young people. 27,000 people died between Russia and Ukraine last month. What a shame. So we're restoring law and order to our cities and towns. If you look at what's happened, and I want to pay my deepest respects to those two incredible people from the National Guard in West Virginia they came from. I spoke to their parents. Sarah is gone. She passed away. She's looking down on us now, and she loves her parents, and they loved her. They were, somebody said, how are they doing? I said, the word is devastated. Doing. How are they going to do? They're devastated. The rest of their lives they're going to be devastated. She was an incredible person, highly respected, top of her class, everything. She was like a perfect human being. 20 years old, just started. She was like a baby. She was so proud. They were giving her a promotion. And she told the parents that she was getting a promotion, and they were so proud of her. Then they get a call that this happened. And we have one young man who's fighting for his life. He's fighting very hard. I think he's probably doing better than anybody. They said he didn't have a chance. I'll tell you, the one who said he's going to live is his mother. Spoke to his mother. Sir, he's going to live. I spoke to her very soon after this horrible event took place with this scum that was able to come into our country. I spoke to his mother. Sir, he's going to be okay. I'm telling you. No doctor thought that. Nobody thought that. He was hitting bad places, and she was like so positive. It was incredible. And it's possibly right, Pam, right? Possibly right. Boy, it would be amazing. If he lives, it would be amazing. A miracle, actually. But we're very proud of those two people. We're very proud of the National Guard. We're very proud of our military and our police and our firemen and women. If you go back and take a look a year ago, year and a half ago, it all changed, I think, on November 5th, the day of the election. But you go back before that, you couldn't get people to join the military, Pete, right? They didn't want anything to do with military. They wanted nothing to do with joining the police or the fire. They wanted nothing to do with anything. They had no spirit. The country it had no spirit, nothing. And now we just had the highest recruitment in history, and we're getting great people. We're getting great people. And I will say, despite what just happened, Washington, D.C. has become a really safe place. And I guess this lunatic probably was upset that the National Guard is so effective, because we were really, really effective, and we are. And Washington, D.C. is now considered a very, very safe city. We had crime numbers a year ago that was so bad, embarrassment, that the city, the capital of this country, could have numbers like that. And Washington now is, no murders, no this. It's been a miracle also what happened here. And now we're in Memphis, and we're going to New Orleans pretty soon. Over there, the governor called me. He'd like to have us go there. Governor Landry, great guy, great governor. He's asked for help in New Orleans, and we're going to go there in a couple of weeks. And we're doing a real job. Even Chicago's down a little bit because we have a minor force there. We could knock it down within 4 or 5 weeks. We could bring it down to almost nothing. But we have a governor that's grossly incompetent, and we have a mayor that's even more incompetent than the governor. He's a very low IQ person. And typically low IQ people don't make good mayors. So I want to thank all of our cabinet members. They're high IQ. Let me see one. Yeah, generally speaking, a couple I'm a little concerned about. No, but I want to thank, we have a great cabinet, an amazing cabinet, amazing people. All of them, sort of have become stars. We're getting credit for the good cabinet, actually. And I just want to wish everybody a great holiday. We've I think done a great job with the White House, bringing the White House back. You see the Palm Court that was redone. The Lincoln bedroom was redone. The Lincoln bathroom is now gorgeous, like it should have been. It was terrible green tile that was never the way it was supposed to be. It was done in the 1940s, actually, but it was not proper. And we're restoring the White House just like we're restoring the country, and people are thrilled. But the First Lady's done a beautiful job with the Christmas trees and all the decorations. I see the wreaths on the windows. I've never seen that before, on the windows of the White House. And you know, it's 4 stories high. I said, how did they get that wreath? They had people going up in a little dangerous. I wouldn't want to do it, but they put them up, and we have wonderful people working in the White House, and they're really proud to bring the building back. Because this building was a little bit like the country. It was mishandled, it was mistreated, and now it's being given love. And we're building one of the great, I think, maybe the greatest ballroom. We needed it for 150 years. They've been asking. You see the trucks and cranes and excavators in the background, and you hear them, and every time I hear them, I love the sound. To me, I love the sound. I wouldn't say my wife is thrilled, because she hears pile drivers in the background all day, all night. They go till 12 o'clock in the evening, day, night, pile drivers. Darling, could you turn off the pile drivers? Sorry, darling, that's progress. But no, we're doing great. It's going to be I think it's going to be the finest ballroom ever built, and we're going to have it here. They've wanted it for 150 years. Think of that. So I will just end by saying I want to thank the cabinet. It's been a great cabinet. Let's think of it. Time flies, but this is our last of the year, as I said, and I just think you've done a fantastic job. And we're going to go around the room. We'll go quickly, but we're going to go around the room, and we'll start with Pete. And you'll tell us about some of the achievements. And some of you have achievements that are so big, I don't want you to go through the whole thing because we're not done. But we'll start with Pete, and then if you want, we'll take some questions at the end. Please, Pete.
Well, thank you, Mr. President. As you said, it has been a historic year at the Department of War. Recruiting and retention over this year are at the most historic levels our country has ever seen. I had a chance to be on a aircraft carrier destroyer over Thanksgiving. The spirit in our ranks since the election under President Trump is unprecedented. I've never seen anything like it as a soldier myself in uniform, and I know a lot of you feel the same way. We've ripped out the DEI and the political correctness. It's all merit-based at the department. We're getting back to basics: accountability, training, readiness, lethality, and that's reviving that spirit. And Mr. President, we're rebuilding the military, historic investments. I just took briefings on the Golden Dome and F-47, next generation capabilities that are going to make sure that for generations to come, America has the most powerful, most capable, most lethal military in the world, which you have rebuilt once and we're rebuilding again. And then we're reestablishing deterrence and credibility. If you look at what happened, we deal with every day the outcome of what happened in Afghanistan, the debacle under Joe Biden. We just dealt with it in the streets of Washington, D.C. with those 2 National Guardsmen. And then what happened on October 7th with Hamas, what happened in Ukraine, a war that never would have started under President Trump. We're having to rebuild that. So whether it's freedom of navigation and taking the fight to the Houthis, whether it's Midnight Hammer, those beautiful B-2s going 37 hours back and forth, undetected, delivering with precision, and Iran not getting nuclear capabilities, Europe and NATO stepping up to 5%, locking down our southwest border. It's been an honor to work with Christy and Tom and everyone else down there to lock it to 0, operational control of our border. And then it's getting after and going after narco-terrorists and designated terrorist organizations in our own hemisphere. As I've said, and I'll say again, we've only just begun striking narco boats and putting narco-terrorists at the bottom of the ocean because they've been poisoning the American people. And Joe Biden tried to approach it with kid gloves and allowed them to come across the border. Cartels take over community, 20 million people, hundreds of thousands of Americans poisoned. And President Trump said, no, we're taking the gloves off. We're taking the fight to these designated terror organizations, and it's exactly what we're doing. So we're stopping the drugs, we're striking the boats, we're defeating narco-terrorists, and we're standing...
And you may say one thing, that drugs coming in through the sea by sea are down 91%. And I don't know who the 9% is.
I'm not sure either, sir.
But down 91% by sea.
We've had a bit of a pause because it's hard to find boats to strike right now, which is the entire point, right? Deterrence has to matter, not arrest and hand over and then do it again, the rinse and repeat approach of previous administrations. This is meant to get after that approach. And I will just end by saying, as President Trump always has our back, we always have the back of our commanders. who are making decisions in difficult situations, and we do in this case and all these strikes. They're making judgment calls and ensuring that they defend the American people. They've done the right things. We'll keep doing that, and we have their backs, Mr. President.
Good job. Thank you very much. Howard?
So we set out to stop the ripoff of the United States of America. This is
listening in on President Trump's cabinet meeting today, live in Washington. This is live sound, live video. If you're with us on YouTube from the cabinet room at the White House, I'm Joe Matthew in Washington. As we make our way around the table there, we'll keep tabs on the conversation, and when this resolves to questions, presumably will, with a good number of reporters there in the room, we might bring you back. But the president making some news on a number of topics here. We're going to check in with Charlie Pellet on the markets. We're going to spend some time talking to Wendy Benjaminson, with Miles Miller, and with our political panel. Just to back up a bit, though, the president's saying that his announcement on the next Fed chair will have to wait until next year. There had been an expectation that this could be an any day now situation. He said, quote, "We'll be announcing somebody probably early next year for the new chairman of the Fed. We have a guy," he said, "that's just a stubborn ox who probably doesn't like your president." Speaking to National Guardsman Andrew Wolf, who is now listed in serious condition, having been ambushed last week in the fatal attack here in downtown Washington, D.C. "If he lives, it'll be amazing. A miracle, actually," the president said. Washington, D.C. has become a really safe place despite what has happened. And with regard to the destruction of these alleged drug boats coming out of Venezuela, and the second missile attack against a boat that has drawn some concern on Capitol Hill, in fact, prompted two separate investigations. Pete Hegseth, the Secretary of Defense, saying we have only just begun striking narco boats. We had a bit of a pause because it was hard to find boats to strike right now. We always have the back of our commanders. They have done the right things. Knowing that multiple congressional committees are looking into this right now, and Admiral Frank Bradley has been identified as the man who made that order. We're going to unpack all of this, bring you analysis as you would expect here on Balance of Power on Bloomberg Radio, Satellite Radio, Channel 121, live on YouTube and Bloomberg Originals. But first, we want to check on Wall Street, see how the Tuesday trade is going. Charlie Pellet has the latest on the markets for us in New York. Charlie, it's only Tuesday, but at least we're going in the right direction.
Indeed, right direction for the bulls. Joe Matthew, the Dow, the S&P, NASDAQ, they're all advancing right now. We're looking at a 25-point gain on the S&P 500 index. A sense of caution, though, prevailing. We've got the S&P up 0.4% right now. The Dow rebounding by 0.5%, making up some of yesterday's loss, higher by 254 points. NASDAQ up by about 0.8%. The NASDAQ 100 index also up 0.8%, and our Mag 7 index up 0.5%. The 10-year at 4.09%, with the 2-year 3.52%. Gold is now down $40 the ounce, declining almost 1%. 41.92 on the precious metal. West Texas Intermediate crude down 0.6%, 58.98 a barrel. Bitcoin was down almost 8% yesterday. Today rebounding now by 6.3%. Bitcoin very close to 92,000. Bitcoin right now 91,900 on Bitcoin. Sources tell Bloomberg the Trump administration is poised to announce new fuel efficiency standards for automobiles in a bid to undo requirements it has assailed for driving up the cost of new cars. CEOs of Jeep maker Stellantis, along with GM and Ford, plan to attend a White House event tomorrow. Again, this according to sources. GM shares up 0.6%, Ford down 1.2%, and Stellantis up by 1.9%. So again, recapping here, Bitcoin rebounding up 6.3%, S&P up 0.4%. For on-demand news, 24 hours a day, subscribe to Bloomberg News Now wherever you get your podcast. And back we go to Washington. Balance of Power continues right now. Once again, your host, Joe Matthew.
All right, Charlie, many thanks. Charlie, we'll have more on the markets coming up here as we connect the dots, as always, between Washington and Wall Street, keeping our eyes on crypto. And, of course, still in the throes of earnings reporting season. We'll be looking at CrowdStrike and others after the bell. A good chunk of time listening to the president. There's a live view if you're with us on YouTube. The president and his Secretary of War, as he likes to call Pete Hegseth, speaking to a number of issues, including the latest scandal, if I can use that word, to rock Washington. This has to do with what Tim Kaine, the Democratic senator from Virginia, calls a war crime, allegedly, that this administration carried out in the Caribbean by shooting not one, but 2 missiles at an alleged drug boat, having seen 2 survivors in the water. The The Washington Post said that was Pete Hegseth. The secretary delivered a kill-them-all order. The press secretary has changed that narrative. As we learned yesterday, an admiral by the name of Frank Mitch Bradley, in fact, carried out the second strike. And he's already got an invitation to testify before congressional committees. These guys are not waiting around. Senior House and Senate inquiries continuing here. They've already interviewed Pete Hegseth himself, the Joint Chiefs Chair Dan Raisin Kane, and next, of course, will be the Admiral. We understand that will be on Thursday here in Washington, D.C. So this story is not over, and we want to spend a little bit of time with Wendy Benjaminson, Bloomberg's senior editor, with us in Washington. Wendy, this is a pretty fast-moving story. Just 24 hours ago, it looked like the Secretary of Defense could be at great risk once again, and now we're hearing that Admiral Bradley could be a scapegoat. What is he in for?
Well, he is the one who carried out or ordered other people to carry out the order. And while you're absolutely right, and 24 hours ago, you and I were sitting right here talking about it. Yeah. But yesterday, we had the Washington Post report that Hegseth ordered the kill them all strategy. The New York Times today is out with a story that has also 5 or 6 anonymous sources saying, not quite, he had given the order to conduct the strike and to make sure that there were, that any narco terrorists were destroyed, as well as the cargo and the boat. Okay. So what they're saying now is the Admiral carried out that order to make sure the entire thing was destroyed. But killing civilians who are clinging to ship wreckage is long time naval war crime. I mean, you just cannot do that. Going back to the British Navy and before, you do not kill men who are clinging to, pieces of wood in the sea. And this admiral presumably would know that. On the other hand, he was carrying out, this Times story says, the orders from the defense secretary, which presumably would have been approved by the commander-in-chief, but it was Donald Trump. But at this point, essentially, the White House's position is Hegseth did everything right, and this admiral carried out an order, which is sort of creating a scapegoat so that Pete Hegseth can keep his job and they can discipline this admiral or run him out.
What'd you make of the optics just there? Put him right next to him.
Right next to the president.
On his right shoulder.
It really was a measure of a symbol of the president's confidence in him.
He was either going left or right. It could have been Hegseth or Rubio.
Exactly.
Who's been kind of in a different orbit when it comes to a lot of things, from Venezuela to Ukraine. So Absolutely. Pete Hegseth got the treatment today. You wonder if, like I said, if we go to questions here, we'll dip back in, because that won't be pretty, right?
Right. No, it won't. And
he's in a mood today. He's been castigating the fake news and questioning IQ levels in the room already.
Right. He really doesn't like being faced with all of these scandals at once. And, notably with this election in Tennessee tonight, he called the affordability issue. In other words, the ability of Americans to pay their bills, a Democrat hoax that doesn't exist, and that he's done all these things to bring prices down, which are factually not true.
Yeah, he was playing with the word affordability. He said it's a word you never hear. We never heard this word until Democratic operatives dropped this hoax word affordability. But the fact of the matter is, as we've seen in a lot of polls, most people don't talk about inflation around the kitchen table. It's whether they can afford to pay for something, right?
Absolutely.
I don't know.
No, that's absolutely the difference.
Doesn't seem like it requires a vast vocabulary.
Inflation, remember, once again, is just the notion of how fast prices are rising. Yes. But it assumes prices are rising, hence the inflation. But what Americans are worried about are paying the bills.
He's going to rebuild Dulles Airport? See, we're hearing stuff here. How about that? Right, thank you, James, because it's not a good airport, he said.
Okay with that.
This has been a great week. By the way, if they get rid of the people movers, Mr. President, I'm on board. You're with me on that one.
I'm with you
on that. They were
never
supposed to be used for this. That's a whole other show. We can do that. God, Matt, yeah, I know. Say it to my face. Okay, let's get back on track with what we're talking about here, because this is a meeting that could go on for another 2 hours.
At least,
What was the point today of scheduling this meeting right now? Was it because of this? Because there was a Pentagon briefing as well, in which the press secretary said, we are 100% confident in what is on these boats. At what point will that need to be evidence? I thought he might show up with an easel and some pictures and some information today.
Well, we're only getting these very high-level aerial views, so how they could tell to 100% certainty that there were drugs on that boat. And look, there probably were drugs on some of those boats. You know, that is how drugs get to the United States. However, they did no interdiction. They did no arrests. They did nothing. They're just dropping bombs on these little boats and blowing them out of the water. So, you know, I mean, I don't know how they could be certain, but Congress really does seem, even though Jack Reed's a Democrat, the chairman of the committees, who are Republicans, Roger Wicker and others,
That's right.
they really want to get to the bottom of this. Yes. And I think they're going to.
They're usually pretty good at doing that as
Absolutely.
well. Wendy, thank you so much, as always. Wendy Benjaminson with the story of the day for another day and a couple of new wrinkles on this that you can read about on the terminal. This could advance again while this cabinet meeting is underway. And I want to go back to something the president mentioned about the National Guard. He was kind of doing his own narrative here. They haven't gotten to questions yet, but he did get to the National Guardsmen who were ambushed here in Washington, D.C. on the eve of Thanksgiving. We need to keep a beat on this story because, of course, Andrew Wolf was in critical condition and fighting for his life over the Thanksgiving holiday. He is now listed in serious condition. The president asked about him, said, quote, "If he lives, it'll be amazing." A miracle, actually. Talking about his conversation with Wolf's mother, who said that her son would, in fact, live through all of this. We want to get to the latest on the investigation and the fallout here from Miles Miller, Bloomberg senior national security reporter, is with us from World Headquarters in New York. And Miles, it's great to have you back here on Balance of Power. I just walked through Mr. Wolf's condition. What else can you tell us about the investigation and anything we've learned?
Yeah, we're still waiting to get charges against this suspect. Rahmullah Lakhanwal is still in a hospital, and the U.S. Attorney's Office in Washington tells me he's not going to be arraigned on these charges until he gets out of the hospital. This seems like, by all accounts, a 29-year-old who had done some work with the CIA, and really, I mean, I think the best way to explain it, and forgive me for being frank, really sort of lost his mind, you know, given the things he saw, given the troubles of finding a job, moving to Washington State. You know, we saw the pullout from Afghanistan and the trauma of what happened there, finds it really difficult to find a way to live in society. There's reporting from the Associated Press that he would spend time just driving to cities, would leave his family and his wife and would just drive to cities, and people wouldn't hear from him for days. So, you know, there is not a manifesto. There is not a reasoning behind this shooting at this moment. But what we do know is that it has led the Trump administration to make some big changes. In the next couple of hours, and maybe even the next couple of days, we expect the Department of Homeland Security to announce additional countries that the U.S. will curtail migration to the U.S. from. Right now, there's a list of about 19 countries that's expected to expand to 30 countries. And these are countries that the president said on Air Force One the other day are countries that they do not want people coming from, a full stop. You know, I think immigration groups and groups that have worked with resettlement of these Afghans and folks from other countries that are on this list said you cannot group them all together. But in effect, that's what Homeland Security is doing with this new list.
Yeah. The rhetoric from the president was something there, not only referred to Wolf and his mother, but he referred to the scum. He said this scum that was able to come into our country. And we've seen the president hold up the image of the inside of a cargo plane that left Afghanistan. It's, you know, shoulder to shoulder on the plane, but it was in fact the Trump administration that granted asylum to this man, right?
That's right. Because of, and you know, it's a little more convoluted than it seems. You know, obviously comes here during the Biden administration and has his you know, asylum hearing under the Trump administration, but it was a special category and special case because of the work he had done with the CIA. And so, you know, I think there's vetting and strict vetting, but what would they have found in the vetting part of his background check that would lead to what seems like a serious mental break? You know, they have not been able to question him. He's not been cooperative, anything sort of like this. And immigrant rights groups are sounding the alarm about it. But the president and his administration is saying, you know what, we have to have a halt, an indefinite halt from certain countries.
Mm-hmm. What's the timeline for charges then, Miles, or just don't we know?
Yeah, I mean, dependent on, you know, on him getting better, right? This happened last Wednesday. You know, it could be later this week, but we're expecting the most serious charges. And this, of course, because the one National Guard's member died. And, you know, they're talking about using the death penalty in this case. And they've said this in a number of cases that, you know, of high profile murders that have happened. You know, this is going to be a very interesting case to watch. And we, you know, it'll be interesting to see who his representation will be and what defense he has. But it appears more than anything that this was a person who had a serious mental break and for some reason drove to Washington and you know, opened fire on and he waited for them to come around a corner before opening fire. So it shows, you know, a level of premeditation and all of that. And so that'll be borne out in the charges as well.
Miles, thanks for staying on this story. Miles Miller, Bloomberg senior national security reporter, with us in New York. As the president talks about this case, we thought we would update it for you. We'll assemble our panel next with our eyes on the cabinet meeting that is still underway at the White House. We want to get to Wall Street with markets pretty close to their highs of the session right now. Charlie Pellet has the latest on Wall Street. From New York, Charlie, what do you have?
Right now, looking at those dip buyers riding in on Wall Street with the Dow, the S&P, NASDAQ all higher. Stock market resuming its advance after yesterday's pause. Here's where we stand. S&P up 21 right now at 68.34. That is a gain of 0.3%. The Dow up 242 now, up 0.5. The NASDAQ Composite Index up 158, up 0.7. The NASDAQ 100 Index up 0.8%. And the Bloomberg Mag 7 Index up by 0.4%. The 10-year 4.09%, with the 2-year right now at 3.52%. Gold is down $40 the ounce, $41.91 now, down 1%. West Texas Intermediate crude down 0.7%, $58.93 a barrel. And Bitcoin now up by 6.1%, 91,750. Yesterday, you recall the worst level. Bitcoin was down by roughly 8%. Wall Street, meanwhile, looking ahead to next week's Fed decision, a rate cut seen as a done deal. Lindsay Pieggs is chief economist at Stifel Nicolaus. And on Bloomberg's surveillance this morning, she told us inflation does remain a concern for her.
Well, it does seem at least some Fed officials have shifted their focus away from price stability to full employment. But there are still a number of Fed officials that have come out to highlight the need to remain focused on reinstating price stability after years of allowing price pressures to remain above that 2% target.
Stifel's Lindsay Pieggs interviewed on surveillance. The database software company MongoDB surging now by roughly 25% after reporting stronger than expected results, also raising its full-year forecast. And Six Flags Entertainment shares, they're up after Truist Securities upgraded the theme park operator's stock to buy from hold. It uses the ticker symbol FUN, F-U-N, up now by 2.8%. Recapping, Bitcoin up 6.1%, S&P up 0.3%. And for on-demand news 24 hours a day, subscribe to Bloomberg News Now wherever you get your podcasts. Back we go to Washington. Once again, your host, here he is, Joe Matthew.
All right, Charlie, many thanks for the readout. We'll have more from Charlie Pellet on the markets at 1 p.m., top of the hour, as we welcome our global television audience to the conversation. Thank you for being with us here on the early edition of Balance of Power on this Tuesday. We're live in Washington, the 2nd of December. Everyone's running through Christmas shopping lists now. I am so behind, but you probably understand what I'm facing here. As we try to keep up with the news, it doesn't matter if it's a holiday in politics right now. The news flow continues. And the story involving this Venezuelan drug boat, as they call it, being hit by not one but two missiles, accusations of war crimes from Democrats, concerns about illegal orders being made by some Republicans on Capitol Hill. President just decided to take the bull by the horns here. A cabinet meeting is underway right now inside the White House. The president chose to sit the Secretary of War right next to him. just at his left. And after speaking for about a half hour, he turned to the defense secretary for an update on his agency. That's what they do. They do the whole round robin. And Hegseth talked about recruitment levels and a couple of other things, but got right to the matter at hand, right? The kill-em-all order that you heard about in the Washington Post over the weekend that Hegseth reportedly made. Not so, says the administration. It was, in fact, an admiral by the name of Frank Bradley. They call him Mitch. Ordered the second strike. The press secretary said it yesterday. And now with Republican concerns of a scapegoating of the admiral, the defense secretary weighs in from the cabinet table with reporters in the room. Let's listen.
As I've said, and I'll say again, we've only just begun striking narco boats and putting narco terrorists at the bottom of the ocean. President Trump said, no, we're taking the gloves off. We're taking the fight to these designated terror organizations, and it's exactly what we're doing. So we're stopping the drugs, we're striking the boats, we're defeating narco terrorists.
He went on to say, quote, we always have the back of our commanders. They have done the right things, referring to Admiral Bradley. Hegseth posted on X about it as much last evening. Let's assemble the panel for their take on this, because this story's changed a lot in the last 24 hours. Bloomberg Politics contributors Jeannie Shanzano and Rick Davis are with us. Jeannie is Democracy Visiting Fellow at Harvard Kennedy School's Ash Center, our Democratic analyst. Rick, Republican strategist, partner at Stone Court Capital. It's great to see you both. Jeannie, to what extent has this narrative changed? And how much would you like to be Admiral Bradley today?
Yeah, it's changed a lot from Franklin the Turtle, who he was putting out 48 hours ago as a joke. And now he is saying that he has the back of the Admiral. I think that the Admiral has got to go before and will testify in Congress. We already know the Secretary has, and this is going to come out. And the reality is legally, putting aside the Admiral, if Pete Hegseth gave a shoot to kill order in advance, even if it wasn't the double tap on that second tap, that is a violation of war and a war crime, and it is illegal. You have people that surrender. You have people that are incapacitated. In this case, there are apparently people clinging to a boat. You don't just say, well, I'm going to give an order shooting to kill. So I'm not sure any of this exonerates the Secretary. And I do wish he would take responsibility of his position and say the buck stops with him and stop scapegoating the Admiral.
What do you think, Rick? Did the president and the defense secretary shut down this story today? Because you've got two Republican-led committees launching investigations right now on Capitol Hill.
Yeah, look, Congress has oversight on these kinds of activities, especially with the Department of Defense and the committees that you described, Joe. And I have absolutely no doubt that Admiral Bradley will have time, in the barrel, probably in a classified briefing, to explain exactly what they believe their rationale was for the legal underpinnings of the attack. Admiral Bradley is a superstar in the military, a physicist by training, probably one of the brightest of a group of really capable senior leaders in the uniformed service. And I have a lot of confidence that this was not done in haste or without a firm understanding of the legal underpinnings that would allow them to do what they did. That being said, I totally agree with Jeannie. Where's the buck stopping on this one? I would remind everybody that the Commander-in-Chief of the United States of America is a line responsibility to the Department of Defense. President Trump serves in that capacity and has responsibility for everything that happens under his command, within the Department of Defense. And so the fact that the civilian leadership writ large has taken a powder on this and is leaving it up to the uniformed services to clean up, I have a lot of confidence that Admiral Bradley believed he was acting in full accordance with the law, and it will be interesting to see what comes out of this through proper investigation and oversight on Capitol Hill.
Really interesting moment we're in here, Jeannie, because Pete Hegseth said that on September 3rd, he watched the attack live in real time. we had satellite imagery of this while it was happening. When you talk about where the buck stops, doesn't that involve him directly?
It absolutely does. And if I'm correct in this, Joe, I think he said that very proudly on Fox News. He proclaimed that the day after, as the White House and the administration released this video, but not of the second tap. And so, yes, that's absolutely going to come back to Pete Hegseth, and the Senate and the House, as they engage in their oversight, are going to have some really tough questions for him. We also can't forget that the president is at the absolute top of this heap. Why are we engaged in these bombings off the coast of Venezuela in the first place? None of that has been clarified. They have been saying for months it's about drugs, and yet we know that you're going to get more cocaine out of there than fentanyl, most of which is not even coming from the U.S. None of it makes any sense. They have yet to clarify what we're doing there. And one thing I hope Congress does immediately is stops any bombings until we get to the bottom of what is happening off the coast of Venezuela. Because the administration, from the president to Pete Hegseth and on down, including, by the way, Marco Rubio, who want a regime change in Venezuela, should be answerable to Congress and the American public as to why we are engaged in this way there, and have at this point killed a number of civilians under very questionable legal circumstances.
Well, the optics here were pretty interesting. Rick, the president could have done anything today. He had the cabinet meeting, decided to park Pete Hegseth on one shoulder and Marco Rubio on the other. I don't think they've made their way all around the table yet because they tended to go in one direction, and we heard from Pete Hegseth first. He's already been interviewed, Rick. This is pretty wild. Armed Services Committee inquiries in the House and Senate have already interviewed Hegseth, Dan Kane, the chair of the Joint Chiefs, and Bradley's going to get his turn on Thursday, as you were just describing. How important will it be to go back and review what Hegseth told them?
Look, I think that either this storyline is going to square up and that people will be able to show a continuity of command. In other words, whatever Hegseth said was followed by, the commander on the ground, in this case, Admiral Bradley, the SOCOM commander, all the special forces report to him, and that it was carried out in kind. I think there's a lot of skepticism already over this program of making these attacks in the Caribbean with Republican and Democratic leaders in the appropriate oversight committees. And so for this to come up as a real questionable act in amongst a group of questionable acts, it's going to get a lot of daylight. And we may never actually know the details of the transfers of orders and how they were carried out, because some of that may be classified based on the kind of function that this has been going through. But at the end of the day, I am confident that this is not one that the Congress is going to defer to President Trump on. They're going to want to know that they can go back to their constituents and said, we looked hard at this, we got the answers we needed, and we took appropriate action. We don't know what that appropriate action is today, but that process has started. As you point out, Congress did not delay once this became widely known in getting on top of it and starting to question the necessary officials as to what happened and when it had happened.
Yeah, boy, it was like light speed. Jeannie, you mentioned Franklin the Turtle. We need to close the loop on this. The publisher of the book series, this was a Canadian children's book series, is speaking out about Hegseth's post on X. Kids Can Press, condemning the denigration, violent or unauthorized use of Franklin's name or image, which they say directly contradicts the values of kindness, empathy, and inclusivity that the character stands for. The Pentagon actually responded, Jeannie. In an emailed response, Chief Pentagon spokesman Sean Parnell says, "We doubt Franklin the Turtle wants to be inclusive of drug cartels or laud the kindness and empathy of narco-terrorists." About 30 seconds left. Is he right?
He is absolutely wrong. Franklin the Turtle Joe loves everybody. He does not abide for drug terrorists or others, but he certainly doesn't go up into airplanes and shoot them down.
I don't think he owns a rocket-propelled grenade launcher, Jeannie, but we saw the cover of the book. Rick Davis and Jeannie Shanzana will stay with us. We're going to have a lot more to get through in our second hour, and I'll warn you in advance, we might get back in the cabinet room when they go to questions. You never know what's going to happen around here at midday, not with this White House. I'm Joe Matthew in Washington. This is Bloomberg. Make sure to subscribe to the Balance of Power podcast. Go to Apple, Spotify, and anywhere else you get your podcasts. Watch us live on YouTube and listen anytime at Bloomberg.com.
From Washington, D.C., this is Balance of Power with Joe Matthew.
The president's envoy arrives in Moscow. Welcome to the Tuesday edition as Steve Witkoff meets today with Vladimir Putin, Jared Kushner in tow, in hopes of selling a peace deal that's been revised greatly since the Russians were involved. Of course, all of this about Ukraine, and we'll have the latest for you as we discuss with Liana Fix from the Council on Foreign Relations and with our political panel this hour. as the Secretary of Defense now pledges to continue striking boats, drug boats in the Caribbean, despite concerns about legality. We'll get reaction from Republican Congressman Carlos Jimenez of Florida. All after a look at Wall Street. Been a pretty good day so far, and Charlie Pellet has the latest on the Tuesday trade from World Headquarters in New York. Charlie, how's it going?
Thank you very much, Joe Matthew. Indeed, good day for the bulls with the Dow, the S&P, NASDAQ all higher. But right now, we've got the S&P 500 index, little change. Perhaps the key takeaway at this hour, looking at a 1-point gain on the S&P 500 index. The Dow Industrials up 82 now, up by about 0.2%. NASDAQ up 85. The NASDAQ Composite Index up 0.4%. And our Mag 7 index up just under 0.1%. The 10-year yield, 4.09%. We've got the 2-year yielding 3.52%. Spot gold now down by almost $40 the ounce to $41.94, down 0.9%. West Texas Intermediate crude, 58.90 a barrel. WTI down 0.7%. And Bitcoin had been down as much as 8% yesterday. Bitcoin today rebounding. Bitcoin right now up by 5.9%, 91,526 on Bitcoin. Boeing leading the Dow higher. Boeing shares are surging now by 8.7%. By the way, 16 Dow members higher, 14 lower. Boeing says it expects to generate cash again in 2026. That is a significant reversal in the plane maker's finances as it prepares to boost monthly production rates and pushes ahead with certification of the much-delayed 777X jetliner. Again, Boeing bears repeating, up 8.7%. Recapping here, U.S. stocks pushing higher. S&P up by just under 0.1%. Bitcoin right now up 0.5%. For on-demand news 24 hours a day, subscribe to Bloomberg News Now wherever you get your podcasts. Back we go to Washington as Balance of Power continues. And once again, your host is Joe Matthew.
Many thanks, Charlie. We'll have more on the stock market, bonds, crypto, and the rest when we check in with Charlie in about 20 minutes from now. Speaking of crypto, I do want to let you know, at the bottom of the hour, a little bit after 1:30 p.m. Eastern Time, we're going to be talking with Gary Gensler. Yes, Gary Gensler, who one time, of course, ran the SEC. And the former chairman is going to talk today about what we've been seeing in the crypto space and beyond when we spend some time together, about 1:40 if you want to set your clocks East Coast time. We've got our eyes on the cabinet room at the White House. President Trump has been going for a little more than an hour, remembering that sometimes these can last several. Of course, wrapped around the cabinet table with the heads of each agency, and they're going one by one, delivering updates on what's happening here, backed by a number of reporters who at some point will be invited to ask questions, and we'll bring you in the room when that takes place. Much of the conversation today zeroing in around our policy, our military policy in the Caribbean, but also our support for Ukraine and the drive toward peace. Steve Witkoff and Jared Kushner are in Moscow right now, and they'll be meeting any time now with the time change with Vladimir Putin. It was supposed to be an early nighttime session, and it's unclear how long they're going to be going here. Remembering, there was a 28-point peace plan the U.S. hammered out with Russia. Once Ukrainians were involved, that was whittled down to 19 points. And this could be a non-starter already for Vladimir Putin. We heard earlier from Dmitry Peskov, Kremlin spokesman, who said that the meeting was expected to take place early evening, but no details on unresolved issues or timing. Negotiations will go on, quote, as long as necessary, unquote. President Zelensky of Ukraine watching all the while and spoke earlier about the process in Dublin. Let's listen.
We are waiting for the results in America-Russia negotiations, today's results. And I will react according to the results. If I feel that we can count on real, specific dialogue, not just words, with some result, we will meet. And he's very welcome to Ukraine, but I'm not sure that they are up in this on this way this day. They're ready to come, but who knows?
It is unclear if a final product will emerge or if it will be palatable to either side, which is where we start our conversation with Liana Fix, Senior Fellow for Europe at the Council on Foreign Relations. Liana, I'm guessing your expectations are pretty low here. What could come from this meeting today?
So what we are certainly going to see is at least some kind of simulation from the Russian side that they are willing to negotiate, because this whole new negotiation effort from a Russian perspective really served the purpose of averting increased pressure from the United States and Europe. And so far it has been successful. Pretending to be willing to negotiate from the Russian side makes actually much more sense than just refusing any negotiation proposal from the outset.
Mm-hmm. Interesting optics yesterday ahead of this meeting. Vladimir Putin decided to visit the troops, went to a battlefield command post, and grew visibly angry and emotional based on the reporting that we've seen here after a commander reported that Ukrainian soldiers were dying by the hundreds, their bodies littering the tree lines. This is a tragedy, he said, with the Ukrainian audience, I guess, in mind. A tragedy for the Ukrainian people connected to the criminal policies of the thieving junta that seized power in Kyiv. This doesn't sound like somebody who's prepared to sit across the table from President Zelensky, does it?
No, and it also signals that from Russia's perspective, there's no future for a Western Ukraine, even if Ukraine accepts a Russian occupation and de facto control over Eastern Ukraine. That Vladimir Putin does not see a future for Western Ukraine as a free society that can choose freely its leaders, freely its alliances, and is liberal, democratic, and prosperous. He wants to have all of Ukraine under his control, either militarily in the east or politically by influencing Ukrainian elections, by weakening the Ukrainian state after any ceasefire agreement on Russian terms has been found. So this is a ceasefire would, from Russia's perspective, just be a different continuation of warfare, political warfare, for the west of Ukraine instead of military warfare in the east of Ukraine.
Well, as Russia continues to make military advances, it's why he was in the battlefield, to show off the momentum that his troops are enjoying. In what world does anyone think that Vladimir Putin wants to negotiate or bring this to an end?
So apparently the administration, the U.S. administration, does see such signs of willingness to negotiate. But the problem here really is that the U.S. negotiation team seems to be very open of taking Russian demands at face value, and seems much more reluctant to accept Ukrainian and European red line. So if you go into a negotiation with the assumption that you just have to pressure the weaker side enough to make a compromise work that basically undermines Ukraine's existence as an independent state, then of course you can get an outcome. And that is what we are seeing right now. That is what the Europeans and the Ukrainians are pushing against. Now we have to see how the Kremlin is playing this new proposal, if he's trying to drag out negotiations, Vladimir Putin, or if he tries another way of averting pressure from Russia and trying to achieve his still maximalist gains in Ukraine.
So what are you going to be watching after this meeting? Steve Witkoff is going to call the boss, obviously, and then we'll get presumably a readout from President Trump on Truth Social. How different will that read than what we hear from the Russians?
So in the past, Vladimir Putin has not been particularly smart about meeting with Trump and negotiating these ideas. In Alaska, remember, he apparently, as was reported, entertained Trump with historical lessons for a really long time, something that Trump obviously is not interested in at all, distorted historical lessons, all the more about Ukraine belonging to Russia and so on. So I'll be watching if Vladimir Putin has become a little bit more flexible tactically, if he sees the need, to give the Trump administration more reason to believe that he's actually willing to negotiate, or if he's just going back to his maximalist talk about a Ukrainian junta, about the need for Russia to occupy all of Ukraine's east, and the end of any military support for Ukraine by Western allies. I think it will be difficult to spin maximalist Russian position as a success for the Trump administration. But if they don't get that, it would be the third failed attempt to negotiate over Ukraine, which then might result in another round of frustration and perhaps increased pressure on Russia, thinking tomahawks here, thinking the Congress sanctions bill on Russia.
Just lastly, Liana, this is the 6th visit for Steve Witkoff, who has said openly that he's a big fan of Vladimir Putin. I think they met for 6.5 hours at one point. I don't know what kind of a party is going on over there or what kind of a meeting is going on over there, but when you see two people get close like this, what is the other side? What do Ukrainians make of Steve Witkoff? Do they trust him?
From a Ukrainian perspective, I think the main problem with Witkoff is that he lacks expertise. It's difficult for him to really distinguish what is a Russian bluff, what is a Russian lie, and what is the actual reality. He also does not have advisors around him or note takers who can not only help with some fact-checking of Vladimir Putin, but also some note take on what the Russian side actually says. In the past, there has been confusion about issues that Witkoff reported back to the United States, a willingness to compromise from the Russian side, which is not actually what the Russians or what Vladimir Putin has said. So Witkoff, from a Ukrainian perspective, is an unreliable negotiator who tends to be too open from a Ukrainian perspective for Russian positions and does not fully seem to understand the history of the conflict and also the history of Russian imperial ambitions in the region fully well.
Yeah. Well, great conversation, Liana. I appreciate your joining us. Liana Fix with the Council on Foreign Relations, where she's Senior Fellow for Europe. We assemble our panel for their take on this. We've been talking about it with Rick and Jeannie since this war began. Bloomberg Politics contributors Jeannie Shanzano and Rick Davis. He is our Republican strategist and partner at Stone Court Capital. Jeannie is Democracy Visiting Fellow at Harvard Kennedy School's Ash Center. Really interesting, Rick, to hear her refer to Steve Witkoff as an unreliable negotiator, unable to tell what is a Russian bluff, what is a Russian lie, no note takers in the room. What's Witkoff going to get done here tonight?
Look, I think it's going to be just more of the same. I mean, we've seen this act now for over a year where, Witkoff will go and spend a lot of time with Vladimir Putin and come back and basically ape the Russian propaganda. I mean, when you're meeting with Vladimir Putin, you have to assume everything he's telling you is a lie. And it's all part of a Russian propaganda campaign. I mean, nobody does it better than Vladimir Putin. And so if you don't see through the smoke, you'll never make progress toward a achievable end. And most people I've talked to who are watching these negotiations with experience on, dealing with Vladimir Putin for the last few decades, all agree that we're nowhere near getting anything done on a deal, because at some point, the U.S. has to make it clear to the Russians, to Vladimir Putin, that they have to accept a deal or it's only going to get worse for them. Either more sanctions, the congressional sanctions that are being talked about now are exactly the kind of thing that can help break the back of this negotiation. Not Witkoff building a trust relationship with Vladimir Putin. Vladimir Putin doesn't trust anybody. He doesn't trust Russians. He doesn't trust Americans. He doesn't trust Ukrainians. So all that effort going forth to build that level of trust and that relationship is frankly a waste of time.
So, Jeannie, why is President Trump so patient with Vladimir Putin?
I think the headline we saw the other day in one of the newspapers about making money, not war. I think this is a president who likes to make deals. And I think he and people he associates with see this as a deal that he can make if he can just strong arm Ukraine and Europe to go along with it. So I think there is some of that. I also think he sees realistically that Ukraine does not have much in terms of its ability going forward to win on the battlefield without a lot more support from Europe and the United States, which he doesn't see it forthcoming from the U.S. So I think there are a lot of reasons like that. We understand this is Jared Kushner's first face-to-face visit with Putin on this issue, which I think is going to be fascinating. But I agree with Rick. I don't see much coming out of this. The 28-point plan that Witkoff originally brought forward was a surrender document. That is not going to sell in Ukraine or Europe, even though Zelensky is politically weakened in his own country, given this corruption scandal. It's just not going to fly. And so they're going back with this 19-point plan. And yet you just discussed the fact that Putin describes the Ukrainian government as a junta and has said publicly numerous times he cannot and will not make a deal with Zelensky. So you sort of throw up your hands and say, if he's not even willing to make a deal with Zelensky, who is the leader of the other side, how is this going to happen? And of course, what we're seeing is he's not dealing with Zelensky. He's dealing with Witkoff and Kushner. So I think this is a non-starter, and I think the president's going to have some really tough decisions to make going forward. But I am not confident he is going to side with Europe and Ukraine on this any more than he already has.
Well, as we talk potential peace here in Ukraine, Rick, another attack on a Russian tanker here, purportedly from Ukraine. It was a drone attack that has now prompted Vladimir Putin to warn Russia may consider striking the ships of other countries supporting Ukraine if the surge in attacks on Moscow's tanker fleet does not stop. I don't know how many nations that includes, but we're looking at you, Europe, and maybe even the U.S., Rick. When you hear this kind of rhetoric against the backdrop of a peace negotiation, he's sitting down with Witkoff and Kushner, maybe as we speak right now. What does that tell you?
You know, it's just another piece of, Vladimir Putin's Russian propaganda. I mean, the one thing that is absolutely certain is that he cannot afford anyone else to enter this fight but Ukraine. He feels like he can beat Ukraine on a one-on-one. And it's, of course, been 4 years, and he hasn't accomplished that. So it's been no easy task for him. But if any Western organization, country gets into this fight, it's over for him. He cannot sustain a multi-front battle against a Western, well-equipped, well-trained military. He's got a killing field going on right now, and as long as he's got young men to put into it, he has an army. But against a sophisticated, technologically advanced, well-trained army of the West, he doesn't stand a chance. So all of this is just a big bluff. Remember, he was going to use nuclear weapons, if certain acts were perpetrated against him by the Ukrainians. This is all the same thing. And so, again, you just can't take him on face value. Everything's a game to Vladimir Putin. And if we're not playing the same game and understand what he's trying to accomplish, we're going to let him get the upper hand.
Well, maybe he's met a gamer in Donald Trump, Jeannie. In our remaining 30 seconds, remember when Trump was talking about putting nuclear subs in the waters of Russia?
Yeah, absolutely. And, they are quite an interesting match. And, Joe, I also wanted to add the corruption scandal in Ukraine that people describe as playing out like a Netflix documentary or a movie online and on the internet is just another wrinkle in this entire thing that weakens Zelensky.
Wow. It's not getting any easier, guys, but very glad to have you with us. Rick Davis and Jeannie Shanzano, Bloomberg Politics contributors, the best in the business, and a great panel. We thank you. We're going to turn to what's happening in the Caribbean next. Congressman Carlos Jimenez will be with us only here on Bloomberg.
It's 1:21 on Wall Street. We do check markets all day long here at Bloomberg. Dip buyers move in, stocks higher as cryptocurrencies stage a rebound in the wake of a rough start yesterday to the trading month of December. Here's where we stand. S&P right now up 12, 68.25 where we stand, up by about 0.2%. Dow Industrials up 76. That is a gain also of 0.2%, while the Nasdaq Composite Index up 139. Nasdaq up by 0.6%. The Russell 2000 Index of small cap shares up 0.3 right now. The Bloomberg Mag 7 Index up 0.4%. The 10-year 4.09% with the 2-year currently yielding 3.52%. Gold down 0.9%, 41.94 the ounce. West Texas Intermediate crude down 0.6%, 58.97 a barrel. And Bitcoin now up by 6.5%. Bitcoin just above $92,000. Michael Burry is calling Tesla shares, quote, ridiculously overvalued, and says shareholder dilution is set to continue after the proposed $1 trillion pay package for co-founder Elon Musk. This according to a post on Substack. Burry, best known for correctly betting against the housing market during the 2008 financial crisis, he did not respond to a Bloomberg News request for comment. Tesla shares right now, they're trading lower. Right now we got Tesla down by 1.1%. Boeing, key member of the Dow Jones Industrial Average, in fact, leading the Dow higher right now. We got Boeing up by 9.4%. Boeing expects to generate cash again in 2026, a significant reversal in the plane maker's finances as it prepares to boost monthly production rates and pushes ahead with certification for the much-delayed 777X jetliner. CFO Jay Malavi says Boeing expects positive free cash flow to reach the low single digits next year, reversing the $2 billion cash burn seen for 2025. Again, Boeing shares leading the Dow higher. Boeing right now up by 9.5%. Some of the other stories that we're following: in an unprecedented philanthropic gift, Michael and Susan Dell will be giving 25 million American children $250 each to jumpstart an investment account for their futures. That $6.25 billion gift builds on the Invest America initiative, better known as Trump accounts. Again, recapping here, stocks higher. S&P right now up by 0.2%. Balance of power continues right now. Back we go to Washington. Once again, your host, here he is, Joe Matthew.
All right, Charlie, thank you so much. We'll have more on the markets with Charlie Pellet. Pretty good trade today so far on this Tuesday, and we'll get back to Charlie in about 20 minutes as we keep tabs on the markets every day here, even as we talk politics live from Washington. Thanks for joining us on the Tuesday edition of Balance of Power here on Bloomberg TV and radio. The cabinet meeting is still underway. The president's going to hit 2 hours in just about 20 minutes time here as he goes around the table. We've done this together a few times now, the round robin of agency heads giving him an update on what's happening inside each agency that falls under the executive. The first person we heard from, interestingly, after the president's own remarks that he opened with, was the defense secretary, someone we have heard a heck of a lot about over the past couple of days here, Pete Hegseth, speaking to a couple of matters within the Pentagon, including retention rates, enlistment levels, and then he went directly for the story in Venezuela, having been accused effectively in the Washington Post of ordering a kill everyone order when we attacked the first alleged drug boat coming out of Venezuela. Didn't get everybody with the first missile. As we discussed yesterday, there were 2 men clinging to wreckage, and a second missile was fired, killing them as well. Washington Post suggesting that was Pete Hegseth with the order, but it was in fact, as we learned from the White House, Admiral Frank Bradley, well regarded in the Pentagon, a man of deep experience, knowing as well that Hegseth was watching all the while. He had said very clearly he watched the attack live and in real time. So there are questions about chain of command, which Hegseth did not address when he spoke to reporters a short time ago. Listen.
As I've said, and I'll say again, we've only just begun striking narco boats and putting narco terrorists at the bottom of the ocean. President Trump said, no, we're taking the gloves off. We're taking the fight to these designated terror organizations, and it's exactly what we're doing. So we're stopping the drugs, we're striking the boats, we're defeating narco terrorists.
Great opportunity to spend some time with Congressman Carlos Jimenez, the Republican from Florida's 28th District. We've got Miami in our sights, is with us now on Bloomberg TV and radio, a member of the Armed Services Committee specializing in readiness, tactical air, and land forces. Congressman, welcome back to Bloomberg TV and radio. It's great to have you. You've made pretty clear that narco-terrorists are, in fact, a true threat, a terror threat to the United States. Does this need to end with regime change, or is this program underway now what we need?
No, the program is underway with, this is exactly what we need, and even if there is regime change in Venezuela, there are still other narco-terrorists running around in the region, in Colombia, Mexico. There's also, we know that they've been responsible for a lot of the fentanyl that's been coming into the United States and killing tens of thousands, if not hundreds of thousands of Americans. And so even if there is regime change in Venezuela, I think that's just the beginning of the fight against these narco-terrorists.
There's a lot of folks who are worried about what might happen to Admiral Frank Bradley. We're hearing the term scapegoat, knowing that there are a couple of important investigations underway, and he's going to be testifying, we understand, on Thursday before Armed Services. I don't know if you're going to be part of that conversation, Congressman. I'd love to hear what questions you would have for him and whether you are concerned that that order was unlawful.
Well, look, I don't think the law, any order was unlawful. I think that they have been designated as a foreign terrorist organization. They're carrying deadly drugs that kill Americans, and trying to get them into the United States. And so I don't see that any different. Actually more dangerous than a boat full of Al-Qaeda terrorists bringing bombs into the United States. I mean, that's the same thing to me. They're killing Americans, and frankly, a boatload full of drugs has the potential to kill far more Americans than a boat full of explosives. And so, everybody's hung up on this as these are drugs. Yeah, these are drugs that are killing Americans, all right? And these are terrorists that are bringing these drugs into America. They have been for years. The fact that no administration has ever deemed it this way, the fact that we're actually taking the fight to them, and this war to them, they've declared war on us a long time ago, right? And now we're taking it to them, and everybody's astounded. To me, I'm saying, hey, it's about time that we took the gloves off and we started treating these people like what they are. They're foreign terrorists that are killing American citizens.
I do appreciate your position on that. I guess the question is, after the first strike, when you see two people no longer considered combatants when they're floating in the water, is it okay to go after wounded survivors or any survivors and kill them, as we apparently did?
Yeah, but apparently, that's only, that's what people are saying, okay? But also, you got to complete the mission, and the mission is to destroy the boat, destroy all the drugs. And I'm not going to second guess, a highly decorated admiral in what he thought was necessary to complete the mission, because I'm sure what the mission was is destroy the boat, destroy all the drugs. Yeah. And maybe, just maybe, the boat wasn't fully destroyed, and maybe all the drugs weren't destroyed either. And so, that's what I'm thinking is actually what happened. And I'm not going to second guess this admiral in what was going through his mind when he gave the order to launch a second strike. I mean, a lot of it has to be investigated, and that's fine. Bring the admiral before the committees, and then we'll ask him and discuss exactly what happened and the sequence of events. But I'm not going to jump in front of this and say, oh my God, it's horrible and all that. No, I'm gonna give the admiral the benefit of the doubt. I think he deserves that.
Sure. Well, and I know that you'll have a chance to question him, so we don't want you to jump to conclusions here. I guess I just wonder if some of these alleged narco-terrorists would be more valuable if we took them prisoner, try to go up the chain of command.
Well, maybe they would be, all right? But, it's, remember, you somehow think that there are assets in the area that somehow can activate a rescue operation or an apprehension. Yeah. A lot of these things happen because, you're talking about a really large area of the earth, and we don't have assets everywhere. Now, can we reach out and touch you? Yeah, we can reach out and touch you, but it doesn't necessarily mean that we have a boat in the area, a ship in the area that can actually go out and effectuate that rescue. And so, again, I don't have all the details of what was in the area. I don't have all the details of what could have happened. And again, I'm not going to second guess the admiral on this instance unless, some action that he took was actually something that we can second guess. And we don't have that information yet.
The president's talking to Maduro, Congressman. Could you see a diplomatic solution here, or does this need to end militarily?
No, I think I can see a diplomatic solution where Maduro leaves quietly or leaves publicly, goes to a country that will offer him asylum. I think the president has actually offered him and said, you got to leave. Now, the president didn't offer him his amnesty because, you know, Maduro is guilty of crimes. We have a $50 million bounty on his head. And so the president can't offer amnesty, but I can see where Maduro can end up in a third, in, you know, some other country where maybe there's no extradition, and then he can, you know, live out his life, him and his family. I'd rather see that. I don't want to see any further bloodshed. You know, the final thing that has to happen is Maduro has to leave. He's the illegitimate ruler of Venezuela. There's a legitimate government in waiting. He is the head of a designated terrorist organization, the Cartel de los Soles. They have been killing Americans for years. There's blood on his hands. And so, yeah, for the benefit of the people of Venezuela, but also for the benefit of the security of the United States and its citizens, Maduro has to go.
How do we rationalize that with the president's decision to pardon the former president of Honduras, Juan Orlando Hernandez, who was convicted for moving hundreds of tons of cocaine into this country? How is that coming from the same administration, Congressman, and is that something that you supported?
No, nobody asked me, and look, I'm not a big fan of pardons by anybody if somebody's been convicted. The president has his reasoning. He felt that it was unjust, and so, you know, he has that power. But you know, it doesn't negate the fact of the actions that he's taken against Maduro and the narco traffickers from Venezuela. So I fully support that. I really didn't have that much information on this former president and what he was convicted on. Frankly, the first time I'd heard his name was a couple days ago when they mentioned the pardon.
The president says it looks like Honduras is trying to change the results of their presidential election. He posted last evening, if they do, there will be hell to pay. Are you concerned about the U.S. getting involved in the Honduras election?
You know, I'm concerned about the Honduran government, which is a leftist government, far left government, is trying to steal the elections. They stopped counting after 46% of the vote was put in, with the two opposition leaders far out in front of the incumbent government. And so we had some conversations with some of these, you know, other candidates in the last couple of weeks, told us what was going to happen if, in fact, the results weren't coming their way. And sure enough, they stopped counting, and yeah, I have concerns that in Honduras they're going to try to steal the election, just like Maduro stole the election last year. This is how these government works. Okay, they use democracy against democracy to make sure that democracy doesn't win out in the end, and it's no joke to the people of Honduras. And so I'm very concerned of the fact they stopped counting after 46% when they knew and they saw the results, these results, that they were going to get blown out of the water. How convenient that they just stopped counting, and now they're going to probably declare themselves the winner and steal the election. That's not democracy, and that shouldn't exist in our hemisphere.
Congressman Carlos Jimenez, Republican from Florida. We thank you, Congressman, for your time. That initial digital push will be followed up by hand-counted votes.
It's 1:40 on Wall Street. We do check markets all day long here at Bloomberg. Stocks little changed after yesterday's decline. S&P right now up by about 0.1%. Dow Industrials also higher by 0.1%. Nasdaq up 0.5% with a 10-year currently yielding 4.09%. Gold down $45 the ounce, down 1.1%. West Texas Intermediate crude down 0.5, just above $59 a barrel. Bitcoin now up 6.3%, $91,900 on Bitcoin. Recapping, stocks higher, S&P up by about 0.1%. Balance of Power continues now. Back we go to Washington. Once again, your host, Joe Matthew.
All right, Charlie, many thanks. We've been watching Bitcoin almost as much as stocks lately because it's been so intrinsically tied to the markets. Remember when it was supposed to be its own universe? That was the whole point, the decentralized cryptocurrency. It is bouncing back today, up $5,400 and approaching $92,000 a coin, so maybe it bottomed. Unclear, as we've had multiple folks, including Mike McGlone at Bloomberg Intelligence, predict another crypto winter. Michael Saylor also preparing for one at Strategy. Despite the love this administration has shown, the embrace of the crypto industry, as we remember the ways with Donald Trump since he took office. Listen.
Last year, I promised to make America the Bitcoin superpower of the world and the crypto capital of the planet. With the right legal framework, institutions large and small will be liberated to invest, innovate, and take part in one of the most exciting technological revolutions in modern history. For years, you were mocked and dismissed and counted out. You were counted out as little as a year and a half ago, but this signing is a massive validation.
A massive validation as we watch the gyrations in the crypto market. Pleasure to spend some time with Gary Gensler as we consider the crypto space, regulations, and the plumbing in the market. He's with us live now, former chair, of course, of the Securities and Exchange Commission, professor of the practice at MIT Sloan School of Management. Mr. Gensler, welcome back to Bloomberg TV and radio. Is that you buying the dip in Bitcoin?
Joe, it's good to be back and good to be with all of your viewers. But no, I'm not participating in that market.
Well, what do you think of this? We've spent a lot of time talking about this when you were in the job at the SEC and the many warnings that you made about this potentially risky asset. And we're witnessing a reckoning in the marketplace right now. What do you think is behind it?
Look, I think it's a risk asset, and the American public and the worldwide public has been fascinated with cryptocurrencies, but it's a highly speculative, volatile asset. And putting aside Bitcoin for a minute, all the thousands of other tokens, not the stable coins that are backed by US dollars, but all the thousands of other tokens, you have to ask yourself, what's the fundamentals? What's underlying it? You don't get a dividend, you don't get usual returns, and so the investing public just needs to be aware of those risks in this highly volatile space.
What do you make of the politicization of crypto? The fact that the Trump administration has become involved to this extent has reportedly turned off some investors as they watch the Trump family enrich themselves with gains like this. Is this a Democrat versus Republican thing now?
No, I don't think so. I mean, it's about our capital markets. The U.S. have the greatest capital markets, and they benefit from common sense rules of the road. When you buy and sell a stock or a bond, you want to get, various information, and you want to know that you're getting the same treatment as, the big investors. That's the fairness in these capital markets that are so important.
I've heard a lot about the impact of ETFs on this space. That's something you know a lot about, the initial ETFs that were greenlit to start buying crypto. Did that just change the plumbing in the crypto market here by tying it directly to the stock market?
Well, ever since antiquity, finance goes towards centralization. So it's not surprised that which was started as a decentralized ecosystem, and that was the vision, has become more integrated and more centralized. Investors can express themselves in gold and silver through exchange-traded funds. And as of a couple years ago, actually, all the way back to my first year in the job, there were exchange-traded funds on Bitcoin futures, just as there is for gold and silver.
Yeah. Well, Mr. Chairman, I want to ask you about, speaking of plumbing in the markets, what happened at the CME last week, and whether you think the CFTC should be investigating this outage. Should the CME be facing additional scrutiny?
Look, it's something really well understood that our major stock exchanges and futures markets, the Chicago Mercantile Exchange trades very consequential parts of our U.S. Treasury market and interest rates markets. They're critical infrastructure. On Thanksgiving evening, they had an outage at a data center. Importantly, it wasn't actually their computers, it was the chillers, as I understand it, the cooling system in this data center. And they had an outage for about 10 hours. And so the markets planned for that. The Chicago Mercantile Exchange considered, they didn't go to their backup data center. They stayed partly because it was Thanksgiving evening, as I understand it. I'm sure that they at the Chicago Mercantile Exchange and the various regulators will keep looking at it and look for lessons learned. You always look for lessons learned and how can we do things better in the future.
Well, we've experienced an incredible number of inquiries about this at Bloomberg. Our readers are asking, our viewers and listeners are asking about this. It put a real chill in the markets, to use a terrible pun in this case. Mr. Chairman, you don't sound that worried about this being systemic.
Look, I think that the New York Stock Exchange, CME, the clearinghouses are systemically important. No doubt about it, systemically important. But what happened here at this specific moment is the cooling system, as I understand, had a glitch. By the way, this data center is operated by a third party. It's not operated by CME. So they have a contract for certain performance levels. And they didn't go to their backup data center, which is, I think, located elsewhere in New Jersey. If this were to happen at 10 a.m. on a Monday, I think the management team would make a different decision and probably would switch over to the backup data center more quickly. The markets probably would have a little less liquidity. Not every high-frequency trading shop or principal trading firm has the same connectivity to the backup data center. So that's an interesting business choice. And for your institutional listeners, if that happened, they'd probably see a little less liquidity until they get back to that primary data center.
Always fascinating to look under the hood with Gary Gensler, former chair of the SEC, professor of the practice, MIT Sloan School of Management. Thank you, Mr. Chairman, for the time. We're going to pile back into the cabinet room. Are you ready? President Trump has now been going for about 2 hours, and he has just turned to questions from reporters speaking now about the issue of affordability. This might be the last time we see each other till the late edition of Balance of Power. This is live on Bloomberg.
Prices, but we brought them down, and now we have normal inflation.
Mr. President, thank you so much for taking questions with your assembled cabinet. I wanted to clarify something that you had said on Sunday regarding the boat strikes near Venezuela. You had said that you didn't know if the second strike on that one boat had happened, but you wouldn't have wanted it. Now that your administration has acknowledged that it happened, do you support that second strike? And Mr. Secretary, I wanted to clarify something you had said in an interview back in September, I believe on Fox News. You said that you would watch that strike live on television. In real time, did you know that there were survivors after the initial strike?
Well, look, all I know is this. Every boat that you see get blown up, we save 25,000 on average lives, 25,000 lives. They've been sending enough of this horrible fentanyl and other things like cocaine and other things, but fentanyl right now is the leader of the pack, to kill our entire nation. Because a little speck on the head of a pin can kill somebody. It's very dangerous stuff. I know so many people where their sons were drug addicts. They had one little sample, and they died. They died. They couldn't believe it. As far as the attack is concerned, I still haven't gotten a lot of information because I rely on Pete. But to me, it was an attack. It wasn't 1 strike, 2 strikes, 3 strikes. Somebody asked me a question about the second strike. I didn't know about the second strike. I didn't know anything about people. I wasn't involved in it. I knew they took out a boat. But I would say this, they had a strike. I hear the gentleman that was in charge of that is extraordinary. He's an extraordinary person. I'll let Pete speak about him. But Pete was satisfied. Pete didn't know about second attack having to do with 2 people. I guess Pete would have to speak to it. I can say this, I want those boats taken out, and if we have to, we'll attack on land also, just like we attack on sea. And there's very little coming in by sea. I think we've knocked out over 90% of it. There's very little, and I understand that. There's very little. We're saving hundreds of thousands of lives with those pinpoint attacks. It's an amazing thing when you see a boat going along, and a lot of the press would like to say they're not, you see the boat, they're not maybe drugs. You see these boats. First of all, who has 5 engines on the back of a boat going in weird directions and loaded up with lots of white containers? They're bags of things. No, they've done an amazing job, and Peter's done an amazing job. Pete, you could probably better answer the question.
No, you're spot on, sir. I think you got to start with the baseline, which Marco laid out, everybody's laid out. We've got 20 million people invading our country over 4 years. We don't know where they're coming from. That includes Tren de Aragua and cartels and violent criminals. They bring drugs, and you mentioned it, Mr. President, poisoning, an intentional poisoning of the American people, killing hundreds of thousands of Americans. So the president had the courage to designate these cartels as designated terrorist organizations. Now, a number of us here served in the military and spent 20 years fighting terrorists like Al-Qaeda and ISIS on the other side of the world. How do you treat Al-Qaeda and ISIS? Do you arrest them and treat them, pat them on the head and say, don't do that again? Or do you end the problem directly by taking a lethal, kinetic approach? And that's the way President Trump has authorized the War Department to look at these cartels. And I wish everybody could be in the room watching our professionals like Mitch Bradley, Admiral Mitch Bradley, and others at JSOC and SOCOM and other commanders. The deliberative process, the detail, the rigorous, the intel, the legal, the evidence-based way that we're able to, with sources and methods that we can't reveal here, that make sure that every one of those drug boats is tied to a designated terrorist organization. We know who's on it, what they're doing, what they're carrying. All these white bales are not Christmas gifts from Santa. This is drugs running on 4-motor fast boats or submarines that we've also struck. No one's fishing on a submarine. And I have empowered them to make that call. Now, the first couple of strikes, as you would, as any leader would want, you want to own that responsibility. So I said, I'm going to be the one to make the call after getting all the information and make sure it's the right strike. That was September 2nd. There's a lot of intelligence that goes into that, building that case and understanding that. A lot of people providing information. I watched that first strike live. As you can imagine, at the Department of War, we got a lot of things to do. So I didn't stick around for the hour and 2 hours, whatever, where all the sensitive site exploitation digitally occurs. So I moved on to my next meeting. A couple of hours later, I learned that that commander had made which he had the complete authority to do, and by the way, Admiral Bradley made the correct decision to ultimately sink the boat and eliminate the threat. He sunk the boat, and eliminated the threat. And it was the right call. We have his back. And the American people are safer because narco-terrorists know you can't bring drugs through the water and eventually on land if necessary to the American people. We will eliminate that threat, and we're proud to do it.
So you didn't see any survivors, to be clear, after that first strike?
I did not personally see survivors, but I stand, because the thing was on fire. It was exploded and fire and smoke. You can't see anything. You got digital. This is called the fog of war. This is what you in the press don't understand. You sit in your air-conditioned offices or up on Capitol Hill and you nitpick and you plant fake stories in the Washington Post about kill everybody, phrases on anonymous sources not based in anything, not based in any truth at all. And then you want to throw out really irresponsible terms about American heroes, about the judgment that they made. I wrote a whole book on this topic because of what politicians and the press does to warfighters. President Trump has empowered commanders to do what is necessary, which is dark and difficult things in the dead of night on behalf of the American people. We support them, and we will stop the poisoning of the American people.
And Mr. Secretary, on the second strike, you said it happened more than an hour after the first. Did I hear it
I couldn't tell
correctly?
you the exact amount of time.
Minutes, or you went off the room, is what you're saying.
I already stated my answer quite clearly.
So remember this, we lost last year, I think it was more than that, but people don't like saying it because they always said 100,000, 115,000, numbers we've been hearing for years. So we lost last year more than 200,000 people, dead people, ruined families beyond the 200,000. And those 200,000, that family will never be the same. But these people have killed over 200,000 people, actually killed over 200,000 people last year. And those numbers are down. Those numbers are down. They're way down. And they're down because we're doing these strikes, and we're going to start doing those strikes on land too. The land is much easier. It's much easier. And we know the routes they take. We know everything about them. We know where they live. We know where the bad ones live. And we're going to start that very soon too.
Mr. President, thank you so much, Mr. President.
You know what, when we start that, we're going to drive those numbers down so low. And then you're going to have families be able to live without the fear of their son or daughter just having a pill to have a little fun and ending up dying within a period of 60 seconds, right? No, we're not going to let that happen. We're not going to let it continue to happen. What Biden did to this country by allowing all these people, and I call them animals in many cases, I think they're animals, to come into our country and destroy our country and let all those drugs pour in, let people just walk across the border like it was nothing. You look at them, a lot of them, you say, oh, let's not discriminate. I'm not talking about color. I'm just talking about, you look into the eyes of some of these people. We're smart. And you see a killer. Come on in. Just come on in. 11,888 murderers. Many of them committed more than one murder. He allowed them into our country, totally unvetted, totally unchecked. But he also allowed drugs to come in at record numbers. And hundreds of thousands of people a year died. And we're taking those son of a bitches out,
Thank you so much, Mr. President, for taking our questions. I think this is the most transparent administration I ever seen.
I'm impressed by these people. I'll tell you, how strong are you? You've been holding it for 2 hours. There are very few physically. There are very few people could do. I'm very proud of you. I have no idea who you are, but you're strong.
Thank you, Mr. President. Mr. President, last week, militia groups in Iraq attacked the Christian region's gas field, the largest gas field, which even the U.S. companies invested in the energy sector in the Christian region. And the Christian Prime Minister requested the United States to provide them some sorts of means and defense system to defending their civilian infrastructure and U.S. investment in the Christian region. Are you willing to providing them the support? And if I had this question, tomorrow the United States is going to open and integrate one of the...
Can you speak louder?
Yeah, of course.
Is that possible? You're the most gentle, beautiful voice, but you're a very gentle person. Go ahead. Just take fewer words and louder.
Yeah. I will repeat my first question. Last week, the Iraqi militia groups attacked one of the largest gas fields in the Kurdistan region of Iraq, which even the U.S. companies have invested in these gas fields.
Yeah.
And then,
are you from Iraq?
I'm from Kurdistan, Iraqi Kurdistan. Okay. Yeah. Working for Huda Media Network. And the Kurdistan region prime minister, he requested the United States to providing them some sort of defense system to defending these gas fields and U.S. investment in the Kurdistan region. Are you willing to helping them?
Well, we're going to look at it. I heard about it, and I'm hearing about it more now, frankly. It wasn't at the top of my list. It's a very unusual question, I think, but I assumed you're from the area, and to you it's a very important question, and to me it is also, because people are being killed. I will say this, Iraq has been much different in terms of us than they were prior to us taking out the nuclear capability of Iran. Iran has gone down many, many steps in terms of its fear factor. They were the bully of the Middle East, and they're really not the bully of the Middle East anymore. And Iraq was being bullied by Iran. We had a president that thought it was brilliant to blow them up, and they blew them up, and all of a sudden, instead of having a power that was basically equal to Iran, they had Iran ruling the Middle East for a long period of time. But Iraq, from the day we hit them with those B-2 bombers and knocked out and obliterated, because CNN said, well, maybe it wasn't total obliteration. Well, it turned out it was totally obliteration. It was every single one of those missiles hit its target. It was actually amazing, but it was wiped out, totally wiped out. I will tell you, Iraq has been a much friendlier place. They talk to us. The Prime Minister actually nominated me along with about 78 other countries for the Nobel Prize. I'm the only one that was nominated by almost 100 countries that didn't get it. But that's okay. But I saved a lot of lives. I saved a lot of lives. But Iraq nominated us for the Nobel Prize, and that was a great honor. You know, we didn't expect that from Iraq. Iraq has been a much different place since the taking out of Iran and the nuclear capability. Yeah, let's get to another question. Here we go. This guy's a beauty. Go ahead.
Secretary Rubio mentioned meetings ongoing in Russia today. Do you have any update from Mr. Witkoff and Mr. Kushner?
No update, because I've been spending too much time with you. I mean, we're spending a lot of time in here. We wanted to do this you talk about being open and transparent. This has to be the most transparent administration in history. We spent a lot of time answering your questions and giving you a lot of good results. I mean, I think everybody here gave you good results. But no, I don't. I will have after I leave here.
But do you hope for a breakthrough, or is it not?
I don't know. Look, I don't know. All I can tell you is that we're trying very hard to save 25 to 30,000 people, mostly men, mostly soldiers, every month. 25,000 to 30,000 soldiers. It's impossible. That's half a stadium. Take a big football stadium. Take half of those people in a stadium, and they're wiped out. They're killed every month. It's crazy. That war is crazy. That would have never happened with me, and it didn't happen for 4 years.
You just mentioned potential land strikes. Can you elaborate anything on that? Are you talking
I'll elaborate. If they come in through a certain country or any country, or if we think they're building mills for whether it's fentanyl or cocaine. I hear Colombia, the country of Colombia, is making cocaine. They have cocaine manufacturing plants, okay? And then they sell us their cocaine. We appreciate that very much. But yeah, anybody that's doing that and selling it into our country is subject to attack.
So not necessarily just Venezuela?
No, not just Venezuela, no. Venezuela's been very bad. Venezuela's been really bad in something else, probably worse than most, but a lot of other people do it too. They would send murderers into our country. They would empty their jails into our country. They sent people into our country that we don't want. They sent their drug dealers and their drug people into our country. They sent people from their mental institutions into our country, and we're getting them out. That was bad. That was real bad. And they also sent drugs. Yeah.
On Tim Walz, Mr. President, do you think he should resign over the fraud scandal in his state?
And who should?
Tim Walz, over the fraud scandal in his state.
Look, I think the man's a grossly incompetent man. I thought that from the day I watched J.D. destroy him in the debate. I was saying, who was more incompetent, that man or my man? I had a man and he had a man. They were both incompetent, and I had a man and a woman. I thought she was very incompetent too, but now she's leading the field, and I think she's leading the field for the nomination. Anyway, look, that's up to them. That's up to the Democrats. You know, the problem with them is they have really bad policy. And I'm not going to say what it is, because I don't want them to change it necessarily, because I want to run against it, whether it's not going to be me, it's going to be somebody that's going to probably sitting at this table. Could be a couple of people sitting at this table. Could be a couple of people running together sitting at this table, you know, but I want them to win, because we've done a great job for this country, and I want that to be carried forward. And, you know, I think we have a tremendous bench, really a tremendous bench. But, no, I think that Walz is a grossly incompetent man. There's something wrong with him, okay? There's something wrong with him. And when you look at what he's done with Somalia, which is barely a country, you know, they have no anything. They just run around killing each other. There's no structure. And when I see somebody like Ilhan Omar, who I don't know at all, but I always watch her for years. I've watched her complain about our Constitution, how she's being treated badly. Our Constitution, the United States of America, is a bad place. Hates everybody, hates Jewish people, hates everybody. And I think she's an incompetent person. She's a real terrible person. But when I watch what is happening in Minnesota, the land of 1,000 lakes, or however many lakes they have, they got a lot of lakes, but this beautiful place, and I see these people ripping it off, and now I'm understanding, and you're going to look at that, Scott, I hear they ripped off Somalians, ripped off that state for billions of dollars, billions, every year, billions of dollars, and they contribute nothing. The welfare is like 88%. They contribute nothing. I don't want them in our country, I'll be honest with you, okay? Somebody would say, oh, that's not politically correct. I don't care. I don't want them in our country. Their country's no good for a reason. Their country stinks, and we don't want them in our country. I could say that about other countries, too. I could say it about other countries, too. We don't want them to hell. We have to rebuild our country. You know, our country's at a tipping point. We could go bad. We're at a tipping point. I don't know if people mind me saying that, but I'm saying it. We could go one way or the other, and we're going to go the wrong way if we keep taking in garbage into our country. Ilhan Omar is garbage. She's garbage. Her friends are garbage. These aren't people that work. These aren't people that say, let's go, come on, let's make this place great. These are people that do nothing but complain. They complain. And from where they came from, they got nothing. You know, they came from paradise, and they said, this isn't paradise. But when they come from hell, and they complain, and do nothing but bitch, we don't want them in our country. Let them go back to where they came from and fix it. Thank you very much, everybody. Mr. President, has an euro offered for me? Yes.
Come this way. Come. Thank you, Press. Thanks, guys. Thank you.
All right, everybody. You have been listening to President Trump live there with his cabinet, making a lot of comments about a range of subjects, I think it's safe to say. Again, Carol Master, Tim Stanovic, you are listening and watching Bloomberg Business Week Daily Live from Bloomberg headquarters in New York City. It is Tuesday, December 2nd. So the president wrapping up remarks at that cabinet meeting. Specifically, one of the things that's been top of mind is what's going on in Venezuela, Tim.
Yeah, and we'll kind of go in reverse chronological order here with what he most recently said. He was asked, basically said, if anyone is selling drugs to the U.S., they are subject to an attack. He was asked on strikes. It's not just Venezuela that's subject to attack. The questions really, a lot of questions focused on that attack and those attacks, but they also really span the globe. They talked about Russia, Ukraine. They talked about, there was a question about Iraq in there as well. We're going to stick on the attacks in South and Central America, South America for now. Asked on the September 2nd strike, didn't know about a second strike. Trump asked on September strike. I'm still getting information. He said if we have to, we will attack on land. If we have to attack drug traffickers on land, we will. We're going to start doing drug strikes on land, going to start doing strikes on land. Land strikes are much easier and starting soon.
Yeah, certainly one of the things geopolitically that we're keeping an eye on. You mentioned also Russia, Ukraine, and it does look like he talks about, commenting on the peace talks for Russia's war in Ukraine, talking about the White House team over in Russia right now trying to settle something. Also talking about going to New Orleans in a couple of weeks. The Louisiana governor, he said, the president, that the Louisiana governor asked for federal help in New Orleans. I also think in some of the things that are certainly of interest to the Bloomberg audience about a Fed chair. And he said that we do have Fed chair candidates down to one. This would be someone who would take over for Jay Powell when his term is up in the spring. He said he expects to know or make some kind of comment early next year, that he'll announce a new Fed chair early next year. He also was asked about Elon Musk and how those two are getting along.
He said, I get along with Elon.
I just didn't want to only
Elon and I get along.
Do electric cars.
Yeah.
Yeah. So that is out there. And then I'm just trying to see. Yeah, that was kind of some of the key things. He was asked about Witkoff, Steve Witkoff, who was over there in Russia in terms of Ukraine-Russia, that war. He says getting talk updates after this cabinet meeting, so maybe we'll hear something a little bit later on.
Yeah, just a couple more things that I think are relevant to our audience about prices. He said the beef price is coming down, and he also thanked President Xi for soybean purchases. Veterans Affairs Secretary Doug Collins also spoke at the White House during this cabinet meeting.
All right, folks, all the headlines you can find on the Bloomberg and at Bloomberg.com. In the meantime, we'll be talking about it over the next 3 hours. And we are also going to be heading to our Ed Ludlow. He is in Vegas at the AWS reInvent event. They're talking artificial intelligence, the data centers, which AWS is so involved in, not just in the United States, of course, but around the world. So we're looking forward to some key conversations from that. In the meantime, we've got a equity market that's kind of bouncing around here. We are in the green, but if you look at the S&P 500, Tim, most names in that index are lower today.
Yeah, taking a look there, we do have 228 stocks that are higher, 271 lower. The Dow right now is up 0.3%. The NASDAQ Composite up 0.7%. I'm typing in CRYP Go on the Bloomberg Terminal, Carol, and I'm seeing that Bitcoin is up above 92,000. And it's at right now up about 6.7%.
Yeah, that's today. But as you know, the narrative around Bitcoin has been a sharp pullback. We've seen that in Bitcoin prices over the past month or so. It is punishing really the most speculative corners of the cryptocurrency market. And the latest casualty is American Bitcoin Corporation. Shares of the crypto miner, which is co-founded by Eric Trump, lost more than half of their value in less than 30 minutes today, triggering some repeated trading halts. So we want to get a little bit more on what's going on.
You're welcome, Monique Malima. She's equities reporter for Bloomberg News. She's in the Bloomberg Toronto Bureau. Monique, help us make sense of what's happening to American Bitcoin right now, down 36% as we speak on a day when Bitcoin is actually higher. Why are we seeing so much pressure on American Bitcoin today?
Yes, so American Bitcoin, they're a Bitcoin miner that was spun out of Hut 8 earlier this year, and they've also been seeing declines throughout the year as Bitcoin prices have fallen. Like you mentioned, Bitcoin prices have been pressured recently. They're, even with the gains today, still down close to around 30% from their highs they saw earlier. And for Bitcoin miners like American Bitcoin, that weighs a lot on them because they make most of their revenue through either holding or selling Bitcoin. So when the prices go down, they're going to go down as well. And we've seen that they've actually underperformed Bitcoin over the past couple months. Some of the other things that are...
Well, wait. Let me just jump in here, though. Why the disconnect? Because my gut would be that with Bitcoin going back and bouncing up, mind you, the trend that we've seen as of late has been a lower one. But with a bounce up today, why wouldn't shares of American Bitcoin also be higher?
So American Bitcoin also has some other factors weighing on it. Part of it is that, for other Bitcoin miners, they've diversified. Some of them are looking at AI data centers and other opportunities to kind of get out of just Bitcoin. But for American Bitcoin, there are also some specific pressures today. Eric Trump posted earlier on X that the company had an unlock for some of its shares today. So that might be pressuring as well. And you also have to keep in mind for American Bitcoin, they have a largely retail trader base in terms of their investors, and that can make shares a lot more volatile to some of the things happening in markets or changing sentiment. And we've seen that crypto sentiment right now is a little more negative.
Yeah, I think that's absolutely fair to say. Still a lot more positive than it was yesterday. A little bit of a rebound. We're seeing a little bit of a floor now that's above 90,000. What do the folks you talk to in the crypto community say to you about sort of the next catalyst or the next ceiling or floor to watch for?
Yeah, so in terms of the next catalyst, people are really hoping to see the market structure bill pass. That's being considered by the U.S. Senate. That would give some more clarity around kind of the crypto industry as a whole and the regulations surrounding that. So they see that's a potential catalyst. There's also just needs to be better sentiment in the markets in general. We're seeing crypto isn't just moving off of its own prices in terms of tokens. It's being affected by the broader macro environment of more risk off in terms of investors right now. And, if we do see more interest rate cuts going forward, maybe investors would also feel more confident, analysts are thinking.
So are we seeing, though, I'm just trying to think of some of the other miners that are out there, and maybe not apples to apples. I mean, I'm looking at Strategy. It's actually up today. But are other miners being hurt as well?
So Hut 8 is being hurt today, but that's because they still are the majority owner of American Bitcoin. So their shares are down quite a bit, more so off of what's happening with American Bitcoin itself. But like I mentioned, there's some specific factors to American Bitcoin because they did have some shares unlocked today from some early investors that often can weigh on crypto companies, especially ones that have large retail investor bases that can be a little more volatility added in because of that, because they're moving a lot off of sentiment.
So insider selling?
Not necessarily that the insiders are selling. It's that there's been an unlock, so they have the opportunity if they choose to sell. But we've seen in past for crypto companies, we saw this with SharpLink as well earlier this year, that when there are unlocks, that those shares can often then go down because of some of those retail investor fears that, oh, if the early investors can now sell, maybe they'll choose to. So then they're thinking, oh, maybe we should get out before they do.
Yeah, one thing we should note is we have spoken to Eric Trump several times over the last few months. He told me in September that he was committed to the company. He owns about 7.5% of it. And then, Carol, he reiterated to us just in the last few weeks that he's still committed to the company and he hasn't sold any shares and will not be selling any shares anytime soon.
Yeah, definitely committed and certainly defending the idea of Bitcoin. But that is true of like many folks who are within the Bitcoin industry. And we've got a story on the Bloomberg too that talks about like get ready for like a tremendous rally again and a bounce back. So we definitely see this, that what can be a volatile trade. I just want to look ahead real quickly. Just got about 40 seconds here, Monique. We've got a Fed meeting next week. If we get a rate cut, the gut response would be that any kind of speculative, high valuation, type of asset should rally. Should we assume that that will be true along the crypto universe?
Yes, there are some analysts that are saying an interest rate cut would help crypto. We've seen some more risk pullback in terms of investors recently, as there were fears earlier that maybe there wouldn't be interest rate cuts or uncertainty around the path for interest rates going forward. So they're hoping that once people have a little more certainty around kind of the macro environment in the U.S. and where the economy is headed, then they'll feel more confident being in some of these riskier assets like crypto.
All right, we're going to leave it. Monique, thanks so much. Monique Malima, she is equities reporter at Bloomberg News, joining us from our Toronto bureau. Again, as we look at American Bitcoin, we did see some halts in the trade today, but this stock, I'm assuming it's one of your decliners today.
Yeah, it is down right now by 36%, but earlier in the session it was down as much as 51%.
Yeah, I mean, this one, and it's still up 14% year to date. So we have seen, quite some strong moves to the upside, but also we're seeing a fair amount of selling. All right, folks, we are just getting started. Kind of some things coming at us from some different places. We, of course, covered all the news out of the nation's capital, the president in that cabinet meeting, heading to Toronto on crypto. And now we're going to head back to Vegas, Las Vegas, head to Vegas, and to our own Ed Ludlow. He's getting ready to talk with Amazon's head scientist for artificial general intelligence at Amazon. So looking forward to that. That's next.
It's 2:21 on Wall Street. We do check markets all day long here at Bloomberg. We've got the Dow, the S&P, NASDAQ all advancing. Wall Street staging a cautious rebound today. Right now, the S&P is up 13. That is a gain of 0.2%. Dramatically different tone from this time yesterday with the S&P now at 68.25. The Dow up 147. Boeing leading the Dow higher. Right now, we've got the Dow Industrials up 0.3%. NASDAQ up 0.6%. The 10-year 4.08%, the 2-year 3.51%. Spot gold down $37 the ounce, down 0.9%. West Texas Intermediate crude oil 58.68 a barrel, down 1.1%. And Bitcoin now higher by 6.4%, 91,950 on Bitcoin. I'm Charlie Pelleton. That is a Bloomberg Business Flash.
All right, Charlie, thank you so much. Carol Master, Tim Stanovic, live here on Bloomberg Business Week Daily. Well, underway in Las Vegas is AWS reInvent. This is Amazon Web Services' flagship annual cloud conference, bringing together developers, engineers, leaders, and businesses for a week of keynotes, product announcements, technical sessions. So much going on. It's also about networking, and it's also where we find our co-host of Bloomberg Tech, Ed Ludlow.
He's along with Rohit Prasad, Senior Vice President and Head Scientist, Artificial General Intelligence at Amazon. Ed, take it away.
Yeah, it's been interesting, guys, because like the market reaction to all of this has been varied. But everyone I speak to says this is a substantive move forward across the full AI stack with AWS, not just silicon, but in the model side as well. Rohit, it's good to see you.
Yeah, excited to be here.
It's been some time since I last saw you, and in those days, you were building Alexa from the ground up, really. Yeah. Let's start with Nova 2. This is the second generation of Amazon and AWS's frontier model, and it's a year since the first iteration came out. This is a fancy question, but in the sort of Amazon model taxonomy, you put a lot of emphasis on reasoning. Mm-hmm. What is different with Nova 2 in that regard?
Yeah, Nova 2 state-of-the-art frontier models. We introduced 4 of them today. A year back, we announced Nova first generation of the models. Incredible adoption that we see with our customers. And then it's not been that we have only done Nova 1, but along the way we introduced many new models like Nova Sonic, Nova Premier. But today we announced our Nova 2 generation, which has 4 models. Each are very multimodal reasoning-based models, which means they process not just text as input, but many other modalities. They're great for perception tasks, for everyday workflows. Cost-effective reasoning-style model where you can control the extent of the reasoning. You also have an upgrade to Nova Sonic and a first-of-its-kind model called Nova Omni, which not only just generates text, but also generates image output.
So the simple question a lot of people have is, why did you need to have 4 variants and 4 different degrees of model performance? Yeah. In one release?
Yeah, so we always find customers want different selection, different operating points, but let me get to the main thing here, which will put it in context. If you think about it, the perennial challenge we have in the industry, new model comes out, benchmarks look great, customers try it in production, both internal and external customers that we have, and we find the consistent feedback, it doesn't work in our environment as we would think, or in our production setting. So that's where the reality sinks in. There is a simple reason for that, because these frontier models, as great they are, they do not know your domain, your proprietary workflows, which sit behind your walls. So we ask the question, how can we build something that knows your systems, your data? And for that, the real answer was that everyone is seeking a frontier model that's expert in your domain. Now, you have a few choices right now. All of them are suboptimal. You can start fine-tuning on the edges of frontier model. You can take an open weights model and start...
Suboptimal why?
I'll get into that. So you can fine-tune only on the edges, for instance, because you have these adapter-based model training, which doesn't really give you the full expertise, because these models are already fully built. So you can't steer them through your domain. And when you try to steer it to your domain, it forgets a lot of its general properties that were remarkable. So then you're left with this ultimate choice, which is, do I build my own from scratch? But that's prohibitively expensive. So that's why we brought Nova Forge, because now you have a way of building your own frontier model, starting with every stage of the model development, from pre-training to mid-training and post-training, with one unique thing, which is you can now infuse your data and premix with Amazon curated.
So let me
data
jump in
sets.
here. I'm not going to pretend to be smarter than I am. You can have a foundation model with tens of billions, hundreds of billions of parameters, but the issue that you're outlining is that if it has no relevance to you in its data set, it has a limited utility.
Yes.
So let's go to Nova Forge. This is the ability to build a model using data sets from within your own company.
Yes.
Simple layman's interpretation. Just go a bit further on what you're trying to solve for here, and actually, if it's as good as you say, the commercial importance of it.
Yeah, because the general intelligence model are not, it's not like intelligence is a monolith process, right? So the intelligence to be really useful in your setting, you need to plug in your data, your knowledge, your system workflows, and that starts with the earliest stages of the training. That's how we grow up. A lot of our foundational capabilities, we are the most efficient if we have learned the domain as early as possible. That's what we're trying to do with Nova Forge. You have multiple checkpoints available for you to make Nova your own, which we actually call a novella, right? And you can name it whatever you want. But this becomes your model, which knows your environment, that's optimized as a variant that you can build your applications and agents for. And the beauty is that it preserves the foundational properties because the core data that gives that frontier intelligence is also mixed with your proprietary domain knowledge.
I always am a bit hesitant to give these kind of behind-the-scenes moments, but before we started this live conversation, we were debating, is Amazon or AWS a full-stack AI company? The debate around it is AWS has always been number one, cloud computing in terms of scale for both compute capacity, storage, and what's available, right? Is it the number one AI company is now the question. And what unites those two debates is cost and efficiency.
Yes.
What is different with the Nova 2 generation and with Nova Forge from that perspective?
Absolutely. First, AWS, I'm glad people think of it as infrastructure because that's where everything starts. But to us, it's always been a full stack company where you have the infrastructure layer, the model and AI as a service at the middle layer, and at the top layer, you have multiple applications that are serving our customers. So it's always been a full stack. With Nova, as you said, we are really democratizing the AI for everyone, where everyone can have their frontier model that knows their domain. And with that, the beauty is that the cost goes down for building your applications on top of this model that's your variant, because you can start with a model that can actually be distilled from a large teacher model or a smaller model that can be still very performant compared to other large giant models. So that also gives you a huge cost lever. And this is why Forge is great, because it's making AI more affordable as well for everyone.
What are the benchmarks by which you hold yourselves to account on that? I think you've discussed with my colleague Matt Day about Nova 1 generation, where it ranked in the benchmarks. The real test is in real-world deployment. But is it as simple as saying cost per token, latency, multimodal latency? How do you judge your efforts?
Yeah, first of all, public benchmarks are a good indicator, but they're not sufficient. The real indicator is performance in your real-world environments. And that comes down to accuracy, cost, latency. And that's why we refer to this as price performance. Nova models are industry-leading in price performance because we have optimized for all three together. And that's incredibly hard. And with Forge now, we are giving you those knobs to optimize for your price performance needs, because your applications may have a different scaling requirement, different kind of use cases. And now you have the same knobs that our internal teams have. And that's why I love Forge.
Rohit, internally, is AGI a goal and a remit that you've been given by this company to achieve?
Yeah, first of all, I wish AGI was thought about as a practical thing, not a sensationalizing element. To me, we are really focused on building this generally intelligent model that can be forged into these different specialists that do useful things in your environment. And starting with the digital environment is great. Things will happen in the physical environment as well. This is why we have giant robotics efforts as well. Internally and externally, you see a lot of people working in that area. So I'm a very optimist about practical AGI that will help everyone in humanity.
very quick fact check, Nova Forge, I've seen a number of $100,000 per year. What does that represent? It's a per desk, it's a per training exercise. Explain the business model of it.
Yeah, it's by your company's account. I mean, we can, the key is that I would focus on not that amount, because you have to think about what you're getting for it. You're getting the deepest access possible in what I think of as open training paradigm, where you're also getting access to frontier scale data mixing that makes these properties of the model be not just general purpose, but also more specialized in your domain. So the value is incredible. And then I think you will see that this kind of a value, that amount is actually minuscule in the context of things.
When we first met, you were building Alexa, early generations of Echo Dot. I, as you know, have an Echo device in most rooms in my house, and I have been able to use Alexa Plus. But my interactions with Alexa, the latest generation, are not what my interactions are with various other tools from OpenAI, Anthropic, Google, particularly in voice. You know, I think about how I use ChatGPT voice. But there is improvement. Can you, because it's still within the portfolio for you, what comes next with Alexa, and how are you going to take the work you've done with Nova to make improvements? Because Alexa is built on Nova among other models.
So Alexa Plus, I'm super excited about. If you haven't used it, I urge you to use it a lot now. It's a remarkable upgrade over the Alexa of the one that you've been using for a while. It's completely re-architected from the ground up. But the customer reception has been great. We are seeing, personally in my usage, it's a much more useful and very natural AI. And what all it can do is still, I haven't seen something that can do everything Alexa Plus can do.
Rohit Prasad, head scientist, general intelligence, SVP at Amazon. It's great to catch up.
Thank you, it was great, Ed. Thank you.
AI here in Las Vegas at AWS reInvent 2025. Back to you guys.
All right. So appreciate our own Ed Ludlow. He's going to be back in the next hour, too. He's got the CEO of AWS, so looking forward to that.
Yeah, Matt Garman coming up in just a little bit of time.
Listen,
you got to go get ready for that interview.
No, there's so much going on, and I think about with the hyperscalers, Amazon in particular, there was a great story that Matt Day did at the end of November, and it just talked about their data center operation being much larger than commonly understood. We're talking about 900 facilities, more than 900 facilities in more than 50 countries. And this was documents that Bloomberg and the investigative website Source Material had reviewed. So, I mean, their footprint and what they see, it's a lot.
Also out of the flagship annual cloud conference in Las Vegas, Amazon's clouding are racing to get the latest version of its AI chip to market, renewing efforts to sell hardware capable of rivaling products from NVIDIA and Google. The accelerator is called Trainium 3.
Yeah.
It was recently installed in a few data centers. It'll be available for customers beginning on Tuesday. That's according to Dave Brown, a VP with AWS, telling Matt Day in an interview, here's what he said, quote, "As we get into early next year, we'll start to scale out very, very quickly."
I love it. Like all these firms, their chips, the competition is certainly on. Hey, as we head to a break, folks, we're looking at a market where we're bouncing around some volatility, little changes, just up about 1/3% on the S&P 500. NASDAQ 100 up 213 points, a gain of 0.8%, and kind of an even split, slightly lower, 274 names to the downside in the S&P 500. When we come back, investment diversification, yes, it even matters for the world's wealthiest. More when we come back.
It's 2:40 on Wall Street. We do check markets all day long here at Bloomberg. I'm Charlie Pellet. We have got the S&P 500 index higher now for the sixth time in 7 trading days. S&P up 18, 68.31 where we stand right now, up by about 0.3%. Dow Industrials up 204 on the Dow, gain there of 0.4%. We are seeing a cautious rebound. NASDAQ up 157 for the NASDAQ Composite Index. That's a gain now of 0.7%. The Bloomberg Mag 7 Index up 0.5% with a 10-year at 4.08%. The 2-year 3.51%. Gold is now down 0.9%, 41.95 the ounce on the precious metal. Silver continuing its advance, 58.12 right now, up 0.2%. A retreat for West Texas Intermediate crude, 58.50 a barrel. WTI down by 1.4%. A dramatically different tone for Bitcoin today compared to this time yesterday. Bitcoin right now up 6.8% at 92,300 on Bitcoin. Cloudflare shares higher after Barclays launched coverage on the infrastructure software company with an overweight rating and a $235 price target. Right now, we have got shares of Cloudflare at 201, up by 2.4%. Earnings after the close of trading today will include CrowdStrike, Box Inc., and also Marvell Technology. Recapping S&P up 0.3, Bitcoin right now up 6.8%. For on-demand news 24 hours a day, subscribe to Bloomberg News now wherever you get your podcasts. I'm Charlie Pellet, and that is a Bloomberg Business Flash.
All right, Charlie, thanks so much. Well, a recent study by Bank of America Family Office finds that overall, family offices are optimistic about the outlook of the U.S. stock market, private equity, and merger and acquisition activity, with more than 6 in 10 anticipating that the markets will move higher over the next year. Now, the study covers a lot, everything from AI and alternatives to wealth across generations and wealth transfers of more than $100 trillion, more like $124 trillion over the next decade to heirs and also to women. It's something that we have talked about a lot in our weekly discussion, Women, Money, and Power, where we look at all the economic implications of the massive wealth transfer that's underway, how it is impacting, Tim, the investing, saving, and also giving landscapes.
With some thoughts on that, we welcome Elizabeth Thiessen, Head of Family Office Solutions at Bank of America Private Bank. It's got some $447 billion in assets under management. She joins us from Charlotte, North Carolina. Elizabeth, how are you?
I'm great, Tim. Good to be with you both.
It's good to have you with us. I just want to set the scene a little bit just to contextualize the different families that you work with. What would be like a typical family's net worth and size? Like, what are we talking here for family office clients for Bank of America Private Bank?
Well, it ranges. And in this study in particular, we talked to over 335 family offices, and they ranged from 25 million in assets that they're managing to over 5 billion. So it really is a wide spectrum of family offices that we spoke to and we'll talk about here today in the results.
So what did you find that was top of mind for them? What, acknowledging that, of course, not everybody has the same priorities?
Yeah, a few things really stood out to us. This was a very rich set of data that came out of the study. I will highlight that of the clients that we talked to, over 60% of them had greater than 500 million in assets. So to your earlier question. But some of the themes that came through, one, I'd highlight, you talked about the wealth transfer that's underway, and that really came through in the results as well. It was really underpinned. We could call it the great family office transfer. What's not surprising, 87% of the families we spoke to haven't transitioned yet to the next generation. And that's not surprising, so there's really been an increased velocity in formation of family offices. But what they told us was 6 out of 10 expect to transition in the next 10 years, 1 out of 3 in the next 5 years. So it's beginning to unfold. And, as we asked family offices about the implications of that, they're definitely starting to think about a new generation of error in investing, increased focus on philanthropy, and a definite increased use of technology. So I think that wealth transfer that we're seeing holistically across the U.S. is absolutely impacting family offices, and it's starting to happen. The second theme I would highlight is the increased focus on alternatives. What was interesting in the study is 2/3 of the family offices we spoke to referred to themselves as conservative investors. But yet their allocation was pretty even between marketable securities and alternatives, 36% marketable securities, 34 alts. But they're leaning into alts. When we asked, what do you want? Where do you think you're going to get the greatest return in the future? What's your area of focus as you look forward? Private equity was number one, followed by direct investments in companies, followed by real estate. So we see that alternatives focus, continuing to take center stage.
Elizabeth, can I just jump in for a second? I am curious. Do any of them think about, in terms of the wealth transfer, what it means? Like, are they going to also go spending money, or is it all about, ensuring that the wealth exists for future generations? I'm just curious if there's a different take, whether it's women or whether it's a younger generation.
Well, it's both. I mean, there's definitely a desire, when we talk to family offices, there's definitely a desire to maintain the mission and purpose of that family office and why it was created to begin with. And what came through in the research, which we found really interesting, one of the things we asked family offices is, how involved is your principal in the management and running of the family office? And they had a scale, either not very, less involved, moderately involved, very involved. And the clients that have family offices that have less involved principals, they expect, 73% of them expect the mission and purpose of the family office to change when handed to the next generation. So to us, as we read that, it's a real, call to action that as we know this transfer is beginning to unfold, having early conversations around what do you want that next generation to do with it? Is it to go spending? Is it to continue the purpose that the first generation created? Having those conversations and that intention early is paramount.
I'm sure you caught this story in the Wall Street Journal over the weekend, but it was about these so-called trust reveals where the super wealthy families are having these, not necessarily parties, but meetings with financial advisors, maybe family offices, to really go through the numbers for the next generation. Oftentimes it sounds like some of these families, they grow up knowing they're wealthy, but the kids don't actually know they're getting a $100 million trust fund. What's the communication like? Did that story resonate with you?
Yeah, I think, we see both ends of the spectrum. Sometimes you see families where it is a reveal that happens. Others, though, I find if there's a really intentional process where that is revealed with milestones and intention, I think that can have better outcomes ultimately.
Yeah, it's super interesting, right? Just what's going on. We've spent a lot of time, Elizabeth, talking about women specifically and the wealth transfer that is expected to be in the hands of women specifically. I've gone through the report. I'm just curious what you guys are seeing specifically, if you've seen any transfers already to women and how they approach money perhaps differently.
Yeah, we absolutely do. There's a lot of the transition that happens for women in family office, and I think their approach. We do regularly see an increased focus on philanthropy that can play through. Many times, women in a family are getting involved early in philanthropy, and then that can play through. The study did highlight that when these family offices transition, 51% expect an increased focus on philanthropy with the next gen. So we do see that. I think the other part of the study we found really interesting is sort of what we called the hidden complexity of a family office. As you mentioned, Carol, it was broad ranging in terms of the topics that we touched on, but one of the areas that we really wanted to get more data around is what we call the hidden complexity. And we really highlighted that these family offices, it's more than just the investment philosophy that they're executing against. It's all the related operational work that comes with that.
Right. Elizabeth, we've got to run. Forgive us, but hopefully we can continue this conversation in the future. Elizabeth Easton, Head of Family Office Solutions at Bank of America Private Bank. When we come back, Stocks on the Move.